hospitals and schools, research bodies, welfare organizations, all of them, they often step in where governments cannot do it alone. So this sector, the social sector, it uses a mix of domestic and foreign funding. So that foreign funding, we showed you the number, for the social sector, it has risen. There you have it. From about $1.2 billion in 2010-2011 to now FY25, we've seen that number go up to $2.67 billion. Now what is changing? The rules that govern that foreign money, that is facing another major overhaul when it comes to the laws. The proposed FCRA Amendment Bill 2026, that is being pitched by the government as a transparency and accountability measure. So supporters of this are saying that it is about tracking of the foreign funds better, about protecting national security, also ensuring that assets created through foreign contributions remain properly managed. On the other side, you have the critics, and the critics are arguing that this could increase, the new set of rules could increase the compliance costs, could create uncertainty and make life harder for the genuine NGOs, the charities, the educational institutions, the welfare organizations. So at the heart of this debate is a very simple question. If foreign funding is rising despite tighter regulation, we showed you that number, it is rising. Is India then merely improving its control measures, or is there a risk that legitimate funding could become harder to access with these proposed rules? Now, can the government strike that right balance between transparency and trust, security and social impact? That's the important question, which is why we're talking about the FCRA bill. Yes, there are these proposed set of rules, but this is a law that has been in existence in various forms with various amendments since the year 1976. Now, when we're talking about the new set of rules, the question is, will the tightness of these rules actually affect foreign funding when it comes to the social sector? Let's take that question across to our panel. Joining us today, we've got former Indian diplomat and High Commissioner Veena Sikri with us. Also Supreme Court Advocate Pallab Mongia is joining us. He's also a solicitor who works in England and Wales and an associate member of the Three-Hair Court in London. And on the panel, we have Dr. Soumyatanu Mukherjee, Associate Professor at XLRI, Delhi NCR. We will be joined by more in our panel, but right now, Veena Sikri, I want to ask you, the government saying that this bill is being misunderstood. If foreign contributions have actually more than doubled over the last decade, then it begs the question that the narrative that India is shutting the door on foreign funding, is it simply wrong?
Yeah, I agree that there is no effort to shut the door on foreign funding. There is an effort to put in place a transparent system of accountability. That is, if you want to get foreign funding, A, you have to be registered as an organization. B, you have to follow the rules for receiving foreign currency through a registered account, bank account. And C, you have to give a detailed listing of what you've done with that foreign money. This process of basically these three steps have been in position, like you said, since 1976. But the problem has arisen that most NGOs have not been following it. You know, all the controversies, etc., have invariably come from the fact that NGOs have received the money, but they have not followed the guidelines. They've got the approval for receiving the money, but they have not followed the guidelines and what they do afterward. That means you have to keep it in a proper bank account and you have to account for it. You have to give a detailed note. And I think it's fair enough that it is better to have a transparent system of accountability than to have constant controversies with various recipients, saying that this has not been done or that has not been done. So what the government is doing right now is setting up a proper authority, a regulatory authority that will be able to guide this whole process. Otherwise, of course, it was being done by the Ministry of Finance and the Ministry of Home Affairs, and invariably there was always controversy, and it's very difficult for NGOs to deal with ministries and so on. Yes. So now I think the system of transparency will ensure that it'll be easier to follow, and you will get whatever you have asked for if you follow the regulations. For example, things like since 2010, there's been a law in position about custody of assets. If a particular NGO does not follow the system, yes, then the assets can be taken into custody. But now this is there, but there's a transparent methodology that the regulatory authority will take it into custody, but will ensure that there is no problem with those assets. They are looked after. If there's a hospital involved or a religious institution involved, they will be looked after. They will be allowed to continue. And then whenever the problem is resolved, it will all go back. So I think these aspects are very useful and good to ensure that the law will be followed properly.
So is this really about funding flows, Mr. Mongia? You think this is about the funding flows, or is this really about the control over assets, like Veena Sikri is pointing out, control over assets that are created with foreign money? I mean, legally speaking, what is the single most significant challenge you see in the laws proposed in this bill?
I mostly agree with Ms. Sikri on this, that the issue is of regulation. There's a tighter regulation. There's a continuous regulation, but it's definitely not a case of prohibition. So I agree with her to that extent. And if foreign funding is coming in India in terms of contributions, or even if when it comes to corporate channel for private transactions, for business transactions, it is always regulated. There is RBI and FEMA regulations there, and we have FCRA here. Now what the government is all saying is that as long as you are holding on to that foreign money, we will just keep an eye on you. Please file your taxes, please file your returns, show us transparency, whatever is required to be done, just keep us posted on this. We have the right to keep an eye on you because end of the day it's a foreign money. And these some parts of it have been challenged before the Supreme Court in 2022, and the Supreme Court has clearly said that all these aspects pertain to sovereignty and public interest of India, and therefore the government will have a right to look into these aspects and ensure that this foreign funding is regulated. Now, in terms of challenges, I believe that yes, certain provisions have existed for some time now, since 2010, since 1976, but for some reason they've come in notice now. And some expressions which are used there are slightly vague in my understanding, which of course can be read down by courts, or of course when they are challenged, then the petitioners may make out a case that you strike it down, it's being vague and unconstitutional. So that's the only limited issue I see to the extent. But in terms of the intent, I think it's mostly about regulation. It's about keeping an all-pervasive control on the money once it has landed in India.
How important is that? Dr. Mukherjee, what would you say? This importance, yes, Dr. Mukherjee, I wanted to ask you how important foreign funding is to India's social sector economy. Today, how important is that role it plays? Are we talking about a niche issue over here, or something that affects so many different parts of the social sector, whether it's healthcare or education, research, welfare delivery, all of them, and at scale?
I would say that, yes, definitely, you know that it definitely is extremely important, because you see that, well, in the wider sense, that NGOs does not simply receive money and hold it, isn't it? So it employs doctors, nurses, teachers, you know, academicians, accountants, field workers, administrations. So I believe that, well, it also purchases medicines, vehicles, computers, everything, right? So the foreign funded organizations are part of the wider economy, and many of the activities they provide that not only create, so that generally create benefits, not only for the immediate recipients, but also beyond the immediate recipients. So healthcare, education, research, disaster reliefs, these are definitely obvious examples. So, but essentially, I believe that, well, if money meant for healthcare or education is diverted or misused, then society is going to suffer at the end.
Yes.
So in my opinion, the current question is not that whether the kind of, you know, the NGOs are good or bad, but the current question is that how much misuse are we preventing, and how much legitimate social activity are we disrupting in the process. So it's essentially the, you know, that in economics we always talks about the cost versus benefit. So this is the current cost benefit question, I would say. And well, in economics we, you know, some of us, or probably all of us, have seen A Beautiful Mind, you know, the movie based on the life of John Nash.
Yes. And
well, the John Nash insights were that, well, my best decision depends on what I expect you to do, at least in part. So here in this case, if we think about the entire system in picture, then we have three main decision makers. One is the foreign donor, another is the NGO, and then the regulator. So the donor asks that, can I trust this organization to use the money properly?
Correct.
And the NGO asks that, if I follow the rules, can I trust the government to administer these rules predictably? And government asks, can I verify that this money is actually being used for the declared purposes? So if the trust is low everywhere, then we got everything bad. We got a bad outcome. But what happens? Because in that case, donors will become overcautious. Good NGOs will spend too much time and money on defensive compliances, and government spends too much on monitoring everybody. And ultimately, less money reaches everywhere to the beneficiaries, to the real beneficiaries. So they are not going to emerge as the winner. However, that if we have the good regulation in place, then the NGO will be able to make a credible commitment that we will disclose where the money comes from and how we are going to use it, right? Or how we have used it.
Correct.
However, the government also makes a credible commitment here in this case, in my opinion, and in that case, I agree with Veena Madam that, well, if you comply with clear and predetermined rules, legitimate funding will not be arbitrarily disrupted. And I think both commitments do matter. So the NGO's credible commitment as well as the government's commitment, both of them should be there in place. So that's why I believe that transparency and predictability, these both of things.
Transparency and credibility, if those are at stake, then let's get the NGO perspective. Sandeep Chitnis is joining us. He is the founder of the NGO Multiple Sclerosis Society of India. Mr. Chitnis, glad you could make the time for us.
Thank you very much.
Mr. Chitnis, someone who runs an NGO, the changes that are being suggested in this new set of rules, practically for a genuine organization, do you think if this becomes law, what worries you the most about it?
Okay. See, now as far as genuine NGOs are concerned, in fact, ours is one of them because we are looking at medical relief for the people. So there is no problem for us in case of we are not involved with any politics or anything. So now in this case, as far as genuine NGOs will not be having a problem. Only thing is that certain technical issues need to be sorted out, because now with the new rules, what is happening is the geography is restricted. So if you are receiving funds, there needs to be clarity about which geography and the purpose. See, purpose is not a problem if a broader purpose only is insisted. But if it is a micro purpose, suppose now we are, in case of NGO, we are receiving for healthcare. Now in healthcare also, if they say that instead of medicine, if I am giving other wheelchairs and other things, so then if that purpose is different, then there will be unnecessary issues. Similarly, in case of geography also. Now geography, till now this was not restricted for a specific geography to be used. But in case now, suppose the money is received, now our NGO also, we have 9 chapters across India. Suppose we have received funds and in that case nothing is mentioned, or by default it is our head office which is at Mumbai is being mentioned. But if we want to say use it at Delhi or at Bangalore or Hyderabad,
yes,
and that should not create unnecessary hassles for the genuine NGOs. So that is what is our concern. If that is addressed, that should not be a problem.
But Mr. Chitnis, would you say that for the smaller organizations it is tougher? Because NGOs, I understand, they already deal with registration, reporting, the audits, the compliance requirements are many. So
yes,
will
absolutely.
additional obligations become more of a deterrent for smaller organizations, you think? Is that a concern?
See, they will become a deterrent also, as you say. One more thing for it becoming deterrent is key functionary definition, in which now people, though they have reduced the criminal, the penalties, not penalties, in fact, there was imprisonment which was there for 5 years. Now that is reduced to 1 year. However, see, now in case of a smaller organization like us, where we are all doing voluntary work, in case of any genuine technical errors, we should not be made to suffer unnecessarily by deterrent and CRPC also. The Criminal Procedure Code is going to be applicable. So those things need to be tweaked. I believe that is what is really required
So,
from the
Veena
smaller
Sikri,
NGOs.
yes, absolutely. Veena Sikri, here the question is about creating a difference between genuine and clearly not genuine, but you have laws that apply everywhere uniformly. When governments talk about foreign funding, national security invariably enters that discussion. Is that concern legitimate in today's geopolitical environment? Because it's not possible to differentiate every time, like Mr. Chitnis is pointing out.
Yeah, no, you're absolutely right. There is a difficulty in differentiating, but there have been so many instances of misuse. And the misuse may not be deliberate, it may be just a lack of care in fulfilling the required, forms to be submitted, etc. But wherever there's a question of lack of misuse, I think because of the frequent instances, government is now tightening up the regulations. I think it's going to be a new ecosystem. I don't think it's necessarily more difficult. In fact, it should be more transparent, but accountability will be higher. And I think that we have to also see that all countries in the world in this very period that we are in today are having similar concerns. For example, America has had a law in place since the 1930s, which was called FARA. Now they have a new one, called FATCA. Then the UK has got a new law. Australia has a new law, all brought in the last 2 or 3 years to show that this problem of transmission of foreign funds for purposes which are not very clear or not very transparent has created problems across the world. Because, with the focus on terrorism, the focus on transmitting funds and then they are being misused, it can cause major national security issues. And then, the question of whether the activity is only in the urban or semi-rural or rural areas, but not near the border areas, etc., etc. Those concerns are very legitimate, and that's why there's a whole lot of form filling to be required, which means a lot of work, which the NGOs have not been doing.
Correct.
But we have to see that if in India there are about 3 million NGOs, we have only about 14,000 of them which have FCRA clearance. So the number as a proportion of total NGOs is very small, and I'm sure that with a proper dialogue with the authorities and the NGOs, these kind of teething troubles can be sorted out. And I'm sure that
So is this set of laws going to get more under the FCRA fold, Mr. Mongia? That asset question is also an important one, wouldn't you say? If a hospital, school or welfare center has been built through a mix of domestic and foreign funding, how easy then is it legally to determine what portion can actually vest with a designated authority? There are questions that are very pertinent to FCRA rules and how it's going to apply uniformly.
That's a very relevant question. Like I said before, the intent is to keep an eye on the funds once they land in India and to save the country from the abuse or some kind of a diversion. So what the government is trying to do is they're saying the moment these land in India, forever I'm going to keep an eye on those funds. So in terms of situations of cessation or surrender or cancellation of licenses, the designated authority says, I am either going to take over this or you ensure you maintain the license so that you keep complying with the requirements, the statutory requirements. So the intent is correct. And how it's going to play it out, that remains to be seen. I think the discretion is vested with the authority, and of course it will be used and we'll see how it plays out. That remains to be seen. But you can, all these laws are there. These kind of provisions exist in other laws also, and the governments have dealt with it and their judgments on this. So I'm sure it's going to play out in future, and we'll see that some solutions are found for it. But that does not mean that somebody can use as an excuse to escape compliances. Every activity has a cost. Every activity has to be in compliance with the local laws. And there is no shying away from
No, there isn't. But also, as far as the new set of rules go,
right,
Mr. Mongia, when it comes to an NGO, a social sector organization that ceases to be under FCRA because of non-compliance or whatever, then what happens? That's an important ask as well under this set of rules. And that is being argued. Where do you stand on that?
Yeah, correct. See, look at the abuse of process here. You are legitimately receiving money, you have the license, etc., you have the permissions, and then you retain that asset, you retain that money, and then you suddenly say, look, I'm done with it. Please, I'm surrendering my license. So now are you free from the scope of law? Or are you outside and abuse it as and when, or you can dispose of the asset the way you want? The government says no, it can't be that easy to escape the law. So the government is saying that, look, the moment you get your hands on it, I am going to keep an eye on you and I am going to ensure that you're in compliance with the law, and no such escape is allowed of finding loopholes in law. So that's the only purport.
Right.
So yes, it may have some severe consequences in certain situations, but the idea is to prevent abuse of process, abuse of law.
So, fair enough. If there is going to be a consequence because of this new set of rules, Dr. Mukherjee, do you think one of the consequences could be that foreign funding is going to get more difficult to come by or more expensive to access? In that case, who ultimately pays the price? Is it the NGOs? Is it the donors? Is it the communities who are being served through it?
I think that, well, to be honest, my opinion is that I think the stronger transparency could actually attract more foreign funding. So if you imagine that, well, I am an international donor, I am just choosing between the two organizations. One organization can provide audited accounts, clear banking records, project level expenditure, identifiable source of funding, and a clear compliance record, and the others cannot. Right? So if that is the case, then definitely I will choose the first organization, isn't it?
Yes.
Because that is more easier to fund for me. So that is actually what we call as an information problem. The donor gives the money, but after receiving it, the donor cannot watch how every rupee is being spent.
Correct.
So good reporting and auditing must reduce that uncertainty. So again, we know that because I am an economist, so I'm just talking about George Akerlof. George Akerlof talked about market for lemons, right? So if you cannot distinguish the good quality from the lemons, the bad quality, then the poor quality participants can damage the confidence to an entire market, right?
Correct.
So that we do not want to happen. So if the donors cannot distinguish the trustworthy organizations from the questionable organizations, then suspicion will affect everybody. So I think that transparency need not reduce foreign funding. So in my opinion, the properly designed transparency can actually redirect more funding towards critical organizations.
You think that can actually be the consequence, Mr. Chitnis? Do you agree with that? Today, when you talk about compliance cost in terms of manpower, in terms of paperwork, the management and its bandwidth, you know, this is money that could otherwise be spent on social work. Has that cost gone up significantly? Because we've already introduced laws that are trying to say that let's bring down the compliance cost and let's push more towards the social sector. Is that at least happening? And under the set of rules that are being proposed here, is that likely to change according to you?
Okay. See, actually, I wanted to say something on this, and I agree that the moment your transparency increases, moment their compliances are good, they are confident. We are ourselves, we are getting benefit out of it because we are very transparent and we are adhering to all these norms. So then there is the foreign donors feel more confident about it. However, as far as the compliance cost also, another thing is that now I think since 2020 there has been capping on there was a reduction as far as the percentage on administrative cost. But that cost has been reduced, but and as far as the standard thing, now most of the things are online. So there are definitely a lot of easier compliances are also there. However, we would like to have a transparent and faster compliances also. Especially, I would say in the just a second for intervention regarding now renewals. If renewal thing can happen faster, because every after 5 years we need to get it renewed. So if that renewal can happen, say within a couple of months of submitting the papers or maximum 6 months of uploading the paper, that will be definitely good. And the transparent mechanism will in fact encourage quality NGOs and quality donations from foreign.
So quality donors and quality organizations, if they're getting an impetus, then this one aspect within the bill, which is the reduction of the maximum imprisonment term, going from 5 years to 1 year, does that, silence the critics who say that the law is becoming uniformly harsher? Veena Sikri.
No, I think this is a part of the new, our new Bharatiya Nyaya Samhita. So I think that it's good that there is going to be a kind of a very logical approach that, the punishment can only be in proportion to whatever crime has been committed. And there's no need to give this very harsh punishment. And it's a good thing.
Right.
It will increase the confidence of those who are applying for this, and it will increase the confidence because errors do happen, and especially because, there's a lot of admin involved. There's a lot of administration involved with this work of getting FCRA approval, as there is for income tax and exemption for 12AA and ATG and so on. All this involves a lot of admin work, and
Yes.
so far, one of the restrictions also now is that you cannot spend more than a certain proportion of your the money that you get on admin work.
Right.
So the use of foreign funding for admin work and so on, that has gone down. So
Correct.
people have to look for other resources, maybe internal resources, domestic resources, amount that you can generate yourself for admin work. So this is an adjustment, I think, that all the NGOs will have to make. And
Right.
in a way, it's a good thing, because if you're going to get a lot of money from abroad and you're going to use 40-50% for admin work, then where is the benefit to society? Then there's no benefit to society. It's only going for the benefit of a few people. So I think one has to take the spirit of the law, one has to understand the purpose why it's been made. And if you keep that in mind, I think it will certainly in the long run be an improvement and will make it a world-class law. That is the effort. In comparison with many other countries who have similar laws, we will see that ours is equally good.
Correct. So this debate over FCRA that has not quite been about whether foreign money should be regulated, but it's about India having regulated it for decades. Now the question is whether oversight can be tightened without making legitimate social impact harder to deliver, because that has always been the need. That should not be compromised, because transparency and accountability, these two are important, but so is ensuring that the schools, the hospitals, the charities, the welfare organizations, they are not buried under any kind of uncertainty, any kind of higher compliance costs in the entire process. I want to thank my panel for joining us. Veena Sikri, Pallab Mongia, Dr. Soumyatanu Mukherjee and Sandeep Chitnis. Thank you for your insights here on the big question. Yes, a strong funding ecosystem is an important ask, and any society is going to want that much more transparency. The donors are looking for trust within organizations. There has to be accountability at the NGO level as well. The government wants to seek it and ensure that the entire system is transparent to ensure there are national interests that are protected. I'm Vikram with a big question. Thank you for joining us. Have a great evening.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना प्लीज। आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप उन्हें ना बहुत? फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड? 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect. only on NDTV.
Vague statements, empty threats and forced aggression cloud peace process between US and Iran. Both sides refuse to budge from their stance as uncertainty over Hormuz reopening and nuclear agreement keep the world waiting. And oil prices jump about a little bit on Monday as well, and hold on to some of those gains later as doubt grew that the US and Iran will reach a deal to increase ship traffic through the Strait of Hormuz. Oil in US Strategic Petroleum Reserve falls below 300 million barrels, lowest since 1983. US futures trade near the flat line after the major averages start to the week on a sour note as persistent uncertainty over a US-Iran deal and expectations for tighter monetary policy weigh on sentiment. Recovery and pressure were the key highlights of yesterday's session on Dalal Street as Nifty continues to fight volatility and trades in range. Nifty closed shy of 24,600, but positive bias remains eye on expiry as well today. Several stocks to be in focus today on the back of news and earnings. Vodafone Idea secures 6,400 crore rupee funding as the telecom operator also kicks off its planned 45,000 crore rupee 3-year capital expenditure program. BSE's inclusion in Nifty 50 is going to be in focus, while Jupiter Wagon's 400 crore best order win also may move the stock today. Good morning. You're watching Markets Today with me, Shreyanshi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look at the handover coming in terms of US and Iran. And they're both now trading compensation demands, adding another key hurdle to efforts to really reopen the Strait of Hormuz. So that's something that you're looking at. US President Trump is saying that Washington is going to be seeking compensation for US war casualties, while Tehran has also demanded payment, by the way, for damage from the conflict. Meanwhile, you do have Iran's leadership that is signaling unity at the moment. And you do have President Pezeshkian also saying that Supreme Leader Mujtaba Khamenei is in good health as new appointments are made to some of the key security posts as well. So those are some of the updates that you have coming in as far as the war is concerned. But when you talk about key commentary as well, let's also hear out in terms of what US President Trump had to say, because he's talked about how he's going to be seeking compensation from Iran for the deaths of thousands of US troops and Iranian civilians over the past decades, as talks to end the war and reopen the Strait of Hormuz appear to have hit a little bit of an impasse as well. But let's go across and listen in to that bit of commentary.
You said you're low-keying it with them, that you're semi-negotiating. What exactly does that mean?
Well, they asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. We think their family should get damages for killing their person or their child or mother, father that were protesting. It's at least, it was 52,000 a month and a half ago. So now what is it? So if there's damages to be paid, I think Iran should pay those damages. Well, it's open now. We're taking a lot of shit. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. It's a steel wall. And we let people in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now. We do not let them go into Iran. They're not admitted into the Strait to go to Iran.
All right, and there you go. So that's the key commentary also coming in from US President Trump. But speaking of important updates, let's also take a very quick look at the US markets as well. So largely a little bit of a lackluster session that you're looking at, and that's across the board. As you can see reflected on your screens as well, so 0.5% cut coming in. As far as the Nasdaq is concerned, S&P 500 as well as Dow Jones, some bit of weakness that you're seeing coming in. When you talk about the US futures picture, also very close to the flat line. So not much of a cue that you're picking up from there. It's a little bit of a mixed handover that you're looking at with the US futures as well, just 0.5% 1% uptick coming in for Nasdaq, as compared with 0.5% downtick coming in on the regular market front as well. But let's quickly take a look at Asian markets as well. And even there, the picture remains a little bit mixed at the moment. So you do have Nikkei that's up about 2%, Hang Seng that's up about 0.5%, and Shanghai that's 0.5% lower as well. So that's what you're looking at in terms of Asian markets. Quickly also talking about oil prices that are extending gains, and that's going to be a very, very important point for the market to be looking at as well, because you not only have Brent above $88 a barrel with just that 0.5% uptick, but prices have been extending those gains, and that should justify those levels for you as well. So $88 a barrel for Brent, but when you talk about WTI as well, $82 a barrel is what it seems to have reclaimed as well, and that's one level that's been largely untouched for at least the last few days. So that's some key positive, at least for oil prices, and negative, of course, for consumers coming in terms of the handover also. So that's something that you're looking at. But let's also add to that handover that you have right now and take a look at the FNOQs in terms of what they're really indicating. And Puneet, it's a little bit of a perplexing handover. It's a little bit of a worry coming in with regard to oil prices being quite consistently higher.
Well, most certainly, and some part of that is visible today in the implied open that we track regularly as well. And down 54 points, he'll be closer to that 24,600 mark yet again. Now, what we have seen, over the last week or so with CAS coming through, you have seen a lot of those key factors and that difference essentially between 350 and 330 reduced. So you saw that yesterday just closed a tad below 24,600 as we get into the last week of earnings. But geopolitical factors continue to have a bearing, and hence that is also visible on the Bank Nifty that we've highlighted. That 57,700 odd is where we are at currently. The next level to watch out for is 58,200. And while that level is not far, you've largely seen the triggers essentially in terms of earnings at least being done. So you will have to watch out for what drives the market next, on both the Nifty as well as on the Bank Nifty. For the cash markets, you have seen some key aspects that yesterday was a good day in terms of FII buying number. Over the week, over the last 10 days, essentially, you've seen good buying coming in from foreign investors, especially in the month of August. July was largely a flattish month, but the index long that we've also been targeting yesterday was at around 12.5%, continues to be there. But the put call ratio is also very neutral. So you have not seen positions being built in, at least going into today's Tuesday expiry. The 24,600 sees the most active call options and open interest. And you've actually seen reduction in 25,000, which was a level that had the most open interest yesterday. What you also have seen, that none of the red candlesticks, candle bars have come through in terms of open interest, which means that the market is seeing range-bound moves at this 24,600 levels. Not even out of money call or put options are being looked at very actively. 25,000 has some interest, but not as much as 24,600, also compared to its yesterday's level. And finally, for stock-specific action, you continue to monitor those which have seen bigger reaction on the back of results. Bharat Forge was one, where it was down almost 7.5%. Shorts being built up there on the back of results that came in during market hours, of course. Some shorts being built up now on Amber Enterprises as well. Results will be very crucial for this counter after what we've seen on Keynes Tech yesterday. And for the open interest losers as well, you continue to monitor Keynes Tech, which I mentioned, all longs being unwound on the counter, but did see a massive recovery from the lows. And BSC was one, which was another counter where the results were decent, and hence you saw covering of shorts. Similar one on Paytm after MDR and all of those other fundamental factors are contributing to it on a positive side is what most brokerages also make of it. So that's the picture for the FNO side of things. You will see some bearishness at the start, but let's see if we pick up the action after the first hour.
Absolutely, and let's see how that really pans out as well. Thank you so much, Puneet, for joining us with that update as well. And speaking of results and earnings reactions, let's also quickly talk about Vodafone Idea. It's seen in the first quarter modest growth coming in for the revenue and EBITDA, aided by higher ARPU as well in non-mobile business as well. And you do have Samit Sarkar joining in with all of those key highlights here.
Well, pretty much inline set of numbers that Vodafone Idea has reported in the first quarter of FY27. If you look at the revenue and EBITDA, that were up nearly 3%, margins came in flat at close to 43.1%, while the company reported a net loss yet again of close to around 3,754 odd crore. The ARPU, that is the average revenue per user, the key number for a telecom company, was up around 1.7% on a sequential basis, and this was largely because of that one additional day in the first quarter as compared to fourth quarter of FY26. Now, if you look at the revenue growth, 3%, this was largely because of the non-mobile business, because the mobile business revenue growth on a calculated basis was close to around 1.8%, while the non-mobile business, which is a volatile and a wholesale business, grew nearly 14% on a sequential basis. Now, the subscriber number, that shows an addition on a sequential basis, but this is largely again because of the M2M customers and not because of mobile subscribers, because as per the TRI data, mobile subscribers for Vodafone Idea have dipped in the first quarter of FY27. Cash EBITDA stood stable at close to 2,475 crore. Net debt was flat, while the capital expenditure, that was lower on a sequential basis, around 16% lower at close to around 1,930 odd crore rupees. Now, when you compare Airtel, Jio and Vodafone Idea, Airtel has outperformed all the other telecom companies in the first quarter of FY27 in almost all the metrics, while Vodafone Idea has been lagging its peers on the EBITDA margin front as well.
Absolutely, and thank you so much, Samit, for joining us with that entire update also coming in. Let's keep it going with some of those earnings reactions and take a closer look at Hind Copper as well. When you talk about the first quarter, largely looking like a mixed set of numbers. You do have the revenue, EBITDA and net profit each falling around 19 to 21% on a sequential basis. Sharply higher material and finance costs is what you're looking at, weighing on the quarter, while record high copper prices should also provide some bit of support ahead. In fact, Parth is joining in with just that entire handover, and the finance costs seem to have quadrupled as well. It's quite an interesting set of numbers, to say the least, Parth.
Absolutely. The numbers that were posted by Hindustan Copper, they were slightly on the weaker side because we saw that Q4 was a higher base for the company, as you rightly mentioned about the high copper prices. But if we talk about the key highlights, why they saw a pressure during this quarter, the cost of materials was up 47% quarter on quarter. Finance cost also quadrupled from 80 lakhs in the last quarter to almost 3.2 crores now. Also, employee costs saw a growth of 17% quarter on quarter to reach 106 crores, while the profits were slightly cushioned by the fall in depreciation, around 26% quarter on quarter to reach around 49.65 crores. Also, their Indian joint venture saw a loss of 24 lakhs versus profit in the last quarter. If you have a look at the numbers, then revenue was down 19% quarter on quarter to reach 937 crores. EBITDA also declined by 19% quarter on quarter to reach 508 crores, while EBITDA margins were flat at 54.2%. Net profit also saw a decline of 20.7% to reach 352 crores. Now, about the future outlook, with copper prices almost sitting near all-time highs, that is expected that will be driving their revenues going forward. Also, the rising finance cost will be something to watch out for in terms of Hindustan Copper, and also their Indian joint venture will be something to watch out for because it may continue dragging profits for Hindustan Copper.
Absolutely, and thank you so much, Parth, for joining us with that entire update as well. Let's also quickly take a look at some of these other stocks that are going to be in focus, not on the back of their earnings, but on the back of news flow. In fact, Puneet is joining in just that update here.
Let's look at the names as well, which are on our focus list as well. So continue to monitor all of those. So let's pull out the first key one that we have. It's Adani Green. Green corridor expansion continues to be on the radar. BSE will be entering the Nifty 50 in the month of September. Wipro is out, and hence that will be a big change coming through on the index going forward. Ola Electric, yesterday we covered the earnings for the company, extends subsidy benefits as well in this particular for this particular products. But Apar Industries, they have launched a massive QIP. Now comes at a very interesting time because the stock has run up considerably at this point of time. So if the company is able to get that capital, will be a big booster as well, because that valuation lock-in that we keep talking about will be visible on Apar Industries as well. Let's look at the other names too going forward. One is Jupiter Wagons. They have had an order win. For Texmaco, they have a MOU with the Belgian company, as well as for BL. They have won another 541 crore order after the July 31st update. So for BL, of course, we are monitoring the big QRSAM order that will come through for now, a 541 crore order that they mentioned. Lupin will also be in focus on the back of a nod for US FDA for a key drug that they've gotten. And finally, to wrap up the list as well, New Aegis Logistics is the next one. New commissioning announcement has been coming through, while for Prestige as well as for Prestige specifically, they will be investing in the arm. CPPIB will be investing in their arm as well. And MOU with Frontline Solutions is the one that will be buzzing in for IQ Tech as well. But these are the list of key names that will be buzzing in train today. Watch out for these individual movers.
No, absolutely. And Puneet, when you're talking about something like a Bharat Forge as well, when you talk about just the brokerage view as well, brokerages do remain a little bit divided when you talk about the weak set of numbers. Slightly more constructive view coming in for the longer term. Let's take a closer look at that as well.
Well, we had the results, of course, during market hours. We also had the management yesterday on the closing show. But more importantly, the conference call has happened post the market hours. And there, the management has given good growth outlook essentially for multiple businesses, and hence there is a division essentially between brokerages for now as to what could be the upside from here. So Goldman Sachs is one where they have a target price of 2120, which is close to the current market price. While they do see improvement in profitability, they mentioned that Q1 was weak, and especially defense business continues to have good visibility, but they see lower margins for the standalone business, for JSA as well as K-Drive Mobility, and hence remaining neutral for now. Citi, on the other hand, is the most bearish on this counter. They are continuing to maintain a sell rating. They have hiked the target price to 1210, but you can see it's way away from the current market price. They mentioned that Q1 was weak, but the demand outlook for the company is positive, acknowledges that the improving exports as well as better margins will be a key catalyst going forward. But overall, in EU as well as for the CV demand is good, the PV demand isn't, and hence they feel that the valuation currently does not offer enough confidence. On the other side though, there is some positive fillip coming through as well. Jefferies has continued to maintain that target price of 2,500 rupees per share. They feel that Q1 was modest. They have cut the EPS targets for the next couple of years going into FY29 as well, between 4 to 16%, but highlight that they still see a 30% EPS CAGR over this particular time frame. They've also mentioned that there will be some delay in execution of the gun order, but continue to like the footprint led by rebound in exports, ramp up of defense, as well as the other factors that will be positive. And finally, for Morgan Stanley, they were overweight on the counter, now have hiked the target price to 2,469 versus 2,233 rupees per share. So 2,233 was the earlier target price. They mentioned that this was a weaker quarter, but they feel this is a good opportunity to add at this point of time. They were hit by transitory issues is what Morgan Stanley puts it as, and hence they feel that the improvement in defense margins as well as the capex will capture the manufacturing opportunities. They feel that the valuations at 42 times price to earnings, which is not cheap at all for FY28, is of course higher than what its valuation is at 38 times. But the industrial peers, they trade at 49, and hence the brokerages are currently mixed at this point of time. You will have to take your pick in terms of valuation as well as growth and uncertainty, but that's the view on Bharat Forge.
Absolutely, and fair enough. Thank you so much, Puneet, for joining us with that as well. So there you go, brokerages remaining slightly divided when it comes to something like a Bharat Forge as well. But let's also move on and talk about Adani Group Chairman Gautam Adani's statement as well. He's welcomed the US court's decision to dismiss criminal charges against him, saying that he's always had deep respect for the judicial process. And you do have him also describing the outcome of the prolonged legal battle as a testament to truth, fairness and the rule of law. In a statement posted to X, he's expressed gratitude to his supporters and reaffirmed his conglomerate's dedication to India's growth as well. So that's the key highlight coming in there. But let's also move on and talk about something like a Milky Mist as well. And that's also in focus as the company is set to open for the IPO today. In fact, Sharad is joining in with an analysis in terms of the strengths, weaknesses, opportunities and threats, Sharad.
Well, yes, largely we see there's a good strength and a good strong brand recall. I'm sure a lot of you must be having breakfast right now and must be having that Milky Mist product around your table as well. So it's a very strong brand recall happening. Secondly, they have a dominant market share in the value-added product, be it paneer or even ghee. There's a robust supply chain also, which is where the street is bullish on, and a strong financial growth was also seen as well. and also backed by instis. But what are the weaknesses? Remember, the company is exposed to some pricing risk. This is of course an industry risk. There's a high debt to equity ratio, and the valuations which the company is coming with the IPO, that is on the expensive side. Now there's a heavy reliance on Tamil Nadu, especially for their milk procurement. So of course the diversification is something which the company would be focusing on going ahead. But opportunities, more geographical expansion, especially in the non-south regions. It's still an under-penetrated market overall, the value-added segment in India. There's a rising discretionary income. That is where people will be paying more for the value-added segment, and the demand from non-tier 1 market is not to be ignored, as a good purchasing power is there as well. Lastly, let's talk about the threat. Most stringent quality checks, as of recently we have started talking about, be it analog paneer or even concerns or the food security checks have started coming. So everybody is of course very careful on that. Premium product rollouts by Amul or Nandini, these are the large cooperatives. If they start coming out with this segment, so definitely there will be some kind of a pressure from the peers. And speaking of that, emergence of more startups, which are following the way of Milky Mist, which is of course a larger one. And that is where a little bit of threat definitely comes in. So this is the entire 360-degree SWOT analysis of Milky Mist.
Absolutely, and quite an interesting one, this one, Sharad. Thank you so much for joining us with that. But speaking of interesting, let's talk about Maharashtra FTA intensifying its crackdown on food safety violations, taking action against major retail and quick commerce facilities. In fact, in Mumbai's Malad, you do have Blinkit's food license that was suspended after inspectors found severe cockroach infestation, expired and tampered food items in highly unhygienic storage conditions. Now, in Buldana, Reliance Retail faced action after fungus and live worms were allegedly found in Kaju Katli, with 54 boxes seized for lab testing. Meanwhile, in Bhiwandi as well, an Amazon Retail India warehouse was also raided, with expired, spoiled and damaged food also seized there as well. So the FTA has cancelled the facility's food license, while an FIR was also registered over alleged diversion of expired food back into the market and fake disposal certificates. The crackdown has also extended to Beed, where 5 edible oil units lost their FSAI license over serious hygiene violations. So that's the update that you're looking at, and that's across Maharashtra. That's coming in, but let's also talk about some somber news right now. Powerful 7.4 magnitude earthquake in Colombia is what I'm talking about, in what is being described as the country's strongest quake this century. The death toll has unfortunately risen to at least 111, while more than 1,900 people are still reported missing. The scale of the disaster has really prompted the military to also be deployed for rescue and relief operations as authorities assess the extent of the damage at the moment. So that's what you're looking at in terms of updates coming in. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. The Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell. Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Hi, thanks so much for joining in. You're watching India Market Open. My name is Alex Matthew and with me is Hiral Dadia. Hiral, the thing is that just when you thought that the progress was being made in the West Asia crisis, you take 2 steps back.
I mean, that's something which is absolutely known for people as well now, that I don't think so this is going anywhere. It is continuing. And initially when the crisis started, everyone was actually talking about, is this going to be similar to Ukraine, Russia? The only difference is casualties are not that high, which is the good part about this crisis. It's only on the economy where you're seeing the hit.
Yeah, and you know, the thing is, it might actually come to a head politically back home for Donald Trump in the US, and that really might be the clincher and what decides the near-term course of this conflict. But let's talk about what has happened. Donald Trump has demanded reparations from Iran for people killed in wars and attacks, and this is essentially an escalation and it defeats recent efforts to restore the peace deal. In fact, his comments follow Iran's demand, or continued demand one should say, for compensation and sanctions being ended. This is not really a change from their stance through the conflict so far and since negotiations began. But listen in to what Donald Trump had to say.
You said you're low-keying it with them, that you're semi-negotiating. What exactly does that mean?
Well, they asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. We think their family should get damages for killing their person or their child or mother, father that were protesting. It's at least, it was $52,000 a month and a half ago. So now what is it? So if there's damages to be paid, I think Iran should pay those damages. Well, it's open now. We're taking a lot of shit. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. It's a steel wall. And we let people in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now. We do not let them go into Iran. They're not admitted into the strait to go to Iran.
Okay, it's a metal wall. But let's talk about the implications, because you had Brent crude that spiked as much as 5% overnight on those escalations in tensions. Pull up the Brent crude as things stand right now. It's nearly $89 to the barrel. It's actually something that it slipped below 85 not too long back. But it's shuttling within that range. And it remains to be seen what the implications for India will be in the risk asset side of things this morning. On Monday, Iran Foreign Ministry spokesperson was quoted as saying that talks with Oman were progressing smoothly and constructively. In markets, you had Wall Street that closed lower as confidence of the reopening of the Hormuz waned, as much as Donald Trump claims that it is in fact open. Cuts were not deep, however. You had the Dow that dropped just about 0.1%, while the S&P 500 ended flat. The Nasdaq fell about 0.33% or so. Shares of Intel fell over 4% after it announced a fundraise plan, and there are concerns now about the amount of money that some of these companies are spending on capex. 6 out of 11 sectors on the S&P 500 rose, while the rest declined. US bond yields rose as much as 4 to 5 basis points across the curve, and you've actually seen gold and silver prices rise quite significantly. Gold prices are now at a 9-week high after gaining quite considerably last week and at the start of this week. Let's head across now to David Roche, strategist at Quantum Strategy. David, thanks as always for taking the time, and good morning from where we're at. What do you make of the latest back and forth between Donald Trump and Iran? It seems like neither side are budging.
Well, you know, we're getting used to this, Alex, aren't we? Just babble, really, and getting less coherent as we go along. Let's try and make some sense out of it. First of all, What matters to the economy, what matters to market is the supply of oil from the Middle East. And that is not, the tankers are not moving. The Straits of Hormuz are not open. So that's the first thing, where we're stuck with an oil deficit on a global scale of probably around 16, 17, 18 million barrels a day, which is very big. That's number one. Number two, the ability to plug that gap with two things. One, Russian oil. And the second, the fact that the Chinese were importing about 46, 50% less oil than normal, allowed the gap to be plugged without, drawing down your inventories and my inventories to a level that would spark a crisis. Well, Russia's oil exports are falling probably by about 1.5 million barrels due to the war in the Black Sea. And they're also importing refined products, which is sucking refined products out of the global market. And I'd remind you that refined products are much tighter because refinery runs are no longer optimized. So the actual refined products is a much tighter market than the oil market. And China's oil imports have shot back up to 9 million barrels a day, which is about 5 million barrels a day above the previous level. So you've lost the two buffers, which would allow the Straits of Hormuz to remain closed without draining our inventories and therefore without much economic consequences. In a nutshell, that's where we are. And as we go on, it's going to get worse because we don't have the buffers, but we do have the drain on inventories. And that will begin to hurt in autumn.
Interesting point that you make. Good morning, Hiral, on the side. If things are going to worsen from here on, as what you're indicating, the impact is going to be interesting. Now, what are the most important indicators that you are watching out for to determine that if things worsen from here on, is the global economy, say, probably entering into a mode of recession or not, number one? And two, if you had to look at a global portfolio at this point in time, where would you then be overweight and where would you be underweight, taking all the risks into consideration?
Well, I think they're very, very good questions for sure. I'll start with the beginning. Is there a sign that the global economy is slowing down, which would then lessen the demand for oil, which would solve the problem? And the answer is no, there is not a sign. If you look at, obviously, capital investment is through the roof because of AI, not only in the US, but globally. If you look at the consumer worldwide, you're really not seeing a sort of slowdown in the economy, which would mean we'd be using less oil, and therefore we could get away with less oil supply. So I'm sorry about that, but that's not there yet. You would need to see the AI bubble collapse and have a major economic impact before you could say, well, the economy is really going to be much slower, so we don't need that much oil. That's my answer to the first question. The second thing is, how do I invest or recommend investing money? Well, the first thing is I put a lot of it in the mattress and sleep on it, because I think keeping your powder dry at this level of markets is not a huge risk. There are major macro risks out there. I think the AI bubble and how it is financed is one. I think the escalating problems with oil, which have not gone away, which despite the dictums and prophecies of the big finance houses that it's all over and it's not important, that is just not true. So that's going to come back to haunt us. So what I do is I own a lot of real assets, things like copper, and of course I own inflation hedges like gold, which I would just add that I own gold because I think there's a wave of inflation coming, not only by the oil price working through the economies, but much more importantly from a shortage of food. Because of the war in the Black Sea, we're probably losing about 5% of the global international supply of grain, which would push up food prices by 17%. So I own gold for that too. I think it'll go back to being an inflation hedge. They're the two things which I would focus on. In currencies, I would still be short the dollar. I think it's on the way down. And I would be very careful about equity markets, but I like the Chinese equity market, in particular Chinese AI. That's my kind of thinking as an investor.
David, on the balance then, let me ask you about India, right? Because at this moment, the one major fulcrum that everyone's looking at is oil prices. And even at this moment, David, the central bank has an expectation of $95 to the barrel for Brent, or at least the basket that we import here in India, which the closest is actually Brent. And so from that perspective, on paper, at least we're below that mark. And corporate results have been robust. They've been better than expected. So all that's missing is an AI theme. How would you, as an international investor, on balance, on the fringes, look at the Indian equity markets?
Well, actually, I'm pretty positive on the Indian equity market for several reasons. Number one is I think you can weather the storm of higher prices. There is a problem around refined products as the kind of the next step up in oil prices happens. So that is a negative, no doubt about it. But you have one great positive. I think the great positive for the euro, for the Indian equity market, is the fact that it is not an AI bubble. It is a user of AI, and it's certainly not a backward economy in terms of its capabilities in the AI space. But it is not a market which is conditioned by the over-leverage and exaggerated investments of the US AI tech sector, which is, of course, of major macro significance. So India, for me, it's well-governed. It's a democracy. You are not an AI bubble, but you do have the vulnerability, inflation-wise, down the road of the energy situation getting worse.
Okay. So, David, we're talking about AI and where India is there, places itself. But a question I have is, when you're talking of all of this that's happening, you have NVIDIA, which has gone ahead and announced a strategic partnership with Apollo, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR. And they're looking to establish an independent AI compute financing platform, mobilizing they've said $500 billion of third-party capital over time for an AI infrastructure build-out. At a time where we're already talking of whether this AI bubble is going to burst or not, what's happening around there, you're already talking about the strategic partnerships that NVIDIA is doing with a whole host of really good names.
Look, these are good names, and you, of course, have to invest in data centers and things like that because you have to be a part of the AI development. But I think that these are projects which will come into question when the AI bubble bursts, because when the AI bubble bursts, what will really be in focus will be the kind of circular financing, the excessive leverage, the capital by hyperscalers, and then passing it on to data centers or spending it on data centers, which relatively small labs and developers of AI models have to finance by being successful with their products. And most of them will not be. Because, why not? Because the American AI model is far too expensive and is not any more productive or technologically capable than the Chinese model. So they're on a losing wicket as regards the business model, which then attacks the whole pyramid of debt. Well, what you're talking about is a pyramid of debt. All of this money is borrowed or taken out of markets. So when this bubble comes to an end, it will affect those investments. But I don't think per se they represent a risk to the Indian economy, because in the end, India is still a user of AI, and there's nothing wrong with being a user of AI if it's used productively, rather than a creator and producer of AI. And actually, I think that's the place you want to be, because AI will go ahead, it'll just get cheaper, and India will be able to use more of it at a better price and more productively.
Okay, so I think it's going to be a wait and watch mode as well. But thank you, David, so much for joining in. Always a pleasure to speak to you and get your views as well. We've spoken about what's happened overnight in terms of global markets. Indian markets were very interesting as well. We've ended slightly higher, and it's been a range-bound session if you have to talk about yesterday. There was volatility, and we've closed at around 24,583, up only 13 points. Nifty actually opened 11 points higher, but came in under selling pressure in the first 30 minutes of trade, and subsequently you reversed course as well, recovering more than 100 points by the end of the first half. The recovery that we saw in the first half of the trading session was something that was not sustainable, and that's what happened. Now, you've declined nearly 75 points from day's high during the latter part of the session. If you talk about the NSE cash market volumes as well, they were 2% higher versus the previous session. And the reason I'm highlighting this is, Alex, because on the back of cash, what has happened is volumes have started thinning a little bit, and that probably will be concerning as well. And hence, I think you have the regulator which is coming in. Amongst Nifty 50 constituents, Titan, Tata Consumer Products and Bajaj Finance led the gains. SPI, interestingly, was down after a pretty decent set of numbers. You had Eternal and ITC also, which was trading under pressure. Bank Nifty remained in a consolidation phase over the last 4 trading sessions. In fact, the sectoral performance remained mixed, wherein real estate, private banks, consumer durables emerged as the top performers, whereas PSU banks were losing out. Oil and gas and healthcare were also losers yesterday. Broader markets indices delivered a mixed performance, and you had mid-cap 100, which rose 0.6%, whilst small-cap 100 declined 0.3%, and the market breadth actually turned marginally positive. You have the BSE advanced decline ratio, which was at 1. So this is indicating there was selective buying interest across the mid-cap and the small-cap segments at lower levels. So that was what the setup looked like in terms of, the recap looked like yesterday. But if you have to look at today's session, again, I mean, it is expected to be range-bound. Markets are trading with a cautious bias. And the question is what happens in terms of the domestic sentiment, because that remains pinned down by a spike in global crude oil prices. Apart from that, if you're talking about the opening adjustments as well for trade, you should be watching out for high-yielding stocks as they trade ex-dividend. So Godfrey Phillip, Gland Pharma, Kirloskar Industries, Castrol India, all of them are high-yielding stocks, and hence watch out for them in opening trade. So it's going to be an interesting setup, because if you look at the implied open as well, if we can just quickly have that one on the screens, and then Alex will talk to us about the factors. But quickly, if we can just have the implied open of what that number is indicating right now, 45, points. Yeah, it stays there. So again, it's neither here nor there.
Yeah.
If it's a day like yesterday, you will probably see that recovery midday, and then again that slump happening.
No, absolutely. For a large part of the session, it was caught within a very, very tight range, and I think that was evident even towards the end of trade. But range-bound action, therefore, for the benchmark Nifty 50, but the broader trend remains bullish. This is something to bear in mind. The Nifty has remained within that 24,500 to 24,700 range, which is a very, very tiny range indeed, for 4 sessions in a row, and that obviously indicates consolidation. The index is above all key moving averages though, keeping the primary trend positive. The immediate trigger is a decisive move outside of that range, and the decisive move opens the next levels, which are 750 and 800 on the upside. That in turn opens targets upwards of close to 25,000. Let's see if we move closer to that mark sooner rather than later. Downside support sits at 24,450 to 500, with a strong positional support at 24,300 to 400. For the Nifty Bank, the broader structure remains constructive above the short-term equal moving averages and the daily moving averages as well, the 200-day moving average in fact. The resistance is at 57,930, 58,045 and 58,230. The pivot support at 57,555, and then you also have supports at 57,440 and 255. All right, let's head across now to Puneet Zaveri, who's joining in to tell you about what to look forward to in the F&O space. Morning, Puneet. How's it looking?
Well, morning, Alex and Hiral. We've seen, as you guys rightly mentioned, we're stuck in a very, very tight range. And essentially with the implied open very close to the 24,600, 550 odd mark. But what you are seeing is essentially a lack of triggers. So you've seen the fag end of the last week of the earnings season come through. You've seen major reactions on the benchmark come through as well. But the next leg of trigger seems to be something the market is watching out for. You've seen good buying come in for both and similar trajectory for the Bank Nifty as well at 57,700, waiting for the next trigger to happen with the MPC meet done. Now with earnings done, you are seeing that impact coming through on the index, maybe some fatigue as well. So important to monitor all of those counters and triggers as well. Cash markets seen some good buying yesterday by foreign investors, almost 2,000 odd crores, but the index long has been fairly range bound at 12 to 13%. So in the month of August, it's been good buying by foreign investors, not too much selling, but the F&O side of things largely continuing to be flattish. What is also flat is the put call ratio, not too much change at all. So only 24,600 is where you've seen active call open interest being built in. The puts have also not been built in apart from 24,500, and 25,000 has also seen some reduction. So if during the day you see some more plays come through, but today is the Nifty expiry, so unlikely. So very interesting that we are stuck in that range even on the F&O side of things. And for stock specific action, you've seen some come through at the last week of earnings. Bharat Forge was one. We spoke to the management yesterday during market hours. Stock was down 7% and brokerages are mixed. So yesterday was a build-up of shorts. Important to monitor what happens with this counter today. Amber Enterprises is another one. Like after Keynes, you are waiting for the numbers of Amber to come through, and how those shape up will be very important for the stock going forward. And finally, in terms of the open interest losers as well, multiple reactions here. Keynes Tech was one, so buying from the lower end, then some pressure yet again. But BSC as well as Paytm were two big, ones where you saw covering of shorts and a massive move of almost 4 to 10% each on those particular counters. So that's the F&O picture for today. You are seeing some fatigue on the index, and if so, the first hour buying comes through will be a very important positive sign for the markets.
Absolutely. All right. Thanks so much, Puneet, for that. Let's jump straight into stocks that you should watch out for, and quite a few of them on the back of earnings. I'll start with Gland Pharma, another CDMO-related player that has done well. In fact, the growth for the company in the quarter gone by has been driven by CDMO, recent launches and higher volumes in base products. They've seen an improved capacity utilization and operational efficiency kick in as well. They've signed multi-year sterile injectables manufacturing and supply agreements. The gross margin has been aided by favorable product mix as well, and profit is supported by operating leverage, high utilization, as well as the fact that their B2B business has contributed 50% of the total revenue, and that has grown as much as 19%. The strong momentum in the CDMO business is something to talk about. Certainly, it's up as much as 20%, and the US business has grown 32%, and that growth has been driven by recent launches. So some of the numbers that stand out, both the EBITDA as well as the PAT have beaten estimates. The revenue has seen an uptick of close to 20%. EBITDA is up as much as 33%, and the margins have expanded to 27+%. A stellar set of numbers. Beyond that as well, the outlook is something to bear in mind. The earlier long-term outlook was 15% compounded annual growth rate, but the management is now re-evaluating that growth outlook. Expect 20% growth over the next 4 years. The near-term EBITDA margin target is around 30%, which is even better than, as you remember, I just mentioned 27%, and the longer-term aspiration of 35% EBITDA margin as the CDMO business scales up. So all positive updates. Jefferies is one of the notes that we saw on Gland Pharma. They've upgraded to buy from a hold. They've hiked the target price to 3,350 from 2,080. Take a look at that increase in the target price. They say the key challenges are largely behind. They've delivered a strong beat versus estimates, driven by 32% year-on-year growth in key US markets. The management has indicated that for FY27, the growth can potentially reach 15% constant currency from earlier guidance of 12 to 13%. They've signed one major CDMO contract, and they also have licensed a large total addressable market differentiated products. They also believe that many of the key challenges for Gland Pharma are behind them, and see that the Cenexi break-even and new contract wins, as well as expansion into complex products, should bode well going forward. So we'll get in Varsha, our colleague, to give you some more details as well beyond what I've just spoken about, which is already quite detailed. Let's get into Precision Wires. It stands out because they've had a pretty decent quarter gone by, substantial improvement in profit metrics on a year-on-year basis, but that more than anything else is on account of a low base. The strong performance continued on a top-line basis with growth of over 60%. The margin is improved on year and contracted just a little bit on a sequential basis. What's more, in terms of capacity addition, they've announced that the Silvassa plant capacity will be revised marginally higher In fact, they were already expected to increase the capacity to 4,400 MTPA. They are now saying that they will expand it to 4,620 MTPA at an estimated cost of 48 crore rupees. All told, a very good quarter for Precision Wires. Take a look at some of those numbers. A profit number as much as 72% high at 46.5 crore rupees. And finally, Bosch in the automotive ancillary space, revenue growth is primarily driven by growth in their power solutions. In fact, power solutions revenue has grown as much as 29%. Mobility aftermarket business revenue has grown as much as 10%. They've seen an improvement in margin that has aided the bottom line growth as well on a year-on-year basis. The decline in PAT on a year-on-year basis, in fact, is on account of an exceptional gain in the fourth quarter. No, rather in the first quarter of last year, I should say, not fourth quarter. In the first quarter of last year, that's on account of the sale of building technologies. And if you adjust for that one-time gain, the PAT growth would have stood at as much as 25%. So it looked a pretty decent set of numbers for Bosch. Not as good as Gland though.
Gland has been fantastic, and I think brokerages are also very upbeat. And as you mentioned, absolutely. On my list, I have 2 earnings, and one is on the back of Nifty inclusions and exclusions. A Wipro and a BSE. Why this is interesting right now is Wipro will be a thumbs down and a BSE a thumbs up, because BSE will actually replace a Wipro and Nifty 50 effective the 30th of September. The reshuffle actually ends Wipro's nearly uninterrupted presence in Nifty 50 since the index's inception. This is going to be big when you talk about a Wipro exclusion. I'm not very kicked about a BSE inclusion after hearing that a Wipro is being excluded, right?
Yeah, because it's been on the exchange.
On the exchange since the time Sensex, Nifty was actually constituted, right? So, how big a negative will this be for a Wipro in terms of sentiments?
But you have to admit that it has been the weakest link in that IT frontline pack, hasn't it? On the performance basis as well, and in terms of the stock performance as well, for a good while now, it has lagged the rest.
Yeah, in the last 5 years as well, if you were holding a Wipro, a 40% downtick is what you've seen, is what you're seeing. And yes, it's got its highs. I think between 2019 to 2023 was that good phase in terms of where Wipro had its good run. But post that, nothing. Even since listing to 2019, it's been very lackluster, underperformer as compared to peers as well. And I think Puneet can always shed more light if he has to on this one. But that's the first one that we have, and we will talk in detail about all the inclusions and exclusions. Lumax Auto is another one. Now, it's a thumbs up. A strong start to FY27 is what we are seeing. Actually, they've consolidated. Net profit has been more than double. The profitability growth has outpaced the revenue growth as well. And the intentional move into advances plastics, mechatronics, and clean mobility solutions is what has aided business this time around. They've actually approved building almost 156 crore plant in Chakan as well. Revenues 32% growth, your EBITDA is up 54%, margins have improved, and they've reported a profit of 87 crores versus a 41 crores. And a thumbs up on a Kolte Patil as well. Actually, the company has swung into profitability, so that's the positive. They've seen a massive surge in project revenue recognition, and the new pre-sales bookings have remained steady. Collections have also gone up 30%, and the number is coming at 750 odd crores. And the average realizations per square feet, that has jumped 29%, which is a positive. So a revenue of 920 crores versus 82 crores. EBITDA at 190 odd crores versus a EBITDA loss of 26 odd crores, and a profit number of 146 odd crores versus a loss of 17 crores. The stock ended with gains of nearly 4%, potential upside in today's session as well. And apart from the 6 names that we've mentioned, a whole host of other counters that will be in focus as well on the back of earnings and news flow. Puneet joins us with the list. Puneet, good morning. What do you have for us?
Well, good morning, Hiral. Well, we've seen some good numbers come through. Yatharth was one where you saw 51% growth in revenues, but not as simple because the margins in this particular quarter, EBITDA is up 39%, and hence margins at 23.3 versus 25.4. So there's a slight miss on margins because of costs, but a 50% revenue growth was very strong for the company. Also, the other factor that depreciation for hospitals is something to watch, and hence the net profit is up only 12% in this quarter. When you look at the deeper dive in terms of key numbers, The average, the ARPOB number that we talk about is up 7% at 34,758. New hospitals now contribute 27% of the mix versus 22% in the last quarter. And the bed occupancy has also increased by 300 basis points to 68%. And the average length of stay, which has reduced 3.7 days versus 4.1, which is also a good sign. So the nitty-gritties of it has been good. Revenue has been good, but wait for the street reaction to happen on the other factors. Idea Forge is one, 68 crore revenue versus 12 crores last year. They have reduced the net loss to 2.6 versus 23 crores. Gross margins did see some impact in quarter one by almost 1100 basis points, but their order book is at 256 crores and hence another key stock to watch. And finally, a couple of names on the news flow side. One is Mahindra & Mahindra. They came out with their July production update, and it's been a strong one for the company, up 20%, while the export sales are up 47%. Within that, you've seen the Thar as well as the Thar Rocks production up 15%. Bolero is up 37%, while EV sales, EV production essentially is up 35%. And finally, Apar Industries, they have launched a 2,500 crore QIP. The indicative issue price is roughly 14,805, which is a 10% discount to yesterday's close, but comes at the important time. Stock has seen a massive run up over the last 12 months, and Motilal as well as ICICI Securities are the lead book runners. So a couple of key result reactions, a couple of ones on news flow. Keep these on your radar.
All right, and let's also talk about Wockhardt and an interaction during a media conference call. The Wockhardt management spoke to NDTV Profit and gave the timeline for the launch of Zenic, which is their wonder drug in India, and also their guidance on biosimilars business. Listen in.
Zenic launch in India, we should be at the beginning of next year. And even in, I think, USA would be the first quarter, maybe March or so.
In the current year, in the last, I think, investor conference, I had said that we'll double the business in the next 24 and 36 months. And we are very much on track to do that. And the quarter one results have been also very good. So, yeah, we are on a good wicket over there.
This is going to be interesting when you talk about a Wockhardt, because one, you're talking about earnings where the numbers have been pretty okay, and second, you're talking about a timeline which you've seen for Zenic. I mean, next year, biosimilars as a segment for pharma as a sector is actually, you know, firing on all engines, and if they are talking about good growth coming in there, this is going to be the most positive aspect.
I think Zenic is going to be something to bear in mind, especially in India, right, where the use of antibiotics is actually pretty common. And so therefore the resistance to antibiotics is also pretty common for a drug that promises to be that super drug that counters bacteria. It's actually quite something.
Yeah, quite something. In fact, you know, we'll quickly slip into a short break. On the other side, we'll actually discuss your trade strategies for the day as well. Please stay tuned to NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड? 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Gift City in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC.
Welcome back. You're watching India Market Open, and joining us in studio as usual, Parag Thakkar, Head Fund Manager at Fort Capital. Lots to talk about today with Parag Bhai. And of course, as always, Kush Bora, founder of kushbora.com. Kush and Parag Bhai, good morning to the both of you. Let me start by asking about what the mood is this morning, because yesterday in trade, it was almost as if at 11:30 or 12, if you switched off, and you came back at 3:30, you wouldn't have missed anything.
Yes.
No?
That's exactly how the day was, right?
Very well
10 points
put.
up and 10 points down.
Very well put. First of all, very good morning, guys. And that's exactly what I was going to say. Oh, midweek छुट्टी मिलता तो कितना अच्छा लगता है ना? I mean, यहाँ तो मंडे को ही मिल गया, right? But that's the kind of mood that the markets are in right now. Consolidation with a mild negative bias. अगर कल का commentary आज भी run कर दोगे मेरा on Nifty, it'll sound pretty much the same, right? Lower high, lower low formations. In fact, FII का short positioning is also on the index at least, very much there where it was yesterday or day before rather, Friday. So I think there is some consolidation with a negative bias. My concern is that I am now focusing or being a little cautious on the support side rather than the resistance side. So 24,400, that's the level that you have to watch for on the downside. If that is broken, the 20 DMA near 24,250, that's something that you have to watch for. Resistances, we'll see once market picks up traction. But right now, be a little cautious. Bank Nifty also, by the way. Remember that convergence that we've been talking about? 20 and 200 DMA ka convergence comes at 57,500. That has been tested repeatedly. In fact, yesterday's low also was very close to that point, right? And there is lack of leadership. Other than maybe ICICI, there isn't much happening in Bank Nifty right now. PSU privates are interchanging the leaders or the gains for the day. But here too, like I said, I would perhaps focus a little more on support. So 57,500 immediate one. Once that is broken, 56,800. So be a little cautious. If your stop losses are triggered or the stocks come close to those support levels, you're better off taking some money off the table.
And what about individual stocks that you like, Kush?
Yeah, so because the setup and practically everything is the same as yesterday, I'm going with stocks which are the same as yesterday, with one exception. So Belrise and Emcure Pharma. Belrise, by the way, was the weekly pick. 258, 268 were the targets. 238 was the stop loss. Came very close to that target yesterday itself, the target one. So 256 was the high point of the day. There is strength in it, right? Even when the markets were meandering, this one still held its ground, gained some. Emcure Pharma, very similar. 2055, 2135, these were the targets. 1915 is where you keep that stop loss. Yesterday's high close to about 46, 47. So again, you're starting to see some traction. I'm adding a short call today on Voltas just because the kind of the texture the market has, right? Sell on Voltas for targets of 1245, 1220 with a stop loss at 1285.
Okay, so interesting picks coming in there. Parag Bhai, good morning. With the way earnings have panned out so far, I think in the last, we're at the fag end now, and you have majority earnings coming in from the broader markets. Anything that stood out for you basis what came in post-market as yesterday?
So if I combine the valuation and the performance, then SBI stood out for me. Although yesterday I also said that, yesterday was a day when it had to correct because it went up 10% before the results. But if you see, core PPOP growth of 20% is outstanding with, credit cost of 0.27% and NIM improvement 7 bips, 18% loan book growth. I think nothing to complain about. Their cost of funds has gone down. So I think they have done everything right in this quarter. Fee income, in fact, has gone up by 20%. OPEX was up only 5%. And as we see this trend continuing also in the future. So at 7p and at 1.1 time book, I think it's a steal. And see the value of subsidiaries it has. Phenomenal. SBI Life, SBI AMC, NSE.
That was SBI which reported
yesterday.
Day before yesterday. Day before, over the week, Friday actually. But post-market yesterday, a lot of mid-cap and small-cap companies came in. So anything that you liked from there?
So Lumax Autotech, for example, this is a stock which I had bought in my fund at 550 or 600, and I sold it 850, 900. That saying that it has made so much money. Now it is 1700. I can tell you, I have never seen such kind of numbers from auto component companies. It is phenomenal.
Bosch was pretty good.
No, I'm saying every auto component. So last week we discussed Sundaram Fasteners, right?
Correct.
And that stock is also continuously doing well.
What did you make of Bharat Forge? Because there was that one-off that took place.
I think the stock had also run up too much. 1 lakh crore market cap now.
Is there an opportunity now?
No, I would say that there are many other opportunities. It is still fully valued in my view. Although the technical capabilities of Bharat Forge are undisputable.
I know that you track Bharat Forge very closely, right? So, Hiral, what are the allied businesses that they're expanding capacity in? There's aerospace, there is defense.
Aerospace and defense is where they're actually putting in a lot of money, building that capex over there, making a lot of
2,500 crore
acquisitions
capex,
as well.
right?
Yeah, and acquisitions also, they're looking at these two spaces. In fact, initially Bharat Forge was also always related to North America Class 8 truck orders. Now that has become probably 7, 8, 9% of their overall revenues.
And so, over the next year and a half, their mix of revenue is going to change materially.
Materially, that's what the management had indicated. I think when we spoke to Amit Kalyani as well, he said, aerospace, defense is what we are focusing on. This is the time where we are building on in terms of infrastructure, capacity, etc. The payout is going to be slightly, I mean, not this year, but at least 28, 29 is what one should be watching out for.
So, if you have that much of a time horizon, is this a good opportunity to buy, or would you still wait for a better?
No, I would still see. For example, Samvardhana Motherson also is building up a huge plants for defense and aerospace and all that. Sundaram Fastener is also is also expanding big time into wind energy, aerospace, various other verticals. So, actually, I think every auto component company is diversifying into non-auto, precision
engineering.
So, on one hand, their core numbers are good because underlying automobile sales are good. Content per vehicle is also increasing, and third is they're diversifying into non-auto businesses.
So, but then what is your and to close out, therefore, if you were to put all of these in a waterfall, and you say that if you don't get this, then this, if you don't get that, then this. How would you?
So right now, as we speak, I have Sundaram Fasteners and Samvardhana Motherson in my portfolio.
Okay.
Yeah, but I would say that every auto component company which comes out with numbers, except for Bharat Forge, what happened, and that too should improve. But I think auto component has been a standout space.
Okay, so our auto components is the space that everyone's watching out for, and the kind of run up also that the companies have seen is spectacular. But moving on. A US court has actually dismissed fraud-related charges against Gautam Adani, Sagar Adani and Vineet Jain, ending the case after accepting the DOJ's motion to dismiss the case. In fact, the charges cannot be refilled. Nimit is here with more details. Nimit, good morning. What are the latest updates that you're picking up?
Yeah, so what has happened here is the court, there's a big relief for Adani. This has been ongoing for a while. The DOJ, in fact, moved for this about 2 months ago now, and finally the US court has accepted the dismissal of the DOJ's case against Gautam Adani, Sagar Adani and Vineet Jain. Now, here are some important things you need to know about this. First, you need to know that this was an acceptance of the DOJ's plea to dismiss. This is not an examination on merits of the case because the DOJ prosecutorily is is the constitutionally empowered body to prosecute Adani here in this case, and they chose to dismiss. Secondly, having said that, important to know that the judge has said that there is substantive legal merit in the fact that this case could be dismissed. We'll come to that in a bit and I'll explain to you, but what is important to understand is that there was legal reasoning beyond just the DOJ's request that the court examined and found merit in dismissal here. The other very important finding here is that the back and forth about the 10 million investments that were proposed and alleged that were put out there, the court has said that this has nothing to do with the decision taken by the DOJ to dismiss the case. A very important finding for the Adani Group as well as for the DOJ in this case, saying that there was no consideration of the 10 million that was made in proposed investments, had nothing to do with the dismissal at all. Now let's come to the legal substantive basis that we originally spoke about. The legal substantive basis here were the alleged statements, the corporate statements that were made about bribery and so on and so forth, the anti-bribery policy. The court found that these do not amount to specific representations made on bribery. In fact, these were corporate puffery used generally in languages across anti-bribery policies in the corporate spectrum, and this does not amount to a specific actionable statement against bribery or a misleading statement made to investors. This was the substantive legal basis on which the court decided to accept the DOJ's plea. Now, what this means is that against these three persons, Gautam Adani, Sagar Adani and Vineet Jain, this case is closed with prejudice. Now, with prejudice is key here. It means that this cannot be reopened at a later point of time. These are definitively and permanently closed, and the Adani Group can go on working with its US and in the bonds that are in question here without fear that these will be raised again. Now, also what needs to be pointed out very clearly that Adani consistently maintained denial of the allegations that were made in this case, and that has been now found out true with the DOJ. So we'll keep tracking it, but the case is now closed against these three.
Closed. Okay. Joining us on the phone line, thanks so much, Nimit, for that, is Siddharth Luthra, Senior Advocate and Professor at NLU. Mr. Luthra, thanks so much for taking the time. My colleague Nimit just laid out the facts as they have been presented. What do you make of it from a legal perspective? What he was just saying is that the case is closed with prejudice, and so you can finally put this matter to rest from the perspective of the Adani Group.
So it's a very simple thing. When a matter is closed without prejudice means there is an ability to relaunch proceedings. When it is closed finally with prejudice means the proceedings cannot be reinstated. So the understanding that we have is that the matter stands closed as of date, and there is no likelihood of it being reopened.
On the statement, the court has found substantive legal basis for dismissing the fraud charges. Essentially, Mr. Luthra, this is not merely a case where the government has withdrawn the charges after the judge rubber stamped it. The judge has independently examined the DOJ's reasons and found that they were non-acceptable or non-actionable. What do you think about that?
Yeah, once the court gives a finding like this, it is, excuse me, in a sense, a finding of closure and exoneration for the Adani Group, which is to set at rest the various allegations of corruption and fraud that.
Okay. So then from that perspective, let me also ask you about this, right? With regard to the fact that the court has accepted the DOJ's dismissal decision and beyond that, what the group and what the people that have been mentioned in this, the three members of the Adani Group have constantly maintained, which is that they deny any wrongdoing in this matter. What does this mean, Mr. Luthra, from a legal perspective for them to do business in the US and for them to raise funds in the international markets? Can that finally be put to rest?
To my mind, I'm not an expert on the US law, the securities market there, but to my mind, they can now continue unfettered, and this particular investigation will not stand as a bar in their continuing their business activities.
Okay. Mr. Luthra, appreciate you taking the time to speak to us this morning. Pleasure speaking with you.
Thank you so much. Thank you.
Yeah, I mean, this is a positive development as well. I think let's actually take a question with Parag Bhai as well. Parag Bhai, what do you make of the DOJ's decision here? And in terms of the stock price, I know that the overhang somewhere is way behind now.
Yeah.
I mean, everyone's moved away from it already. But with this statement judgment coming in, do you think there is further strengthening of the case coming in here?
Yes, absolutely. And I am happy for Indian corporates, that they are winning this kind of battles. But so within the Adani Group pack, I have always liked Adani Ports the most. It's a superb asset, strategic asset. Market cap is close to say 3,87,000 crores, and cash profit last year was cash generation was 20,000 crores. So at 5% yield, and this is going to compound at 15%, and this is almost like an annuity business. So
yeah, and it's moved beyond just being a physical asset, right? They've moved into logistics and end-to-end solutions, right? So going forward, one would assume that share of the business would go up more.
Yeah, 100%. Logistics business is going to grow at a higher rate. But the point is that, see, I like this kind of annuity cash flow generating businesses which are non-cyclical. So there if you get 5% cash flow yield, which is going to compound at 15%, it's a irreplicable asset, right? So I would say that Adani Ports remain my top pick within the Adani Group stocks.
Okay, all right. Let's talk about the other stocks that you should put on your radar. And Soumit Sarkar is joining in as he usually does at this time to tell you about what he's hearing from his checks in the dealing rooms. Soumit, morning. What are you picking up today?
Morning, Alex. A host of stocks that remain in focus. Firstly, it's India Shelter. Now, there are some sell-offs on the HNI desk, and dealers are expecting a big block deal to come in by Nexus Partner. Dealers are also indicating that this could well be a clean-out trade. When it comes to Metropolis and Thyrocare, there's a buzz of a promoter block deal that could come in both these diagnostic stocks. For Eternal and Swiggy, dealers indicate that there are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter at lower levels, and delivery volumes were also on the higher side. Given the fact that it's earnings season, Amber and Page Industries continue to remain in focus. There are some sell flows on the large HNI and the PMS desk. Dealers are expecting weak Q1 numbers to come in from both the names. For Capillary Tech, yesterday a big block deal took place. The promoter has sold some part of its stake, and dealers are indicating that this was the last of it. There won't be any more stake sale coming in from the promoter's side. Now, given the fact that there was some leakage in this block deal, the stock was down nearly 7%. But few of the large mutual funds were among the buyers in this block deal, is what dealing rooms are indicating. For Hindustan Zinc, there are sell flows on the PMS desk. Dealers are expecting a potential OFS announcement that could come in very soon. And lastly, when it comes to Simplex Infra, prominent large HNIs have been accumulating this counter in trade. Yesterday, the stock was up nearly 10% at one point of time. It could well be a turnaround story, is what dealing rooms are expecting, and they're expecting a positive news flow going forward when it comes to Simplex Infra. And Apar Industries was part of our segment on July 24th, where we did indicate that a QIP will open soon. And yesterday, the company did open the QIP, and what we are picking up so far is the demand has been quite strong for this QIP.
Okay, thank you so much for that, Soumit. Stay with us before we let you go. We'll just take a quick question. Metropolis and Thyrocare, pharma has been in focus as well. There's a buzz of a promoter block deal, as what Soumit is pointing towards. Parag Bhai, any view on both of these counters? Because Metropolis, Thyrocare, your diagnostic companies are also doing pretty well.
Yes.
They did well, yeah.
So within that pack, Dr. Lalpath is my favorite. That is a stock which I like. But of course, see, this is a space which is again, insulated from all the problems which we see. In fact, it benefits from it, unfortunately.
Correct.
So this is a secular space. The only worry was that intense competition coming out from the diagnostic centers which are funded by PE funds and all. But now that is also moderated. So I would say that within this pack, I would always go with Dr. Lalpath Labs.
Kush has a big smile on his face.
Can you guess why?
Because I think you also like Lalpath.
This was a call. Absolutely.
Yeah?
This was a weekly pick last week. With targets of about 1985 and, if I'm not mistaken, 2090. It's consolidated last week. This week it's showing traction with the rest of the pack, as you rightly identified. Metropolis, Thyrocare, by the way, also shaping up well. But yeah, I mean, you could still consider Lalpath or Metropolis because it's seen some, pullback, and then the risk-reward ratio from here on becomes that much more favorable.
Okay, all right. We briefly talked about this at the start of the show. Hiral was speaking about this, but let's speak about it in some more detail. Somit joining in to tell you about that. The Nifty September 2026 rejig is set to trigger significant flows, with the BSE seeing the highest inflow expected and Wipro the largest outflow. Somit, this is, if you can call it that, an iconic or landmark moment where Wipro makes its way out of the benchmark. What would you bear in mind here?
Yes, Wipro coming out of the index after a very long time. But again, whatever changes have been announced by NSE for its key indices was pretty much on the expected lines. No surprises on that front. Now, the September 2026 rejig has been announced, and the adjustments, which means that the final inflow and outflow regarding the same will happen on September 29th, 2026. Now, here's the list of the stocks which could see the highest amount of inflow and outflow. As you were mentioning, BSE is the stock that would see the highest amount of inflow, $623 million. That is the net inflow that could come in to BSE on the back of its inclusion in the Nifty 50 index. Wipro moving out of the Nifty 50 but getting part into the Nifty Next 50. Hence, the net cumulative outflow would be just around $149 million. Apart from that, there is Vedanta Aluminium, Polycab, Hitachi Energy, Vodafone Idea, which could see an inflow of anywhere between 48 to $149 million, while on the flip side, there is NTPC, Lodha, Shree Cement, REC, United Spirits and Indian Hotels, and these counters could see an outflow of anywhere between 86 to $39 million on the back of its exclusion from the Nifty Next 50 index. So these are the key stocks that we should watch out and trade. But do remember that the final adjustment, that is the inflow and outflow, will happen on September 29th.
Okay, thank you, Somit, for that. Parag bhai, BSE coming in, Wipro going out. That's the key over here. You know, I was happy that BSE is coming in, but of a Wipro going out, that was our conversation when it's been there since inception.
Justified.
Yeah, I mean, what do you make of it?
Yeah, unfortunately, Wipro has not managed to deliver any returns, which is a big, I would say, it's a great quality company, top quality promoters, but somehow something or the other keeps happening. And they just struggle to give returns. And so now they are on their way out. But sometimes, you know, sometimes this MSCI changes are very interesting. When something moves in, it is already overpriced, and when something moves out, it is already underpriced.
Yeah, okay. So my question then is, BSE, already a very good run-up, right?
Yes.
In fact, it was one
26%
of our... Yeah, I mean, on Business Leadership Awards, it was one of the wealth creators as well. With BSE coming in on Nifty 50, do you think it will make any change, or do you think there will be some bit of profit booking that could come in?
No, there will be some profit booking, that because as you rightly said, the stock has done so well and now trades at around 50 times trailing earnings. So definitely some profit booking will come, but there is a huge amount of buying, right? $600 million. So, and which is 6 days of average delivery volumes.
Correct.
So there's yesterday also stock was up around 4%.
Yeah,
so I think it is moving in that direction.
Right? But it also tells you something about sentimentality about stocks in your portfolio, right? Just as the index has no place for a stock that is relatively underperformed, so too does your portfolio.
You are asking about...
you can't love a stock beyond a point.
Yeah. So I don't own it, frankly speaking.
I'm talking about in general.
I don't own both of them.
On the charts, BSE and Wipro?
If this were a pair trade, the viewers will be super happy, because at least I've personally always maintained that BSE is a buy on dips kind of a stock. Jahan bhi dip milta hai, buy karo. And Wipro's been exactly the opposite. I've always said that, you know, you could still consider HCL Tech, Infosys and TCSs of the world, and then you jump directly to the middle names. Wipro never really makes a cut. So not surprised that this has happened. But yeah, so for me, it's more important to focus on BSE and the moves that will make from here on.
Look at that diversion.
Yeah, exactly. And you know what the reasons are for getting a BSE in and a Wipro out. But interesting one there. Let's also go across to Sharad to understand what's happened with the Z Entertainment in terms of numbers and what brokerages make out of it as well. Sharad, good morning. You know, in terms of numbers, I know it's a weak set of numbers. A couple of announcements that they've made as well, and there are a couple of brokerage reports. What do you have for us?
Good morning, Hiral, and you're right, a weak set of numbers both sequentially and on a year-on-year basis. If you look at it, that's where the impact has happened, especially on the ad revenue front. That's the big concern coming in. Overall, year-on-year basis, subscription revenue was decent enough. It was up almost 16%, but everybody's talking about FIFA World Cup. They have started getting that as well. Has that actually baked in the quarter? That's the big question. And companies stated that they're expected to raise their ad revenue, especially from the German Football League broadcast going ahead as well. and the advertising revenue has been impacted because of the Middle East crisis. That's what the management stated. But the second quarter, the ad and subscription revenue is expected to be better than Q1. So there might be some mixed reactions coming for Zee, and the FIFA broadcast rights has helped in the recovery of ad revenue in the June quarter, but it's not so much. That's what the street is estimating. City, on the other hand, has maintained sale with a minor target price hike coming in, and sports segment is driving important reach right now, and they still remain cautious because of the weak ad trends and the rising investments. And overall, there is a overhang also in the stock, especially on the promoters, because they have been debarred from the markets for 1 year. While on the other hand, there is a fundraise also planned, so that the promoter stake goes up. So a lot of things happening at Zee, but overall the numbers are on the weaker side.
All right, that's the long and short of Zee Entertainment. So, Sharad, thanks so much for that. Ruchit Jain of Motilal Oswal Financial Services joining us this morning. Ruchit, very good morning to you. Thanks so much for taking the time as always. Do you think that we will continue to see consolidation for the benchmark in the very near term, despite the fact that today is expiry, based on what you saw yesterday? That's the first question.
Yeah, hi, very good morning, Alex. Very good morning to everyone. Well, yes, last 5 trading sessions we have been into a consolidation phase, but the good thing is this entire consolidation has been happening above its crucial support of 24,400, 24,500. Earlier, if you remember, a few days back, whenever we used to come near that range of 24,400, 500, market was taking hurdle there. We saw a breakout from that range, and now that previous resistance is acting as a support. So we think that although we are into that consolidation phase, but since the supports are intact, it's just a matter of time that we should see a move about 24,700 quite soon. So from a day perspective, yes, we might see a consolidation within this range itself. But from a short-term perspective, we are positive in the markets, and such intraday declines should be used as a buying opportunity. And we expect once 24,700 is taken out, then we could head higher towards 24,900 to 25,000 in the short term.
All right, so 25,000 on the card, despite what you're seeing on the screen right now. What about individual counters? What is looking attractive right now?
So a couple of names, which are looking positive even in consolidation. One is Pidilite Industries, where we have seen that high top, high bottom structure getting continued. Recently, when the company came out with the numbers, we saw good price volume action, where even after the recent up move, the volumes are good, indicating a buying interest here too. So traders can go long on Pidilite over here with stop loss below 1630 for potential short-term up move towards 1750. And JSW Energy is another stock which is coming out of a decent consolidation phase. If you look at last 4 to 5 months, we have not seen any trended phase in the stock. It's just a time-wise correction which the stock has gone through. And now last couple of trading sessions, we are witnessing signs of breakout from that consolidation there too with improving volumes. So JSW Energy, I think from a trading perspective, one should go long with stop loss below 565 for potential targets around 600.
Okay. So that's with regards to where the topics go. But before we move ahead, let's just quickly mark the pre-open rates as we speak. If we could just have Nifty 50, 24,651 is what you're seeing right now. 0.3% higher, not too bad from what implied was indicating. In terms of individual stocks, Gland Pharma stands out right now, 8.5%, 9%. Vodafone Idea, OneSource Solutions, Vodafone Idea also reacting to numbers. C Infosystems, Sundaram Fasteners. We just spoke about it as well, that was one of the stocks that were in focus. Wockhardt is in focus, 3% up move coming in there. EID, Parry, SBI Life Insurance. On the losing end, you have a Phoenix Mills, Triveni Turbine, all of these reacting to numbers. KEC International as well, 4.5% downtick. Z Entertainment, Castrol India, Jubilant Pharmnova. So I think majority of them are, reacting to where the earnings are. So, I mean, how sustainable it is going to be is what we have to see. But these are the names that we are watching out for.
I also want to take a look at a couple of others, right? Bosch, let's see where it's trading right now, because if you adjust for that one time of the comparable quarter, it had a 25% uptick in the PAT number. And then outside of earnings, there is Adani Green, Tata Power, where the cabinet is mulling new phase of green corridor. Let's see whether they're reacting in trade. Just about 0.6% for Adani. BSE, what is the BSE doing? BSE Limited, and see whether it's reacting. It gained 4% in trade yesterday. Apar Industries, Jupiter Wagons, a couple of them. One on the back of a QIP announcement, that's Apar, it's not doing too much, and Jupiter Wagons Railton on the back of order wins as well. Again, not too much. So big earnings reactions taking place. Beyond that, not too much of action. But let's take a look at some of the other earnings that you should track or reactions that you should track on the back of earnings. And Shivam joining in to tell you about those stocks. Shivam?
Yes, the first stock in our list is Antony Waste, which has reported a 95% decline in its PAT, which is mainly due to its lower top line growth, and also this has impacted their margins, which has declined to around 6.6% versus 22 odd% in previous year. Also, the higher operation cost has led to this. Second stock is KC International, which has also posted a weak set of numbers in Q1. The PAT of the company has declined by around 41%, and this decline was mainly due to delay in water projects payment, and also the company has cited that the West Asia crisis have impacted their profitability in this quarter. The net profit of the company is down by around 42%, and in fact the margins has also declined to 5.8% versus 7% in previous year. Third stock is HLE Glasscoat, which has seen a temporary moderation due to the geopolitical uncertainty and the volatility that is being currently in the market, and also the delayed delivery in the acceptance of orders, especially in the heat transfer segment, has impacted their results. In fact, the profit of the company has declined by around 83%, and EBITDA has also declined by around 2.6%. Last stock is Bombay Dyeing, which has also posted a weak set of results, where the PAT has been declined by around 48% despite a moderate growth in revenue. So these were the stocks which has been in our list. Yeah.
Got it. Thanks so much for that. Very interesting move that you're seeing for the benchmark, at least in the initial ticks. Do you think that this will hold, Kush, or do you expect there to be pressure on the downside?
No, I expect some pressure to be on the downside, especially with the kind of moves that the crude has been making. Yes, there is immediate support at about 24,500 just because of the put base that we saw get accumulated yesterday, but then 24,600 call option. So I think this could be just a day like yesterday with a mild negative bias, maybe slightly more than mild.
Okay, so let's move on from where what markets are indicating to it's 9:05, so it's that time where we do the big brokerage day of the day, a big brokerage call of the day. And Sharad is standing by. Sharad, you've picked up a Fractal Analytics, and Kotak Securities is betting big on the company. What is the rationale?
Well, Hiral, foreign brokerages are already bullish in this counter, and now it seems Kotak Securities has also joined in. They have initiated a buy rating, and the target price is set at 1,000 rupees per share, and that's almost, you could say, 18 to 20% from the current levels of the upside potential. Of course, the company is well positioned in the AI landscape. It's a leading pure play company in the data analytics and the AI services market. Also, it's well positioned for the accelerated enterprise AI adoption, which is happening especially in the B2B segment. Fractal can become a strategic partner on the AI related front, but there are some risks also which the brokerage house has highlighted. This also includes concentration of work, AI progress, and intensifying competition and deflation also. But nevertheless, the broking house is bullish on Fractal.
All right. Thanks so much for that. And that's a big brokerage call of the day. Speaking of brokerages, a couple of others coming through as well. Morgan Stanley on the metal pack. The MMMDR Amendment Bill 2026 has been tabled. It's key positive for miners if it is passed, if it becomes an act. It extends the regulatory control from mines to mineral-bearing lands. This is going to be a key classification, if you can call it that. It restricts the state's ability to impose mining-related taxes or cesses. The pending and uncollected state levies would effectively be extinguished. The centre is also getting a significant rule-making discretion in this. So it's a significant update to those people that have blocks already allocated to them and the potential blocks that they might be bidding for, by my understanding. Parag bhai, do you have an input on this?
Yeah, so basically what I am hearing is also that for example, in Tamil Nadu, cement, there was a limestone blocks, there was a royalty which was imposed. I think all those can get reversed. And that can mean a big benefit to companies like Repco Cement and all.
Okay.
That is what my channel checks are saying.
So, but it won't only have implications on limestone, it will have on everything, on manganese ore.
But the recent shock was that for Tamil Nadu cement companies, that was there. I think for Repco itself, the impact was 175 crores in a year.
And Ramco, by the way, gained quite considerably after its results, did it not?
Yeah, because the expectations are very low and they did better than that on the volume front and on the EBITDA button front.
Okay, interesting. All right, let's get you an update on Bharat Forge. It was arguably one of the stocks of the day, and we spoke with the management yesterday. The stock dropped as much as 9.5%, and then recovered somewhat in the last part of trade because there was a one-off in the numbers. They reported much lower than expected bottom line, and in fact their top line did not grow as fast as expected. Brokerages have remained divided on the stock. They have adjusted Bharat Forge, by the way, their revenue guidance downwards from a 25% growth to a 20 to 25% growth. But what are brokerages saying? Puneet joining in to give you some details. Puneet?
Well, thank you for that. As you rightly mentioned, Alex, just about 44% have a buy call, a lot more hold sells now coming through. But what we have seen within brokerages, starting with Goldman Sachs, they have a target price of 2120, which is very close to the current market price. They've highlighted that while they are seeing improvement on visibility on the defense business led by profitability, the other aspects that they are estimating lower margins for the standalone business, the K-Drive business, as well as the JSA business as well. So hence they are currently on the fence. Citi is maintaining a sell rating, but they have a more bearish outlook. Their target price is actually 1210 rupees per share. While they've highlighted that Q1 was weak, the demand outlook looks positive for now, and they acknowledge that the exports are looking better going forward, as well as better margins in Indian subsidiaries as well. But they will have to watch out for the PV demand, especially in Europe, that continues to be weak, while CV is higher, but they are more concerned on the valuation and hence this bearish target price. When you look at Jefferies though, they are more bullish with a target price of 2,500 rupees per share. They've cut some EPS targets over the next 2 to 3 years, but maintain the good growth outlook for the company. So there's been a 4 to 16% EPS cut on softer margins between FY27 to FY29, but highlighted that they still expect a 30% EPS CAGR over this particular time frame, and have mentioned that they are continuing to expand their footprint as well as the ability for broad-based manufacturing for the Indian verticals. And finally, on Morgan Stanley, they've actually come out in high target price. So 2,200 from 2,233, they've gone to 2,469 rupees per share now, and highlighting that this actually weaker results could be an opportunity to add the stock right now, and highlight that defense is good, but a price, price to earning multiple of 42 times is slightly elevated than its average of 38. But the industrial businesses all trade at 49 times. So very, very mixed views coming in from brokerages. Most have hiked target prices a bit for the opportunity going forward, but it's definitely a very seesaw kind of view that most brokerages are taking in for Bharat Forge.
Absolutely. Thank you, Puneet, for that. Ruchi, let me come to you. On the charts, what do you make of a Bharat Forge? And apart from a Bharat Forge, from the auto and auto hang space, you have Sharda Motors, Lumax Auto, and Precision Wires. Anything that you like on the charts?
See, Bharat Forge, I think the stock had already run up before the numbers. If you look at last 1.5 to 2 months from 1,700, it has already reached the 2,300 mark. So, irrespective of the numbers, what we saw yesterday, a profit booking which was supported by very high volumes. I think we could see some consolidation or a relative underperformance in this name, at least in the short term. So I would suggest that in case if anyone has any holdings from a trading perspective, then one can look to make a switch to some other stocks. And within the other names which you mentioned, Lumex looks better on the charts. The stock has formed a good support base around it, 200 EMA since in last few days. So in case if we see a good follow-up move today, then we could see a momentum towards 2,200 in the near term.
Okay. Speaking of earnings reaction, we spoke about Gland Pharma earlier today. The fact is that it is going to open gap up. It's currently up as much as 7%. Don't be surprised if it is a double-digit gainer in trade today. So we'll take a quick check. Let's also pull up Precision Wires because the numbers look good for this particular company. Let's see if the stock is reacting as well. Okay, just about 0.9%. But on this, what's the view?
Let me take 10-20 seconds extra. There's one very interesting thing I've observed. So I have a framework with which, we filter stocks, right? Most of the stocks that we see gaining momentum, have results round the corner, maybe 1, 2, 3, 4 days ahead of them, and hence becomes very difficult to give a call, and then they just drop off, something like what happened to SBI, right? So the build-up is already there, before the result, and after that we are seeing sharp gashes of profit booking. Now, that's something to be just mindful of. Gland Pharma today, it's already run up quite a bit. Today you're seeing this good, up move. My suggestion, book partially at least, correct? At least 50%, 75%, and then you can continue to hold the rest. I like the setup on precision wires as well. This could have been a call if the results weren't around the corner. So I wouldn't be surprised to see this run up to about 470 levels also in the coming times. And I have an update on 2 stocks, MM Forgings and JG Chemicals. JG Chemicals, by the way, was precisely a month ago, a weekly pick around levels of about 500, 510 thereabouts. Yeah, that's the one. See the kind of run up that's come in this. I wouldn't suggest complete exit, but definitely if you're still holding, book 50 to 75%, hold the rest, and similar thing applies for MM Forgings also.
Okay, so that's JG Chemicals and MM Forgings. Ruchit, before we just open up for trade, top pick.
So I'll go with Pidilite Industries itself. It seems that today also we can see a good momentum the way we saw it yesterday. Stock is trading around its all-time high. So just from a day perspective, one can go long with stop loss below 1660 for potential targets around 1710.
Okay, all right. So remember, Pidilite is Ruchit's top call. Just about 15 seconds to go for the start of trade. And don't be surprised if you see a lackluster open, which is something that we are really heading towards. Remember, the initial indicative open had pointed to a downtick of about 50 points or thereabouts for the benchmark Nifty 50, and the external environment is not the best, let's face it. 0.2% lower, just about 40 points or thereabouts for the benchmark. This is really par for the course. This was what was anticipated. Bank Nifty is losing more ground, just a little bit more though, 0.4% or 0.5% cuts for the Bank Nifty, and I wonder where it'll settle after the initial uptick. Or rather the initial move. The advanced decline ratio doesn't look half bad, but remember that this can settle very quickly on the other end of the spectrum as well. So pull up the broader markets. Let's see very quickly where they are at, the mid cap index and the small cap index. Okay, the mid cap index is trading in the green but flat. Small cap index is where the resilience continues to be, just 0.33% higher at this moment. Let's take a look at the heat map for the Nifty 50 and see what's moving the needle today. Remember that you've had a fair distribution in the past few sessions as well. Just about even Stevens in terms of gainers and losers. On top of the list, you have Titan, ONGC, Adani Enterprises, Hindalco, a smattering of names. No real theme for you to talk about. HCL Tech is in that list as well, up about 0.7%. You have TCS that's up about 0.6% or so. Wipro is incidentally in the green, trading with gains of about 0.5% or so, and that green is pulling back just a tad bit. Indigo is down about 1.5% on the back of a crude oil price increase. Remember that crude oil price is now around $88 to the barrel. Bajaj Fin continues to lose ground, followed by Axis, SBI losing further ground. I'd be curious to find out from Parag Bhai what he thinks about that, and in fact Ruchit as well as Kush. Pull up the contributors on the points side and just see what's moving the needle right now. You have the heavyweights, SBI, HDFC, Reliance Industries, ICICI Bank, and that's really hard to fight against here if you have all of your heavyweights. Of course, a valiant effort being made by the IT majors in the list.
And that's been happening since the last 1 or 2 trading sessions, right? Where IT is coming in and trying to find its feet on the ground. But clearly, it's the banks which are playing spoil sport. In fact, the private banking space was something which was absolutely positive in terms of yesterday's session. And today, if you go to see, it's the reversal that is happening. Let's quickly look at the sectoral heat map as well to understand what is that picture telling you, because here you know IT is going to be at the top. There you go. 0.8% higher. Consumer durables, metals, interestingly, is up 0.3% in today's day of trade. Pharma, and auto, 0.2%. Real estate also similar kind of gain. So not a major, pullback that you're seeing on these sectors. But what's losing out is the question. Your financial services and private banks, Both of them are down nearly 0.7%. Your Bank Nifty is also down. So PSU, Bank Nifty, both of them are playing spoil sport today. Apart from that, FMCG again 0.3% lower here, and you have oil and gas which continues the downtick for a second consecutive session, 0.2% on that one. Defense also seeing some amount of profit booking as we speak. Let's just once again pull up the broader markets in terms of the intraday charts of mid cap and the small cap. If you see mid cap 150. Pretty much flat right now, and if you have to look at small cap 250 as well, 0.3% higher. The advance decline ratio in spite of this is probably skewed towards the advances, and you're seeing almost 1240 advances versus 1064 declines as well. So again, pretty much even Stevens, you can't say we're going to be towards the greener side right now, but interesting moves coming in there. Let's just pull up the VIX as well and see what's happening with regards to India VIX, and there you go. 12.4, I mean, a 1.3% up move, but 12.4 is a pretty reasonable level to watch. Now, in terms of individual counters, Apar Industries is one of the names that you'll be watching out for. Let's pull up that one on the screens, and this is on the back of the QIP that has been launched, 0.5% up move coming in there. Walkard as well is in focus because Zenic is expected to be launched next year, 2.5% up move, and it is reacting to numbers as well. On the back of the Nifty rejig, you have BSE and Wipro. It's interesting. BSE is seeing some amount of profit booking as we were discussing, 0.8% lower. Wipro is up 1% in trade. Apart from the Nifty rejig, let's look at order wins. Jupiter Wagons and BEL. Both of these counters are in focus. Jupiter Wagons is up 3% on the back of the order wins. In fact, we will be connecting with the management as well on India Market Open in the next 30 minutes. On earnings, Gland Pharma, Yatharth and Jubilant Pharmoma. All of these three counters from the pharma and healthcare space that are in focus, two reacting positively. Jubilant Pharmoma down 4%. On the auto ang space, you have Sharda Motors. Lumax was very good. Precision Wires was also pretty strong. So both of them both the counters are looking good. In fact, Precision not really reacting much, but Lumax 8 to 9% up move coming in there. Sharda is down 5%. On the textile sides, you have Rupa and Company, Bombay Dyeing and Dollar Industries. All the three that have reported numbers. And there you go. Two under pressure. Dollar just trying to find its feet in the green. Other earnings, Lloyds Metals was another one that reported numbers. Triveni Turbine is down 6.5%. KC International and Z Entertainment, a weak set of numbers, and both the counters are down nearly 2 to 3% in trade. In fact, a lot of other companies as well, Alex, apart from the ones which I've mentioned, probably would be reacting. Anything that you find right now, because the reactions are not that large.
No, some of them are, in fact, and you've already highlighted a few. But Jubilant Pharmova, Castrol, India losing ground. Sundaram Fasteners is turning out to be the stock of the day, and we spoke about this with Parag Bhai just a short while back. In fact, it is gaining about 6.5%, pipping the likes of Gland Pharma, which many would have said is in fact the earnings of the day. Ruchit, I want to head across to you just very quickly to ask you about maybe something like a KPR Mill, something like a Chennai Petro, something like a Jupiter Wagons as well, all up about 4.5%, 5%. Would you play this momentum on the upside?
In selective stocks, I think yes. KPR Mill specifically is looking quite good. If you look at the positional charts, we have seen a decent pullback move in last 15-20 days. And after forming a good support base around 1050, 1020, the stock seems to be resuming its uptrend. So KPR Mill is good. Chennai Petro, if anyone is already holding some long positions, they can continue to hold. It's just consolidating around its all-time high, about 1300. One can expect a positive continuation of the uptrend. So if anyone has to buy fresh, then I would prefer KPR Mill within this.
KPR Mills, if you want to buy fresh. Speaking of buying fresh, would you buy fresh in Sundaram Fasteners, or if you got it earlier? And let me add to that list, Gland Pharma as well, right? Because if you held it for a decent amount of time, I think if I'm not mistaken, year to date, it's up 45-46%.
Correct. But look at what it's done today. Opening at about 28.45, spike, high of about 29, 28 and then giving way. This is exactly what we've been speaking about. Result के पहले anticipation में build up हो जाते हैं, then you see some profit booking. I know 6.5% uptick right now doesn't show profit booking, but then if you see the internals, it does. So I would definitely book profits. And how can you buy Sundaram Fasteners right now? It's of course a stock that you want to own in your portfolio, but after this run up, I would definitely book profits. Overheated on multiple counts. Parag bhai smiling, I'm sure.
Yes, but
maybe let him speak his view.
Yes.
But I would buy it again.
Portfolio stocks, I would not like to comment right
no,
now.
but still, at current valuations, with the run up that a Sundaram
I'll not buy
Fasteners
fresh.
is seen.
Let me put it that way.
Okay.
Because 20% run after the results in just a matter of 4 days.
And I will book profits, and if I have to re-enter, I would enter at about 1,000 levels.
Okay, so 1,000 is the fair value that Kush looks at. Aarti Pharma, the reason I want to pick this one up is yesterday on the back of earnings, that stock was locked in upper circuit, 20% moves today, again up 7.5% as well. On the charts, Ruchit, anything, do you see further momentum or are you seeing some exhaustion now?
The momentum is very strong in the stock. Yesterday the stock was at upper circuit. Even today we have seen good follow-up move. And the good thing is, if you look at the volumes in these two trading sessions, they are quite higher than the daily average volume. So I think the stock should head towards 950, 960, where the previous all-time highs in last year they were there. So definitely, if you look to buy fresh over here, then the risk-reward ratio will not be that favorable. But if anyone is already holding the longs, then they should continue to ride this trend.
Kush, I want to check your view on State Bank of India, because after the results, and this is understandable, money being taken off the table yesterday, there were large trades that were done. Today, the stock is under pressure, but it's recovered from the low point of the day. Is that 1,050, 1,065 level a good accumulation zone?
Probably a little lower, around the 1,030 mark, thereabouts. My concern is that the banking stocks are not giving you follow through. I think he'll mention at the start that yesterday the private banks stole the show or were doing very well. If you see the internals, it was on the back of just one stock, ICICI. HDFC Bank ended flat as flat can get, actually with no change, right? So yesterday's move on ICICI actually painted a very different picture on the private bank space. The banking stocks are not seeing some follow through. However, if you still want to accumulate or if you still want to buy into something from the top names, there's no doubt that ICICI and SBI are the two stocks that you should definitely keep on your radar. And on the rebound, you should buy, not when they're still falling, but definitely something that I will keep on my radar. ICICI and SBI.
Just to put one thing, see, banking stocks are why they are underperforming. Even so, one is that stock of SBI went up before the results, but the second thing is macro setup. If you see, US 10-year at 4.71, oil at 88, India 10-year also might rise. That is also putting one sort of macro kind of pressure, right? Although the company's results are doing fantastic. So for a long-term investor, this is a great opportunity, because when macro is against you, you have to buy the great stocks, and so that's why. And this time, as I say, I keep saying, this time there are clear winners in the result season. 100%. So SBI is one of them. So I would say that SBI, LIC kind of stocks should be bought when the macro setup is against you. And
so basically, this is the time to look at financials and LIC accumulation.
Yes, SBI, ICICI, LIC, whatever.
Kush?
See, LIC was a curious case, right? I mean, he liked the stock, I didn't, but we still had a similar view. Near term mein to buy karna banta hai. Glad to see that
450 is your target, right?
Exactly, 450 is my target. I will actually book out, and if the move sustains above that, we'll take a fresh view. But glad to see that that risk-reward ratio move is playing out. If I did buy it about 370, 375 odd levels, I would now bump up my stop loss to about 385 and continue to ride this momentum till 445, 450.
Okay. Ruchit still with us. Ruchit, just a last point that I want to ask you about Bharat Forge, because the stock was down as much as 9.5% in trade yesterday. It recovered to about 6.5% down. It is trading with cuts today. So would you say that at levels of 2073 or thereabouts, there's an opportunity, or would you wait for further downside? At this point as well, the stock is up as much as 41% on a year-to-date basis.
At current levels, I would wait for some further correction, maybe towards 2000, where the weekly 20 EMA is placed. And the kind of volumes that we saw yesterday, post the numbers when the stock witnessed sell-off from that 2300 to 2100, I think that clearly indicates, at least in the near term, we won't see that kind of momentum coming back again. So not at current levels, but in case if the stock comes around 2000 on the lower side, then the risk-reward ratio could become favorable. So one should take a review over there.
So that's with regards to Bharat Forge as well. But thank you, Ruchit, Parag Bhai and Kush for joining in, on a Tuesday where not much is moving. Very similar to what happened in terms of yesterday's session. But I think one sector that we want to talk about today is the banking space, because yesterday there was good amount of divergence between the PSU banking space and the private banking space. Today, both of them under pressure. And I think the whole earnings in terms of banks is also nearly done. To discuss more in terms of what's in store and what next should we expect as well from the financial space. Joining us is Pranav Gundalapalle, Senior Research Analyst at Bernstein. Pranav, welcome to the show and always a pleasure to speak to you. This is Hiral on this side. If you have to, I mean, three things that I want to talk to you about is one, the earnings trend that you've picked up basis the first quarter. Second is the impact of MDR on the UPI economics. And third is FCNRB. Starting off with where earnings are concerned, I think largely in line with what the street was estimating. But what has been the biggest positive surprise for you and the biggest disappointment across the banking sector?
See, I think the biggest positive has been the very strong loan growth and more balanced growth than anything else. I think it was not led by one segment. We saw growth across segments, and I think that is promising. In terms of disappointment, I think the still persistent gap between the loans and deposit growth rates, I think continues to be a trend that will have some impact on the margin trajectory and who the winners are, etc. So that's something which we think was not great for the sector. But overall, I think it was a very positive set of results because growth came in better than expected and more broad-based. Margins downside surprise from here seems limited with the kind of numbers that we saw. And asset quality was pretty strong across segments and across lenders. So none of those concerns have trickled in either. So overall, if you combine that with the still cheap valuations for the broader sector, I think the sector does look at a great point at this time.
Hi, Alex here. So, speaking of the gap between deposits and advances, right? Have you had to adjust your expectations for FCNR mop-up? Because what the RBI said, what banks themselves have said, is that now they're expecting upwards of $85 billion to be mopped up, which is far more than some of the conservative estimates had pegged it. We're already past that $40 billion mark. And so this changes the math for deposits available to be mobilized, doesn't it?
Yes. So I think that is the positive. The FCNR flows have been a lot higher than what where the conservative estimates were at the start of the announcement. And it does two things. One, if we get, let's say, close to the 100 billion mark, that's almost 4% of the system deposits. So it's a sizable sum of inflows. And that will support strong credit growth, even if, say, the domestic deposit creation remains slightly on the weaker side. That's number one. So credit growth is assured. Second, it might not be great in terms of margins because these will be, at the end of the day, higher cost deposits, even if it's at higher, close to repeat term deposit rates. It will be higher cost. And hence, margin-wise, not great, doesn't add a lot to the earnings, but it does definitely solve the whole, at least a part of the whole deposit growth problem that the sector has been seeing for a while now.
I have to, sorry, Pranav, just a follow up there. When you're saying that it could have downward pressure on NIMs, what was the effective math that you came up with maybe for some of the larger banks that are likely to mop up more? So, for example, a State Bank of India, where internal estimates are at over 6 billion right now, and they might end up with about 15 billion based on what they anticipate, right? So, and they managed to push their domestic NIM up to 3%, over 2.8% for the global NIM. So, based on your estimates of what you're penciling in, what are the implications?
Okay, so there are two factors here. Now, one is the headline number, which is good, but I think there are two factors. One is how much of this is funded by their own lending, right? So if you have a lot of these are lever deposits. So if you had lent for these deposits, then you know what the lending side yields are, which is not dramatically higher than the deposit cost. So that could limit the NIM expansion. it is positive from an earnings impact because any inflow is good as long as it's a positive spread. But if you just take the headline metric, then NIM could see some pressure. That's number one. And number two, I think it also, the other factor is a lot of this is almost entirely it is term deposits. So there is a certain CASA ratio that each bank works with. And if bulk of the flows come in through term deposits, then of course your CASA ratio could look slightly weaker in terms of the headline metric. And that could again reduce your margins optically. Again, this is headline margins, which will look weaker optically. But from an NII growth or from an earnings growth perspective, it will all be accretive. So it's definitely a positive.
This is a positive, Pranav. My other question to you related to FCNRB is that in terms of the deposits that have come in, the private banks appear to be winning back that deposit market share as well, right? Is the worst in terms of the deposit challenge then behind the sector? And if you have to compare the private versus the PSUs, where do you place them?
Okay, I think the worst of the deposit scarcity phase, I think, is over. I think we should see an improvement in liquidity environment and thereby the deposit growth. So that way, yes, we are past the worst point. In terms of public versus private, I think the private sectors have consistently gained deposit market share. While they might have lost on the lending side, on the deposit side, they have always gained market share. And that is despite some aggressive pricing from the public sector banks especially over the last year and a half. And with that ability to price aggressively coming off as credit costs normalize, excess liquidity eases, etc., I think the gap in deposit growth between the private and public sector banks should expand further, meaning the private sector banks should grow their deposit bases at a faster clip compared to the public sector banks. So that delta will widen.
Pranav, the other aspect that could potentially put pressure for the larger banks on NIMs is the mix that we're seeing, right? The shift towards higher corporate lending, and I think to a certain extent the ECLGS and higher working capital loans would have played into this whole conversation. I was looking at the CRISIL update from the first quarter, and they talked about to large corporate borrowers, the lending growth is upwards of 16% compared with a 2% growth in the comparable quarter last year. So how much of a bearing will that have on the near-term NIM trajectory?
It will be bank specific, but I'll leave with a couple of data points. One, if you look at RBI's own data on the loan yields by different segments, the mortgage yields are almost identical to the yields provided of loans provided to large corporate, right? So it's not dramatically lower. It might not have as severe an impact as, for example, moving away from PL unsecured retail to mortgages or to corporate credit. I think the bigger factor here would just be, especially for the private sector banks, would be the growth rate in their non-mortgage retail. So to me, more than the growth in corporate, the weak growth in the non-mortgage retail is the bigger concern, and that's the bigger lever that they have to protect their margins. If they are giving up mortgage growth, for example, and pursuing corporate growth, I think the impact on NIM will be limited.
So, Pranav, with everything that we've spoken about right now, your topics become essential. What do you like in the PSU banking space? And you have an interesting note where you're, on HDFC versus the ICICI Bank as well. So, from the private banking space as well, what would your topic be?
So we like the large banks. At this point, we like ICICI, given that we expect a fairly benign operating environment, and ICICI has no real constraints on growth, and they have demonstrated a willingness to push growth in the last quarter or last two quarters. So ICICI would be the top pick, followed by Axis, where it is a higher beta play. And at this point, we like it because pushing growth, even if it comes at the expense of margins, for example, growing into corporate, etc., is the right strategy in our view. And hence, we also like Axis. HDFC is at incredibly cheap valuations, but what will drive an improvement in NIM is uncertain, or at least the timing is unclear, and hence it's fallen third in our pecking order. So ICICI, Axis, and HDFC would be our top picks at this point in the sector.
Okay. And any negative aspects that you're penciling in when it comes to a HDFC bank?
No, HDFC, I think, you can pencil in any of the negative factors, but once you look at the valuation, it looks, it looks as if all of that is priced in and some more. So I think the valuation accounts for any negative scenario that you can probably come up on HDFC. So valuation gives us comfort to stay positive on HDFC at this point.
Okay, so valuation's comforting when it comes to HDFC. The other thing we want to talk to you about is the MDR with regards to where UPI goes. And, the debate has resurfaced as the payment platforms are seeking monetization as well when you talk about the UPI infrastructure investments that they've made. Your initial comments in terms of what would it actually mean for the companies?
So I think with the developments over the last couple of weeks, it's becoming clear that we will have an MDR on at least certain types of UPI transactions. So I think the probability of transactions being subject to MDR has increased significantly over the last few weeks. Second, I think given the volume of transactions and the incredible skew in the transactions, meaning the top 4 or 5% of merchants or the top 4 or 5% of the transactions by value account for a disproportionately large value of transactions. So let's say the top 5% probably account for 50-60% of the total value of transactions. Similarly, transactions over 2,000 rupees only account for 4% of volume, but almost 67-70% of the value. That means that even if there is a restricted definition of transactions which are subject to MDR, the impact on the various payment ecosystem players will be significant. So even 15 or 20 or 30 bits of MDR on a select group of transactions will have material upside in terms of earnings impact on the payment ecosystem. For example, for Paytm, we estimate there could almost be a 30% upside to our earlier earnings estimate simply from the introduction of an MDR on UPI.
But is it only restricted to a Paytm or would you say that in certain cases, because banks also participate in this infrastructure, they could be beneficiaries?
Banks will take a lion's share of any MDR that is imposed. I think that will always remain. Yeah. But it just is not very significant part of their profitability, profits today, and hence not the best way to play this theme. If you look at most of the payment ecosystem players, they're just about profitable. So any boost to their earnings will mean a significant change to consensus numbers. Whereas for banks, this will be almost a rounding off error in their overall scheme of things.
Fantastic. Pranav, always a pleasure speaking with you. We missed you in the studio today. We would have loved to have you. Maybe next time.
Definitely. Look forward to it.
All right. All right, let's talk about another stock, and this is Lemon Tree in the hospitality space. The company came out with a pretty strong set of numbers in the context of what was experienced in the first quarter. So occupancies actually went up quite substantially, and so the numbers looked good despite the fact that the average room rents did not go up very much. Let's take a look at some of the key metrics before we speak to Nilendra Singh, who's the managing director at Lemon Tree Hotels, who's joining us this morning. Varsha, what can you tell us about the key numbers here?
First of all, as you rightly said, the highlighting point over here is, of course, the occupancy, which improved sharply, I would say, despite modest ARR, that is average room rate growth. Asset-light expansion have been accelerated. Overall, if you see, net profit was up 20%, revenue was up, 9%. Gross ARR was up almost 2%. Occupancy were at 75.7% overall. And the Q1 strategy has been prioritized, so occupancy over ARR, and management commentary, indicate a more balanced pricing strategy when it comes to Q2. So overall, a good set of numbers when it comes to Lemon Tree.
Okay, Varsha, thanks so much for that. Nilendra Singh, Managing Director at Lemon Tree Hotel, joining us and waiting patiently by. Nilendra, thanks so much for taking the time and pleasure having you. Good morning to you.
Hi, morning.
What can you tell us about the trends that you witnessed? What led that occupancy growth, 300 plus basis point improvement, 75%? Is it a factor that you were a little more aggressive than maybe some of your peers on the pricing front?
True. So the headline answer, true, Alex. I think Q1 was quite unique in many ways. Didn't expect it to go the way it went eventually, but But I guess all of us had got the same cold. West Asia conflict, resultant drop in inbound traffic, less flights, less passengers on the flight, less domestic travel. So there was a demand softness in Q1, and because of our nature of business, which is essentially locations that we occupy are largely in CBD and business-led demand, we had to resort to a little more aggressive pricing strategy to fill our hotels responsibly, and that kind of shows in occupancy numbers and ARR numbers.
Okay. What is the trajectory going forward, though? Because, Nilendra, some of the trends that you were seeing in the first quarter have eased out just a tad bit, even though on the external front there are still tensions. I'm wondering whether you're seeing a greater inflow of footfalls, what the trends are, because that wasn't a challenge really. I'm talking about demand as a whole. So how does Q2 look?
Demand's back, Alex. I think like I said, it did feel like everybody caught a cold in Q1. Demand's back. I guess large corporates or even small corporates kind of stay reticent as to when the uncertainty is high, which is what happened in late March, early April, part of May, and the swings that we had in terms of let's say the uncertainty in Western Asia. But Q2 onwards, I think demand's reasonably back. I guess domestic travel, leisure travel, I don't think that was an issue anyway. But corporate demand is certainly coming back. We could see that in July numbers, and August continues to be solid as well.
Good morning, Hiral on this side. When you're talking about the numbers, we can sense that confidence in terms of performance that could be coming in for FY27. And if I'm looking at the sector as a whole as well, right, the backdrop is seeming very strong right now. Looking at peers as well, good numbers that have come in. Does this actually tell you that probably FY27 could be a record year when it comes to revenues and profitability, negating the negative aspects from the West Asia crisis, which probably could be far behind us if you're talking only of domestic travel?
Good point here, and it'll be speculative, but I can tell you a larger theme. I guess there are luxury hotels and then there are mid-scale hotels. Our segment actually had a softer start in Q1, so we will have to continue on planned numbers for the next quarters and recover some of the, let's say, hiccup that we had in Q1. On the luxury side, and I've seen results of our peers, they had a fantastic Q1. So will it be a top class 27? I think so, and I fingers crossed. Nothing else should come through in the next quarters. But clearly, demands on an upside. The structural changes that India is going through are bearing fruit. There are more consumers traveling. There's far more confidence on domestic demand, both corporate and leisure. And I fundamentally believe there's nothing to believe that this will not help almost everybody in the industry, and therefore all boats should rise.
We're talking about demand here. Let's talk about the pipeline and the expansion. And Lemon Tree, in my understanding, has the largest pipeline in the industry as well, right? So what percentage of the signed inventory that you have that is expected to become operational, say, over the next 12 to 18 months? And are you seeing any delays in terms of openings due to approvals, funding, construction bottlenecks, etc.?
Okay, great. That's a great question. So if you look at our trajectory for the last few years, or let's say at least last year. So last year we opened about 1,500 rooms and signed about 5,000 rooms. We'll continue to be in that clip this year as well. We believe we should aim at 2,000 plus rooms to be opened, and we'll continue to sign in the range of 5,000 rooms at this point of time. We, like you said, we are a large network of hotels now. We have 5 brands. We believe they cater to different segments of the traveling consumer, and hence fundamentally you can expect that we would be growing or acquiring hotels at the current clip. Do I see a risk of opening? See, there are a lot of things that are in our control, Hiral, and some of them are not. And this pertains to the nature of the business. It's real estate. There's development risk. There are compliances, etc., etc., etc. But we account for that when we tell you that we would be in the 2,000 rooms range. So I believe we should be able to hit that mark.
Just wondering about the capital allocation that you will have to do, because this is all part of your capital light strategy or your asset light expansion strategy, right? So, and if you're talking about 3,300 keys to be added by FY30, and you're talking about 2,000 to be added, and I'm guessing you will sign more, right? As you've just pointed out. What is the kind of allocation that you will have to do this year, FY27? And two, you've already hit that 45% or close to 45% mark on the EBITDA front, give or take, right? Give or take 1 or 2 quarters. So that's also, it's already heady levels, Nilendra. Do you have the desire to go even higher?
Yeah, okay, so I'll come to the capital allocation strategy. Won't be able to share quick numbers yet, but I'll give you the drift of it. So there are two ways of, there are 2 ways we're approaching the business, the asset light business, and therefore the last comment I made about adding 2,000 rooms and signing 5,000 rooms. It's largely on the capital light side, which is through our third-party owners. We do, of course, open our own hotels. We've indicated there are 4 hotels that are under construction at this point of time, or will start construction, and that's on the capital heavy side, which is the hotels will be owned by us in that sense. So doing both is my short answer. And you saying, and the other question was, is 45%, can it be better? Certainly yes. If you see a past record, Alex, we've last year we finished at about 48% plus EBITDA margin. We believe we should be able to top that this year.
Okay. Apart from this, what the question I have is, we spoke about mid-segment and premium brands as well. So what portion of future growth can come in from the premium brands versus the core lemon tree offering that you have? And do you expect the ARR growth to some extent moderate also in FY27? Because we've seen several years of strong pricing.
Yeah, so this is an interesting one. We typically, because we are mid-scale and we, if you look at India as a pyramid, we address the middle of the pyramid quite aggressively, and that's why we're reaching out to more and more consumers and guests, and that's the reason we enjoy a higher occupancy than many other peers in that sense, and 75.7% that we delivered in Q1 is just a good indication of what our occupancies could be, even when the quarter is distressed, let's say, for everybody else. Therefore, the large part of growth is still ARR led. So contrary to the perception that there could be a ceiling, I don't think there could be a ceiling because there's so much to still to be juiced. And I'll give you an example. If you look at consumer goods industry, and that's where I come from, and therefore I can draw a parallel to a lot of consumer goods, let's say, examples. If you look at, let's say, 125cc motorbikes for 10 years straight, there has been I think 5 to 6% ASP increase over the years. So it beats inflation in that sense. If you look at refrigerators, washing machines, air conditioners, goods that Indian consumers aspire to, and still the penetration is small from an Indian perspective, they all over a period of time have shown late single-digit volume growth and about a late single-digit ASP growth as well. So I do believe that consumers are willing to pay, that our brands are trustworthy, we're very consistent with how we show up, right from Sonmarg to Tirupati, and therefore you can expect that as inflation plus pricing growth over a period of time from our side.
On that note, Nilendra, thanks so much for taking the time. Pleasure speaking with you, and wish you all the best for FY27. Look forward to the next chat.
Pleasure. Thank you. Thanks both of you.
Take care. All right, let's talk about Jupiter Wagons. It's won a couple of orders, in fact, 2 major order wins from, in fact, JSW as well as Orissa Alloy Steel, and these are over 200 crore rupees. We'll speak to the management in just a bit, but just to lay the framework for that conversation as a foundation, let me go across to Parth. Parth, what are these orders? What are the timelines? What do we need to know?
So Jupiter Wagons is in focus today on the back of two really strong order wins. The first order win is from the wagon segment where they have won a 147 crore order from JSW Port Logistics and also a 64 crore order from Orissa Alloy Steel Private Limited. This is the second JSW Group order for Jupiter Wagons in the last 6 weeks, with the earlier JSW South Rail Logistics order being valued at 123 crores. So the combined value of these two order wins in the wagon segment is at 211 crores. The next order win is from the battery energy storage system segment where they have won two projects with a value of approximately 400 crores. The order book for this segment has crossed 500 crores and the management is targeting 1000 crores of order book from the BESS segment by FY27. So over 600 crores of order win for JWL, and this is the reason why they are in focus today.
Okay, so interesting order wins that we're talking about as well. Thank you for setting this up for us. In fact, let's get in Vivek Lohia, Managing Director at Jupiter Wagons, stock up nearly 3%. Vivek, welcome to the show. Always a pleasure. This is Hiral on this side. Fresh wagon orders coming in from a JSW and OSAPL. Is this something which is pretty much on the cards, or with regards to what you had expected from the private side that would come your way? And what is that demand telling you specifically from the private side of the business?
Thank you for interviewing me. So the private side order book continues to remain strong and Jupiter continues to maintain its leadership in that segment. Today, if you look at our order book, it is close to about 4,000 crores, and out of that, more than 50% is from the private side. And we believe that this year we are going to continue to build that momentum. The private side demand remains to be very strong, and we expect the pipeline to grow bigger. The challenge right now the sector is facing is from the order books from Indian Railways. We are expecting, a sizable tenders to come out from Indian Railways, and I think as and when that comes out, I think the sector will have a very, very strong run rate for the next 2 to 3 years.
An interesting point that you mentioned about the stagnation that is coming in from the PSU side of it as well, from the Indian Railways. If you could help us understand, when was that last tender that did come in from the Indian Railways, and how has that execution been? Because once you win a tender, the delivery timelines is something that need to be considered as to when the railway asks you to deliver. And I think that's where the concern is. Correct me if I'm wrong.
No, you're absolutely right. I think the last order from Indian Railway was now about 2 years back.
Wow.
I think more than 2 years. And we have maintained very strong delivery timelines. And this FY27, we are looking to complete the orders from IR. And so there has not been any challenge in terms of from the IR side in terms of delays in that delivery timelines. They maintain their delivery timelines. So, now, as per their own projections, they are due to procure close to about 100,000 new freight cars, because that is what they have declared as part of their national rail plan and the logistics targets which they have set for themselves. So we are just waiting for them to finalize the same. And, we recently, last week also, we announced a very strong partnership with a company called Lucchini for our wheel business. We are investing heavily there. We invested close to 3,000 crores in that business. And that's with a much broader global perspective. I think for the first time with that business getting online next year, you will look at...
So you're trying to diversify. Vivek, the point is well made, and good morning to you. This is Alex here. So I just want to get a sense though, the last time this major tender was opened up by the railways, what was the size of the number of wagons that was on offer, and how much of that has gotten executed? We're nearing the end of that execution cycle, right? One would assume, based on what you've just highlighted to us, and you're talking about 100,000 wagons that could come through for tender going forward as well?
Yeah, so the potential number is close to 100,000.
Yeah.
And the last time also when the tender cycle came, it was about 90 odd thousand wagons. And post that also railway had some smaller order books. So all put together, last cycle was also close to 100,000 wagons. And yes, and that is nearing its end of cycle. And that's why you see over the last 2 quarters, the numbers also have been a little muted. But then the positive side is that
You're diversifying.
Yes,
but before we get into that, and it's certainly beneficial, Vivek. I just want to get a sense from you on how the numbers could stack up, right? Because your order book stands at 4,700 odd crore rupees entering FY27. Please correct me if I'm wrong, and maybe there's an update in the first quarter as well, right? But having said that, at its peak, what do you anticipate once these 100,000? Because at some point of time or the other, the 100,000 wagons will come through. And based on how much you've been able to garner in the past of that 90,000 tender that was rolled out, where can this number go to?
So, as in when the tender comes out, we expect at least 25% share of that pie. And 100,000 wagons, 25% would be close to anything between 3 to 4,000 crores of additional order book. So I have maintained my targets that by FY28, we are looking at a potential revenue of 10,000 crores, all the businesses put together, and with EBITDA margins of close to 15%. And I continue to maintain that target.
Vivek, and the other point that I want to talk to you about is the diversification. And I'm sure this is the need of the hour when your bread and butter, which is your railway orders, is something which is slowing down. And rightfully done so, where you're talking about BESS as well. Give us an update on where do you stand with regards to where your BESS order wins go, and how strong is your order book there, and when do you see, revenue recognition happening there?
So, this is a sector which we have been working now for the past more than a year. And we are focusing on two segments. One is the CNI, which is the industrial segment. And second is obviously the orders which come from the power distribution companies. So so today, if both the segments put together, our order book is close to about 500 megawatt hours, and in terms of value, it's close to about 600 odd crores. And this year itself, we are looking for to close orders of close to more than about 1 gigawatt hour, and that will in value it translates to about more than 1,000 crores, which will be executed over the next financial year. So FY28 is where we are looking to execute this entire order book. And going forward, I think in the next 2 to 3 years, our target is, and India is this sector, both the CNI, which itself is a very, very strong growth momentum, as well as the EPC contracts which come out. I think this sector is projected, the potential of in the sector is close to about I think in the next 5 to 10 years is about 1 lakh crores of business is what the potential is. So in the next 3 years we are looking at least close to 5 gigawatt hours of execution, which would be roughly about 6 to 8,000 crores of execution is what we are looking at.
Vivek, long-term target 10,000 crores by 2030, 15% EBITDA margins here. What percentage of this guidance would come in from the government side of the orders? What percentage would come in from BESS, and what percentage would come in from your private side?
Again, it's very difficult to project in terms of in terms of percentages, but yeah, the government side will play a key role, especially on the wagon bit. But again, when I talk about 10,000 crores, wagon itself would be only about I think going forward not more than 40% of the basket. I think the rest would be made from our wheel business, from our BESS and the other businesses now which are also expanding rapidly. The whole idea is for us to de-risk the basket. So going forward, though the name says wagons, but I think we'll be less and less of a wagon company, but more and more of a mobility company.
More and more. So I wonder if that's going to lead to a change in the name. Vivek, we can talk about that another time. But thanks so much for taking the time.
Thank you. Thank you very much. Thank you.
We have to slip into a very quick break. On the other side, we'll be speaking, in fact, with Vinay Jaising of ASK Private Wealth. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Welcome back. You're watching India Market Open. It is now time for our conversation on Talking Point. And joining us is Vinay Jaisingh, the CIO and Head Equity Advisory at ASK Private Wealth. Always a pleasure speaking with you, Vinay. Good morning to you. And we've seen most of the earnings season come through. It looks better than anticipated. A lot of people are positive, but a couple of questions arise. One, is there a possibility that some of this may be flattering to deceive? You could see a worsening in Q2 before it gets better again in Q3 and Q4. One. Two, are we on a dangerous footing right now, considering that the external environment has once again worsened?
Alex, thanks so much for the invite. And, just heading on your two questions, it's a fact, most of our companies which we cover in our universe out here have given us more hits than misses. Overall, I would say somewhere between 48% of our estimates of the full year's profits have been achieved. And that's a good news for us. So the direction is right as far as the Indian market is concerned. For earnings, better numbers have come in small cap and mid cap as compared to large cap. I think these are the two basic comments which I would make. Having said that, the sector which has seen maximum liquidity inflows, which has given promising signs, has been the financial sector, especially the NBFCs. Having said that, moving to your first question, will the next quarter be a lot more difficult than the previous quarter? I think you've seen the average crude oil price moderate to coming down. When you were there in Jan, Feb, March, you had a little bit of inventory left in the system, which is vanished in April, May, June. So most of the companies which are depicting results are showing a little worse results than better results, because the inventory levels would have been drawn down to zero if they had any energy feedstock, and energy prices in the last quarter would have been higher than most of the analyst estimates. Also, if you would look at the Strait of Hormuz area and the ships which are flowing through that zone, they would be very limited. So the supply disruptions were maximum in that quarter. So I think Q2 should be the quarter which went by the April, May, June quarter should be a lot more weaker than the quarter we are going into. So I think that my view is exactly the opposite. That it's not flattering. The worst quarter for us is behind us. Remember, next quarter, not the quarter we are in, the following quarter becomes festive season, and already the loan book growth is 17 to 18%. Part of it is camouflaged because of what NBFCs are taking from the banks and what's coming in FCNRB. Technically, I think earnings is going our way. Moving to your second question on the dangerous footing India or the world is going through, I would focus on 4 parameters. First parameter, oil. Oil is under $90 a barrel today. Yes, it went below 80, but it's around 85, but it's not at 120 and 130. The last 2 quarters have shown the world how to move through other routes to get oil into your space, and that's worked India's way. Second, tariffs. The concern on Trump tariffs hitting India at a higher level is behind us. You've already got a 10% tariff number given to you for the country. Obviously, there is an angle out there that if we consume Russian crude for a longer period of time, that tariff may change, but it's stable as of now. Third, what the Indian government has done on the capital stack with FCNRB and direct debt from FIIs coming into the country has been an impressive $47 to $48 billion, though Bloomberg may not include India in this half as far as the debt is concerned. The flows have been massive, which have led to even equity inflows coming to the country of as much as $1.5 billion this month and about $2 billion in the last month. So that's the third positive. The fourth, which was missing, was earnings, which I think is better than worse. So I think India is firing on all four cylinders. Prices go down, that's better.
Vinay, good morning. So India is firing on all cylinders. That's interesting to hear as well, in spite of the geopolitical concerns that we're talking about on the supply side, on the demand side, everything seems good. If you have to actually bet on any sectors at this point in time, what would it actually be? Because, you know, everyone was negative about IT. Again, it started to come back into the limelight with the kind of gains that we're seeing in the last couple of probably a month, I would say. Pharma, probably in focus as well. So, are you still looking at export-oriented sectors, or would you say it's best to look at domestic-oriented sectors?
I think the rupee is firming up, so it's a lot better to look at domestic sectors. Also, if you had to look at one sector or one sub-sector, I would say, you know, do the sector wherein the Indian government indirectly has given a lot of SOPs. Because of FCNRB coming in of, you know, as much as 40 billion, another $8 billion of debt, the liquidity in the banking system is gallon. Consumption should take off, and one space which gains is NBFC. So I think that space does well. As the cash comes in, the second space which does well is CapEx. So focus on those companies which are domestic CapEx providers, the capital good industries, or which have firm contracts globally. These are two spaces we are most excited about.
Okay, so if you're looking at the financial space, and Vinay, one would assume that if on the fringes foreign institutions are once again starting to deploy, the data in July suggests that, the data at the start of August also suggests that. So therefore, how would you play that, Vinay? Would you go to the large private banks, or do you go to the NBFCs, anticipating that at some point your yields are going to head higher? There's going to have to be monetary policy action, even if that did not take place in the policy gone by.
Sure. We would bet on NBFCs over bank at the current situation, just because they're getting the consumption growth a lot more than the private banks. So if you look at the results of any of the NBFCs which have come out, all of them have shown you already, and I'm not even talking about the impact of the liquidity which is coming into the market currently, but if you see the last quarter's numbers, you name the NBFC, and their loan book growth has been, you know, between 17 and 21, 22%, which is far higher than that of most of the private banks. And this is, I think, just a start. You will see this sustained. Most of them have been speaking about a 20 to 25% loan book growth. So for me, it's NBFCs over the private banking space.
Okay. Vinay, the other thing I have a question for you is, what do you make of this entire MDR space? Because we're talking about benefits that will come into fintechs as well, but a lot of banks that could benefit out of it as well. What is your view?
So, you know, my perspective, it is not as big an impact as, again, I'm sorry, I'm keeping on repeating the liquidity angle coming into the picture, having come its way. What you will see is, as most of the banks and most of the NBFCs are themselves becoming fintech, MDR would impact them as well. So my perspectives, I would stick to what I was telling you, that, you know, net, the financial sector as whole is doing a lot better. I like stronger balance sheet companies, and that's where, you know, we would bet over, I would say, the NBFCs over banks and banks over the fintech names.
Okay, you know, Vinay, another theme that really has been spoken about, and I think in 2026 itself, we've seen a number of these themes come and go. One, of course, was the energy theme, and you can still continue to play it in some form or the other. But the other conversation that increasingly is being had, and we've seen some of these numbers come through, is the automotive ancillary companies that are now looking beyond the shores of just the OEMs to cater to aerospace in certain pockets, precision engineering in certain other pockets. Is that an area that you're very focused on?
Absolutely. So aerospace and defense, whether it comes from auto ancillaries or it comes from precision engineering companies, I think are doing extremely well. Some of these, I would use the word precision engineering companies, have order books between 4 times to 11 to 12 times. These are also the same names which gain from the energy cycle which is happening in US, the growth of the energy cycle purely because AI is leading to $1 trillion of capex globally for a year, up from 650 to 700 billion. 25% of that goes into the capex mode, 75% of it goes into the hyperscaler mode. In the capex mode, precision engineering companies in India gain a lot purely because that's where they have their prowess in building, and that's when they're getting orders from the Max 7 or the big AI names for their data centers. So very important area for us to focus on, especially on a bottom-up basis.
So that's what regard. I mean, precision wires is very interesting when you talk about the auto ancillary space as well. Vinay, the other question I have for you is, I mean, OEMs, it's a good start. We are just nearing the festive season as well. And the question is, are they actually building up on the inventory right now to meet the kind of demand that could be coming in? How are you looking at the OEMs, specifically if you have to divide it between passenger vehicles and the two-wheeler space?
Right. So between OEMs and auto ancillaries, we like auto ancillaries for 2 reasons. One was the previous question, the global demand coming in from there, and domestically, normal ancillaries are moving out from 2-wheelers into 4-wheelers and just expanding their base. So, ancillaries are having 2 gains, one domestically and the other globally. In the OEM space, one point is for sure, right? Oil prices have moved up, because of which the consumption of oil or the consumption of petrol and diesel may come to a little bit of a slowdown purely because of growth. But you've also seen last 2 years of great growth numbers for the 2 and 4-wheelers. Out here, I would say the 2-wheelers have a little bit more to gain purely because you're seeing the liquidity being driven in the market, and when liquidity is driven in the market, they may get more attractive deals from the NBCCs to buy more. So I would look at 2-wheelers a little bit more than passenger vehicles and CVs or the tractor space last purely because the dependence on rain is a little higher out there.
Okay. Vinay, on that note, thanks so much for joining us this morning. Always a pleasure speaking with you.
Thank you so much.
All right, now let's talk about a cohort of stocks that has been facing increased scrutiny, private hospitals in fact, and that's over healthcare costs, with a parliamentary panel recommending tighter controls on pricing. What are the implications for these companies that are all actually in build-out stage even as we speak? Varsha joining in to talk to you about the details here and what the implications are. Varsha, morning.
Good morning. Well, overall, first of all, this is just a recommendation, and the parliamentary panel has flat healthcare affordability, recommends curbs on private hospital charges. So basically, they want to make healthcare more affordable for patients. Now, what are they saying is when it comes to hospital room rent cap, they say that rent could be linked to nearby 3-star hotel tariffs, and the room charges should not exceed average rates of 3-star hotels in same locality. Government should fix package rates for surgeries as well, and the objective is just to reduce pricing disparities across hospitals. Talking about the hospitals which are under scrutiny, so the committee says that the private hospital treatment is 5 to 10x costlier than government hospitals, and the raises concern over rising healthcare costs for patients. Key concerns raised were excessive billing practices, unnecessary diagnostic tests, rising cost of routine procedures, and the childbirth highlighted as an example of soaring treatment costs. This is a good news for patients, but a bad news for hospital stocks, because a lot of hospitals will actually be, in pressure. You have Max Health, you have Fortis, or you have Apollo hospitals, as potential cap on room rentals may impact hospital revenue, and also fixed package price could, pressurize margins going forward. So this is just a recommendation, but yes, a negative news when it comes to the hospital stocks.
Hospital stocks that continue to remain in focus. Thank you, Varsha, so much for that. And this is going to be interesting, even from a consumer perspective, Alex, because room rates is something which usually is the concerning area. And when you go to a hospital as well, depending on the category of room that you select, your doctor fees, your OT fees, all of them are linked to that category, and that's the way
they're not
the
uniform.
prices. They're not uniform, right? And this will somewhere get rationalized, and this is a good step that the government is taking as well, and good for the consumers. So let's watch out for what actually comes in on this bill. But moving on, Info Edge, an interesting quarter that the company has reported. Let's pull up the counter on the screens as well. And a lot of brokerages have gone ahead and hiked the target price on the counter. That stock at the day's highest levels, 5.5% up move coming in there. Macquarie has maintained a neutral. They have a target price of 1,000, which is much lower than the current market price, though. What they've said is recruitment revenue growth is what is trailing billings. They continue to see the risk of AI slowing velocity of jobs, and this will lead to a softer medium-term billings to revenue growth outlook, and see a potential downside risks to the consensus mid-teen revenue growth forecast. However, Citi has maintained a buy. They've actually hiked the target price to a 1,510 from a 1,400. And they're saying that several accelerants in recruitment billings is what they see. Near-term GCCs, better pricing power and improved job seeker monetization are supportive. And medium-term premiumization in white-collar jobs is what you should be watching out for. So brokerages, absolutely positive when it comes to Info Edge. In fact, mixed. The first one was slightly negative, but Citi, and you have one more node which is positive. 5.5% up move coming in there, Alex.
Absolutely. All right. Well, let's take a look at where the benchmarks are as we end this program, just about 0.5% lower. And the broader market's holding out with an outperformance once again. Let's see if that continues through the trading day. And the mid-cap index just about 0.1%. The small-cap index similar in the green, though. Well, that brings us to the end of this edition of India Market Open. From Hiral and myself and the team that put the show together, thank you so much for watching. Stay tuned. Up next is Ask Profit, and this is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना? बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड? 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the 64,000 level marks on institutional selling. Bitcoin notches its best third quarter since 2021. Also, New York Stock Exchange develops its on-chain settlement platform. And lastly, BlackRock Canada launches ETF that combines both stocks and Bitcoin. Okay, let's move on. Bitcoin is below the $64,000 level mark on instant selling and regulatory uncertainty. The market is at a technical inflection point where macro data could dictate the next significant move. Remember, US CPI inflation data is something you should be watching out for. It's coming on Wednesday. Bitcoin is up nearly 11% this quarter. Its strongest third quarter showing since July 2021. We did a little bit of seasonality analysis on that. July alone delivered 9.8% gain, and this is Bitcoin's best month in about a year without major Wall Street inflows coming in. But remember, there are some bullish catalysts. This includes exchange traded fund, ETF demand, and the insti accumulation which is happening. And looking at the overall momentum, the New York Stock Exchange President Lynn Martin says that the exchange is building an on-chain payments and settlement platform for tokenized stocks and ETFs. Now this enables settlement, multi-chain support, and near 24/7 trading funding by stablecoins. And lastly, BlackRock, the world's largest asset manager, has launched a new ETF that provides exposure to both stocks and Bitcoin on the Toronto Stock Exchange. More institutional support will come from the ecosystem of the crypto space. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. There's a mild sell-off happening for both Bitcoin and Ethereum. XRP falling almost 2% in the last 24 hours, but the range for the both support and resistance has changed for Bitcoin, especially in that $62,000 to $65,000 band. And now time to take a look at the crypto strategy of the day. Here's what's there to keep in mind. Looking at the market outlook, there is a bearish pressure. That is why it's testing the support levels. The key thing to watch will be the Wednesday's CPI data. Likely from the current situation till the coming sessions, it's institutional selling is there. That's what traders are talking about. And the Bitcoin support range on the lower side is between that $62,000 to $63,000. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Somit Sarkar. And over the next hour or so, we'll try and get to all your stock-related queries today. So if you haven't already done so, do start sending in your queries on the WhatsApp number that is flashing on the top of your screen. Also call us on the landline number for the same. But before we do that, a very quick check of how the markets are doing, because last week of the quarter 1 earnings, and you are seeing a lot of reactions, especially on the individual names, not so much on the Nifty 50. So you're continuously seeing the 100-point downtick, now below the 24,500 mark for the Nifty 50. Look at the individual movers also for the heat map as well, and if you can pull that up for the Nifty 50, you had some movers coming through in the morning on Hindalco, Titan as well as Eicher Motors that has continued to be up today. SBI Life and Nestle as well as Tata Consumers, those are the top 3 losers in today's trading session, while you're seeing almost a 0 to 1% kind of move across the larger Nifty 50 pack. Also pull up the sectoral heat map. There's not too much in terms of one particular sector that's doing well. Yesterday was realty as a sector that continued to do well. Today though, private banks under pressure, consumer durables up by almost just 0.5. but very, very staggered moves and not too much in, at least on the sectoral sectoral heat map. Also the advance decline ratio, we've been speaking about how it has been very neck and neck over the last couple of weeks, both for the advances as well as for the declines. Today also that has continued. Barely about 30 stocks that are differentiating the two today, and that is also visible on the mid cap, small caps, but also on the BSE 500. You're seeing multiple moves come through on individual reactions as well as stocks on the back of results as well. So the small cap just a touch in the green by 0.2%, not too much to write home about, but HLE Glasscoat was definitely a big miss in terms of results, so that's continuing to be under pressure. Triveni Turbine, Avanti Feeds are some of the other ones that are down. 2.5% downtick on KEC International on the back of margin miss as well. But Gland Pharma has definitely been one key stock, continues to do well, solid set of results. Brokerage is also giving it a thumbs up. Aarti Drugs is another counter there that's doing well. So is Info Edge, up almost 6.5% right now. But let's now start taking your stock related queries, and let me welcome in our technical analyst Swati Hotkar, who's joining in as well. But Swati, as well as Astha Jain, who will also be joining us very shortly. But Astha, very good morning to you. Thanks so much for joining in. Let me start off with the first stock related query. This is from Sharath from Bengaluru. And his question is on Wockhardt. He wants to know about what he should do with his 44 shares, holding at 2,223, and if it's a good time to accumulate more for the next 1 year. What would be your view?
So, hi, good morning to everyone out there. Now, if I talk about the Wockhardt, first of all, I believe now the kind of numbers it has started showing since I should say FY26, it has now started proving itself as a good turnaround story, because what we have seen in their financial number was also a good growth in their profitability. So first point which I believe is that now it is a good story to believe on as a turnaround. And in fact, we have already discussed that before also, that one of their Janish, I mean, that is their most important asset, because it is one of the antibiotic, and it is aimed at serious, drug resistant bacterial infection. So now this product of theirs is very, very, looking to be very, very promising, I believe. And hence, I believe that this can be one of the strong growth drivers growing ahead also. And in fact, management has also indicated that they are targeting some around 20 to 25% market share in that product. So I believe looking after all these factors, definitely Wockhardt is a very good long-term story to believe on. Remain invested in this counter with a price target of 2,100 to 2,200.
This query is coming in from Razia from Karnataka. She wants to know whether should she hold or sell the 5,000 shares that she has of Sigachi Industries, bought at a price of 34. Swati, any view on Sigachi?
Yeah, on this particular counter, as of now, for a long-term view, it's definitely positive, but I believe short-term we might witness some sort of a more selling pressures at the high level. The stock might find out a good resistance levels at 27 rupees on a higher side. Any momentum on the closing basis above that level will witness some sort of a more positive rally, which will take a stock towards 230. So if you're having any longer-term horizon, I will suggest to hold on, or else maintain the strict stop loss of 25 rupees on a downside and hold your long positions.
Got that view, Swati, and welcome to the show. The next question coming through, this one's on Hindustan Copper. Our viewer is holding 50 shares at 531 rupees per share, asking what could be the outlook over the next 12 months. Astha, we've seen elevated copper prices continue now at almost 13,000 rupees and continuing to be a big impact, actually $13,000 per kg. But how are you looking at this counter now?
Counter is looking very strong. Why? Because what we have seen in their Q1 numbers is very, very strong numbers. I mean, the company has posted. So not only the rise in the copper prices is helping this counter, but we should see that their operating performance is also starting showing very strong improvement. So I think these can be some of the factors that one should remain invested in this counter for the long-term purpose, because I mean, apart from these factors, in fact, the kind of production expansion company is going on, I think that will by FY30, because they are planning to expand from 4.2 MTPA to 12.2 MTPA by FY30. So these factors are really signaling towards the strong long-term story in this counter, hence remain invested in. And I mean, cost price is near to what the price are quoting right now. So there is no need to worry. I think this can move till the level of 580 to 600 in the medium to long term. Remain invested in this counter.
Next query is from Raja from Chennai. It's on Infosys. He is holding 12 shares at a price of 1,913. Can he hold this counter or average? Swati, any view on Infosys?
My view is positive at the current level. No wonder we have witnessed a very strong sell-off into the IT pack, but I believe that the price correction has already done, and we have witnessed that the stock has managed to find out the short-term supports nearby 1,000 levels, and from there onwards we have witnessed a strong rebound rally. I believe looking towards the price momentum, the stock has a potential to reach up to at least 1,250 to 1,300. The short-term view is definitely positive. I will suggest to hold on the long positions as long as the stock sustains above the short-term moving averages 20, which comes to around 1,100 levels. So maintaining that as a stop loss, you can hold on the long positions for immediate target of 1,300 rupees.
Coming in on Infosys, but the next one's from Dilip, who's from Kolkata. Actually wants to know about LG Electronics, Astha. He's been holding 50 shares at 1,567. Actually, Astha, since the listing, the last couple of quarters, the result haven't been something to write home about, but big expectations, if any, do you have from this counter? Big name there. What should he do with this counter, Astha?
So I think although their Q4 of FY26 was a strong number, but if we look after the whole FY26 number, the whole financial year 26 was not very, very strong for this counter. And I believe that can be one of the reasons that we have not seen, so much strong momentum in this counter. But the important thing about this counter is that they have got a very good high value added product in which we know that there are TVs, there are, French door refrigerators, etc. So all these products are signaling towards the good premiumization story which this counter is playing right now. So my idea here is, although margins are not very, very strong, but if anyone wants to go in the consumer durable space for a longer term perspective, then this can be one of the counter only if the horizon is long term. So here, my view is just for the investor who is having this counter in their portfolio, they can continue with this counter for the longer term horizon. So stay invested in this counter. Maybe we can see the level of 1,700 in the coming days if they post very strong set of numbers for Q1 also.
Got it.
Next query is coming in from Jaideep from Mumbai. He wants to know whether should he sell the 1,000 shares of Electronic Marts of India that he's holding. He has bought that at a price of 149. Swati, any view on Electronic Marts?
Yes, my view is definitely positive. No wonder the client has bought at very attractive levels, and we have witnessed a very strong positive momentum in the last 4-5 trading sessions. I believe that this positive rally is likely to be extended towards at least 200 rupees, the immediate target of that level. But at the current market price, at least partial profits you can book at the CMP, or else you can maintain the downside profit stop loss of 170 rupees on a downside and ride this rally for immediate target of 200 to 220 levels on the high side.
All right. The other one coming on Gala Precision Engineering. It's a smaller name, but Astha, not sure if you have any view on this counter. Our viewer wants to actually enter this counter for the long term. Any kind of view that you can offer on this counter right now, Astha?
So can you just repeat the name? It's Gala Precision, right?
Yes, Gala Precision Engineering.
Okay, I think if I remember correctly, not so much in detail, but this is one of, precision component manufacturing company. And I mean, the kind of products which they are offering, like spiral springs, etc., they are offering some niche products. And that is why what we are seeing that the prices, the stock price is also high about this counter. And in fact, they have got a very good export base because if I remember, they are exporting in more than 25 plus countries. So, and in fact, FY26 was a very, very good year for the company. So these are some of the points which I remember about the counter. So I believe, yes, on the basis of the kind of product, because they are offering some niche products, definitely it is a good story to believe on or to enter on. But only thing is that just wait for Q1 FY27 numbers to come in and then make any sort of entry. So wait for some more time before the results come, and then I think just enter into the counter if the results come on the higher side, as they have already come for the FY26.
The next query is coming in from Biswajit from Kolkata. He has around 150 shares of Brigade Enterprises, bought at a price of 645. He wants to know whether is it advisable to hold this counter for the next 1 to 2 years. Asta, any view on this?
What is the cost price? If you can repeat the cost price again.
645.
Sorry, what was the cost?
645.
645 was the cost price.
Okay, so yes, definitely a hold is recommended for this counter, because we all know that Brigade Enterprises is one of the real estate, company which is mainly focused on the south. And what we believe that now, what can be the strong growth driver for this company is some of the launches which they are supposed to do in FY27. So I think that can be one of the major growth driver for the company going ahead. And Bangalore is their, main area, and what we believe that whatever projects they are launching in the Bangalore, especially some international projects are also they are launching. So apart from Bangalore, I think definitely that can have a very strong growth factor going ahead. So yes, one should remain invested in this counter, and I think here our viewer can easily have the break even, because I think cost price is 640. So definitely going ahead, we are believing this counter to move till the level of 680 to 700.
The next counter is Info Edge, buzzing today as well on the back of results. Lalita from Bengaluru actually bought these shares at 1354, sitting on a small profit right now. But Swati, would you recommend her to continue holding this counter? She has been for a while. I think the Q1 update was good, and now the results have followed through. So would you advise her to hold and continue holding to that momentum?
Yes, definitely today's momentum is really positive. Stock is up by almost 6.5 to 7%. Yes, but I will suggest to maintain the stop loss also on the downside, because they bought at very elevated levels. So currently, I believe the short-term target, or say for the intraday also, we might witness 1380 will be the initial target, and beyond that 1440 are the likely targets we can see if such kind of a strength remained intact. So in short, you can hold on the long position, but on a downside, maintain the strict stop loss of 1330 on a downside and hold the long position.
Got it. The next one also, Swati, sticking with you, it's on Anant Raj. Our viewers holding shares at almost 547. This is Prashant who's writing into us. Wants to know if he should still continue to hold. He's in good gains. Asking if 660 is a good target price and what could be the time frame. What would be your opinion?
See, 660 are the target frames we are putting. Definitely, it's likely on the charts, but probably from the last 2 to 3 trading session point, we are continuously witnessing a profit bookings, and on the high side, it's facing a very strong resistance of 635 levels, which the stocks unable to give the breakout of those levels. So, such kind of a profit bookings we are likely to see in the near-term future as well. We might witness some sort of a depth towards to 580 to 570 rupees on the downside. So, I will suggest at least partial profits you can book at the current market price. And positive momentums can be seen only once the stock manages to give the breakout of 620 rupees, which is acting as a previous cluster resistance zone. So the 620 is the immediate resistance level. If it surpasses those levels on the closing basis, then definitely 660 very soon, probably in a 1 month itself, we might witness the positive momentums. So at the current market price, I will suggest book at least partial profits, and remaining partial you can hold on for a 660 target.
The next query is coming in from Krishna from Mysore. He has around 100 shares of LT Foods, bought at a price of 428. Should he sell or hold? Asta, any view on this?
So LT Food, this counter is rightly quoting at around 490. So slightly below the cost price of the investor. But I think, yes, this is one of the counter we are liking in the food company spaces. As we know, Daawat is their main brand. And, this Basmati franchisee, which this company is having, has hold a very strong, control over the overseas also, because they have got a very good base in the export markets as well. So I believe, yes, LT Food is one of the very, very strong food companies where they have got very good brands like Daawat, Royal, etc. Apart from that, now organic food also, some food ingredients they are doing, going with also. And FY26 was also a strong year for them from the revenue point of view. PAT was not very strong. But I believe going ahead with the kind of volume growth we can witness in this company, definitely the PAT will also show some sort of improvement. So on the basis of the Dawat, which is their crown, well, I believe definitely we are giving a thumbs up to this counter with a longer term perspective. And here the price target can be set somewhere at around 470 to 480.
Got it. Well, viewers, it's now time for the rapid fire round. Swati as well as Astha, you know the drill. Keep your answers as short as possible. First question that's coming through, it's on Ankur Agarwal from Ghaziabad. Wants a view on Manipal Hospital, holding shares at 590. Astha, he's making 20% gains. Should he continue to hold or book out?
So Manipal Hospital being, at the time of IPO also we have recommended it for the small listing gain, but it has shown very strong listing on the back of not very good subscription figures. So I believe that this counter is here to stay in the price movement wise, and we can see the price level beyond 720, 730 also. Stay invested in this counter. The only reason I believe is that some good hands are holding this counter. Yes.
Right, so Astha would kindly request you to keep your answers short given the fact that we have started our rapid fire segment. The next query is for you, Swati. It's on CSC. Ashwini from Chennai wants to know the short-term target on this counter.
See, short-term target is 170, downside is a good support at around 160 level. So hold your long positions with a stop loss of 160.
Also, Swati, on Geo Financial, Rakesh, who's from Hyderabad, wants to enter this counter now. How do the technicals look like?
See, at the current level, the stock is under the selling pressure. I will suggest to buy on dip strategy should be implemented. So any dips towards to 245, definitely you can accumulate at least 30-40% at those level, and immediate target will be at 265 to 270.
The next query is for you, Swati, again. It's on Wipro. Siva from Amravati is sitting on a huge loss. He's holding 5,000 shares, bought at a price of 201 rupees. Can he hold or should he hold this counter for the next 3 months?
Yes, definitely you can hold on because the price retracement has been already seen. We might witness some sort of a rebound rally, and the buying price is also not too far as such. So I will suggest to hold on the long position, but keep your view on a larger degree. 220, 230 are the likely targets we can witness over a period of 3 to 6 months.
The next one's Fractal. Ray from Bengaluru actually wants a medium-term investment outlook here. We had an initiating coverage note in the morning as well. Astha, any view on the counter?
Positive. Just stay invested in this counter with the price target of 880 to 900.
Next query is for you, Astha. It's on NCC. Reddy from Mysore wants to know whether is it a good time to buy NCC for long term.
Not a good time to buy. Maybe at the lower level of 135 to 138.
Prakesh has actually wanted to ask Swati if it's a good time to buy into Bajaj Finance for the short term. Would you recommend that, Swati?
Yeah, I can recommend it, but with the tight stop loss of 1070 and immediate target will be 1150.
Got it. Well, let's just take a pause for the rapid fire because we will be cutting into the day one of FICCI's IBA 2026 event where RBI Governor Sanjay Malhotra is speaking. Let's quickly listen.
Doing business, doing banking, and so and it requires really, a total change in mindset. It's a shift in how we evaluate risk, serve customers, price capital, organize institutions. Happy to know many of the banks are already doing it. Some of you are considering doing it. The only question now before us is whether you shape the AI journey or you let it shape you by default. Before I turn to the topic of this theme of this conference, AI, let me reconnect with something I had shared at this very conference last year in 2025. I had spoken about 3 priorities. You would recall Mr. Sethi did refer to some of them. And I said that our regulation making is going to be guided by 3 or 4 major priorities. 1, financial stability. The other, customer centricity, and then ease of doing business and reducing cost of intermediation. I'm very happy to note that over the last 1 year, we have made good progress, whether it is on strengthening financial stability. We have taken a number of measures, as you would all recall. We finalized the standardized approach for credit risk capital, the ECL framework, the prudential norms on project finance, related party transactions, dividends policy, guidelines on NOOP, among others. We are well on target to be implementing, we meaning all the banks, are well on target to implement the Basel III guidelines that are applicable to us from the beginning of the next financial year with a glide path that we have given. Even our regulatory framework has been further bolstered by the improvements that we have made on supervision. Similarly, on ease of doing business, too, we took a number of steps. The regulatory burden on the boards has been reduced, made it more principle-based, policy-based, and let the operational details to be handled by the management. We consolidated regulatory and supervisory instructions, streamlined the forms of business, strengthened Pravah. All the applications from the regulated entities and the customers, or 203 odd of them, they are all automated and electronic, 99 with timelines, 99% of them, 99.9% of them are delivered within those timelines. We rationalized the current account and working capital norms. We reviewed norms relating to pricing of bulk deposits. This was an ask from the industry. And we also delegated certain foreign exchange related approvals to our authorized dealers. Similarly, on expanding bank credit, a number of measures were taken. Mention was made in the morning of acquisition finance, which was a request I was pleasantly reminded, which was brought up in this FIBAC conference. And similarly, we have taken other measures, including the rationalization of regulations relating to priority sector, project finance, alternative investment funds, which will all enhance credit flow to the deserving sectors. Similarly, on reducing cost of intermediation, and some of you referred, Richard mentioned it even in his presentation, few measures: removal of investment fluctuation reserve, revised norms on interest rate on deposits, rationalization of DICGC premium, LCR, and CRR. They shall all help reduce cost of intermediation. We will continue. This is still a work in progress. We will continue. We all need to, the banks as well as the regulator needs to continue to work on these areas. Certainly, in all these areas, I think AI has a big role to play, as has already been mentioned. We all know, why AI is transformational, is how, it is different. While, we have had many technological transformations. Previously, we had the steam engine, it multiplied muscle power, electricity multiplied energy, computers multiplied calculations, internet multiplied connectivity. But how this is different is that it actually multiplies intelligence. One had never thought that one can actually do it. Way back, when I joined college, for example, and I did computer science, and they said that, coding is, the most difficult of subjects that humans can actually do. And everyone, went, even now, people go for it. But now coding has become so, mundane and easy and routine, because people have now moved on from there to intelligence. So this is, of course, a promise. This holds huge promise for us, but at the same time, there are also risks. We in India stand at a unique vantage point to leverage AI. We have the most advanced public digital infrastructure, whether it is Aadhaar, the UPI, DigiLocker, ONDC. We are trying to build and improve and expand the unified lending interface, the account aggregator. These are all public goods on top of which the private sector can build AI because it has the potential to do for financial judgment what UPI did for financial transactions. That is
केसरिया से मन जोगी हुआ रे
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
The gift city in Gujarat stands at the heart of India's global ambition and Prime Minister Narendra Modi's vision to connect India's growth with global capital. How far has the idea progressed and what remains to be done? Finance and policy leaders weigh the challenges and map the road ahead. HSBC, a pioneer at Gift City, and NDTV present Global Connect, only on NDTV.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the
For you right now.
Yeah, no, thanks. Now, we start from what the Honorable Chief Minister said, no? Go back in time. What was this? This was a barren piece of land ravines literally because we have the river flowing next door. And as the speech was on, we look back at what our regulator, Mr. Rajaraman, said. The number of banks, the transactions that are happening here. So that itself is an indicator as to where GIFT City has come to from the time it was visualized by the then Chief Minister and the current Prime Minister. So it indeed is, these are exciting times. Exciting times why? Because we very strongly feel that we are at an inflection point, inflection stage, and the way we are growing, both in terms of the entities that are getting registered here, the basket, the bouquet of products that are offered here across different verticals, be it banking, insurance, something like aircraft leasing, which was happening or rather happens predominantly through other countries like Ireland. And we have got into it reasonably strong, in a very fairly strong way. So indeed exciting times is what I would say. Yep.
You know, we should put some of these into numbers. $111 billion in assets I crossed, I believe, March 2026. 17,000 professionals work here. What to your mind has been one way to tell the country and the world? Because a lot of people know about GIFT City, I think not enough do. If you had to put it into statistics, what is the way to really showcase how large this idea has become?
See how we see it, or rather, more than numbers, it's what is being created here. The ecosystem that is, developing here. If you get into numbers, we have more than 40 banks, half of them international banks, global banks. Some of them don't have a branch in mainland India that is, because when I say mainland India, it's one thing else from the perspective of the Foreign Exchange Management Act. The GIFT IFSC has a separate jurisdiction. So rather than numbers, what we should be looking at is what kind of an ecosystem is being created here. Let's talk of purely the IFSC. What is it? See it in very simple terms, gateway to global finance to India, and conversely, also the gateway for Indian entities, institutions to do global business. That is what GIFT City would be in one simple line. That's how I see it. Banks, insurance companies, reinsurance companies, fund managers. You have 2 stock exchanges, subsidiaries of NSE, BSE. You have a bullion exchange. Lots of consultants, law firms, BFSI, BATF entities. Close than 1,200 entities are registered by the regulator at this point in time. And on an average, the numbers show that close to around 40 to 45 entities are registered every month. So I think this is what is important. Rather than getting into statistics as to how many banks do you have or how many fund managers do you have, it's important that the ecosystem is developing. What is the depth of the ecosystem, what that we are creating, the financial ecosystem. I would like to see it that way. And wherever we go, be it within the country or overseas, there is curiosity, one, and people who know about GIFT City, they talk about how do I open my, how do we operate out of GIFT City? I think that is what is more important.
No, undoubtedly. You talked about the ecosystem. And when we look at GIFT City from a global investor's lens, it's a choice to be made. There's Dubai, there's Singapore, there are destinations around the world. You spoke about Ireland a few minutes ago. How do you believe GIFT City, where we're sitting right now, stacks up?
How do we differentiate ourselves, or rather, what is the larger intent of GIFT City? I would see it in a different perspective. There are 2 standpoints. One is India is one of the largest growing major economies of the world. That is one. We have tremendous capability in terms of talent, technology, innovation, operating global services. Now, these 2 combined, I don't think there's any other financial center would give you these 2 factors. So essentially, if you have to deal with India in terms of business, we feel that you need to be here. That would be the differentiator. Now, you mentioned about other global financial centers like Singapore, Dubai, etc. Of course, they are there since quite a long time. well-established centers. We learn from them since we are fairly young, we are very young. If you see it in that time scale, we are toddlers, but then we are growing up very fast. So we are learning from them. Why shouldn't, how to, again, coming back to the differentiation, why should someone choose Gift City?
Well, we'll keep getting some more updates as and when we get those as well, and probably flash those at the bottom of the screen as well. But continuing with your stock related queries now, Swati and Asta, thanks so much for patiently waiting by. The next question is on KEC International. Jay from Tirupur, holding shares at 504, asking if it's a good time to average down right now. Asta, we've seen a weaker picture from the company in terms of margins also being down in this quarter. Would you recommend him to average or should Jay continue to hold his existing shares?
So what I believe that Q1 FY27 numbers were not that great, but their biggest advantage or benefit which is coming from is from transmission and distribution segment. So I think that is one of the biggest opportunity which this company will be having. My idea here is that yes, Q1 was a softer quarter for the company, but going ahead, I think this RPG group company will definitely show some positive set of numbers. So I believe that it might take some time to stock to recover because Q1 was a concern. PAT was down. But I think in the long term, definitely transmission and distribution is one of the segment which might prove a very positive for this company. So remain invested in, although cost price is higher than what the prices are quoting right now. But this stock has a potential to move above 500 level in the medium term to long term.
Is coming in from RB Reddy from Hyderabad. He is holding 400 shares of Avantel, bought at a price of 198. Should he continue to hold or exit or average? Asta, any view?
Can you just repeat the stock name, please?
Avantel. AVANTEL.
Technologies.
Yeah.
Okay, yes, got it. So I believe that Avantel is one of the counter where one should remain invested in because here he's asking for holding the counter. Yes, one should remain invested in this counter for the medium term perspective with a price target of 190.
Well, the next question coming through, and this one's a short-term query on Kalyan Jewelers. Our viewer Mahesh from Bengaluru, holding shares at 618, so at elevated levels, Swati, asking what he should do in the short to medium term. We've seen a rally and then some reprieve. Swati, what do the charts suggest right now? Is there a next leg of up move in the near term, or what would be your advice?
See, already we have witnessed a very strong rally in the month of July itself from almost 400 to 650, 648 levels. Now the counter is showing a negative divergence from the overbought zone, so which indicates that we might witness some sort of a profit bookings and which cannot be denied after such kind of a rally. As of now, the stock is hovering near the 20 days moving average, which comes to nearby the 590 levels. So as long as it sustains that level, we might witness some sort of again a little bit positive rally towards to 630 to 640 level. So I will suggest hold on a long position, but please maintain the strict stop loss of 590 rupees on a downside, and the immediate pullback rally can be witnessed up to the 630 to 640 levels.
Okay, the next query is coming in from Uma from Bangalore, and on charts she wants to know whether is it the best time to enter Thyrocare for medium term. Swati, any view on Thyrocare?
On a longer term horizon, but for a mid-term view, I will not suggest to take a long position at the current market price because the counter is already trading nearby the 52-week high or say the all-time high levels. So any retracement towards to 580, 570 levels are the attractive levels to build up the long position. So wait for some more time. A dip should be utilized to build up the fresh long positions.
Got it. Well, let's go to Hyderabad now. Surya is dialing in for a stock-related query. Surya, very good morning. Welcome to the show. What's your query?
Sir, actually, yesterday I was holding gain stake of around 150 shares at 3,118. Now, whether based on the Q1 results, whether I have to hold or sell and go for Cupid Limited.
Got it. So you want to make a... Okay, got it, Surya. Asta, quarter one for Cainstech was weaker, right? I mean, the cash flow concerns are there to see. Surya sitting on good gains. Firstly, would you recommend to book out of Cainstech now? And the second question being if you should enter Cupid.
I believe that their quarterly performance was very disappointing, and in fact Q4 FY26 has started showing the sign of that. and which was further continued in the Q1 of FY27. The major positive for this company is its order book, which is a very strong order book they are holding right now. So my idea here is this is only for a long-term investor. In the short term, we might see more downside for this counter, but in the long term, I think it can again show very good set of a number on the basis of a strong order book. So here, the view should be purely for the long term, where the time horizon should be more than 6 months. So if that is the thing, then definitely stay invested in.
Next query is coming from E. Venkataramanan from Bangalore. He is holding 32 shares of Nestle, bought at a price of 1,171. He wants to know whether should he continue to hold this counter or book profits. Swati, any view here?
I will suggest to book the profits at the current market price because the counter has already given a good amount of a rally on the high side, and we might witness some sort of more profit booking, which will take a stock towards to 1460 to 1420 levels on the high side. So book your profits at the CMP. Any dips towards to 1400, 1450 levels can be utilized to build up the long positions.
Got it. Also, Swati, on Z Entertainment as well, because Siva from Amaravati is holding 150 shares at 155 rupees. So currently sitting on deep losses. Would you recommend him to continue holding or should he exit?
Puneet, already we have witnessed a very strong price correction in this particular stock. No need to book the losses at low levels. We might witness some sort of a turnaround in this particular rally because in between we are witnessing a very strong up move rally which takes a stock towards 215, 220 levels, and again we see the retracements level. So I will suggest hold for some more time. If you are getting any rise towards 215, then you can definitely exit out that levels. But at the current level, you should definitely hold on to long positions.
Well, yet another caller query coming in from Hyderabad. Kiran, you can go ahead and ask your query.
Hi, Puneet, and all the panelists also. It's very good morning. I'm a regular caller to you, and I have a query regarding Sharda Energy. And I bought it with the price of 526 rupees with 189 shares. So can you tell me please regarding this, how many days I can hold or any future prospects of this?
Okay, Swati, any view on Sharda Energy here?
Frankly speaking, my view is a little bit cautious in this particular counter, and already the client has bought at elevated levels. No wonder we are witnessing some sideways momentum from the last few trading sessions, but it has a very cluster support downside at around 490 to 495 levels. So I will suggest you place the stop loss at around 495 levels and hold on the long positions. If you are getting any rise towards to 520 to 530 levels, try to exit the longs from this particular counter.
Got the next one coming on Bosch, Rakesh Gupta, and he sent in 2 stock names. I'm going to take one. Rakesh, you can come back to us in the afternoon edition with the other one. But wants to know if it's the right entry point to get into this counter now. Astha, we've seen a run-up actually happen on Bosch quite a bit now. Is it still a good time to buy?
Because results were exceptionally well, but the problem is with the valuation. Although it is a very good quality auto component company, but I believe the valuations are on the higher side, and that is why I believe that one should only remain invested in this counter if they have this counter in their portfolio. Otherwise, entering at this point of a time is little, I think it will be a little early decision because I think let it cool up further and then make a fresh entry.
Got it. Well, let's now start the rapid fire round in this edition of the show. Swati as well as Astha, you know the drill. Keep your answers as short as possible. First one between Lupin and Sun Pharma. Srinivas wants to know what's a better pick, Astha.
Sun Pharma.
Next query is for you, Swati. It's on Narayana Rudale. Vignesh from Bangalore wants to know whether should he enter this counter or wait for further dips.
Any dips to 750, one can go for a long, not at a C.
Power Grid is the other one. Our viewer, Nayan is holding shares at 271. Wants to know if it's a good bet for the long term, Astha.
Sure, for long term, it's a good bet. Remain invested in with a price target of 300.
The next query is for you, Astha. It's on Imami. Jayashree from Coimbatore wants to know whether it's the right time to invest into Imami for the next 1 year.
Not a right time to invest, maybe at the lower level of 380.
Got it. Rajesh wants to know about IRFC, Swati. Holding shares at 101. Should he still continue to hold for the next 6 months? What's your advice?
My view is cautious. Any rise towards to 95 rupees should exit the longs.
Next query is for you, Astha. It's on Wockhardt. Shobhag Yadav wants to know whether should he buy Wockhardt from medium to long-term perspective.
Yes, one can make entry into this counter because this counter can move till the level of 2100.
Shailja wants to know if it's a good time to enter Vedanta Power as well as Astha for the long term at the current market price. Does it make sense?
Vedanta Power not at the current market price, maybe at a lower price of around 36 to 35.
The next query is for you, Swati. It's on Ipca Labs. Astha Sabarwal wants to know whether should she continue to hold or sell the shares of Ipca Labs. She has bought it at a price of 1,627.
I will suggest to hold on for immediate target of 1800 rupees. If you want to keep any kind of a stop loss, 1700 is the immediate support level. So keep that as a stop loss.
Bajaj Housing Finance bought at 108 by Kishore, who's from Iluru. Wants to know, Astha, if he should average down, hold on, or exit the counter.
I think averaging is a better choice. So at a lower level of 80 or 78, one can average out.
The next query is for you, Astha. It's on Stallion India Fluorochemicals. Sumit from Bangalore is holding 500 shares, bought at a price of 270. Should he continue to hold this counter? Stallion India Fluorochemicals.
Stallion India Fluorochemical, I think yes, one can remain invested in this counter.
On Rallis, Swati, if you can give a recommendation. Shyam is holding shares at 225. Stocks trading at 211 now. What would you recommend?
I will suggest to hold on by maintaining the strict stop loss of 208 and immediate pullback rally can be witnessed up to 225. Up to that level, you can hold on to longs.
The next query is for you, Astha. It's on BSE. Srinivas from Chennai has recently bought few shares of BSE. He wants to know whether should he continue to hold or exit.
Hold for BSC with the price target of 3700.
Guru Prasad wants to know if it's a good time to buy into PFC for the next 2 years. We have that big merger coming through as well, Astha. What's your opinion?
Maybe at a lower level, one can enter into this counter of around 370.
Next query is for you, Astha. It's on Sirma SGS. Anchal from Bangalore is holding 85 shares, bought at a price of 756. Wants to know whether should he add or exit from long-term perspective.
So 756 is a very good entry point. Definitely one should partially book profit, not fully. So partial profit booking is recommended at current level, which is almost double.
Got it. Next one's Aarti Drugs. This week itself stocks up 8%, but Sriram wants to know if him holding at 548, which is at elevated levels, Astha, makes sense.
Aarti Drug at 548, I think one have to remain invested in this counter for at least 6 months to get the cost price.
The next query is for you, Swati. It's on TVS Motor. Anayika from Mumbai wants to know whether should she sell her shares in TVS Motors.
Yes, partial profits can be booked at the CMPs. Another partial you can hold on by 4300 stop loss. The immediate target would be 4600 to 4700 levels on the higher side.
The next one coming through, it's on JNK Bank. A viewer bought shares at 182. Swati, would you recommend him to continue holding?
Yes, definitely you can hold on because we might witness some sort of a pullback rally towards 180. So you can definitely hold on the long positions.
The next query is for you, Swati. It's on Car Trade. Norin is holding few shares and wants to know whether should he buy more at the current price, Car Trade Tech.
No, not at the current market price. Any dips towards the 2600, you can think about it, but not at CMP.
GR Infra is the other one. Kranti from Vijayawada holding shares at 900. Astha, this has been an underperformer since listing. Should he exit?
No, remain invested in this counter. I think he can see the break even.
And the last query is for you, Swati. It's on Dr. Agarwal Health. Ashwini from Chennai wants to know the short-term target on this counter.
The short-term target is around 5450 and beyond that level is at least 600 levels can be seen.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. But Swati as well as Astha, thanks so much for helping us solve 60 queries that we have in the last 1 hour, along with some inputs coming in from managements too. But thank you so much for joining in, giving us your views as well. But viewers, out of time on this edition of the show, thanks so much for watching. We'll see you at 2 p.m. for Ask Profit, the afternoon edition.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया है ब्रेड सिर्फ आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? चैनल तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you the hottest companies on the earnings, or if these earnings are not that good, Is there any alpha to be made? Because, hey, valuations might be cheap. Because of that, I'm going to get you an interesting company today. Try to guess which company I'm talking about. It's a multimodal logistics company. Let's give you more hint. I'm sure it's a bit vague and it's quite broad. It's the first private container train operator. Now there are hardly handful of them. First private multi-user customer freight station, CFS. I'm going to give you all those details. Another hint I would like to give you is Snowman Logistics is an associate company. I'm sure you must have guessed it by now. Another small hint is that stock is up 20% from 2026 lows. Now, I'm sure you must be understanding the company which I'm talking about. It's Gateway Distriparks. This is the company which we'll be getting in KYC, and a lot of questions and answers are here. Of course, it's on the numbers, but the export-import volumes, they have been impacted. This is especially on the Middle East crisis. But the question is there a recovery at play? Second question, let's have a look what's going to be there. And that is the confidence of that 15% trail growth. Despite, volatility in the earnings, why is the company so confident? We'll try to answer this question on the key timelines for the ICD Indore, Ankleshwar, and how the other expansion plays out, the capex plans, as well as the current as well as the future numbers to look at, especially in the new age sectors, what the company is doing. And this is very much important, and it might be a big trigger for the company going ahead, is the DFC. How much of that coverage has been there? What are the new progress or timeline which the company is talking about? And also a minor overhang in the stock is the Jaipur litigation. So we'll try to understand from the management where does it stand. And Snowman Logistics, it's an associate company, but what are the key targets and the pellet expansion plans, what's going to happen, margin and top line guidance for FY27, that's also very much important as well. And to give this perspective from the promoter family, we have Sambit Gupta, Joint MD at Gateway Distriparks, where Sambit will help us decode our queries. But let's first decode what the company is all about. I'm sure it's of course a read company, Gateway Distriparks, but let's get into a little bit more detail about it. It's an integrated intermodal logistics service and XM solutions provider. Just to put in perspective, railways is there is of course ports. They try to connect this entire ecosystem. That is that simple it is. Of course, there is warehousing and distribution also. They have a network of 10 container terminals which is located across India, and that's where you get the proper coverage. Or their operating fleet of almost 35 trains along with the 560 plus trains. Moving on, the important thing, the offering is of course general bonded warehousing they do. These are the ancillary services around it. So you need an ecosystem when you are a player like this: container handling services, rail and road transportation, as well as value added services. So this is the entire ecosystem. And one interesting point is the dedicated freight corridor. If you have heard about those double decker trains, this is coming in from them as well. This container department is there in north, west and central India, and of course near the coastal areas. That's how they are connected, and this is what we talk about it. And they have a pan-India rail license, so that is of course needed to operate in such kind of industry. Their associate company Snowman Logistics, they are giving a fifth party that 5PL distribution services as well as the cold chain facility. So that's an add-on, but yes, it's a part of a wider ecosystem. This is the total capacities, TEUs. These are of course throughput data. This is where you measure how much work has actually happened. This is one of the most important units when you are measuring this industry. Remember, it's the first private multi-user CFS in India. That's the first one. And second interesting trivia about the company is it's the first private container train operator in India as well. So the moment more private players comes in this entire setup, it gets beneficial for the company. But before we start our analysis, there are some abbreviations which you should know. EXIM means export and import. If you're a young analyst, want to take a screenshot, share with your friends, do that. Let's look at the second abbreviation also. It's not very hard, it's very simple. It's Inland Container Depot, ICD. It's a dry port. It can be all across the country. It doesn't need to be only on the coastline. CFS is nothing but your container freight station. That's where it's kept, most of the containers, especially if you look at Mumbai, it's near the Navi Mumbai airport. Also TUs, this is the most important thing, it's called total throughput. This is where we'll actually measure the units. So this is the entire picture of how things actually pan out, and DFC, which I spoke about, is the dedicated freight corridor. This is where all your abbreviations come in. But Q1 performance, largely it has been over weak, and that's the reason is, especially because of the Middle East crisis, there is an uncertainty, and the rail vertical, if you have a look at it, there is a volume degrowth coming in. Let's look at the CFS vertical. That's also down 3%, and overall, if you just add both of them, rail ka dhanda as well as land ka dhanda, overall it still comes down to 2% of degrowth on a year-on-year basis. So yes, there is an impact. It's an industry impact. It's not company specific. So take things with a pinch of salt. Another important data is the EBITDA per TEU, EBITDA per unit, let's call it for a simplification, and they have managed it decently well. In the last 10-15 quarters, you see the number has not gone up, neither it has come down also. So it's been in a range. That range will of course come in your financials also, but that's after some time. Now the construction at Indore ICD has commenced. That's one important management commentary coming in. The second progress is the MLP Ankleshwar. That's where the custom permission is there for the XM business, and if you look at the completion, it's likely to happen by September. So we'll try to understand this from the management on the progress or the timelines. Management commentary for Snowman Logistics is also interesting. Expected to reach almost 1.7 lakh capacity pallets by mid-2028. So it'll be pretty interesting to track, you know, how the company functions as well as its associate companies. But I've made a list of reasons. It's very much important that you should note that analysts still remain bullish in the stock. That's the first, view. I'll explain you the number of analysts who are bullish also, but that's in our KYC rating, so you have to stay tuned with us. Valuations are cheapest amongst the peers. Why? That's the reason I'll tell you, but you need to wait for that. Also, the promoters have increased the stake. In one side, there has been a sell-off from institutions, but other side, promoters have increased the stake. The network expansion, despite volatility, still continues, and this is a good sign for a company operating in this industry. And lastly, a dedicated freight corridor. They are having a good lion's market share in this segment. As and more this development happens, the company starts to benefit. But what may not work is DIs have been reducing stake, and we have seen that happening over the last 3 to 4 odd quarters. Second reason is the B2G risk. At times, the receivables angles and the delay angles also comes in. Let's talk about the third point. That's the ongoing West Asia crisis, and that is actually giving pressure to a lot of industries, especially the logistics space. The consumption and the production had remained subdued in the first quarter. Maybe in the second quarter, this pressure might overspill. We'll get that conviction from the management. But as of now, for you to get conviction, you need to see our 8 KYC ratings where we judge the company, and that is where our thesis will become important on where does Gateway Distripark stand. These are the usual numbers to talk with. We haven't changed that. And also, if you look at it, we have street trade as well as shareholding over a period, so say last 3 to 5 years. Valuations have got an interesting set of peers, so you need to wait with us, because that's why the one reason is why it is cheapest in the logistics space. And the analyst stake also, what are the 7 analysts talking about? We'll get you all those details. But let's start with income statement. The first one, largely EBITDA and net profit, you see it's been flattish 3-year CAGR numbers, and they have actually just kept a very narrow range bound moves when it comes to the overall margins and even the top line growth. Just look at it, EBITDA margins also holding up above the 20% mark. So it's a very stable business, but it hasn't jumped up very high, and that's a little bit of concern as well. This Q1 earnings we already discussed with a slight dip coming in the overall margins. But yes, there is a big exposure in the Middle East risks which has started coming in, and that actually came in the domestic business as well. So net, let's keep a neutral rating for the income statement. Let's talk about balance sheet, and balance sheet is pretty decent, and they have managed to keep that. Of course, the equity base also going up. The borrowings, it's largely like a working capital, and they have managed it pretty nicely. There is a cash balance also. So net, it's a decently managed company in the balance sheet. So I'm going to give this a thumbs up as well. So we spoke about income statement, we spoke about balance sheet, but a very interesting data has come up when I am analyzing the cash flow statement. Yes, compare the FY24, FY25 numbers, there's a good conversion happening. For FY26 also, a good move happening. Almost you could see it's up almost 50% plus when it comes from the cash flow of operations. Conversions have been strong. So net, I'm going to give this a thumbs up as well. But let's talk about return ratios. Largely the return ratios have been flattish. A slight dip coming in March 23, March 24 was around 13%, but then falling below that 2% mark, but still that 11% threshold is maintained. So nothing much to look at. And let's keep this a neutral rating as well. But let's talk about the shareholding. What's happening in the shareholding? Promoters have been increasing the stake, and I've seen that from the March 25 quarter to the March 26 quarter. On the other hand, DIs have been actually reducing the stake from 39%. It has come down to 32 odd percent. So a little bit of concern is there, especially with the retail participation going up from where it was 21% now going up to 27%. So both sides, one side promoters are increasing stake, other side DIs are selling. So it's a neutral rating from my side when it comes to the shareholding. But let's talk about street cred. Has the stock actually made money? A lot of logistics stocks have been laggards for the investors, and yes, in the long run, last 5 years, the stock is down 20%. So yes, it has not made money for the investors, and it has tested the patience over the last 1 year. And from 2024 highs, look at that fall. It's down 52%. But in the short term, or for a trader, you could say, or a positional person, from 2026 lows, the stock is up 20%. But majority of the criteria, it has been disappointing. And because of that, a little bit of concern is this. I have given this a thumbs down as well. But valuations, let's have a look what's happening here. And valuations is something which is making it quite cheap. Look at that. This is just 12 times the forward 12 months P. And I had told you to wait for the numbers which will come out. And the other numbers, have a look. All cargo logistics is 14x. VRL is 16 times. On the other hand, Mahindra Logistics is expensive. That's around 31 times that's the valuation is coming. So yes, most of the logistics stocks have already taken almost 40 to 80% fall when it comes to the valuations from their 5-year peak levels. So I'm going to give this a strong thumbs up when it comes to the valuations. Let's talk about the outlook, the last one, or you could say the analyst take. What are their outlook? That's around 100% buy rating is coming from the 7 analysts, and from the current prices which we have seen, it's a big correction has happened. There is a significant upside potential, almost 40%. The target price coming in at more than 80% for Gateway District Park. So these are the important numbers which you should note down, and I'm going to give this a strong thumbs up as well. So let's revise the entire 8 ratings. Where does the company actually stand? And I must say the income statement is largely neutral. The numbers were muted in Q1, but balance sheet and cash flow has been strong. On the other hand, return ratios has been neutral over a period of time. Shareholding, things have given mixed trends. Street cred, big concern, especially on the returns to the investors, be it the company or even the industry that has tested the patience of Dalal Street, and valuations making it very attractive. While the analysts are still bullish, not even a single analyst has given a sell or a hold ratings. That means there is something in the stock for the future. Overall rating, let's pull out, and that is roughly 5.5 out of 8. So you can see the company overall is on the inline to strong positive in our numbers for the logistics. And with us, we'll have Samvit Gupta, the joint MD at Gateway District Parks, where he'll talk about the company and little snippet about him. He's a part of the promoter group. He had joined the company in the year 2014, almost you could say 10 years plus experience coming in. And one more interesting tidbit about him, he's also the director at Snowman Logistics, which is India's largest cold chain logistics as well. So the conversation with Samvit will continue, but just after a break.
केसरिया से मन जोगी
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Buy now. Sell immediately.
Hold it, boss.
Buy now. Sell. Hold. Buy. Sell immediately.
Confused?
Welcome back to Know Your Company, and now we are joined in by Samvit Gupta, the Joint Managing Director at Gateway District Parks. Good afternoon, Samvit. It's always a pleasure to have you with us at NDTV Profit. But this time the industry has impacted, the overall numbers, especially from the Middle East crisis coming in. But the XM volumes, the export-import volumes, do you think some green shoots are coming from the second quarter?
Yeah, hi, good morning. Thank you for having me on the show. There are some slight uptick in volumes in Q2, but still the uncertainty remains, and it's primarily on account of West Asia only. We normally had about a 10 to 15% exposure to the Middle East for exports. So that got impacted, but overall shipping cycle was also disrupted. So we are seeing some impact, but our volumes have relatively remained flat year on year. Market share is intact, maybe even slightly grown in certain markets. So we're doing quite okay there compared to the industry standards right now. But we are hopeful for the rest of the year. And assuming no more disruptions take place, we are still targeting a double-digit growth.
Right. Just wanted to understand more about it, since you're already targeting a double-digit growth. Your revenue outlook will also remain almost that range only, which you have been there over the last 2 to 3 years. If you could just give us the important guidances for FY27.
Yeah, so on the GDL side, like the revenue, volumes, EBITDA, everything, we're targeting double-digit growth. It is subject to macros playing out, but if things stay stable, I think the next 3 quarters will be on the positive side. In Snowman also, we had a good quarter. It's less impacted by the war, although some input costs have risen, both in Gateway and Snowman. Snowman revenue and EBITDA still was healthy. So Snowman grew by 10% revenue in Q1 and EBITDA grew by about 16%. And we should see that trend continuing then.
And Samvit, are you still confident about that 15% rail growth which you have mentioned? Because there's so much happening, but there is some execution also delays happening from the railways. So you'll stick with that growth of 15%?
10 to 15% is the range we're looking at, and this also includes Ankleshwar MMLP, where we have exclusive rail rights. That should start EXIM volumes by end of September. We've already been running domestic trains for almost a year now, so we're seeing some traction there as well. And other routes domestic also we're exploring. So we're not just focused on EXIM out of our existing locations for this growth.
Okay, so that's where the movements are happening. But the capex numbers, what are the capex plans which you have for the coming years? And currently also there's a lot of capex happening, especially in the new age sectors. So I just wanted to understand what's the progress on that as well as the capex plans ahead.
Right. So we bought land in Indore in February, and construction has been ongoing there. So we should be operational we're targeting end of 2027 if we can. About 100 crores capex is pending over there for the rest of the works other than the land. Jaipur, whenever our legal case gets over, I mean, hopefully that should happen within the coming quarter. We have about 75 crores capex there. And then the rest, we have about 100 crores capex on replacement of our vehicle fleet, reach stackers, which we've started electrifying. So we've got electric reach stackers. We've just started for first and last mile. Also 10 trailers have come in, and we're going to increase this further, as well as some new high speed, high capacity rakes. Earlier we were leasing, but now we've started purchasing rakes as well. So this would amount to about 100 crores, which also includes some minor capacity addition at our existing terminals. So total, we're looking at about 275 crores in the next 2 years.
Any kind of fundraise we can expect, Samvit, to fund them, or any other acquisitions or JVs or tie-ups you can see?
So no fundraising needed. We're quite healthy. EBITDA on the core business for rail and CFS gives us about 400 crores EBITDA. So we'll be funding it with a mix of debt and internal accruals, but I think we're largely comfortable since our net debt to EBITDA is below 1. In Snowman, our net debt to EBITDA is about 1:1, and we could probably increase some debt there depending on how many more warehouses we add on owned versus BTS. So that's there. In terms of JVs and acquisitions, there's nothing right now immediate that's there, but we're always open to it. We are exploring some partnerships similar to Ankleshwar, where on an asset-light model, we might work out of a facility for some domestic business, but nothing concrete yet. We're also exploring, we're also exploring other greenfield projects other than Indore, Jaipur, Ankleshwar for new ICDs. So that capex I didn't add. That would be anywhere from 100 to 150 crores per new terminal that we do. But since again nothing is there in hand today, I'm not including that in our guidance.
Just wanted to understand
terminal that we do. But since again nothing is there in hand today, I'm not including that in our guidance.
Just wanted to understand, just a follow-up question, Samvit, these ICDs which you are looking at, which regions can that be? Because of course we have seen Indore also coming in. So which areas you're looking at for the ICDs?
So our primary focus has been along the northwest corridor only to maximize the returns of the dedicated freight corridor. But Indore was a key market for us also. So that's our first venture into central India. We're open to some more locations within central India also, but not really exploring the east or south India yet for rail purposes.
Most of the discussions has been done. This includes your litigation, capex, expansion, everything. You have done it in a very short time. That's a pretty interesting take. But I want to take your industry view, the dedicated freight corridor. What's the size of the opportunity? Because you guys are having a lion's share in the work. So I just wanted to understand, what developments have happened, because we have seen some developments coming in from the government handles also, but wanted to understand what's there actually happening.
Bombay finally got connected in end of June, and we were the first container train operator to run a double stack train out of there. We have an advantage with Ankleshwar also, which will act as a hub for us for all our volumes, be it Indore or North India coming out of GNPT. Today, only 5% of our business is from JNPT. But earlier, so if you look at like 10, 12 years ago, it used to be about 1/3 Mundra, 1/3 Pipava, 1/3 Nhava Sheva. And when we talk to shipping lines and customers, they are exploring and they are open to just calling on Nhava Sheva and for the hinterland. And we have a pan-India license as well. So we'd be in a good position to take more market share as JNPT volume grows. JNPT also has an advantage that it's connected directly till the port versus the Gujarat ports where there's a switch over back to Indian Railways. So the transit time will be about 24 hours from say Delhi to Bombay. But we need the volumes to pick up before that comes in. And it'll be a gradual shift. It's not going to be an overnight shift. We are expecting few percentage per year going back to Nhava Sheva.
Fair enough. Samvid, it's a pleasure to have you with us at NDTV Profit, where we explained us how the industry is, what the company is doing, and the strategy ahead. It's always a pleasure to have you with us. Thank you very much.
Thank you so much.
So that's the management of Gateway District Parks. Of course, talking about the short-term fluctuations or volatility, which is still, ailing the industry. But in the long term, there is a big story at play. So for these interesting stories, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Elevated oil prices drag sentiment on Dalal Street. The benchmarks hover close to that day's low. The Nifty breaks below the 24,500 mark, while most major sectors trade in the red. FMCG and defense are the top sectoral laggards. Oil extends its 4-day rally as Trump's tougher demands on Iran complicate hopes of a deal to reopen the Strait of Hormuz. Brent holds near the $88 a barrel mark, while WTI stays above $82 barrel a mark, keeping geopolitical risk firmly in focus. Big win for Adani Group. A US court dismisses with prejudice the criminal charges against Gautam and Sagar Adani. The dismissal by the US court follows DOJ's independent review of the case. Info shares surged over 5% after Q1 revenue rose 11% on a YOY basis to 881 crores. Consolidated profits stood at 490 crores, while the stock reacted positively to the quarterly performance. Gland Pharma, Colte Patil lovers after a strong set of numbers. Gland Pharma is in focus after profit jumped 47% and revenue grew almost 20% in Q1. Brokerages have given it a thumbs up, while Colte Patil developers also surged, rising over 18% to hit a fresh 52-week high after strong Q1 performance. Welcome back. You're watching Markets at 12 with me, Puneet Zaveri. Over the next half an hour or so, we'll try to focus on those big stories for today. As you see, the markets, they continue to be under pressure as well, but and below the 24,500 mark, closing in on 24,400. But it's been a day where these individual movers continue to augur on the back of either good or bad results. But before we do that, just time to explore India's next financial frontier, which is the GIFT City. Now, a deep dive with senior banking as well as wealth management experts on building a global asset management hub, attracting international capital and unlocking GIFT City's big opportunities. Let's cut into GIFT City, where Neeraj Shah, our executive editor, is hosting a panel.
Entity.
Kudos, and it's a recent start, right? It's not a very...
yeah, it's probably January.
It's probably what?
January.
Wow, okay. Kudos.
So I think there is good, good traction for this. And in fact, as next steps, these are AIFs. As next steps, of course, we'll be approaching the regulator to make a retail FME license, which will be more scalable. So we are obviously excited and backing it with all the efforts and hard work that we can make. On your second point, I think, see, when it comes to raising money all over the world and investing into India, I think 2-3 things to look for. First is, I think, all of us as participants, we should not look at it as a destination. I think it's a journey. It's evolving, right? Because look at India itself. We are barely a couple of percentage points of global market cap. Correct? We are not really a single country asset class as of yet, because bulk of money till recently coming into India was always some part of global equity, global emerging market, Asian equity, whatever you have. But as India slowly becomes a more deliberate, direct, single country exposure, then obviously you will find more takers for investing via GIFT City into India. Because if I'm directly, deliberately investing into India as a single country, there's no better way to do it really. So I'm quite bullish that it's actually going to become very, very big as a gateway into India. I think there is no doubt about it. And we should not back ourselves just with incentives. We should not back ourselves. We should not count that our growth will come only because of incentives. But one can't, we would be failing in our duty if we don't mention the fact that there is tax incentive. Like you said, from anywhere in the world, if you're investing into India, there's no better place than GIFT City.
Okay.
Yeah, so as far as say US and other parts of Europe, Middle East, everywhere there are inquiries, because there are vehicles, we ourselves have vehicles from Dublin or wherever, right? But despite that, people are interested to inquire with us that, okay, why is it that, how can we invest through GIFT City rather than investing through any of those? Now, when it comes to outbound, right? So obviously till very recently, we had onshore funds which were acting as feeders for investing outside the country, right? But I think that now clearly GIFT City is the one which is through LRS we are pooling money here and then we are actually investing. I think that for that to grow, it's just 1 or 2 things that we should, and like I said, it's a journey. So I think it keeps evolving. I think we are only talking in terms of Indians investing in India or we are only talking in terms of outsiders investing in India or Indians investing outside. But I'm sure that when I say as a journey moving ahead, the regulator would definitely think about making it as a offshore fund jurisdiction. Like, somebody sitting in Dubai wanting to invest in Latin America, but the fund is, a fund center, a global fund center, a fund hub, where global fund houses are domiciled, right? So I think that would obviously be probably they would think and maybe the next step, and then I think it will become even more powerful. I think the true power will be, we'll all be very proud and it will be true power if it is not just a gateway in and out of India, but also on its own standalone. Because see, fund management industry globally, Indians are right up there, right? I mean, we are a global fund house founded by an Indian, and there are many, and there will be many more in times to come. So then why should we be housed in any other, because Indians are in fund management industry all over the world. You'll end up in London, Hong Kong, New York, Singapore, anywhere, right? They've done like in IT services. So if we want Indian companies which are truly global asset managers, then I think in and out of India is one, and then we all need to work together that it's a standalone fund hub itself.
Yeah, big shout out to Indians across the world, frankly, because it's not just in the hotel industry or the service industry now. Indians are present across, right?
See, you have seen Indian companies which are truly global IT companies. Exactly. You have seen Indian companies which are truly global auto ancillary companies.
Or pharma companies.
Yeah. But you will eventually, with support from GIFT, you will eventually see Indian companies which are truly global asset managers also, I think, in times to come.
Dr. Shah, is that a vision? So two visions. One, how do you encourage Indian money managers to become truly global money managers? And two, can GIFT eventually, as a part of that vision, maybe not in 3 years, maybe not in 5 years, maybe in 10 years, but can GIFT independently be the hub for funds which have got no connection to India, but using GIFT as the place of domicile, if you will?
I think probably government was well aware that NDTV and HSBC was holding this conference. So I think recently in the parliament, you might have seen the amendment which has been already been moved, which talks of 9A.
Yeah, it will happen. I mean, I'm saying it is actually bound to happen.
Yeah. So what I'm trying to convey is that steps has already been taken to make this as a reality, that you are a global fund manager. The fund is been incorporated anywhere outside and you manage it from GIFT City. And also from India. I think from both perspectives, government has already moved an amendment which takes care of many those conditions which were seen as more restrictive for a global manager to be sitting here. And probably that will become a reality as we speak in probably few months from now. So it's not about 3, 5, 10 years. I think you will see that happening, very soon from the GIFT City perspective. And then your second point of an inbound and outbound gateway as to how more and more people use this. I think it is for an inbound fund, as was mentioned. I think earlier it was very hard to convince people that look, this GIFT is also one of the locations that you can use for this, and the perception issues were very, very tough to overcome. But with the experience of last probably 4 or 5 years and with the global fund managers coming in, I don't think there is now a question in the mind of the global fund managers or the global funds that India and the GIFT City strategy has come right in front, right at the top, versus using Mauritius, Singapore. I can very confidently say that nobody is probably using now Mauritius to invest into India as a fund vehicle. They would.
Well, of course, we'll keep getting you more updates from that panel as well as a lot more that's happening through the day. But let's introduce Sachin Shah. He's the Executive Director and Fund Manager at MK Investment Managers, now joining in for a brief chat with us. Sachin, very good morning. Thanks so much for joining in. What we've seen actually in this quarter, and I think it's a discussion I had yesterday with our fellow market expert also, that Q1 earnings have actually been quite strong, right? But you've seen a very, very divergent trend of clear winners within sectors. So when you talk about auto ancillaries, there have been clear winners and losers. Within EMS, there's been clear winners, losers. If I look at FMCG also, that's been the case. How have you looked at this Q1 results? Is that a trend that you've also been picked up?
Actually, my sense is that there are more winners compared to losers in this quarter for sure. Also, I think we all had a lot of fear because we all were thinking that maybe because of the challenge in the quarter 4, which is sometime in the March month, we saw the full-fledged war in the Middle East. And we were all expecting that the RM inflation will start hitting at least the profitability of the companies, if not the demand destruction. But I think to surprise, most of the companies have not seen that kind of challenges. We've seen a very strong consumer demand. We've seen very strong top line growth. At the same time, I think the operating profitability has been fairly well maintained by the corporates. They've done a fantastic job as far as cost control measures or managing their supply chains are concerned. So I think that has been a very, very positive thing. Our sense is that India is back as far as the earnings growth trajectory is concerned. India Inc. is back as far as the earnings growth trajectory is concerned. And it's all coming more from the aggregate demand side. So whether you look at the rural India, whether you look at some parts of urban India, whether you look at automobile demands, whether you look at selectively FMCG company demands, whether you look at other consumer or even in financial services, across the board, we are seeing very, very good demand traction and also very, very strong management commentary across the board.
Correct. And Sachin, because of paucity of time, let me also interrupt because you mentioned financial services. What other spaces has interested you in this particular quarter?
So if you look at, within the pharmaceutical space also, we've seen some of the good results, particularly in the contract research and manufacturing space. We've seen automobiles, particularly the OE side, and also some of the auto component companies delivering very, very good results. I think another big surprise, if you see in this quarter, has been IT services. Because we saw some decent amount of sell-off in the last 2-3 months, but post the results, most of the IT company stock prices have actually been performing reasonably well, I would say. So somewhere that valuation bottom seems to have been done over there, and even the commentary now from those companies is relatively better for the outlook.
But Sachin, just as we wrap, a 30-second answer if I can, would you still be a buyer or are you already a buyer in that IT service camp? Which side are you sitting on?
Yeah, we continue to be allocating money to IT services as a part of our overall portfolio. In fact, I would say we are marginally overweight also at this point in time.
Sachin, we'll let you go on that note. Thanks so much for joining in and giving us your time today to NDTV Profit. Look forward to our next chat as well. But another company that reported decent set of numbers, TVS Supply Chain Services, the one that I'm talking about, delivered strong growth. You had a one-off in the last base year, basically in Q1 of FY26. They had a benefit from the InvIT side. Hence, if you remove that, the profitability number has also been strong, but revenue grew 29% with record new business wins as well. Let's welcome in our management now, Vikas Chadha. He's the Managing Director at TVS Supply Chain Solutions. Also, R. Vaidyanathan, the Global Chief Financial Officer at the company. Gentlemen, both of you, thanks so much for joining in today. Let me start off, Mr. Chadha, and firstly, congratulations on assuming the new role. About how the growth has been in this particular quarter. Very strong growth in terms of revenue. We've also seen that in your presentation, you mentioned some shipping routes as well as the cost have started to come off a little bit. But is that the case that you're seeing again? Because July has seen escalations. But how are you looking at the revenue growth number going forward for the year?
Thank you, first of all, for having us on this call. Yes, it was a spectacular start to the year, laying a very strong foundation in terms of meeting our commitment of mid-teens revenue growth. Revenue grew by 29%, PBT grew at 71%. I think the most heartening thing about this quarter's performance was that the growth was broad-based. We had growth in our supply chain business. We had growth in the freight business. India grew at a whooping 44%. And we also saw the rest of the world growing 20+%. So very broad-based growth across our segments, across our geographies, leading to good profitability numbers. So I would say a very, very satisfactory start to the year. In terms of your other question regarding the rates, etc., Look, in our freight business, we have the contracts that we have are structured in a way where we are able to pass on the increase in cost to our customer. So as such, that is reflected in our strong performance in Q1, and that is not going to change going forward. So we would continue to see good momentum on volumes, and also we will continue to see a margin being similar or better from where it is.
Also, so we've seen, the global forwarding solutions, the GFS business has actually seen a very sharp uptick in margins. Now, it's been something almost 30% of your business in terms of revenue. Is this margin rate sustainable, or would you need more evidence at this point of time? Because I'm sure there's been a lot of focus over the last few years on making this business EBITDA profitable in a more meaningful way. So is this sustainable margins what we've seen from 4% compared to 2% last year?
Yes, so I would say it is sustainable, and actually we can improve it further. And this is because of three reasons. The first is that we have been able to do a lot of productivity initiatives in terms of how we are procuring the freight and with how we are consolidating our vendor base, etc. A lot of good quality work has happened on that. Second, we have had a lot of new customers and new wins got added to our existing base, which gives us the operational leverage. And thirdly, we have also seen significant surge in volumes with our existing customers. So I would say that this is very sustainable. In fact, I would say by the end of the year, we should be reaching out to something like 4.55%. So very happy with the way GFS has started. The first couple of months of this quarter are also giving positive signals. So I would definitely, I'm pretty bullish about GFS doing very well this year.
And something to watch out for most certainly. Also in terms of your new business wins, it's crossed that 500 crore mark for the second consecutive quarter. Where have you seen that growth come from? Is it more newer clients? Because you mentioned some of those that have been a big win contributor. Is this leveraging the existing clients relationship that has come through? How much of that business of wins have been coming from there? And do you feel that now you are at a stage where this could be a sustainable 500 crore per quarter kind of a number can we expect?
Yes, so yes, you are absolutely right. From an average of around 200 where we were 3 or 4 quarters, we have had 2 consecutive quarters of 500 crores of new business. And this is again coming across all the different geographies. It's not that it's limited to a particular geography. And the second good thing is that we are focused on our existing customers and getting more business from them because our share of wallet is still less with them, and also new customers. If I have to give a broad and a very rough estimate, then 2/3 of this comes from new projects that we are doing with our existing customers, and maybe 1/3 comes from new customers. And new customers that we are adding in focus verticals where we believe that there is going to be a lot of growth going forward, such as renewables, utility. So those are the sectors where we are adding new clients as well.
The other part about your supply chain business, because that has been the other focal point, has been largely driving the revenue growth over the last 4 to 8 quarters. But within that, the North American region has seen a much bigger uptake in this quarter, up 28%. So would you mention that if this is led by the sharp growth that you see in volumes? Because I'm sure that there's also been a value growth aspect that has benefited you within that region. So how should we look at the growth that's coming in from the supply chain business?
Yeah, sure. So North America, last year we had signed a new contract with a very big customer, where the implementation was in phases. We had the first facility launched sometime in August, September last year. Then the second facility got launched at the end of the year. And recently the third facility went live. And this is the reason why we have seen an incremental. So one, the existing 2 facilities ramped up in terms of their volumes. And that typically happens in a project when we initially set up the facility. It takes 2-3 months for it to ramp up. So the first 2 facilities now are running at optimal load. And the third facility also came into play in this particular quarter. So hence an aggregation of all of those we have seen this incremental growth in the North America business.
Also, sir, just since you just joined into the business, your first quarter in terms of reporting results as well, what are some of the objectives that you have for the medium to longer term? Because the street looks at the performance. I'm sure that there's within the team also to change that fundamentally since you've listed. You've been around that 9,000 crore revenue mark for the last 2 to 3 years. I think that last year that changed to 11,000 odd crores. How should we look at this particular number when you look at this, when you look at the margin uptake? What is something that investors can expect going forward? Because it's definitely a big legacy brand that is associated with the supply chain business now. And is that the objective that you want to achieve much more? And if there's something that you can leave investors with?
Yeah, definitely. So I think for this year, as I earlier said, a mid-teen revenue growth and accompanied by a profitability growth that is much bigger, much higher, 2 times and even more in terms of the profitability growth. Going forward, I'm very, very confident of delivering double-digit revenue and a much better profitability growth over the next few years. So I think that is something that is what we are aiming at. Now, in coming to your first part, which you were alluding to, that what are the core strategies or what are we working on? So I think growth for us from existing customers and new business is our number one priority, and we are focused on it. And you can see that in the building of the pipeline and the new business, that we have also retaining our volumes and growing the volumes with our existing customers. There is a lot of investment which we have done on the tech side as well, including deploying robotics, automation, AI solutions with our customers, which are giving them a lot of value-added dashboards, etc. Recently, we deployed Oracle at our ERP at our India SCS business, which can integrate with customers and give them live visibility into the stocks, etc. So a lot of work on tech, and I think tech-enabled solutions is one of our moats, and that is something that I would call as a second priority. And I would say thirdly, in terms of strategic alignment and partnerships with different players in the value chain, ALA joint venture that we have announced for the defense and aerospace sector is one of those. Acquisition of Swamy and Sons to more focus on FMCG customers. And similarly, we are looking at more elements in the value chain where we believe partnership can bring more growth for us. And I think these are the 3 strategic pillars, and I'm very confident that we will see much better growth, and both on revenue as well as on profits going forward.
Well, Mr. Chadda as well as Mr. Vaidyanathan, we leave it at that. Thanks so much for joining in, giving us perspective about this quarter. Look forward to our next conversation and wish you the best.
Thank you. Thank you. Thank you very much.
Well, that was the management of TVS Supply Chain Solutions. But viewers, with that, out of time on this edition of the show. Thanks so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlot studio with me, Hiraldaja and Sharad Dubey, who's standing at the profit market pit with all the action. But Sharad, before I come to you with regards to what markets are doing, we should be addressing the AMFI data which has come in for the month of July. It is a very interesting number that I'm picking up so far. If you talk about July 2026, the industry has recorded a net inflow of 2.36 lakh crores versus a 52,950 odd crores, which was an outflow in the month of June. So the headline is a surprise because it is massive swings that we've seen in terms of the overall flows go. Now, probably the sharp reversal is driven by that normalization of debt fund flows that has happened after June's advanced tax related treasury outflows is what we saw. If you talk about the overall AUM as well, that has hit a new high. The mutual fund industry AUM rose to 85.85 lakh crores versus a 82.2 lakh crores in the month of June as well. In terms of equity flows, if I'm looking at the overall number, there is a moderation that we are seeing, but that number is also looking pretty strong. Your active equity, that has gone down slightly. Your large cap has seen a sharp deterioration. The number is a negative 1,322 crores versus an inflow of 2,067 odd crores. Mid cap has remained absolutely stable at around 6,100 odd crores as well. If you talk about small caps, that has seen a strong improvement. That number is coming at 7,768 odd crores versus 5,600 odd crores in the month of June. Flexi cap has also seen some bit of moderation. Likewise, if you talk about your sectoral and thematic, that has seen a mild moderation as well. Now, talking about the large cap funds, it seems there is some lose of, they have lost some kind of flavor, because large cap category has witnessed an outflow of close to 1,322 odd crores as compared to an inflow of almost 2,067 odd crores that did happen in the month of June. Now, this is clearly telling you that investors are probably preferring broader alpha opportunities in the mid-cap and the small-cap segment, because that's where you've seen a good amount of jump that has come in from the equity perspective. And there is that risk appetite also which has been increasing. Apart from that, if you look at the small-cap flows, that surged to 7,768 odd crores, and this is highest amongst the equity categories as well from what I'm seeing right now. And probably earnings growth in the broader markets is what it seems that the investors are convinced with. Mid caps do remain in the sweet spot because the flows have remained healthy at 6,192 odd crores versus the 6,090 odd crores. So there is consistency that is coming in terms of where mid caps are concerned, and the investors continue to be the mid caps as the best balance right now, probably between growth and risk. Alex, in fact, joining in as well. Alex, broad-based, okay, I'll toss over to Alex as well in terms of what he's making of these numbers. Over to you, Alex.
Into fixed income mutual fund schemes. That stands at about 1.87 lakh crore rupees. That is par for the course. What is more interesting, however, is the amount of money that has come through in equity mutual funds, and that has dipped. It has come in for active equity mutual funds at 24,697 crore rupees, and that compares with 28,973 crore rupees in the previous month. You also have to account for the fact that about 800 crore rupees in the month of July came through in the way of new fund offers. If I look at the flexi cap category, you've seen inflows of over 4,700 crore rupees. That compares with an inflow of over 5,200 crore rupees in the previous month. You have multi-cap that has gotten a sizable inflow. You have large and mid-cap that has gotten an inflow of about the same amount, 3,400 odd crore rupees. And interestingly, both mid-cap and small-cap actively managed funds have gotten substantial inflows on a net basis in the month of July. Mid-cap inflows stand at close to 6,200 crore rupees. Small-cap inflows stand at 7,800 crore rupees. And one more takeaway, beyond the fact that hybrid funds have gotten inflows of about 11,500 crore, that's par for the course. What I find interesting is that your other ETFs, which is primarily equity ETFs, have seen inflows on a net basis of over 9,500 crore rupees. What that tells me is that people are buying into the markets via ETFs. They're looking at the market scenario right now, and they're feeling a little more sanguine, but they're investing more when it comes to passive as compared to what they might have otherwise done in the active space. Is my thinking right? Let me ask Kumar, who is the Chief Executive Officer and Managing Director of Axis Mutual Fund, who's speaking to me on the show. Gopa, thanks so much for taking the time, and pleasure speaking with you. And we're going to speak about a lot of things with regard to B30 or below 30 cities and the flows in the mutual fund space. But your initial thoughts on the numbers as we see them. It's a little cautious, but it's still positive, isn't it?
Yeah, it's positive. Thanks, Alex. I think I've long time I'm coming to your show.
Yes.
Thank you for hosting me on this. I think when I look at the numbers, I just now looked at the numbers. I think compared to last month, yes, there is a bit of a difference between 29,000 crores versus 24,000 crores. But one point I would like to stress on this is that a lot of large cap money is now started flowing to mid and small. And that is the large change we have seen. If you look at the large cap category, you have seen that it is a negative net flow. But also you need to think about and saying that even the flexi cap, the flows have reduced compared to the previous year. More important also you need to think about is that multi-cap as a category is a large comeback. Couple of points is that if you look at your typical flexi cap, the average holding has become large cap is almost 65 to 70%. So most of the investors today now started preferring multi-cap because it gives you a better diversification. And it started playing out. And we've been very clear for last 2 quarters that multi-cap as a category will start playing out much better than the flexi cap.
Okay, so that's with regards to where the mutual fund data that has come in for the month of July. But let's quickly look at the watch list as well at this hour, because a lot of stocks which are buzzing in trade. You have Lumax Auto. Pull up that one. Core product sales has remained robust and that stock is up in trade 15%. You have, apart from that, you're talking about Aarti Pharma, second consecutive session where the gains have continued. Chennai Petroleum seeing gains of 10.5%. The stock has actually hit an all-time high. Sundaram Fasteners has been doing pretty well in trade. In fact, the outlook with regards to the second and the third quarter that the management had given last week post-earnings has remained strong. Gland Pharma again reacting to numbers along with Kolte Patil, Info Edge, all of these are reacting to Q1 numbers. Look at Info Edge, Aether Energy, Ola electric two-wheelers, as well as Triveni Turbine, Fractal, Amara Raja, LIC. All of these are the ones which are on our watch list right now. But before we head across to take the rapid fire, we just have the SIP inflow number that has come in right now. You're talking about 31,961 crores versus a 31,781 crores. A pretty stable number is what you're seeing on a month-on-month basis. So no major surprises when you talk about the SIP number, but the moderation or the outflow that has happened with regards to large caps is the key highlight. The uptick that we've seen with regards to where small caps goes and mid cap, that is telling you where the interest lies as well. And the AUM has hit a record high as well in the month of July. In fact, the outflow in the from the large cap space, I think, is the first time that we are seeing in almost 2 to 3 years. We'll try getting you that number correctly, and probably that's where the conviction is not very strong. But let me head across to Sharad to take the rapid fire with Saumil Mehta. Sharad, over to you.
Thanks a lot, Hiral, for that. Good afternoon, Saumil. We'll start our rapid fire round right now, and the first stock is Aarti Pharma Labs. Fundamentally, after a really long time, we have seen a turnaround, numbers coming in. How do you see this going across, especially with a good volume build-up happening?
Good afternoon to everyone. View is positive. A big range has broken out on the weekly, monthly charts, trading above all the averages. Fresh buying in the very short term is not suggested, but yes, hold on to it. Medium to long term definitely looks good.
Right, next stock, Info Edge, one of the top gainers also, you could say, in the FNO space, good buying happening. Do you think this will sustain, especially if you look at the charts on a weekly or a monthly basis? Seems like the volume buying is at play right now.
Absolutely, view positive. I think in the medium to long term it will sustain. In the very short term, definitely there might be a little bit of a cool off. View is positive. I think it will go up till at least 1430, probably above that 1480.
Is there a trade to be made for Amara Raja batteries? If you can just pull out the chart and see important levels to track.
Amara Raja battery view is absolutely positive, and I think in the very short term I would not suggest. It's a very sharp run up, but my targets on the upside would be 1050, 1070. So you can get a trade in the medium term as a positional trade. Keep a stop loss, very strict stop loss around 880, 890 levels.
Right, and another stock, Oil India. Let's get that also on the screen. A good buy happening here. And will this sustain this momentum, or do you think there's going to be a little bit of consolidation here?
Yeah, I don't, even in the very short term, I'm not too confident on this because it loses the, the strength on the higher end. The resistance is around 480 and 495. So these are two resistance. I'll wait for a breakout on the upside.
Right. Last stock is LIC. We had discussed this company extensively last week. Valuations the cheapest at its lifetime levels right now, and now we are seeing volume-based buying kicking up. So do you think on a long-term basis, say at least 8 months to 12 months, what looks on the chart? There's a start of a buying now?
I think it's the same. It has been consolidating between 370 and 450. It's a broad range for a very long time. I'll wait for a breakout. I won't go in right now. It's a very good level at this point of time. 380, 400 levels are very good for the stock. View is positive, but wait for a breakout above 420, 430 levels.
Okay, so breakout needs to be there for LIC between 420 to 430. Well, that's interesting, and that's the end of the rapid fire round. Over to you, Hiral.
Thank you so much for that. In fact, Lumax Auto, that's another stock that we're watching out for. Good momentum there. Puneet joins us with the key highlights. Puneet, what has really worked? Do you think something like this is going to be sustainable if you're talking about rest of FY27? Because auto ancillaries has been on a firm footing. But where valuations stack up, etc., how do you look at it?
Well, thank you for that. Very strong set of numbers from the company. The revenue is up 33% for the quarter, while the EBITDA is up almost 54%. It's been a sustainable performance, especially in the last 4 to 6 quarters for Lumax Auto. The EBITDA margin is also at 14% in a quarter where you've seen some raw material price volatility. Shows you the pricing power in their lighting products, and profits have also doubled to 87 crores versus 41 crores. Now, the bigger aspect also has been the fresh new line of capex that they've announced, 156 crores that will come in Chakan. Now, the two big customers for Lumax, that is Mahindra & Mahindra as well as Bajaj, both firing on all cylinders essentially at this point of time. Almost 30% of the revenue comes in from Mahindra & Mahindra for the company. Bajaj Auto also continues to have a very strong share in that number. And as the growth, especially in the EV side, for both those players continue, Lumax has been a big beneficiary. What this capex does is get it closer to its 2030 target of a strong 11,000 crores in terms of revenue that they're targeting as well. So they want to go to 19,000 crores also in terms of the timeline, but definitely a very strong set of numbers from the company.
Strong set of numbers coming in there. Thank you, Puneet, for that. Avinash Gurakshakar of joining in as well. Avinash, good afternoon and welcome to the show. Stock seeing some strong surge in today's session as well. Numbers have been very strong. Commentary also seeming strong. And for the sector as a whole, it seems it is in a sweet spot. Your view on a Lumax?
Good afternoon, Hiral. I think numbers have been much better than what the street expected. And I think in terms of margins, in terms of commentary, I think the management is pretty confident that this financial year we could see a strong volume growth from most of the OEMs. In fact, the company has also taken over a global kind of company. So, typically the market is expecting that this company is also going to drive revenue as well as profitability at the net level. So net, I think, despite the fact that the stock is up by almost 14-15%, my suggestion is any dip should be used to accumulate the stock, but from a time frame of say 12 to 15 months going forward.
Okay, so that's with regards to Lumax Auto. But moving on, the government has gone ahead and reduced incentives for electric two-way vehicles under the Prime Minister e-Drive scheme. My colleague Danish Anand joins us with more details. Danish, good afternoon. What would this actually mean? Because at a point in time where we are talking about how attractive EVs could become, how big a channel of revenue it is for OEMs, again, because incentives are going down, there's a potential it could hit demand. What are you picking up?
Well, the government has extended the subsidy under the PM e-Drive scheme for two-wheelers till the 31st of March 2028. The overall outlay of the PM e-Drive scheme continues to be 11,900 crore rupees, out of which 2,767 crore rupees have been earmarked especially for electric two-wheelers. And as far as the subsidy is concerned, well, the earlier rates of that, by that I mean rupees 2,500 per kilowatt hour is applicable on this. Besides this, there is a cap per individual by that I mean that an individual will be getting 5,000 subsidy maximum for buying an electric two-wheeler. And overall, if we see, this is yet another push from the central government side to promote electric two-wheelers in the country. In fact, a few weeks back, industry had also recommended and suggested to the government that they must not withdraw the subsidy so soon and they should extend it. But now we are seeing that after listening to all stakeholders, the government has decided that the overall subsidy on the PM e-Drive scheme for electric two-wheelers should be there for some more time. However, However, there's a catch to this, as all the claims for these subsidies have to be submitted by the 31st of December 2027. But although if we see in a positive news for electric two-wheeler players, the PM e-drive subsidy for electric two-wheelers has been extended till the 31st of March 2028.
Okay, so Ather, Ola, all of these are in focus as well. Let's pull up both the counters and see what the stocks are doing. Ola has come off the highest 1.5% up move there. Avinash, what do you make of the government reworking the EV incentive scheme?
I think, Hiral, this is going to be a big positive for the existing players like Ather as well as Ola. I think volume growth could get a good pickup, considering the fact that these incentives would actually facilitate volume growth in a much faster way. In fact, the EV share within two-wheelers is increasing rapidly. And I think looking at the fancy from customers plus the kind of, typically the cost savings which customers incur over the life of the vehicle, clearly both these companies should do well. I think Ather seems to be much well positioned. In Ola Electric, I think we need to see how the company actually combines volume growth with profitability, because even as of now, it's not profit making. And I think hopefully in the next couple of quarters, if it turns into a profitable business, then I think the market should definitely, look at re-rating the stock. But we'll have to wait for those numbers to come in before that.
For the numbers, but another number has actually come out yesterday's trading session. That's Gland Pharma. Even the brokerages have turned bullish, and the stock is also up. And to decode that, we are joined in by Varsha. Hi, Varsha. What's the key reason for this jump in Gland Pharma?
Overall Q1 numbers, I would say a very strong set of numbers when it comes to Gland Pharma. The revenue growth that you're seeing is, of course, led by CDMO recent launches and, of course, the growth in their base portfolio. Talking about their margins, which they did see growth over here also. If you see, gross margins were aided by favorable product mix, number one, and also a higher contribution from CDMO projects and operating leverage supported margins for the company. Talking about B2B business, contributes almost 50% to the overall revenue, grew almost 19% year on year. CDMO business was up 20% year on year. Cenexi has been fully integrated into broader CDMO platform, and an increasing contribution from CDMO supported margins. US business, if you see, grew 32% year on year, and they've actually changed their guidance towards upward trajectory. So earlier long-term outlook was around 15% CAGR, but now they're expecting almost 20% revenue growth in CAGR terms for the next 4 to 5 years. So that's a positive point. And near-term EBITDA margin is expected around 30%. Overall, GS has maintained sell, though they have hiked target price. The sell is on the back of higher valuation. And lastly, Jefferies, if you see, has upgraded to buy from hold. They are saying that the key challenges are largely behind, and they also see Cenexi break even, new contract wins, and expansion into complex products. So overall, all in all, good numbers. Brokerages are also bullish, so we are seeing the stock is up almost 9 to 10% in trade.
Right, but Varsha, you stay with us. We're going to discuss a little bit on the hospitals also. But Avinash, I want to get in with you. The story for Gland Pharma continues, especially the CDMO part. This is not just one quarter. We have seen a sustained momentum in the earnings coming in from this counter. How do you see this?
I think, Sharad, numbers have been much better than what the street expected, specifically on the CDMO business. And I think, the outlook and commentary also for this business in the coming quarters has been quite positive from the management side. So my sense is that, this was a stock which was disliked by the markets initially. I would not be surprised that, if the numbers are much better than street expectations, the stock could get re-rated even from these levels. So I think it's a good bet, from a 12 to 15 month horizon. Probably, some cooling off for the stock, and then I think one could accumulate it.
Okay, a 12 to 15 month bet, Gland Pharma. But speaking of the hospitals and that theme itself, we are back with Varsha. Varsha, a lot of changes are happening in the rules itself. Is it significant?
Well, Sharad, we all know that rising room rate is a concern for patients, and now Parliamentary has actually flagged healthcare affordability, and they've recommended curbs on private hospital charges. Now, this is good for, of course, patients, but bad for hospital stocks. They are aiming to make healthcare more affordable for patients. Now, what they're saying is, if you talk about a hospital room rent cap, so rent should be linked to nearby three-star hotel tariffs. Room charges should not exceed average rate of 3-star 5-star hotels in same locality, and the government should fix package rates for surgery. So this is just an recommendation. Committee says that the private hospital treatment is 5 to 10x costlier than government hospitals and raises concerns over rising healthcare costs. Key concerns raised were excessive billing practices, unnecessary diagnostic tests, rising cost of routine procedures, and the childbirth highlighted as an example of soaring treatment costs. Now, impact on hospital stocks, of course, negative. You have Apollo, Max, Yatharth, Fortis, all are actually sulking in trade, because if you see a rising or the potential cap on room rates will actually impact hospital revenue and also pressurize on margins. So overall, so this is just a recommendation, but yes, a negative news when it comes to all hospital stocks.
Thanks a lot, Varsha, for that. A little bit of hiccup in India's story for the hospitals, but Avinash, if you had to pick, would it be the mid-cap hospital names which are showing a better growth numbers like Yatharth, or a large-cap one like maybe Apollo or Manipal?
I think, Sharad, looking at the kind of growth momentum and the trajectory, Yatharth Hospitals and Park Medi, we have suggested these stocks to our clients. And I think, you could see stronger numbers in Yatharth. Yesterday, numbers came out 52% growth in top line, 42% growth in EBITDA, and a bottom line growth of almost 25%. So Yatharth could definitely be, accumulated in this current decline. My sense is, this headline news flow which is coming today as to some control on the room kind of prices is definitely a dampener. But I think, things will settle down, and it's not going to happen that it's going to be a regulated business. So I think it's going to be demand supply, which is finally going to determine the profitability of these hospital companies.
So that's with regards to hospitals, but thank you for that, Avinash. In fact, Shankesh Jewellers is set to launch its IPO on the 18th of August. 367 odd crores is what they're looking at as well. Let's listen into a slice of that conversation.
Just the first question, you largely operate in the B2B space. Wanted to understand how have you, basically kind of built the network over the last few years. I also want to understand basically because there's been a lot more third-party B2B companies now coming through in the industry. So what is the moat that about Sankesh that's going to drive the growth momentum forward?
Thank you, Punitji, for having me here, and good afternoon to all my viewers here. A brief snapshot about Sankesh Jewellers. Sankesh Jewellers is a company formed back there in 1992 by my father, and then me and Manoj joined the company, and we specialized in our 22 carat and 18 carat handcrafted gold jewelry. So talking about handcrafted gold jewelry, we specialize in our bridal wear and the casual wear category, which accommodates to almost 90% of the jewelry sold in all the showrooms, all the retail showrooms. So talking about Sankesh Jewellers, when we specialize, we have a lot of product categories. Our customer list, if you can see, we supply to a majority of the corporate world in the jewelry industry. So this is how Sankesh Jewellers has been present all through round.
My next question.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open. Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where
Hello and welcome. You're watching NDTV Profit. Now we're here to bring you a very special update from the US courts. The US courts, after a long ordeal of about 2 years, has finally dismissed charges against Gautam Adani, Sagar Adani and Vineet Jain. Now if you remember, the Department of Justice's charges include securities, wire fraud charges, bribery, and the case against Adani has been dismissed with prejudice. Now with prejudice is a very important part of this, because with prejudice legally means that these charges cannot be brought against these individuals again in any court, and they can proceed to do business without fear that these charges will be brought against. It legally means that the dismissal brings criminal fraud proceedings against these three executives to an absolute close. Now, how did this sort of come about? Let's understand 3 or 4 things here. First, the court accepted the Department of Justice's motion to dismiss fraud-related charges. This motion was made by the Department of Justice themselves, and it's been about 2 months where they've been communicating with the court back and forth in response to the court's requests for more information. They've been saying that they do not have enough evidence, that it's a US case, it's an India-related case, so on and so forth, as we've been substantiating. And finally, that request has been taken into account by the court, and the court has dismissed the charges. Now, having said that, the second important thing to understand that the court has found a substantial legal basis for dismissal of these fraud charges. The court has not simply rubber stamped the DOJ's request. The court, in fact, very strongly asked for additional evidence, reasons behind why these charges have been dropped, and how have finally come to the conclusion on its own satisfaction that these charges deserve to be dropped. Now, one important finding here is that the court is satisfied that Adani's 10 billion US investment plan was not a consideration for dismissal as was requested by the Department of Justice. Remember, there was a lot of news flying around this, and the judge also requested for special information about this dismissal and what is the connection with the investment plan. The judge itself notes that there is no connection between the investment plan and the request for dismissal. The court has also said that the anti-corruption statements, now this was the smoking gun, as one you could say, which absolved Adani in this case, is that the corruption statements made could not constitute actionable claims, and it was simply corporate puffery, which is used widely across different languages. It's generally anti-bribery clauses used across platforms, and it's used across documents, and that is not actionable in itself. They say that the alleged representations resemble generic statements of integrity and compliance and no specific actionable claim. Now, the court's ruling does not find criminal liability against the Adani executives, and important to note that Adani has consistently denied allegations and maintained its innocence in this case. The dismissal also follows the DOJ's independent review of the case. Now, to understand what this judgment means for the Adani Group, for Gautam Adani, Sagar Adani and Vineet Jain, we have with us Mr. Mahesh Jethmalani, Senior Advocate and former Member of Parliament of the Rajya Sabha. Mr. Jethmalani, thank you for joining us.
Thank you for having me.
Mr. Jethmalani, the first question I'd like to ask you is on the broad dismissal with prejudice here. Could you explain to our audience what this with prejudice means? And we understand that this brings these charges to an end completely, and these cannot be brought again at a later stage. Could you explain what a with prejudice dismissal means for this case?
Well, with prejudice, it means is that it's a complete clean sheet, right? It's something which can never be raked up by the DOJ or any Department of Justice, any department concerned with securities in the United States. It's completely a complete clean sheet with no qualifications whatsoever.
A complete clean sheet is a good way to look at it here. I think that's a very clear statement. The second thing I'd like to ask you about is that there's one mention, there's a substantive legal basis. So it's not just that the court looked at the DOJ's request and decided to close the case because they did not want to prosecute it. They did their own independent substantive legal analysis and came to a conclusion that these charges are to be dropped. Could you speak to us a little bit about the independent analysis that the court has done to come to this conclusion?
But look, the DOJ, which brought this matter, right, brought it on extremely far-fetched charges, right, and actually no evidence. Please understand, first of all, what the DOJ's case is. The DOJ's case, something which I criticized when it was brought up in 2024 November on the eve of Parliament. It was really a complete bogey to disrupt Parliament. And this has been a pattern in India, but that's a separate issue. So the DOJ's case was that in issuing bonds, right, American bondholders who issued bonds for the solar project, which the Adanis had bagged in India, right? They had not made disclosures about payments of money in India for securing those contracts, those solar project contracts. Now, the DOJ itself, right? First of all, never alleged that bribes were made for obtaining those contracts in India, right? Which should have been disclosed to the American bondholders. Their case was there was a conspiracy to bribe. There was a conspiracy to bribe. Now, conspiracy is not it's not an offense which is complete. That means there was some kind of an agreement to bribe. Now, there was no, even for that so-called alleged conspiracy to bribe people to get those solar projects for which bonds were issued in America to American investors, right? There was no evidence at all. There was absolutely no evidence provided by DOJ. And when Congress party was screaming from the rooftops, right, that this was a serious case, I said the Congress party does not know law. They haven't even asked what the evidence is for the alleged charge. First of all, there was no bribery charge. It was a conspiracy to bribe. And there was no evidence even of conspiracy. Today, the DOJ itself has said there was no prosecutable evidence for the alleged charges, right? That's how low the case was. In other words, that's how weak the case was. The DOJ's own admission. Now, the trial court wanted to be circumspect. It doesn't want to rubber stamp. First of all, a big hue and cry was made about this whole case, right? Particularly in India. I don't think anybody in America, right? This whole thing had its reverberation in India, where it was supposed to. That was the whole purpose. So the DOJ said, look, there was a hue and cry made. The trial judge said there was a hue and cry made. Let me please see what this is all about, right? I want to be satisfied, right? That first you make a hue and cry. The Adanis are big investors, right? I want to see whether there was any substance in this case itself, which you first brought and now retracted from. And secondly, has it been dismissed because, has the DOJ changed its stand because the Adanis invested 10 billion in America, right?
Yeah, so I just wanted to ask you about that separately, Mr. Jethmalani, about the 10 billion. If I may ask you very specifically, that was a very interesting finding by the court here. The court has specifically said that it is satisfied that Mr. Adani's announcement of 10 billion US investment commitment was a non-consideration and not a factor behind the DOJ's decision to seek dismissal. Now, with all the news that's been going about how these are linked, how important is this finding from a court's perspective and for the Adani Group itself?
I think it's a very, very look. Every step of this case, since the DOJ says there's no case. But before I come to the 10 billion, the trial court says there was no prosecutable evidence, right? Now, when the trial court itself says there's no prosecutable evidence, it's accepted the DOJ's case that we should never have started this case because there was never any evidence. A, B. Now, the third part is the 10 billion. As far as the 10 billion is concerned, the judge said, I want to make sure that this 10 billion which has been invested is not a quid pro quo for withdrawing the case by the DOJ. And after a fairly long gap between what he said he wanted to do and his final decision, which undoubtedly involves some investigation and inquiry into the 10 billion incentive, he's given a complete clear chit on this 10 billion. That is a completely independent decision to invest and has nothing to do with either the DOJ's withdrawal or Adani's decision to invest. So right now, as all the findings stand, right, both of the DOJ's their own case in court as well as the judge's case, Adani's had It has been a persecution for the Adanis, frankly. Somebody very powerful has been behind this, right? And it has been an unnecessary involvement. There was never a case ever, and I said this in 24, I repeat,
Understood.
that there was never a case at all, to ever see the light of day.
Yes, Mr. Jethmalani. Thank you. I have one last question for you specifically on a legal finding. Of course, the court here did not go into the merits of the case, did not examine the evidence on merits. This was not that stage of proceeding. But one of the things that it's found is that the statements made on anti-bribery, which were being used as misrepresentations, allegations of misrepresentations based on statements made in the anti-bribery policy, those have been found as inactionable and merely corporate puffery. Could you explain to our audience legally how these are inactionable and what is corporate puffery when you compare it to actionable statements that count as representations?
But what it says is there are many disclaimers made, right? In every document, any document where you're trying to raise money, right? You say a lot of things, right? Now, the DOJ, when it first started the case, right, started saying that these were representations made to the bondholders, right? Now, they said that these were representations, right? But they were not representations which actually induced bondholders to buy, right? These were disclaimers in the nature of disclaimers, which in every bond or rights issue or whatever public issue you're having, right? You always make these disclaimers, right? So they said this is corporate puffery. In other words, puffery is that these are safeguards. These are built-in legal safeguards in your prospectus documents.
Thank you so much, Mr. Jethmalani. We appreciate the clear and precise way in which you've explained these points to us on the legal side. Apart from the legal side, we also have a markets expert here with us, Mayuresh Joshi, Head of Research, MarketSmith India. Mayuresh, thank you for taking the time. Firstly, I'd like to just understand the initial reaction here. What does this case closure that's been going on for about 2 months now since the DOJ decided to withdraw charges, and finally now the court has accepted that and closed these charges against Gautam Adani, Sagar Adani and Vineet Jain. What does it mean for the Adani Group?
Very good afternoon. Two things. One, I think in terms of the entire overhang that this case presented on the Adani Group itself, the entire overhang probably gets done and dusted with probably no repercussions expected now out of this case. That is probably expected. The second angle to this now will obviously be that since this entire overhang and headwind is probably done and dusted with, do Adani Group stocks start reacting to numbers and earnings going forward? So I think the base case scenario has now got built in that the worst is probably over and everything will revert back to mean earnings reversion for the Adani Group.
It is probably over is a good way to put it. Understanding what this means for US sentiment around Adani investments, also one of the key findings from the court here was that the promise of investment as such had nothing to do with the consideration for dismissal of this suit, and the two are not linked at all. What does this mean for the US sentiment around Adani investment into the country as well as Adani's future plans in the US?
So two things, I think. One, I think the investments had absolutely no bearing in terms of how the ruling has probably come through. Is a huge positive sentiment. And even from a corporate governance perspective, I think it puts to rest any allays or fears that if any investments were probably done, and against that such a ruling has happened, I think that probably gets quashed to a large extent. The second element is how these investments are probably are expected to happen and in which areas and what periodicity of time. Obviously, I think that is for a latter date to probably assume and presume how these CAPEX-related investments will probably happen for the group itself. But with these statements coming through, which are very, very positive, I think it also removes the entire overhang, whether there was a kind of settlement that was probably done, and whether any fear still persists of any wrongdoing or regulatory overhangs or corporate governance issues, which would have still probably kept the entire group in hindsight to a large extent privy to whatever has probably happened. So I think it's a good thing that it's an absolute clean sheet that the Adani Group is probably got.
Thank you, Mahiresh, for that. We appreciate it. Yes, the corporate overhang here, very key point, has been lifted, and corporate governance issues which would have come in the way of the Adani investment in the US have also been lifted because the court has now closed this case, and the DOJ has cleared them of all charges. So the corporate overhang as well as the corporate issues that would have come in the way of any investment or M&A within the US also come to a close. With that, we come to the end of this special segment. Of course, a lot other news piled up for you on this session. I'm going to send this over to Shreyansi, who's going to take over from.
No, absolutely, and it was quite the interesting chat as well. When you talk about Mr. Jethmalani as well, he's very, very clearly said a couple of things, right? One, he's talked about the clean chit. Second, he's talked about the inactionable puffery as well, and he's made it very clear that some of the allegations, though broad-based, had no merit whatsoever, right?
And the clean chit, absolutely. That's what that's the key takeaway. No legal overhang and a complete clean chit for Adani.
Absolutely, and from the market standpoint as well, the worst is over in terms of just the perception as well, which was something that Mayuresh also talked about. Thank you so much, Nima, for joining us with that. But time now to take a very quick look at the markets. First things first, let's take a look at Nifty as well as Sensex though, because that's why you're seeing a little bit of weakness really set in when you talk about Nifty 50, about 130 odd points lower. And even when you talk about Sensex, about 350 plus points. Right now, over 430 points, in fact, down as we speak. Now, when you talk about the sectoral picture, that's actually very sharply tilted in the favor of red as well. So you do have media, India defense, FMCG, rural, metal, and financial services as well as realty sectors that are on the back foot. What's holding up resilient, and just a few pockets of resilience really in a market as tepid as this one. So you do have IT, pharma, oil and gas, as well as PSU Bank and energy. Those are the only pockets of resilience that you're seeing right now emerging in the markets. But let's also very quickly take a look at some of the stocks that are buzzing away in trade. And some of the ones are something like an Info Edge that's in focus on the back of its numbers. So it's actually the profit that's, fallen. But other than that, in terms of the numbers, there's been some pockets of growth that you've seen coming in. So other than that, also a bunch of counters really buzzing away in trade. But what's really catching my attention right now is, of course, oil prices. And oil is holding some of those gains that we've seen coming in as far as prices are concerned. So when you talk about Brent as well, let's also quickly pull up what oil prices are up to at the moment. But when you talk about crude, it's gained nearly 45% thus far this year as well. And right now on your screens, $89 a barrel for Brent, as well as WTI at close to $84 a barrel as well. And it's one level that we haven't really seen for so many weeks as well. In fact, Vandana Bharti, head of commodity research, SMC Group, joins us on the show right now. Thank you so much, Vandana, for waiting by. I just really wanted to try and understand what you think about oil prices, because it's quite the interesting number that you're looking at flashing on the screen. And this is one number that I've actually been asking you about in terms of when you're going to be seeing some of those levels as well next. So now, do you think that one, higher for longer oil prices are here and they've, made their mark felt? And two, what are the kind of price levels that you're looking at, both when it comes to Brent and WTI?
Some geographical dislocation is there, and yes, if we consider natural gas and crude oil prices, so for Asian economies, I think that the prices should be on higher side because we are in real crisis. And if we consider the NYMEX, $72, $70 is a very good support in this current scenario. But yes, we should expect a higher side in near terms, because the inventory of US, it is more than it is at 40 years down. So that is a real concern for even for the US economy. Asian economies, they are facing the real crisis of lower inventory. So yes, and the talk is going on, but the demand is there, inventory is going down, and some relief is coming from a dollar index which is moving down. But in total, prices should move towards the level of $84 to $86. So on higher side, I'm not expecting $120, $125, but yes, $85 to $88, it is in sight for NYMEX crude. If we consider the MCX crude, prices should reach the level of say 8,400, 8,500 kind of levels. So we are expecting an upside this week, but yes, by the same time, we are eyeing on the CPI data tomorrow.
No, absolutely, and that's something that we're definitely keeping an eye on. Vandana, I'm going to throw a googly your way in terms of prices as well. You said that $120 a barrel is not particularly what you're penciling in right now. But if there's an escalation of sorts, is that level really ruled out? And some of those higher levels, are you still sort of keeping them on the table in case there is an escalation?
In case of escalation, we can expect 9,500 range this time because some rerouting has happened in past, and because of that we can manage some kind of supply disruptions and all. But yes, $90 we can't deny here in case of escalations. And even economies like Saudi Arabia, they are not fully backing the US economy at present, because even their economy, it is hurting right now. So yes, the conservative approach of oil countries and Middle East towards the US, it is also eyeing for a peace deal and all in near futures. So for that reason, I'm expecting a $90 higher side in WTI. And yes, midterm election in US is approaching here, and higher crude prices will be very painful for Trump. So even he is expecting a lower side in crude oil prices, not much lower than $65.
Yes.
So yes, at $75,
got it.
We are very comfortable.
Absolutely, and thank you so much for really pointing that out as well. It's quite complex to say the least, but you know, when you talk about peace premium, one asset that has surprisingly had that peace premium is actually gold right now. It seems to be extending gains. Some of those levels like 4,400 that we were just seeking forecast for is something that you're seeing on the screen right now, Vandana. So just wanted to try and understand if you see this momentum as being sustainable.
Yeah, it can, because China central banks, they were already buying gold. Coins bars, they were having on the higher side. It was only the jewelry demand and ETF. So yes, in jewelry demand, we have seen decline in last quarter as well. But yes, this is the ETF which has triggered the rally, and the investment demand and big funds, they have come at the near the level of $4,000. So that was a very lucrative level for gold, because ultimately we know that it is a very strong commodity and very much in demand from central banks to our retailers. And the thing is that every time like gold crashes by more than 30% or 20%, it consolidates for 20-21 weeks if we refer the historical data. And after that, you see a surge in the prices. So lower level fresh buying, ETF buyers, they come back again.
Got it.
And it is fueling their rally. And we are expecting $4,800 in comics.
Yeah. No, absolutely. And very, very quickly before we let you go, right, Vandana, just in terms of fresh buys, would you be recommending them at the moment, or do you think that investors should be staying away from these high prices? And if they don't have an iron stomach, stay back on the side right now for fresh buys?
It is a high demand time. I would suggest that they should go for buy, because near-term prices will be on the higher side, more higher.
All right, then. So there you go. That's the view coming in clearly there. So Vandana, need to have a little bit of an iron stomach if you're buying at some of these elevated prices as well. But right now, fresh buys could be the strategy that you look at as well. Thank you so much for taking time out and joining us this afternoon. So there you go. That's the entire outlook coming in as far as gold and oil prices are concerned. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy. Sell. Hold. Hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global.
Lalita Jewelry Mart is all set to come up with its IPO of 1,700 crore. The IPO will open on August 17th and close on August 19th, with the price band set at 190 to 210 per share. And joining me to tell all about it is the CMD of the company, Kiran Kumar Jain. Thank you for joining us on NDTV Profit. Sir, I want to start by asking you that, there's a fresh issue of 1,200 crore and a certain amount, around 1,014.5 crore has been earmarked for opening up new stores of about 10 stores. What sort of revenue and growth do you expect from this, and when is the payback period expected?
हम जो 10 शोरूम खोलने वाले हैं वो साउथ में खोलने वाले हैं और खास करके तमिलनाडु में। और आपने हमारा पुराना हिस्ट्री देखा होगा तो क्या है कि हम कितना ग्रोथ करते आ रहे हैं, तो वही होने वाला है। और हम नया जगह कोई ट्राई नहीं कर रहे कि जहाँ पे हमको मार्केट के बारे में अच्छी तरह नॉलेज है और जो आइटम वहाँ पे बिकता है वही आइटम हम ट्राई कर रहे हैं। तो हमको नहीं लगता कि कोई ग्रोथ जो अभी हम कर रहे हैं पर शोरूम तो वही ग्रोथ होने वाली है। हम आप देखोगे तो हम पर स्टोर 400 करोड़ 430 करोड़ का रेवेन्यू करते हैं, तो वहाँ पे ही हम करेंगे और वहाँ पे ही कर रहे हैं।
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volumes. So first, let's see what's on the show today. Firstly, we'll be speaking with the management of Magica World. Now, the stock is up nearly 18% in the last couple of months and the company aspires to add at least one park per year till 2030. So what's the plan going forward and what's the outlook is something that we'll try to get the answer from the management today on the show. Apart from that, we'll be covering stocks like in Swift Lab. Now, the stock has gained as much as 19% in trade, its biggest intraday move since May 2026, and the stock is trading at its 21-year high. So what could be the potential reason behind this move is something that we'll try to decode with Varsha on the show today. Apart from that, there is Fusion Finance. The Q1 FY27 has marked a strong start to the earnings recovery of the company. Now, and multiple brokerages have also upgraded their rating on the counter. When it comes to Colte Patil, that stock has seen its biggest intraday gains since January 2023. The stock is trading at its 2-year intraday high and volumes continue to remain quite strong on this counter. And lastly, when it comes to Anthony Waste, the stock fell in the last 5 out of the 6 sessions. Biggest intraday fall is something that we have seen since March 2025, and the numbers and the Q1 numbers were weak on all fronts. So that is one of the reasons why the stock has been declining in trade. Now, if you look at the market, not a good day at all. 120 points down is the benchmark that we are seeing, largely led by the private banking names and Bharti Airtel. The Nifty is trying to hold on to around the 24,400 to 24,450 level, but it's the private banking names that have been pulling down. While on the flip side, we have the Nifty IT and the Nifty Pharma names which have been gaining in trade. Now, if you look at the Nifty Bank Index, that's also down around 250 odd points in trade. But when it comes to the small cap names, the Nifty Small Cap Index, at least that's trading higher by around 0.4% in trade. And when it comes to gainers, we have stocks like in Swift Lab, Colte Patil, Windlass Biotech, Godavari Biorefiners, Rolex Ring. Among the top gainers, the stocks are up anywhere between 11 to 15%. On the flip side, we have HLE Glasscoat, Fermenta Biotech, GTPL Hathway, Good Luck India down anywhere between 20 to 10 odd %. But as we spoke, as promised, let's get you the management of Imagica World at this moment. Firstly, we are joined by Jay Malpani, the Managing Director of Imagica World Entertainment. So firstly, to start off with, ARPU was broadly flat despite the strong footfalls that we have seen in the first quarter of FY27. What initiatives is the company taking to improve this ARPU going forward, or your main focus will remain towards footfall?
Thanks for having me on the show. So for this specific quarter, our focus has been to drive footfall, because last year, because of various different reasons, our footfall has been down, like monsoon and other things. But this year, for this specific quarter, our target was to drive footfall in all the locations, and we still feel there's a good amount of headway in the ARPU growth which we can achieve. So from quarter 3, quarter 4 onwards, we are going to drive up the ARPUs as well, now that the footfalls have picked up quite well. So this specific quarter was a strategic reason to do the same.
Now, if you look at Gujarat, that saw a strong footfall growth, but again a sharp decline in ARPU. How much of this is temporary, and when do you expect pricing to normalize here?
So from quarter 3 onwards, we should see normalization in terms of pricing, because in Gujarat, specifically the Surat market, it's a very price sensitive market as of now. So we were trying out different strategies in terms of pricing as well as footfall, and we feel we have struck a good balance now. So from quarter 3 onwards, you will see a uptick in ARPUs in all our parks going ahead.
Now, if you look at the EBITDA margins, in the first quarter, it came at around 50.7%, I believe, up around 170 basis points on a YOY basis. How much of this improvement is something that will stay with the company, and how much of this was owing to seasonality, given the fact that we had seen extended summer in the first quarter?
So on an annualized basis, we end up around between 43 to 44% kind of a margin is what we target on an annual basis, because we have quarter 2, which is more of an off season for us, and quarter 3 is again somewhere the numbers go back up. So on an annualized basis, this ranges between that region. So 50% is much higher for Q1, which is our target for Q1. But on an annualized basis, we end up at around 42 to 45% margin based on park to park.
Okay. And when you look at the fact that you're looking to open at least one outdoor park every year through 2030, what is the kind of capital expenditure that would be required for this? If you could just take us through that. Sure.
So our plan is to do one park every year. This year we have done acquisition of Mehsana Park, which is Shanku's water park in Gujarat. We have a pipeline which is built out for Delhi NCR, Hyderabad, Bangalore, Goa. So based on the size of land and the scale of park which we go for, that outlay would be ranging between 200 to 450 odd crores based on the size of the park and the scale of the park. So that's the kind of outlay which we are looking at right now based on the size and scale.
Okay. And what is the kind of incremental revenue and profitability that we can expect that could come in, say, over the next 3 to 5 years?
So based on how many parks we end up putting, based on the size and scale of the park, that would vary. But a big park can add up to 100 to 200 crores based on if you go in Delhi, NCR or Hyderabad. So that's the kind of numbers which we can look at from per park top line. And EBITDA margins are more or less in the similar range what we do for all our parks, between 40 to 45% as the ramp up happens. So that's what we expect from the bigger parks which we are planning on putting.
Now, when it comes to Hello Park, that appears to be one of the biggest change to the business model. What gives you the confidence in the economics of opening such 4 to 5 centers annually?
So Hello Park is something which is a conscious choice for us because we don't want to be dependent only on the outdoor entertainment. Indoor entertainment, we believe, is a big market and a big segment for us. And we kind of diversify in terms of us coming inside the city, smaller formats, as well as less capital capex for us as a company. And we feel there's a big potential for this. Hello Park is one of the world's largest players in terms of indoor entertainment for kids. And it's a phygital format, which we are planning on getting for India. And the partners we have in Dubai, they are very well, they have been doing this for many years. So that gives us the confidence that that model is going to work in India. And these models are very much inside the city, around 8 to 10,000 odd square feet kind of a model. And it being phygital helps because whenever the kids keep coming back to the store, there's a different theme which the kids will end up seeing. So it gives us a lot of, it gives kids a lot of joy when they come to the store again and the whole theme is new. So it's like visiting a new store every time. So we are very positive as a company on this project of ours.
Okay. And the margins from this is as well, if you could give us some understanding on that front, what is the kind of EBITDA margin that we could look at? Can that improve further?
So EBITDA margins from these, as they are inside a mall, so these are slightly on the lower side compared to an outdoor park. So the EBITDA margins which we are looking at are around between 22 to 25% margins based on which location and city center we go to. But that's the kind of margin profile which we are looking at for these centers.
Okay. And you have indicated your debt to EBITDA, that is the leverage ratio. The comfortable range is, I believe, around 2.5 to 3 times. And with 3.5 times the current, what is the current debt to EBITDA level? If you could just guide us through, and what is your plan? Do you plan to bring this down further going forward?
So at a steady state, we want to be at around 2.5x of debt to EBITDA. Currently, our debt is at around 260 odd crores, and our EBITDA annualized in 2024 was around 178 odd crores. Last year was a low year because of the whole monsoon bit. But we believe we would be in the range of 2 to 2.5 times of debt to EBITDA, and we won't be crossing that threshold in the near term.
Okay. And lastly, if you could just give us a breakup of how mature parks behave in terms of margins and ROC compared to, just a technical question I wanted to check with you, how mature park behaves in terms of margins and ROC compared to a new park, and how much time does it usually take for a new park to scale up?
So mature parks, in terms of the EBITDA margins, they are around the similar margins which we talk about, between 42 to 47 odd % based on the size and scale of which park we are talking about. The ramp up initially takes around between 1 to 2.5 years, based on how big the market is, how big the city and the park is. But that's the kind of ramp up which we look at. Minimum it takes 1.5 to 2 years for the park to completely ramp up, and after that, the growth, the number of footfalls we are looking for, we achieve those. So that's the kind of ramp up time which is needed in terms of the ramp up. And we are from day one, from the first year itself, we are EBITDA positive in terms of the park which we launch. But steady state EBITDA we achieve after the second year, which is of 40 to 45 odd %.
Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for Imagica World. But that was the management, quite confident of growth going forward. Let's also welcome in our fundamental guest, Mr. G. Chokhalingam, founder and MD of Economics Research. Sir, you heard the management. At the current valuations, would you recommend this counter to your clients?
I would give only hold right now. Yes, the company has reduced the debt substantially. It has incurred capex also in the last 3-4 years substantially. So it looks like long-term outlook is quite good, but in the short term, it may have some pressure because normally the June quarter is the best quarter for this kind of business. The subsequent 2 quarters, the profit would come down. So one can use those opportunities to accumulate the stock for the long term.
Okay. Well, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Moving on to our first small cap stock that we'll be covering, that's InSwift Lab. The stock was up as much as 19% in trade. Let's get in Varsha to understand what could be the potential reason behind this move when it comes to InSwift Lab.
Well, it's Q1 FY27 numbers broadly. If you see, the interesting point over here is the margin spike. Now, lower raw material cost helped the margins, and of course inventory movement also aided margins for the company. Talking about operating leverage, aided profits for the company. Now hence if you see, revenues were up almost 25%. You have EBITDA which is up 8.2 times, huge margin expansion at 17% versus 2.4% last year, so huge spike here, and net profit was up almost 3 times. Now they've also announced land sale, wherein board has approved sale of almost 10 acres land for rupees 18 odd crores, and the company found site unsuitable for finished dosage facility, and hence they've announced this sale. Talking about the strategic transformation, they sold their API and CRAMS business company and hence became net debt free, and they shift focus to the formulation business. So this is the trigger also when it comes to the transformation. Overall growth triggers, Wiretree's partnership wherein supplies begins in FY27. The expected FY27 revenue opportunity stand at around 200 to 220 odd crore when it comes to this agreement. CDMO business is expected to triple in next 4 years. They're targeting 550 to 600 crore from rupees 180 crore when it comes to CDMO business. So a lot of growth triggers working for the company, but if you see the 20% upside that we are seeing today is of course on the back of Q1 numbers, especially the margin uptick that we are seeing.
Right. Mr. Gokaldas, any view on this counter InSwift Lab? Quite a big move that we are seeing in trade today.
Yeah, this performance is good, June. I mean, quite surprising. But the only concern is that its operating profit, fluctuates extremely wide over the quarters or over the years. That is the only area of concern. Otherwise, in terms of enterprise value to pharmaceutical sales, also it is only around 2.8. So there is some comfort. But at this price to buy, it would be quite difficult for me to recommend. At best, one can hold the stock.
Okay. Moving on to Fusion Finance, quite a stellar set of numbers marking in the very first quarter of FY27. What has led to this and what are brokerages saying? Let's get in Shivam with more details on the same.
Yes, the stock is witnessing a significant upside, and that is due to the strong Q1 results. In fact, few of the brokerages have also upgraded the ratings, which we'll talk about later. First of all, if we talk about the stock performance, the stock has seen an upside of around 40% in last 1 year, and in today's volume also, we have seen a significant up move of around 12 times. Coming to the Q1 results, there has been a turnaround. This has been a turnaround quarter in terms of profitability on YY basis, as the profit after tax growth was aided by lower credit cost and improving operating performance too. Also, in terms of segmental performance, the MSME segment has contributed a lot, and that has been a key growth driver in this quarter. On operating performance profit side, that was supported by the better cost efficiency, and margins has also improved by around 49 basis point on quarter to 11.9 odd percent. In terms of credit cost, that has declined for 7th consecutive quarter, and that has also aided in better asset quality. Talking about the marginal cost of borrowing, that has declined around 246 basis point, which has also aided the improvement in margins, and cost to income ratio has also improved to around 67% on YY basis. Talking about the outlook, the company aims to achieve around 10,000 crores in AUM by FY27 and has guided for around 20 to 25% medium term AUM growth. On the disbursement fronts, that company targets around 15% initially, which will be rising to around 20% over the time period, and expects NIM to expand going forward and the credit cost also to remain benign. On the brokerage upgrades front, CLSA has upgraded the rating to accumulate and has raised the target price to around rupees 260, and GM Financial has also upgraded the rating to buy with a target price of rupees 240. So all of these factors have contributed to the positive sentiment of the stock, and that's why seeing upside.
Right. Mr. Gokaldas, how are you looking at this counter post the Q1 numbers and post today's move? Is it still in the buy zone?
First to positives, net NPA is very low. It's reportedly around 0.4%, quite good. The June result also quite decent. In terms of valuation also, it is trading at around 1.2 times price to book value. So therefore, I would give hold recommendation, but if it rises another 10%, one can sell for a few reasons. If you decompose Q1 results, if this company has made a PBT of around 62 crore, out of that 20 crore is in the nature of a one-time gain. So this kind of superior performance may not continue. And secondly, the competition in this kind of financial service industry has grown manifold. So it's going to be very, very difficult for all these players to maintain a strong growth momentum. So considering all that, it's a hold. In case it rises another 10%, one should book profits.
Right. Moving on to our next stock, that's Colte Patil. After reporting its Q1 numbers, the stock has been gaining in trade. It's up over 15%. Let's get in part to understand what stood out for the company in the first quarter of FY27.
Absolutely incredible set of numbers have been posted by Colte Patil developers, and this is the reason why the stock is gaining so much big in trade today. It has touched the highest level since May 2024 and has seen the biggest single day gain since January 2023 as well. If we talk about the key highlights, then the total income swung by over 11 times. This was mainly driven by 1.27 million square feet project completions that Colte Patil achieved in Pune and Mumbai as well. Also, the higher contribution from their Life Republic project aided the margins, while realizations also saw a growth of 29% year-on-year due to the higher mix of Mumbai projects and price hikes that were taken during the quarter as well. Collections also saw a growth of 30% year-on-year to reach 715 crores, which reflects a stronger execution that was achieved during the quarter. Also, they have signed in 6 Mumbai redevelopment projects with a gross development value of over 6,000 crores. Now, if we have a look at the numbers, then revenue came in at 920 crores versus just 82 crores year-on-year. EBITDA was reported at 190 crores versus a loss of 26 crores, and similarly PAT also came in at 146 crores versus a loss of 17 crores year-on-year. Now, lastly, talking about the outlook and guidance as well, they have 6 new MMR projects that will be launching in the next 6 to 12 months. The focus of the company remains on larger ticket and value accretive projects, and also portfolio premiumization and deeper presence in cities like Pune, Mumbai and Bengaluru will remain a key priority for Colte Patil going forward.
Right, Mr. Chokhalingam, what's your view when it comes to Colte Patil here?
A fabulous performance, no doubt. But as your colleague also mentioned, it is partly on account of completion of certain projects. The very interesting data point is that, in the last 3 years, its assets have gone up, including the inventory of realty assets, by about 76%. But this quarter, there is a total income jumped by almost tenfold. So it is mainly because of completion of the project, and this kind of performance cannot continue. Otherwise, yes, it's a great company, quality company, Blackstone backing is there. So, but those who are holding and making a substantial profit can use today's rise to exit, and post that after December results or March results, when the stock corrects, one can accumulate. That would be a good tactical research strategy from my view.
Right, sir. Well, thank you, sir. Thank you for joining us and giving us your perspectives on the stocks that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzer. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins.
Hello and welcome back to NDTV Profit. This is Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. Before we get to those queries though, and you can start sending in those queries, we'll flash the number on the top of your screen very shortly. Let's focus on a company that came out with its IPO very recently. NAC Packaging is the one that I'm talking about. They have reported Q1 results, and just to get some more perspective about them, let's welcome in Alpesh Tulsibhai Patel. Joining in now is the chairman and managing director of the company. Mr. Patel, very good afternoon to you, sir. Thanks so much for joining in. Firstly, many congratulations for the IPO, your first results post-listing, and it's a strong performance. Give us some perspective of what particular segments drove the growth in this particular quarter. And I have a question on margins, but do let us know of which segments led the growth and how much was it led by the key domestic factors that we continue to monitor.
Thank you, sir. Thanks for giving us this opportunity to join with you. Sir, first of all, I thanks to all my investors and all the members, family, like company members and everyone to trust on NAC Packaging, and our journey, new beginning, is started after 8th of June. July. Sir, company right now have a last quarter have a very good performance because of the very good domestic demand as well as the export demand. Company have already 55% export demand in already 55% sales into the export area. Still, there is some crude issue, polymer issue, but company face very good relationship with our current suppliers, refineries, and we have very good relation with our customers. So for that, we get our result is always in the same way. And the growth part is a majorly sir local demand like animal food, pet food, dog food industries, even fertilizer and seeds industries. So they are already growing stage as well as we have a very good clientele. So for that, we are company have a very good presence on all that areas. On basis on that, like today we have 2,000 customers and 13,400 SKUs and 74 countries we are catering. So we have very good footprint in all over them.
Right. And Mr. Patel, got your point. So you mentioned that animal products, fertilizers, those were some of the key segments that did well. I do want to ask you about the margin side because we've seen, as you mentioned, increase in prices of polymers, but your margins have actually expanded by almost 150 to 200 basis points. So were you able to pass on all the increased costs within this quarter itself? Is some of that left, and what led to the margin growth?
Sir, for the margin, my EBITDA is last year first quarter 38 crore, this year 59 crore. So sir, there is a 2-3 reason. Is we have a product mix like our one more the product is a pinch bottom bags. We just installed 2 machineries into the last quarter as well as we have a very good solar facility installed into 11 megawatt before two quarter back. So compared to last year first quarter to this quarter, we have a very good like solar energy we are saving on that area. So for that, we have a good cost cutting as well as product mix. The both are the more effect onto this current quarter profit as well as the same will continue for the further as well. And export as well. Export, we have very good presence in export 74 countries. So that is a good part for the company.
Got it. Also, Mr. Patel, just one key question because your growth in this quarter, almost 40% in terms of revenue, has been very strong. I just want to ask you, what is your outlook for the year? You ended last year at almost 800 crores in terms of revenue, but the margin profile was 18%. So basically 2 key questions. Do you expect that this year we can clock in the 1,000 crore revenue mark? Is that something on the cards for you? And how should we look at margins? Is 20-21% the new range for you?
Sir, see, exact number I cannot committed anything, but yes, definitely company worked very hard and almost we have targeted like a nearby the things and growth journey. We always focus on our product mix and export and even communications as well as growth journey. So company there is no problem for achieving all the numbers. But yes, the polymers industries and crude industries have a little bit problem for all over the globe. But the quarter one we same problem. After that we achieve our number. So further we are also more confident about this all the way. Even our Mexico plant is already running. Even our quarter one in witness for the further all the 3 quarters. So almost we are trying our best to achieve those you suggest number.
Right.
But definitely, yes, we are on that growth path.
Right. So, no, because, and the point that you make, Mr. Patel, is well understood that it's difficult to guide at this point. But can we at least expect, because, you've done 40% in this quarter itself. So, at least for the year, we have some volatility. At least a mid to high teen kind of range. Is that the minimum sustainable growth that we can expect, or above in the 20s also could be something to watch?
Yes, sir, definitely. Definitely, sir. Company, compared to last year, this year we have very good positioning. Even just one more before, after IPO, we added one more rented plant to the company. And also last year we are selling like 36,400 and reaching our capacity, installed capacity is 48,000. So we are adding our capacity as well. So that growth is also coming from this current year, sir.
Got it. Got it. Well, Mr. Patel, we leave it at that. Thanks so much for joining in, giving us your perspective about the results. We wish you the best. Look forward to our next conversation, sir.
Thank you, sir. Thanks for your great opportunity, sir.
Thank you. Thank you so much, sir. Thank you for joining in. Well, NAC Packaging, their decent results, but let me just quickly address, the flash on the bottom of your screen as well. The Fitch ratings have actually reaffirmed India's sovereign rating to BBB minus. The outlook continues to be stable as well. That's the other key aspect come through. They are forecasting the FY27 GDP growth rate at 6.4%. And the rating reflects the robust growth outlook. So just wanted to mark off the key ratings from Fitch at this point of time, and we'll of course keep getting you more key highlights that they've put in their report as well as what they are expecting in this year to go. But let's now start taking your stock related queries as well, and let me welcome in our guest Kunal Shah. He's the AVP Alternate Research at Mirae Asset Sharekhan, and Radharaman Agarwal, Managing Director and CEO of Swom Advisors, now joining in. Thanks so much, gentlemen, to both of you. Radharaman, let me just ask the first question. I don't know if you heard the previous conversation with NAC Packaging, a very strong growth that has come through. Margins are sustained. Any quick view that you have? I know it's a recent listing, but anything that you track either in the results or the company?
I think company is moving in the right track. So the growth momentum is intact, and I think the second half should also be good. So again, it's a new listing, so we need to maybe get more data and things out of it. But at the same time, I think momentum seems moving ahead.
Well, let's now take the next question. This one's coming in on Gujarat Energy, which was of course Gujarat Gas earlier. Anil Kulkarni from Mumbai, holding shares at 279, wants to know if he should continue to hold or sell this counter. Kunal, very good afternoon to you. He's holding a massive 16,000 shares. Would you recommend him to book some profit or continue to hold?
Good afternoon. Good afternoon to everyone. See, I think overall what we have seen in the gas space, whether it's an IGL, MGL, there has been correction due to the geopolitical tensions, what we have seen. But overall, I think we might see some pullback coming into this counter 273, 274. It is where it is trading. So I'll recommend him to continue to hold with a stop loss of 265 on the downside, and can go and extend towards 284, 285 on the upside.
Got it. Also, Kunal, on Chennai Petro as well, because our viewer is holding shares at 932, and this is Astha who's joining in for a stock related query. Stock just been on a tear over the last couple of sessions. Should he continue to hold Chennai Petro, or should he ride the wave? What's your opinion? Would you recommend him to book some profits? What's your call?
I think continue to hold whatever we have seen on the long-term charts. Whenever the stock has been touching the 20 EMA, it has been bouncing very sharply, and that is where your bullish stock continue to gain momentum. So I think this will be a kind of a bound dip stocks. Whatever dip gets, that has to be accumulated. Positionally, I can see the stock heading towards the mark of at least 1600 on the upside.
1600 on the upside. Got it. Well, the next question coming through, and this one's on SKF, the industrial business, of course. Dilip, who's from Kolkata, holding shares at 2745, wants to know and actually add more of this particular counter. If it's a good time to do that, what would you recommend here, Radharaman? Since the delisting, of course, not too many quarters that have gone by, but do you have a preference between either of those entities, and for industrial especially, is it a good time to add?
I think he can add in the industrial segment right now. I think it's a good space to get into, and given the structures, it'll be a good position to take maybe additional positions here.
And how are you looking at the valuations for this? It's not too much of a worry, and do you have a preference in either of those companies, Radharaman?
Industrial looks better in terms of what we'll look at, and the preference remains industrial to that extent.
Next question coming through, and viewers, you can also call us on the landline number that is flashing on the top of your screen. And Kiran, who is dialing in from Hyderabad, has exactly done that. Kiran, very good afternoon to you. Welcome back to the show. What's your query? Hi, Kiran. Hello. Can you hear me?
Yeah, Puneet, actually, I have sent a query regarding ITC.
Okay.
With 405 numbers of shares and 288 is the price. So can you tell me, what is the next coming days or month?
So this is a short-term bet, Kiran. Is that a correct assumption?
Yeah, actually, I took for short-term only.
Okay, for short-term only. Got it. Kunal, let me come back to you then on ITC. How are you looking at the counter?
I think overall ITC has been trading in a downtrend. Wherever it touches the averages of 20 and 40, it has been coming down. Overall sideways momentum for him, my advice would be to keep a strict stop loss of 275 on a closing basis. If that is triggered, then one can exit the longs. On the higher end, I'll be waiting for the stock to break out about 290, which is a strong resistance zone. Once that is taken out, then probably one can go aggressively long and look for targets of at least 310 on the upside.
Also, Kunal, another query that's coming your way is on Suzlon Energy. Our viewer, M. Ahmad, who's from Delhi, holding at 45. He's holding almost 1,000 shares. Wants to know if he should still continue to hold for the next 6 months to a year. And would you recommend that?
See, already Suzlon has given us a breakdown. The support of 51 has been broken on the downside, and there has been follow-up selling which has come into the stock. So till the time that 51 level is not taken out decisively on the upside with volumes, the short-term view remains negative. If the recent low what it had made of 45.93, that is breach on the downside, you can expect further selling pressure towards the gap area of 43 on the downside.
Got it. Let's go across to Mysuru now. Ramesh, dialing in for a stock-related query. Ramesh, good afternoon. What's your query?
Hi, sir.
Hi, Ramesh. Go ahead.
Sir, KPI Green Energy shares quantity 1,500, average price 370, current level profit loss in seller. What's the please technical advice?
Okay, you want technical advice. Got it. I think, for this particular counter, Kunal, we also had the results come through, and I think that's leading to the downtick today. But on the charts, what do you recommend?
I think overall 380 was a very crucial support zone for the stock, and that has been breached in today's trading session post the results. So again, on the long-term charts, if I look at the support on the next support on the downside is in the range of 340, 330 zone, which is where it is currently trading. And if this is also breached on a closing basis, you can expect further correction into the stock. So I think any pullback, whatever you get into the stock, utilize that as an exit opportunity.
Got it. Got your view. The next question coming through, and this one's on Vikran Engineering. Our viewer is holding almost 4,000 shares. He's not mentioned. He's bought it at almost 90 rupees per share actually, Kunal, and continues to be in the loss right now. I know not too much historical evidence for this counter, Kunal, but should he still continue to hold?
Yeah, I think overall the larger term trend is still weak for me. You might get a pullback right now since there has been a sharp correction. Utilize that pullback for an exit opportunity. Overall, I can see the stock again coming back and going towards the mark of 60.
Got it. Let's go across to Gurugram now. Nishant has a stock query for us. Nishant, very good afternoon. What's your query?
Good afternoon all. I want to know about Silchar Technologies. So I bought 25 shares at 4161.
Okay.
And I want to know whether I can invest more on this for a 6 months to 1 year timeline.
Got it. Then let me go back to Kunal. Then Kunal, a lot of queries for you today, but on Silchar Tech, it's a smaller name. We don't discuss it too often, but what would your advice be for Nishant?
I think if you look at the charts over here, the correction what we had got from 5,000 towards the mark of 3750, we have recovered smartly, started to make higher low on the chart perspective, and now the immediate hurdle for the stock is at 4753. So my advice to him would be to continue holding, because if that resistance is broken out, which is a major resistance for the stock can see a good rally on the upside towards 5,000, 5,200. So overall the setup is starting to get built up. You might have volatility, but overall the setup is bullish. I am expecting it to break out on the upside and go towards the mark of 5,000.
Got it. Well, hopefully Nishant, that answers your question. But viewers, now let's start the rapid fire round. Kunal as well as Radharaman, really keep your answers as short as possible. The next first question actually in the rapid fire rounds coming from Subhas from West Bengal. He's holding on to Jamna Auto at 136, Radharaman. I think the results are very disappointing. The street also saw that over the last couple of days. But should he still continue to hold this counter?
He should book the losses. Yeah.
He should book the losses. Got it. Next one's on Sansera Engineering. Sai actually from Hyderabad wants to enter this counter now. I've seen a massive run up, Kunal. Would you still advise buying right now?
Not fresh buying. If he's already holding, book 50% of the profit.
50% of profit. Got it. Next one that's coming through, it's from Bindu from Hyderabad and wants to enter Vedanta Oil and Gas Limited. Radharaman, would you recommend that?
Yes, you can enter into that.
Tata Tech bought at 600 rupees by George from Cochin. He's holding 200 shares here, Radharaman. I think one that the results were largely decent, but I think post quarter for a massive run up there. Should he still probably ride the wave? What would you recommend here?
I think he should hold on. He should still keep the stock.
Next one coming through, and this one's on Anthem Biosciences. A viewer, Shiv Kumar, bought it at the IPO price. He doesn't need the money right now, Radharaman, is what he's saying, and asking if he should still continue to hold.
I think he should continue to the hold. Yeah.
Between Alchem Labs and Ajanta Pharma, either of those that you like, Kunal, for the short to medium term?
See, I think overall, if I look at both the charts, Ajanta Pharma has already seen a run up, and Alchem Lab again has not been able to sustain at higher levels. So my preference for him would be if Ajanta Pharma comes down, that could be a good buying opportunity, not at these levels.
Also, Kunal, on LIC as well, because Deepak from Kerala actually is holding shares at 393. He's mentioning it's a short-term view, but would you firstly trade into LIC and what would be your targets, if any?
So I think, yeah, definitely. I think this support now becomes very crucial of 380. Till the time that is not breached, my view is bullish. It's trading below the short-term averages. I'm expecting it to move higher towards 430, 450 on the high.
Lumax Auto is the other one. Rajesh from Hyderabad wants to know if that particular counter is a good one with a good potential. I think stocks up 17% today on the back of results, Radharaman. Would you still enter into this counter and venture out right now?
Not enter in the counter, but if you have, then you hold on.
Okay.
All
right, got it. All Cargo is the next one. Our viewer is holding almost 17,000 shares, bought at 15 rupees. It's currently trading, below that level. Radharaman, what would be your advice now? Because he's holding a massive quantity here already of this counter. Should he upsize, downsize? What would be your opinion?
I think you should hold on the current position, not add anything on this price option.
Okay. Next one's on Manipal Hospital. Captain Ranjan has bought this shares almost 630 rupees and he can hold for the next 2 years. It's given good gains here, rather a month post listing. Should he ride the wave?
He should definitely ride the wave for a medium term perspective.
Angel One bought at 306 odd. Our viewer wants to know the 6 month to 1 year view on his shares. He's holding 150 shares. Kunal, what should he do?
Yeah, I think continue to hold a stock. For me, the support is around 280. If that is breached on the downside, then exit along.
Murli Ram is holding on to Dr. Reddy's, but at 1309, he's mentioning that it's struggling, and we've seen that in the results too, Radharaman. His question being if he should still continue to hold for a 12 to 18 month window or partially move out and buy some other pharma name.
I think he can hold on for a 12 to 18 months window.
Okay. And what would be some of those targets once it comes back to his buying price, or should he buy more right now?
He can add in terms of the current levels.
Got it. Well, the last query for today, this one's on Exide Industries. Our viewers bought shares at 433. He wants to know a short-term view. Kunal, we've also seen a massive run-up on Amara Raja today. So either of those counters in the battery space you like?
Yeah, I think overall the setup is good for Exide. I'll say if he's holding book 50%, you will get again the opportunity on the downside. Again, at those levels, probably we can go towards 520 on the up.
Got it. Well, that was the last question of the rapid fire as well as this edition of Ask Profit. Kunal as well as Radharaman, thanks so much for helping us solve 34 queries in this edition. With that, our grand total is 94 queries, including the morning and the afternoon edition. Appreciate your inputs, but viewers, out of time, thanks so much for watching. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold, hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
They say morning.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. We're coming to you live from the NDTV Profit Suzlon studio. And while the excitement may not be there for the benchmark Nifty 50, which is down about 0.5% last I checked, and it's not doing too much. It's been range bound. There you go. It's 0.5%, and it's within that very, very narrow range almost through the entire session so far.
You know, my concern
is in individual stocks.
Yes, but my concern over here is that we're below that 24,500 mark also, right?
Yeah.
So that is the concerning area here. And as Alex is pointing out towards individual stocks, pull up a Siemens and post that. We'll talk about Finolex as well, which is identified right now. You're seeing that mild surge that is coming in here, but that is on the back of numbers which have come in pretty much in line with what the street was estimating. If you see in terms of the net profit number, 2,143 crores versus a 423.
There's a one-off here.
There is a one-off, and hence that number is looking higher. Revenues have seen an uptick of around 14 to 15%. This is also what the street was estimating. Margins, it's a mild beat there. Now, this is what the one-off is as well. The profit from discontinued operations this time has come in at around 1,800 odd crores versus a 1 crore number, and this is what is boosting that profitability this time around. If you exclude for this as well, it seems that the numbers are pretty much in line with what the street was estimating.
And apparently on the margins front,
9.1 mild miss over there versus a 12.6, but it was expected to be lower as well. Your EBITDA is down around 16 to 17%. If you see the stock price, just get the intraday chart as well. At the face of it, the numbers look very good, except the margin picture, and that's the reason why you saw that spike. And now, once the street has digested why that number looks like that, the stock has cooled off and has normalized as well.
So speaking of earnings beyond this as well, it's a significantly smaller company, but Finolex Cables, and in line with something that we've seen in the space, the stock is climbing to the high point of the day.
The reaction is not small, Alex.
It's not at all small. Over 8% and climbing right now. Some of those key numbers that you should watch out for, significant improvement in margins. Now, the thing is, quite a few of these manufacturing companies have actually had a tailwind because they've had certain inventories, and I'm not saying that's the case here. It's likely the case. We'll have to look at the internals and find that out. But the revenue uptick of 44%, that should be because your price per product has actually gone up, and your raw material prices, the profit is up as much as 53%. So,
you know, I'm interested, why the margins are higher as well. Now, in spite of metal prices being on a tear, still they've been able to maintain margins, which is phenomenal.
I would like to find out whether there's an element of inventory gains coming into the play here, because for a lot of companies that have a substantial supply chain that has led into this first quarter, right? You would have had the benefit of lower raw material costs.
And they are beneficiaries, if I'm not mistaken, of the data center boom as well to some extent, right? So there is that potential coming in there, and there's no stopping 10.5% up move coming in there.
You've actually seen quite a few wires and cables companies post reasonably good numbers in the quarter gone by, right? So we'll have to look at this on a holistic basis. But let's go back to the benchmark Nifty 50. And if you saw yesterday's trade as well, for a large part, you actually saw a little bit of fluctuation around that 11 o'clock time. And then after that, it was a chart exactly like this, a very, very narrow range for the benchmark Nifty 50. Take a look at the heat map for the Nifty 50. And if we started the morning with a roughly even split between the advances and declines, that has actually come off quite substantially. So there's a large amount of red on the screen. I'm going to talk about the winners. You have Dr. Reddy's Laboratories, Eternal and Titan, TCS as well doing okay, but just about 0.6%, Infi as well, and Tech Mahindra. So it's the IT pack, but the IT pack as a whole, Hiral, has also come off the high point of the day.
Absolutely, but look at the losers. Metals, cement. So you have a Ultratech, you have a JSW Steel, you have a Grasim. all of these guys are seeing profit booking, and this is in reference to the MDRD Act, if I'm not mistaken, that we were talking about. The bill was tabled. Yes, the bill was tabled. It's not yet passed yet, and that's the reason why, I mean, these companies could have been beneficiaries, but for some reason, I think because now that it is anticipated, sell on news is the kind of reaction that you're seeing there. Hospitals is down. Apollo Hospitals 1.5%, and this is again on the curb in terms of room rates in hospitals goes, and that could be negative in terms of margins of the hospital companies go, but yes, positive from consumption, and we will be having a conversation around that as well with Yatharth Hospitality. But Indigo again on crude is down. Bharti Airtel, SBI Life, L&T, a pretty mixed bag is what you're seeing in terms of sectors.
And on the points contributors, there will likely be Ultratech, but I wouldn't be surprised if it's your heavyweight private sector banks as well as Reliance Industries. It doesn't make it to the list, but it's your heavyweight private sector banks, ICICI Bank in particular, Bharti and L&T all losing ground. On this side, you have Dr. Reddy's Laboratories, despite being the highest gainer.
The contribution is still less.
Contribution is not as high.
Let's look at the broader markets, and then we look at the sectoral heat map as well in terms of sectors, because you had IT, which was ruling out. Mid cap is again pretty stable. I mean, 0.2% lower, no major downtick, but this is where the divergence is. Your small cap index, 250, small cap 250 is up 0.2%, and the Amphi data, which did come in today as well, is categorically telling you that there is a lot of interest with regards to small caps.
So take a look at this, right? If you just roughly, and you may be off by a percentage point or two, but Hiral, from the low point of March, if the benchmark Nifty 50, so if you pull up from April onwards, right, and the end of March was effectively the low point for the Indian equity markets. The Nifty 50 has gained about 10%, give or take. You have the mid-cap index that's gained about 20%, right? This is 2 months, so you won't get that entire picture. But the mid-cap index gaining about 20% and the small-cap index gaining about 30%. As a result of which there's a lot of retail interest that will once again head into the broader market. So it's a self-fulfilling prophecy at the end of the day. But just pull up the advanced decline ratio, just to drive home that point, because you've seen an easing off of the market breadth through the day. You started off okay, and you've actually tried to come back, but you've actually seen a widening of the gap to where we are right now.
And your declines have actually overtaken your advances as well versus what we started off. Quickly, in terms of sectors, if you can just have that one on the screens, and then we look at the factors also that we need to watch out for in terms of individual sectors. Pharma, IT, as Alex has been pointing out, what's losing out is FMCG, metals, infra, defense, real estate. And you know, the reason why FMCG is down as well is because the way palm oil prices are also panning out, and that is probably having a bearing when you talk about Nifty FMCG right now. Metals, we spoke about it. In fact, banks across, there is pressure. So private banks and the PSU banks are trading under pressure. Let's quickly look at the factors that we should be watching out for as well in terms of trade. If you see in terms of the levels that we should be watching out for, that becomes crucial. But I think we're going to just quickly come back to the Bank Nifty chart and then move away to our guest to talk about more. If you can just quickly have the intraday Bank Nifty chart. There you go. No major moves. If you see the breadth as well, not, I mean, actually, it's not a bad breadth actually. It's a 500-point range that you're seeing in terms of Bank Nifty as well. But there is pressure, Alex, in terms of private banks and PSU banks, which actually showed divergence in yesterday's session.
Absolutely, and State Bank of India once again under pressure, but off the low point of the day. I guess that's also reflecting on the fact that the Bank Nifty is off the low point of the day. Akshay Bhagwat, Associate Director at JM Financial, and Dilip Bhatt, founder of Pedigree Advisory, joining us on the show today. Gentlemen, thanks so much for taking the time, and good afternoon to you. Akshay, similar trends to what you saw yesterday for the benchmark and its expiry day. It's almost as if there is no wind in the sails at this moment. There's consolidation playing out. What are the trends that you're seeing heading into expiry?
Good afternoon, Alex, and good afternoon to all. You're absolutely bang on. The volumes have been significantly down in the Nifty index, as you see, since last week, and a number of factors to contribute to this. But on the weekly expiry day too, if you look at the trend since morning, leaving aside the first half an hour action of selling, the market really has lost momentum. Important level for the next 1 hour would be the support of 24,425, and till it holds, you can expect the similar consolidative trades to move. If that support breaks tomorrow, then you can expect some momentum-based selling. Otherwise, overall, we still continue to trade within a range of 24,400 on the lower end and 24,600 on the upside.
Right range. All right, we'll come back to individual stocks, but before we do, we're listening in to the Vodafone Idea conference call where the management is speaking about the results. Listen in.
27 increased year on year by nearly 28%, 88.4 petabytes per day from 69.1 petabytes per day, Q1 FY26. These crucial business parameters clearly reflect that the customers are getting a better network experience since we have made sustained investments and continue to remain engaged.
Sorry to interrupt, sir. This is the operator. Sir, the line is getting slightly unclear for you. May I try reconnecting you, sir?
Yeah.
Sure. Thank you. Give me one moment, please.
Got it. Okay. So we'll come back and we'll get you some key details from that call. Of course, crucial to watch is going to be the trajectory going forward on where they expect average revenue per user to go. It is the lowest in the industry between three players that count, really. And obviously, it would depend on when those tariff hikes, which have been in the offing for some time, will come through. But let's talk, Akshay, very quickly about the individual stocks that you're liking, because while at the broader end, there has been resilience, there has been consolidation there as well, but there are individual stocks that are popping. What are the stocks that are making to your list today?
The first stock is United Spirits, positive bullish flag formation on the charts, which indicates that the uptrend should continue from a momentum perspective. When United Spirits 1531 is where it trades, we're looking at short-term targets till 1600 to 1620. Buy at the current rate with a stop loss below 1500. That's the trade.
Sorry, I'm going to interrupt over here as well. We just need to go back to the Vodafone, conference. Let's listen in.
June 2026. The ratings were assigned and upgraded by CRISIL and ICRA, respectively, for certain long-term bank facilities, considering the positive development over the last few months. I also want to update you on the broader financial architecture that supports our capex plan of rupees 45,000 crores over the next 3 years. This architecture is built on three cohorts. First is a consortium of public sector banks led by SBI with 6 to 7 participating banks. Second cohort is of the Indian private banks, and the third one is of the ECB with foreign banks. We remain meaningfully engaged with our lenders across these three cohorts and have made substantial progress with them. I'm happy to share that we have successfully raised our first tranche of funding, rupees 6,400 crores, including partial proceeds of rupees 1183 crores from warrants and debt proceeds, including non-funded base facilities through ECB and Indian private bank. We have already placed orders worth rupees 9,000 crores capex till now, which also includes the capex undertaken in Q1 FY27 of rupees 1930 crores. The supplies and execution basis these orders have already commenced and will continue. We are now focused on accelerating network expansion. These fresh orders, Ericsson, Nokia, Samsung, and other partners, which will be executed as we move forward. We are hopeful of closing the discussion with the PSU banks led by SBI, as well as continue work on other debt raise streams. Next are differentiated product offerings and market initiatives. Our focus is on enriching customers' digital lifestyle with experiences that extend well beyond just voice and data. Towards this, we partnered with Spotify to offer our postpaid VMAX subscribers a premium music streaming experience. For prepaid subscribers, we launched eEdu Plus.
Okay, so that's the Vodafone Idea conference call. What's interesting right now is where they've come out and said that they are in talks with banks for fundraising, and they've received the first tranche of this bank loan. Talks are already ongoing for more, and they will be focused on network expansion and hopeful of closing discussions with the banks soon. The stock already trading absolutely flat right now as we speak. In fact, let's also get in Dilip Bhatt to talk to us more in terms of what's his view with regards to markets right now. Dilip Bhai, good afternoon. Hiral on this side. I'm not sure if you have coverage with regards to Vodafone. So any view when it comes to Vodafone trying to find its ground right now to get there? I mean, there's a huge differential between Vodafone, where Vodafone is versus where the others are. But any view on the telecom space?
Well, I think as far as the telecom space is concerned, it's very clear that the capital intensity of the business continues to be pretty heavy. And as is reflected from the fact that even Vodafone has been investing in the capex. So I think it boils down to the fact that as far as Vodafone is concerned, how the liquidity is going to pan out. Without any doubt, I think some of the promoters who have infused funds gives a good confidence. But ultimately, what my own sense would be that all these steps which are being taken, they are just making a very small marginal difference here and there without really they coming out of the woods in any serious way. So this company has to get a very different kind of a corporate, event if it has to find favor with the investors. And I think a lot of optimism is built around that at the moment, that maybe sooner or later, or maybe sooner than later, some of that part will become clear. But otherwise, I think Vodafone has played out a good part. Though personally, if some corporate development happens, I think this can still go up in a big way.
Got it, Dilip. Let's turn now. Actually, Akshay, you were in the middle of telling us your top picks. If you can reiterate them for us, because we interrupted you, and then we'll go to the stock of the day.
Sure. So United Spirits was my first recommendation. 1529 is where it trades. I'm positive on this stock for targets of 1600 to 1620. You can maintain a stop loss below 1500 on this buying recommendation. And the second trade here, you can look at Canara Bank from the PSU space, which is a bit sideways today, but I'm expecting upside still 136, 137 on the shorter term time frame charts with stop loss below 125.
Okay. All right. We've got Kolte Patil that's selected as the stock of the day. Pull up the chart and it's up as much as 12.4% off the high point of the day. And that is saying something. To find out why it is the stock of the day, let's go across to Parth. Parth, what are you picking up?
So Kolte Patil had announced an incredible set of Q1 numbers, and that was mainly driven by the 1.27 million square feet project completions that the company saw in the cities of Pune and Mumbai. But let's first start with the stock performance. The stock had hit that 20% upper circuit level early in trade today, and also saw the highest level since May 2024. So that's the kind of rise it has seen. In fact, in the last 4 sessions, it is on a gaining streak and has gained almost 40% in those 4 sessions. Also, in the last 8 sessions, the stock has closed in green in 7 of those last 8 sessions, and today was the biggest intraday gain that Kolte Patil has seen since January 2023. So let's now look at the top 5 reasons that have top 5 things that have worked for Kolte Patil, starting with the strong realization growth that they have seen in the first quarter. Their pre-sales were largely flat at 617 crores, but realization saw a jump of 29% year-on-year to reach 9,442 rupees per square feet. The second main thing was the robust cash collections that they have seen. The collections saw a jump of 30% year-on-year to reach 715 crores. Also, the Mumbai contribution that has been improving and which has been giving them better margins. Mumbai accounted for almost 30% of their total sales volume in the first quarter, and that supported better realizations for them along with stronger margins. Also, the margin improvement, if we build on that further as well, because of the higher contribution from their Life Republic project, that is a higher margin segment for the company, and because of the higher contribution, they have seen an improvement in margins. Also, the price hikes that the company saw in Q1 has led to higher realizations for them as well. And lastly, on the large pipeline, the large redevelopment pipeline as well, they have around 6 redevelopment projects in Mumbai with a gross development value of over 6,000 crores. So that gives them very strong revenue visibility going forward as well. And lastly, if we talk about the value, and also this sellable area of those redevelopment projects have saleable area of over 2 million square feet. So that provides them really strong earnings visibility. And lastly, on the valuation side as well, at a 5-year average, the stock has a PE of around 70 times, while the 1-year forward trades at 25.9 times the PE ratio. So with that huge redevelopment pipeline going forward, these forward PE ratio of almost 26x seems quite reasonable for Kolte Patil.
Thank you so much for that. And that actually tells you what the story is. The question is sustainability in terms of the remainder quarters as well. But that stock is up 12.5%. Before we talk to any of the guests in terms of Kolte Patil, we'll talk to another infra company first. Ramki Infra. Now, they've seen the core EBITDA actually fall sharply on a year-on-year basis, and this is despite seeing a revenue growth. The question over here is what's worked, what's not worked, and understand what the outlook looks like for FY27. Sunil Nair, CEO at Ramki Infra, joins in. Mr. Nair, welcome to the show. Always a pleasure to speak to you. My question to you is, the stock reacting negatively, and this is because the core EBITDA has fallen sharply despite the revenue growth. Help us understand what has led to that downtick in terms of the EBITDA.
Okay, thanks for having me. Our first quarter performance reflects the strength and discipline of our execution engine. On a standalone basis, we grew revenue by 27.5% and net profit by 31% year on year. And most importantly, our consolidated operations swung back into profit on a sequential basis after a soft fourth quarter. If you compare the last quarter, there were some exceptional items. Otherwise, we look at them as 5% from the last quarter.
Okay. Okay. Can you talk to us about the order book, Sunil? And good afternoon. This is Alex here. What are the trends that you're seeing? One, and you can include what is happening in the second quarter as well, just to give us a holistic picture of how things stand as of the 11th of August. And what do you expect for the full year?
Okay. See, we are encouraged by the underlying momentum in our business, and we remain focused on translating that into a sustainable, profitable growth through the rest of the year 27. We're carrying an order backlog of around 12,000 crores. If you look at it, that's by our verticals. Industrial carries about 6,000 crore, water wastewater around 4,000, and the others around 2,000 crores. So we continue to have the same momentum in quarter two, and we see a significant progress in Q4 and Q3 and Q4.
So therefore, where do you anticipate that you will close the year, order book wise? As it stands, you have about 9,000 crore, correct?
12,000 crore is the total.
Okay, got it. 12,000 crore. Okay, and where do you anticipate you will close the year at?
There is a pipeline, both international market as well as domestic, is pretty strong. We expected to have an additional order intake this year and anticipated to the tune of 3,000-4,000 crores, where we are actively participating in the bids.
So we're having a little bit of an issue, unfortunately. So we're having a little bit of an issue with your line. I'm going to try once again. You're saying that you've ended, and I'm going to ask you to repeat that if you can. 12,000 crores where you ended the quarter. Where do you think that you will end the year at? Okay, we've lost that line. We'll try and reconnect, Sunil, and figure that out. But a few aspects stand out. I think more important than the order book and various other points is, and we should double down on that, Hiral, which is the contraction in the margins, right? It's coming at 6.1% compared with the 20+% or 20% in the year ago period.
Yeah,
so the question is, when do they come back?
Yeah, and the construction segment is what has reported that pressure in terms of profitability as well. So the question exactly from what Alex is asking, and what portion of the order book actually carries the escalation clause as well, because that is the only thing which helps you protect margins from commodity price fluctuation. So that becomes critical. We'll see if we have the management once again. But before that, let me actually take this question with Dilip. Dilip, if you have to talk about infrastructure companies, if you talk about real estate companies as well, it's a very interesting set of numbers that have been reported this time around. Some of the companies, spectacular pre-sales numbers, collections have been strong. Some of them not that strong. So there is no particular trend that is emerging there. And likewise for infrastructure companies as well. Any view that you have taking valuations into consideration, whether this could be a time to look at them?
Just let me take this infra companies first. I think the general apprehension across has been that the payments have been coming in a very, very slow way for them. And the cash flows have always been a pretty strong issue and the worry in the minds of the investors. So that's why you have seen that a lot of these infra companies have really not gone anywhere, rather they have come down. And despite the order books swelling and going up so much, I think it is not getting adequately reflected in the stock price movements in any northern way. So I think that certainly has to be kept in mind. But most of the stocks in this infra space are having beaten down quite badly. So maybe on a risk-return basis, possibly the downside appears to be limited, whereas the order book continues to be good. The cash flow is something which everybody will be keenly watching, whether they are going to get enough cash flows to fund it. But typically, as what I would say that for any of the infra companies, as what we all know, we should not look on a quarterly basis because it's based on the milestone. Based on the milestone that they do, they get payments and they recognize it as sales. So a lot of expenses can get reflected even without the revenue getting recognized. So I think some of those things possibly may play out as far as the infra companies are concerned.
Yeah, we've got Mr. Nair back. Mr. Nair, in the interest of time, just two aspects that stand out. One, the fact that margins have actually come to that single-digit number. When do you anticipate that they will climb, and what is the kind of peak that you expect to clock in FY27? One, and two, I believe that the company has been working towards deleveraging. You have a substantial finance cost, and it's gone up as much as 66% from what I can see in front of me. Where do you expect to end the financial year at with regard to the debt on your books, and what is the effort there?
These are multiple questions that, currently we are executing our major order intake this year. There are largely HAM projects and BOT projects, and the capex would come in the Q3 and Q4, and we expect it to improve our margin to double digit as we end Q3 and Q4. Comes to the financing, we have actually had monetized our long-term stabilized assets, and these are being put back into our new BOT and HAM projects as equity.
Okay, and so therefore, is there a number that you have in mind? Obviously, for an infrastructure company, the gearing ratios will be dramatically different from everybody else. But having said that, there has, as I understand it, been an effort to delever. Where do you intend to take it by the end of the year?
Yeah, that's why I said that this will go into our, we have two major BOT projects. One is with an MIDC, we're developing an industrial park, and the second is on our HAM project, Malana Sagar. All of these are the capex investment of 1,500 crores, and plus the MIDC is another 2,500 crores. So this would bring in as an investment into the projects. And the returns are going to come on once we complete the capex cycle.
I understand. All right. Mr. Nair, thanks so much for joining us today, and looking forward to speaking to you later in the year when those margins head to that double-digit mark. Thanks so much for taking the time, and wish you all the best for FY27.
Thank you. Thank you.
It's going to be interesting to watch out for as well for infrastructure companies as well. But, I just want to address the TCPL packaging. Let's just pull up the intraday chart. The profits have seen a growth of around 79 to 80% as we speak. That stock is seeing some smart surge there, 15% up move coming in on a TCPL packaging on the profit growth. If you see in terms of the revenues as well, 16%. So clearly your profit growth has outmastered your revenue growth, which is a positive as well. And in terms of where margins are concerned, if we have that one, I don't think so we have that number, but at least on the two numbers, 15% up move coming in on that one. Let us also look at what is actually buzzing and what's the chatter coming in from the dealing room. You know, instead of Somit, I'm going to take that up because he's busy listening to the Vodafone Idea conference call to get us more updates from there.
That's a good reason.
Yeah, but that is the reason, right? So in terms of what's buzzing, Polycab, there are sell flows coming in on the large HNI desk and the PMS desk as well. And there is a potential buzz of a block deal happening there. So that's with regards to Polycab. Let's see what that stock is doing, 2.5% downtick there. You have Suven Life, Beta Drugs and Nuvama, which are in focus because large prominent HNIs have been accumulating these three counters in trade today as well. And Manappuram Finance. Numbers are expected, dealers are expecting a strong first quarter, and the numbers are expected to be better than what the street was estimating. But ahead of that number, the stock is down nearly 3%. Akshay, Polycab, Beta Drugs, Manappuram Finance. All of these three counters, any strategy on the charts, anything that you like?
Well, see, Polycab is a bit weak if you were to look at from a short-term or an intraday perspective. Somewhere around 8,800, 8,850 is the zone where you can look for potential buying opportunities. So as of now, it's a miss. Manappuram is a stronger chart, but again, today's sell-off of 2% just confirms that a slight dip around 345, 350 is the right buying range. So both the stocks are not buy at the current level. A slight dip would make it more favorable from a risk-reward perspective to re-enter fresh longs.
Got it. Okay. All right. In terms of the large caps that are moving though today, you have Max Health, and we're going to talk about hospital stocks in just a bit. But before we do, Dilip, this conversation or move to cap room rents for hospitals is being seen negatively, though from the perspective of prospective consumer, I can wish that none of us right now in this conversation or anybody watching at home will ever have to face a room rent at a hospital. And those are my good wishes heading out. What does it mean for the hospital companies?
Well, I think in a developing country like India, where even a lot of drugs are under price control, then it is not very surprising that these kind of news intermittently will keep on coming, of trying to cap their prices for the healthcare companies, particularly the hospitals and all. I think these are part and parcel of where India is at the moment, and the government too is very keen to see that the common man is not really overburdened rather. So I think I would not read too much into this particular aspect, because we have to live with this particular factor. But yes, it will certainly impact the valuations. Whether it will impact the profits or not, that just remains to be seen. But I think the valuations which have been, almost all the healthcare companies are quoting at a very good valuation without any doubt. I think they may see some kind of small correction, and possibly once again the interest will start getting revived, maybe at those levels.
Got it. All right. On that note, gentlemen, thanks so much for taking the time today. Pleasure speaking with you as always. We have to slip into a very quick break. We've got market action on the other side, and we're winding down to the end of trade today, and indeed the expiry session. So stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation. NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy. Sell.
In a seamless manner is absolutely essential for wealth creation to really become meaningful from here on. From a global Indian point of view, I'm sure we'll talk about global Indians as well. So it really is globalized in many manners. So it's trans-jurisdictional, it's trans-need in that sense, and it's really global in the way it really pans out.
No, to be honest, not just global Indians, anyone around the world. For global Indians, the currency factor then becomes another risk, right? That you come in. Sachin, how do you look at this whole space of more than ever now, perhaps, Indians are very clear that wealth creation is front and center, but you also want to be protected while you are doing that.
Well, I think, protection is it's as Shoaib said, it's needs a better bit of understanding. From my perspective, what's very important is that it has to be simply told, simply explained, and people have to just understand why protection is needed and why should it be on the center of wealth creation, right? And I think what probably Gift City does, and hearing so many conversations, is it kind of brings in that simplicity aspect, really to the forefront. Why should I go ahead and buy an insurance product at the very first place? Insurance is probably understood a little bit more in a complex way. Complexity is not just about from a product's perspective, but also from how the customer will want to make a payment, whether the customer goes through the journey is simple enough. So all those things really kind of come to the forefront when we look at protection. From my perspective, what Gift City and IFSCA does is to kind of make things much more simpler. Explainability becomes much more easier. Adoption becomes much more possible. Inclusiveness becomes, a far bigger agenda than what it currently is. And of course, with more customers participating and connecting with this cause of protection, it helps you create wealth over a period of time. And insurance as a product is the only product that has multiple life stage goals attached to it. So you have a marriage in the family, there's an insurance product for it. You have your child's education, there's a product for it. You're retiring and retirement and succession planning or legacy planning, there's a product for it.
I was saying that's my department.
Yeah. So see, the thing is that when people think of protection, the most important thing is whether people understand the reason why and what kind of protection is needed. What life stage goals are we trying to protect? How easy it is to kind of go for that kind of a protection? And what are those roadblocks that kind of come in the way to not let the person go for, let's say, an insurance product or probably lapse a policy?
Give me a for example in the context of Gift City. Yeah. Now, everyone here, a lot of people here watching, know this whole thing about insurance, it's important for you, etc., at different life stages. Why should I look at it differently from a Gift City perspective? How does it help me?
So, keeping simplicity as the core, there are two things, as a customer I'm always bothered about. If I'm a global Indian, for example, two things that really make things complex for me is understanding currency and, of course, taxes. The moment you throw these two things into the financial planning, things become more complex.
Yeah.
You try and explaining me the taxes, it becomes really complex. I need to have a chartered accountant or a tax consultant telling me what it means. Similarly, when you go for buying an insurance product, the reason why the customer is not able to complete the journey is because the payment is complex. So how do you kind of simplify some of these aspects for the customer? From the perspective of getting more customers onboarded is what Gift City does. It kind of removes the barriers of currency. It removes the barrier and the tax advantages that it has. And it provides the journey, which is the so-called digital journey, which is easy for the customers to operate to and go through, thereby allowing them to understand the product much better, have a clear connect with why the insurance is being bought at the very first place, and then of course upon the time of maturity get the benefits that the customer had thought of while buying the insurance product. So let's say if I start the journey today, I want to do a retirement planning, and this is a long-term horizon, right?
And you are in this example, okay, you're an Indian who's sitting, say, in New York.
So let's say, yeah. So let's say if I'm an Indian sitting in New York or Dubai, I'm buying in dirhams, for example, and I want to send my child to US for education. And now there are multiple options available, but being a global Indian, I would want to kind of go with the Gift City concept, which I relate to. And of course, comparing the currency and the tax thing that I just spoke about, I opt for this vehicle and compare various different products, choose this particular product, invest in the product, and in the next 4 to 5 years, when my child is ready to go for education, have no currency fluctuation risk and make it very seamless for my son to go through the education. I mean, it just makes it obsessively simple at the end of the day.
Why does this person in this example have to come to Gift City at all?
Well, the person can go with various different options, but the thing is that India plays that anchor in this entire bit, right? So we're talking about global Indians, and we're talking about how India becomes a global marketplace. So if I'm an Indian sitting in Dubai, want to send my son to go for an education in US, I compare multiple options and find, let's say, the product that's being offered via Gift City as a much more easier, simpler product to deal with, I would go with that product and allow for, my financial planning to be done via the platform. And I'm using the word platform because that's what Gift City does. It provides.
That's the conversation that you're picking up from Gift City, which is the next financial frontier, and you can watch all the updates from there on our social media platforms and throughout the day on NDTV Profit as well. But let's also get in Amardev Singh, Senior Vice President Research at Angel One, and Sudeep Bandapadhyay, Market Expert, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. We are at 3:10 right now, Amar. I know slightly late in terms of the conversations that we had planned, but very quickly at this hour, if you have to look at a strategy in terms of markets and your top picks, what would that look like?
Yeah, so if I look at the markets and if I look at some of the stocks, so pharma is one space which we've been positive. So Gland Pharma is one stock which we've seen a major breakout there happening. So this is one stock one can keep a close watch on. And if I look at the way the stock has rallied over the past few sessions in particular, so I could see that an upside movement in this is likely towards the 3,200 to 3,400 levels, because the stock, if I look at the structure of the stock, that is extremely strong and positive. Today has been a very strong day. It's up by almost 9.5%. But if I look at the structure from a longer term perspective on the weekly, monthly and quarterly charts, it continues to remain strong and positive. So on the upside, one could see towards the 3,200 levels. Whereas on the downside, the stock is very strongly supported somewhere around the 2,600, 2,650 odd levels. So this is one stock one can keep a close watch on. And the other stock is from the automobile space, and that is Ashoka Leyland. So this is one stock we've seen consolidate and then react from almost 150 levels. Currently, it's around 175 odd levels. So it needs to, for any significant rally, it needs to sustain above the 180 odd levels. So rather entering at the fresh levels, one should wait for a breakout, because if it reaches the 180 odd levels, we could witness the stock rallying towards the 195, 200 levels. So these are two stocks which one can keep a close watch on.
Interesting names there, Ashok Leyland. In fact, the auto ang space is also in focus. If you just quickly pull up a Bosch on the screens, the revenues have seen a growth of around 22%. Though your auto index is trying to find its feet, but 4.5% up move coming in there on a good set of numbers. Precision Wires has also posted a good set of numbers on the back of which you're seeing the revenue, which is up almost 60%. You have net profit, which has grown 71% there, but that stock under pressure. Apart from that, talk about a Lumax Auto. Lumax Auto, a very strong set of numbers again, and that's the reason why that stock is up, locked in upper circuit, I would say. Big movers this week, you have names like Sundaram Fasteners, Ask Auto, Suprajit Engineering. All of them have also reported numbers between last week and this week so far, and strong moves continue. In fact, Sudeep, any view when you talk about the auto ancillary space, because all of them have been firing?
Well, I've been, kind of bullish on this entire space for a very, very long time. And I think this is one area where we are going to do extremely well. I think Indian auto ancillary companies, a lot of them have attained global scale. They are, part of the OEM network of global auto majors, and the performance has been continuously improving. We do like Sona BLW, we do like Uno Minda, we do like Samvardhana Motherson. I think multiple of them, and look, some of them have diversified very effectively. Samvardhana Motherson is into aerospace, and they are becoming, tier 1 suppliers to Airbus and Boeing. They are also getting into electronic component manufacturing. And that is the same trend which is being replicated across the industry, across the sector. And I think this augurs well for the entire sector going forward. The performance for the first quarter, as you were just alluding to, have been fantastic. And we do believe that this trend is going to continue. Of course, one has to remember that the valuations in some cases have also reached certain levels, and one has to be careful about the valuation at which they are buying these stocks, but fundamentally very strong sector.
Fundamentally a very strong sector, but valuations have to be kept in mind as well. But now, stay with us. The F&O cash market closing is right here. We have Nifty, which is now down 0.5%. 24,450 is what you're tracking. Let's just pull up Bank Nifty also on the screens, and then we'll look at the Sensex because it's now 315, and that's where the stop is coming in. 0.5% or 0.6% lower in terms of Bank Nifty. 57,366 is what you're tracking in terms of Bank Nifty as well, a 320 points downtake. So this is basically your CAS, which has begun right now, and the exchanges will now determine the reference price that will be based on the VWAP that has come in between 3 to 3:15 p.m. and that is what you're looking at. In terms of the advance decline ratio at this hour, 1100 advances versus almost 1540 declines is what you're tracking on your screens. Clearly your declines have outmastered your advances and completely opposite of how we started off the trading session in today's day of trade. Overall, let's just quickly look at the broader markets as well in terms of the mid cap and the small cap index, and then we'll see what's happening on that front. Nifty mid cap, which is down right now 0.2%, and likewise you have the small cap index also, which is on the upside 0.2% higher. So that's where the juice is in today's session. But clearly, the special closing auction session has just begun right now. We're talking of, that price that will be determined, the VWAP price for all your F&O stocks that will be determined between the 3 and 3:15 window, the VWAP price that will be taken into consideration as we speak. Amar, at this hour, seeing the way the close is looking like, because if you see the NSE cash market, you're seeing a 0.5% downtick coming in there. If you can just have that screen back in terms of the F&O rates as well on Nifty 50. Quickly, if we can just have that window back. Yeah, the NSE futures are indicating a downtick of around 0.5%. 24,546 is what you're tracking. What is it telling you with regards to volumes and closure today?
Yeah, see, there's no doubt about it that Nifty on the upside is witnessing some sort of consolidation, and some sort of selling pressure is definitely being witnessed, because most of the heavyweights, we've seen that there's been some significant correction. So what we've been saying that 24,300 to 400, that's a very crucial support zone for Nifty on the downside. Whereas on the upside, 24,700, 800, that's a zone of resistance. Till the time we don't see Nifty consistently breaching the 24,700, 800 zone, I would say there would be some sort of selling pressure, which is being currently witnessed in the markets, because the markets would hit some fresh triggers. And Bank Nifty also has been on a weaker footing. So I think that also has been, I would say, somewhat not been very supportive. And looking at the structure of Bank Nifty, clearly it shows that upside seems to be capped around the 58,000, 58,500 levels. But Nifty, as I said, 24,300 to 400 is important zone of support.
Okay, interesting. So you're seeing a close of about 78,148 on the Sensex, the Bank Nifty closing at 57,366. These, remember, are the last ticks at 315, not the reference price. A few brokers are starting to offer this, by the way, and we were talking about this morning, weren't we? About the fact that one particular discount broker is saying that it's going to give you the reference price, and then it's going to give you the bid ask, or the most active trades, starting from 320 when that CAS window opens up. So this is a developing space. The more data that you get, the better it is for you to understand what actually is going on. So keep those numbers in mind, and we'll get you the details of how the components are moving as well. By the way, there's an interesting update for the constitution of the benchmark Nifty 50. BSE, of course, set to enter the benchmark, and Wipro, which has been as old as the furniture for the index as a whole, is making its way out. So what does that mean for flows? Let's head across to Sharad to find out. Sharad?
Well, it's a very interesting take. After, we could say, a really long time, Wipro is out of Nifty. And interestingly, look at the story. BSE is coming inside the Nifty index. But overall, this is impacted from September 30th onwards. Remember, on September 29th, the flows will happen. Now, you must be wondering, what are the flows? Of course, there will be a strong inflows coming in, especially for BSE. And if you could point out, as per Nuvama's alternates numbers, the calculations, we see a significant inflow expected of almost $695 million. On the other hand, almost $240 million of outflows expected for Wipro. BSE shares up almost 30 times in the last 5 years. See how big multi-bagger BSE has been in this journey. And largely the Q1 earnings we saw, there was largely strong despite the volume pressures which we have seen because of the regulatory issues coming in. But moving on from BSE, there's a lot of news coming in from NSE IPO also. The DRHP has been updated, and now SBI Capital Markets is also a seller. Already it's a part of the SBI sell-off, so there's no major change happening. It's just that now you have two parts to that important sell-off. The total size of India's biggest IPO still stays unchanged. If you want to look at the numbers, how it pans out, let's show the numbers. The SBI block sale remains unchanged, and now SBI Capital Market comes in. SBI will sell 1.59 crore shares. SBI Capital Markets will have 87.8 lakh shares, actually crore shares of sell-off in that space as well. SBI Capital holds roughly 10.73 crore shares in NSE, and SBI is actually on the lower side, but it's still at around 8 crore shares. So that's the update coming in for the exchanges.
Okay, thanks so much, Sharad, for that. Amar, I want to come to you actually not on BSE. In fact, I want to do a bit of a rapid fire because I'm pretty sure that we've got quite a bit of ground to cover in terms of individual stocks. So I'm going to throw a few stocks at you and you can give me your quick take on them. Among the gainers from the broader markets, you have Chennai Petro and MRPL that are absolutely roaring in trade. Double-digit gains. Would you hold if you have it? Would you buy at these levels?
Chennai Petro, definitely a hold, no doubt about that. So one should hold. And if I look at MRPL, so MRPL, if I look at it, again, that also is a hold, but it needs to breach the 185 level for any further upside. But it's very strong, one should hold.
Amar, quick views. Let's run through the list, right? Finolex cables up 14% after the results. Would you buy, hold or sell?
This I will hold.
Okay, and level?
Level is current levels. If it reaches 1210, we could witness it rally towards the 1300.
Gland Pharma close to 10% upside. Would you hold or sell?
Hold for an upside target of 3200.
You want to add to the list?
So I have a Sundaram Fasteners. That's one that I'm looking at, as well as a Lumax Auto, which is locked in upper circuit. I'm on the charts.
I would say hold the position for a target of 1280.
Okay, I think let's do this rapid fire with Sudeep as well, but on the fundamental side. Sudeep, I don't think so we've spoken about what's happening here. We've spoken about the auto ancillary space, but if you have to look at pharma majors as well as the CDMO players, Gland Pharma for that matter, good surge coming in there, and a lot of other players that have done well. Would you be a buyer in terms of Nifty Pharma, which is probably at the day's highs today?
Absolutely. I think from a long-term perspective, pharma definitely looks very good. The larger players who are into branded patented products like Sun are moving along. CDMO players are doing exceedingly well, and domestic pharma on the other side also is performing very well. So all areas of Indian pharmaceutical industry is doing very well. So no hesitation in buying pharma index.
What about IT, Sudeep? Because it's probably starting to get a little firm in terms of stock price reactions as well. Fundamentally, not very sure what's happening, but would you be a buyer fundamentally at the valuations where IT is?
No, I won't be. That's a standard general answer. We can look at specific companies in the mid-cap universe and try and pick, but overall IT is definitely an avoid. The AI-related disruption is real. We can keep talking about AI valuation, bubble and things like that, but the disruption on ground being created by AI is definitely affecting Indian IT ES players, and this is going to continue for the foreseeable future.
So Sudeep, would you play the AI ancillary companies over here from the broader markets?
Well, we hardly have any, and whatever we have, I think networks of the world, the valuation has reached obscene levels. So I don't think I will try that.
Got it. Okay. So we've covered quite a bit of ground in a very short period of time. So kudos on that. But let me ask you about the hospital companies. And we did have a conversation about this, Sudeep, just a while back. This conversation about capping off the room rents is taking place at a time when all of these companies are in a build-out mode. They're spending large monies to put up massive capacity that builds out over the course of 27, 28 and 29. Is this the wrong time for this to take place?
Absolutely. This is exactly what my sentiment. I think we've been seeing phenomenal expansion as far as hospital facilities are concerned, and India desperately needs lots and lots of hospital beds coming up across the country. I mean, we are definitely in a place where healthcare spending needs to improve as far as infrastructure, healthcare infrastructure service providers are concerned. These things can come after we have matured quite a bit. Today, I think we need more hospital beds, and that's a priority. Fortunately, we've been attracting a lot of PE money in the recent last few years, and that is helping consolidation as well as expansion in the industry. At this stage, to bring some draconian, caps on the fees, etc., will be unfortunate. You let the market decide. That would be what I would say. There will be all kind of facilities catering to all kind of income groups, and that's how we should allow the sector to develop, not by capping rates.
Got it. Okay. What about the oil sensitive, Sudeep? At this moment, there's quite a bit of action, right? And with crude once again heading towards that $90 per barrel mark, once again you have the downstream companies that could be under pressure. You have significant under recoveries that have come through, right? And the fact is that prices have not moved too much. How do you play both upstream and downstream?
Well, as far as oil marketing companies are concerned, I have been always mentioning, at least for the last couple of years, that please avoid too much of uncertainty surrounding these companies, because they have to bear the brunt of the global price fluctuations. They can't freely move the price up and down at the bunk. So they sometimes they're gaining some amount, and other times they're losing heavily. And government talks about compensation, but it may or may not come or come at a much later date. So it's definitely an avoid at this stage, considering the geopolitical stress. As far as upstream is concerned, yes, there is some excitement because oil prices are going up and things like that. Also, the refining margins have moved up. But at this stage, I think the volatility and the uncertainty is too much. So I think, unless you're thinking of making a quick buck or speculating, I would fundamentally advise investors to stay away from this entire sector. Let's not try and be too smart and take benefit one way or the other.
Okay, before we just talk about other things as well, just pull up a Reliance Industries, Bharti Airtel, HDFC Bank, ICICI Bank. You're seeing some reference price settlement. Reliance is 1322 is what you're looking at right now. Bharti Airtel around a 4.5%, 1.5% downtick coming in there. HDFC Bank, ICICI Bank, if you can just pull up that one on the screens, along with Infosys, MCX, M&M, you're seeing the reference price right now, which is pretty much similar. I know there is confusion there, but I'm pulling up the data, Alex, from the NSE website, which does give you the reference price.
That's what I'm saying.
Which does come in as well.
So what
right,
you're seeing on the screen right now is the last tick. It is not the reference rate.
Yes, but I'm just talking about the reference prices which have started to come in.
Which is the volume-weighted average
correct.
price.
And there's no major difference which is coming in there, because if you talk about the bid price and the ask price, for example, a Reliance, 1362 is the best bid that has come in, and the best ask has come in at 1282.80. Okay, so that's the differential that you're talking about, and that's the reason why they're coming up at a price what you're looking on the screens. And likewise, look at an HDFC Bank. Your best bid is coming in at around 751. And your best ask is coming in at 707. So where it's the way it's averaging out.
That's exactly what. So a lot of people are attempting to get the best possible trade here, right? So, and we spoke about this with Nilesh Shah just last week, and you're saying, if I was a fund manager, and I know that I've said it's on this very show, at this very table, if I was a fund manager, I'd ask my dealer to bid 3% lower and ask 3% higher, and that's exactly what is happening right now. Amar, effectively, how would you navigate the cash window?
I would say we'll have to. What I would suggest is that you need to really look at the levels rather than get into the market at the current way. So I would say watch out for the crucial levels, be it for specific stocks, and as far as Nifty, which I've concerned or talked about, that's the level that one should keep a watch on.
Numbers are in and the markets have settled. So what Hiral was describing was the window in which those trades were taking place, and of course ultimately after the closure of that window an order matching takes place, and so the levels are in. Take a look at the benchmark Nifty 50, 24,471.7 is where it has closed. The previous rate at 315 was 24,450. There's an uptick of about 21 points or thereabouts, 22 points or thereabouts. There you go. The Bank Nifty closing 77 points higher or thereabouts. The last level for the Sensex is 78,154, which is about just a few points higher, actually, just about 8 points higher than it was at the close at 315. So in fact, let's look at the components of the benchmark Nifty 50 and see what's moved the needle. Just about 22 points. So you're unlikely to have seen a very dramatic move in the components, but still the biggest movers and the biggest gainers and declines after that cash window will be interesting to look at. There you go. So not too much of a change. These are the biggest gainers after that cash window. BEL, Geo Financial Services, not too much to speak of. Asian Paints moving lower by about 1/3%, and Cipla just about 1/10%. So not really seeing the impact of that 3% higher bid, ask and 3% lower bid. But Sharad, coming to you for what you're seeing on the F&O space.
Well, that's right, Alex. And of course, from last week till now, we are in at least the most comfortable place. Data is there, we're seeing a participation, the volumes are there, and not much variance if you put it, what we had seen last expiry, and this is remember the second expiry of Nifty under CAS. Now the changes happening with Nifty is around 22 odd points, and Nifty Bank is much smaller actually if it compared to the size, that's around 77 points. The top gainers, of course, from the changes, we have 361 WAM and United Spirits also making it to the list. Amongst the top losers, not much variance. It's just in that 1% of 1 point plus minus. You could, this is actually much more smaller. So this is, you could say, much better. PNB Housing Finance is just down almost 0.7% if you just compare that with the timings. So net, the variations have come down. And if you look at the Nifty gainers, largely the change is happening in the larger names such as Bajaj Finserv, JSW Steel and Grasim. These are the names actually in last Tuesday also where the action was on the higher side. Amongst, of course, the gainers, these other names also come in, the banking names, AU Small Finance Bank and IndusInd Bank. So a little bit of variation higher here as well. And the Nifty Bank losers is on your screen as well. So no major concern from either Nifty or Nifty Bank when it comes to the cash adjustments which is happening. But nevertheless, the volumes have picked up, and now we are seeing we are coming towards, you could say, a similar range here. This is what's the overall open interest is looking like. This is the number you should be tracking. And of course, the gap which is there, that has also actually come down as well. That's around 16%. This is the 24,000, 2450 put. That's where the congestion is happening. This is the open interest we are looking at. That itself is largely flattish, you could say. So yes, it is converging. And these numbers, especially in the options data, is giving us some clarity on the prices now as well. But this is just the first, we could say, week of a proper data coming in. Let's get in 2-3 more weeks of this data so that we understand how this is working.
You want to also look at the open interest distribution at the end?
Yes, open interest distribution would also be there, and largely this 24,500, that is where we are seeing this overall momentum happening here. But remember the 25,000 call, this is where we are seeing last weekend also, last week also there was a congestion, and now over here also the positions are on the higher side. But yes, the variations are not changing a lot, which was there in the last week. So this is the overall setup looking like for the markets.
Okay, thank you so much for that. In fact, that open interest distribution numbers are also looking very interesting. If you could just help us also understand, Sharad, in terms of the at the money call and put separately, if we can have that chart on the screens, and probably Sharad will be able to take us through that one as to what is that indicating. Do we have that?
We have the at the money, numbers which is there on the screens. If you could just show in the option chain where the action is here. Largely the open interest where we see that number, that's on the higher side, and this is where the action is. This is almost 12.3 million contracts which are there. Also, if you look at it, this is coming in at a slight discount. These are the numbers you should track at 310 and right now to show whether you have made money on the either sides or not. Let's pull out the other put data also. That's where the action is, and look at that open interest. This is the number you should be tracking. Roughly, you could say 2.5 crore of these contracts are there.
All right. Thank you so much, Sharad, for that. Amar, with the data that the options chain is pointing towards, what are the cues that you're picking up?
I would say that there could be some sort of selling pressure, but again, I see the downside limited towards the 24,300 odd levels.
Okay. Amar, any strategies that you would employ now that you have clarity on where we've settled, where the dust is settled post expiry for the next week? Any ideas?
So I would say that if one wants to have us get into an option strategy, a straddle would be a good option, because what we are likely to witness, a short straddle, because what we are likely to witness is some sort of consolidation between 24,300 and 24,700, 800. So a straddle in that would be a good opportunity.
Got it. All right. On that note, Amar, thanks so much for joining us today. Pleasure speaking with you as always.
Thank you.
Okay, now let's take a look at, so this is the data that you have at the end, but let's take a look at what the market has showcased today. You ending with cuts of about 0.5% or so. This is pretty much the range that you've seen through the day today, and it's not any different. Pull up the intraday chart and that'll tell you. Pull up the, exactly. So you wouldn't have moved too far away if you can pull up the intraday chart, and we can talk about that then. You wouldn't have moved too far away from what you saw through the session. Just a small uptick. You remember last Monday, there was this massive uptick that you saw. You're not seeing that here.
You know, the differential between the 315 price and 330-35 price, the closing price, is narrowing, right? So which is a positive, where I think probably they're trying to find a ground and an equilibrium.
Yeah, that's absolutely true. Couldn't have described it better. In fact, for the Nifty Bank as well, you're not going to see too much of a big move. Just a little bit more. 77 odd points is what the gap is between the last tick at 315 and the closing here. But take a look at the internals of the Nifty 50 as well, because this is what is going to give you a picture of what has moved during the day. You do have Dr. Reddy's Laboratories has ended at the high point of the day.
It's very interesting to see that surge on that one.
It is, isn't it? Followed by Eternal, and a lot of those IT companies have actually lost out over the course of the session. They've lost a little bit of ground and ending off the high point of the day. But you have Tata Consumer, Max Health from the hospital pack losing ground, Nestle, Ultratech. No real
ITC,
trend.
Look at the FMCG pack, Alex. ITC, Nestle, Tata Consumer,
HUL.
all of them, HUL, all of them under pressure. Hospital names, you have Max Healthcare, Apollo Hospitals, but we know what the reason is on that front. But FMCG looks very interesting to me to get that downtick today.
So I'm guessing quite a few oil sensitives, Hiral, will have taken a little bit of a knock today.
Yeah, I mean, look at our Asian Paints as well, right? On the back of crude oil derivatives, that is under pressure.
So therefore, quite a few of these companies that have inputs, and ultimately FMCG companies, have gone through a price increase phase. And so once again, if you say that their packaging costs could go up, there is a tendency to think that.
But again, you know, at the conversation where we were ahead of the first quarter, whether the first quarter will see the brunt, the question now moves to whether the second quarter will see the brunt of it.
Indeed, and you actually had quite a few of them report pretty good numbers. Just to close out, the sectoral heat map should give you a sense of what has moved. On the top, you have IT and you have pharma as a pack that's doing okay, followed by healthcare. It's up about 1/3%, but practically everything else is underperformed. You have FMCG, as Hiral was pointing out, is the underperformer today, followed by realty and metal, as well as various other sectors
and the banking space as well. Very quickly, broader markets, and then we will move to close. But in terms of the Nifty mid cap and small cap, the divergence continues. Though the mid cap has recovered mildly, right? It was down 0.2%. Let's look at the small cap 250 as well. It's absolutely stable, 0.2% higher. So, but you know, this is where the juice is right now.
Absolutely, and you're ending with declines ruling the roost. I think all told, it's another dull, dreary day. Let's see if tomorrow brings anything different. Ultimately, the earnings season is drawing to a close, so you may not even see the individual big movers that you saw today. But from Hiral, myself, and the team that put the show together, thank you so much for watching. Do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
Co-powered by LIC हर पल आपके साथ and Coin Switch.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin below the 64,000 level mark on institutional selling. Bitcoin notches its best third quarter since 2021. New York Stock Exchange develops its on-chain settlement platform. And lastly, BlackRock Canada launches ETF that combines both stocks and Bitcoin. So today we have a very interesting topic to talk about: hot versus cold wallets. Now, when you own crypto, one of the first things to understand is how you want to store it and access it. This is where hot and cold wallets come in. Now, the simplest way to tell them apart is that hot wallets are connected to the internet, while cold wallets keep your private keys offline. Now, the hot wallets are designed for quick and frequent access, while the cold wallets are generally used when you want to hold your crypto securely for a longer period. Now, let's try to break it down. Especially for hot wallets, it's a crypto wallet that is connected to the internet, and it can be a mobile app, desktop app, or even a browser extension. Now, this allows you to access and transact with your crypto quickly. Think of it like a digital wallet used for every day. With payments, you keep your money readily accessible because you want to able to use it whenever you need it. Now, the popular examples include software wallets such as MetaMask and Trust Wallet. Crypto held on a centralized exchange can also be accessed through online wallet infra, although the custody model is different from a self-custodial wallet. Especially on CoinSwitch, for example, a portion of user assets is maintained in hot wallets to support transactions and liquidity, while the majority of assets are held in the cold storage. Now, the convenience also means you need to be mindful of online security risks. Since hot wallets are connected to the internet, they can be exposed to threats such as phishing attacks, malware, compromised devices, and online theft. Now, these are best suited for people who actively trade or transact with crypto and need frequent access to the assets. A cold wallet, on the other hand, keeps your private keys offline. These are usually physical devices, often similar in size to a USB drive that's connected to your computer or even a phone when you want to authorize a transaction. Think of it like a bank locker. You would not open it every time you need to make a payment, but you can use it to keep valuables secured for a longer period of time. Since the private keys remain offline when the device is not being used, cold wallets reduce the exposure to many types of online attacks, and they still require careful handling. Losing the device or misplacing the recovery phrase or sharing your private keys can put your assets at risk. These are best suited for long-term investors who want to hold larger amounts of crypto and do not need frequent access. So, which one would you choose? The right choice depends on how you use crypto. Hot wallets can make sense when you need quick and frequent access for trading or transactions. Cold wallets can make sense when you are holding crypto for a long term and want to keep your private keys offline. For many investors, it can be useful to keep the amount they need for the regular transactions accessible while considering offline storage for assets they plan to hold for longer. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is a show that's going to get you a roundup in terms of everything that has gone by in today's trading session. Other than that, we'll also be getting you news and updates from within the country and across the globe. But first things first, let's take a very quick look at what the markets were really up to. And when you talk about the benchmarks, that is the Nifty 50 as well as Sensex, the Nifty did slip below 24,500 and you did have the benchmarks really ending near the day's lowest points as well. When you talk about Sensex, that lost ground more than 350 odd points, in fact, is what you're looking at in terms of that shed coming in for Sensex. Now, the selling pressure really stayed broad-based into the close. Let's also talk about the sectoral picture. Most sectors ended in the red, with FMCG and realty among the biggest laggards. You're looking at pharma and IT offering some bit of resilience, but could not really offset the broader selling pressure, and that's something that you're looking at. So even with that 1% gain coming in an otherwise tepid market, you do have pharma that held up, but just part of a list of a very short list of sectors that were remaining resilient. Let's also move on and talk about oil prices, and that was a key talking point and a key pressure point indeed. Surged for its fourth straight session, and you do have US crude nearing $90 a barrel mark as hopes of a full reopening of the Strait of Hormuz continue to fade. Markets remain on edge, and this is amid the growing deadlock between Washington and Tehran. You do have US President Trump, who's demanded compensation from Iran for casualties suffered during the conflict, and said that the US Navy effectively controls and keeps Hormuz open. The remarks, of course, came after Iran insisted that the US must pay for war-related damages as a precondition for reopening the strategic waterway. So what you're really looking at is a little bit of a deadlock on both sides. Let's move on and talk about gold, that is pushing higher, crossing the $4,400 an ounce mark to hit a 2-month high as investors position ahead of key US inflation data as well. So bullion really has already gained more than 3.6% over the last 2 sessions. Technical buying is really kicking in after gold cleared its 100-day moving average as well. So stronger China ETF inflows and recent dip buying are also supporting the recovery at this point in time. But the next test is really going to be coming in from the US CPI data that we're watching out for. So a softer inflation reading might just ease rate hike fears, while hotter energy prices could do the opposite. So for now, gold's recovery is starting to look more like a cycle shift than just a bounce. Let's also move on and get a little stock specific, talk about something like a Gland Pharma that is turning in a strong set of numbers in the first quarter as well, with growth across the CDMO segment as well, recent product launches that you're looking at as well. And you do, of course, have higher volumes that you're looking at in its base business. Now, revenue is rising nearly 20%, so you're looking at 1,800 crore rupees for that figure. EBITDA grew much stronger, so 33% is what you're looking at, lifting margins to over 27%, so great set of numbers. And Street, of course, rejoiced that with that 9.6% uptick. The big highlight, though, is the bottom line net profit that jumped 47%, improved capacity utilization that you're looking at, and operational efficiency that also helps. So adding to the positive outlook, you do have the company also signing a multi-year sterile injectables manufacturing and supply agreement, giving the business greater revenue visibility going forward. Let's move on and talk about something like an Idea Forge that is showing a little bit of a sharp turnaround coming in the first quarter, with revenue surging to 68.5 crore rupees from just 12.8 crore rupees a year ago as well. So 5% downtick that you're seeing coming in on this particular counter as well. And when you talk about the loss, that has really narrowed significantly to 2.6 crore rupees from over 23 crore rupees. There's a caveat that you're looking at, though. Gross margins that are remaining under pressure. The bigger story, of course, is the order pipeline. So that's something that you're looking at. 256 crore rupees on the books and more than 20% of the opening at 527 order book already executed. At positive EBITDA, defense remains the core engine, contributing 60% of the mix. Let's move on and talk about something like a coal tape partner developers that has turned in a sharp Q1 turnaround, with revenue jumping to 920 crore rupees from just 82 crore rupees a year ago. So you're looking at that 12% nearly rise coming in, surge at that coming in for this particular counter. And it's the EBITDA that swung to a 190 crore profit, while net profit came in at 146 crores. So quite healthy there as well, versus a loss last year, of course. So the driver was execution, with 1.27 million square feet completed, and that's across Pune and Mumbai. You're looking at higher margin Life Republic that has also really helped this particular counter. In terms of its earnings in the first quarter, realizations coming in at a strong 29%, collections also climbing over 30%. Looking ahead, 6 Mumbai redevelopment projects at 6,000 crore rupees in the gross development value, with 6 more MMR launches planned. Let's move on and talk about something like an anti-knee waste that is seeing a sharp profitability hit, and that's in the first quarter. Look at that 6.7% downtick coming in, and that should tell you how the numbers have looked like. But when you talk about just the pure numbers as well, you're looking at the revenue rising about 5.5%, driven by some of those higher volumes. But that growth, of course, did not translate into the bottom line. So you're looking at net profit plunging a whopping 95.5% from a year ago. The big pressure point is operating leverage, though, with higher operating expenses compressing EBITDA margins to 6.6% from a much healthier 22.3%. So back to single digits from the previous double digits, and high double digits at that as well. So while volumes are moving in the right direction, the Q1 numbers did raise a clear question around the cost control and the path back to healthier margins. Moving on, let's talk about KEC International that has had a little bit of a weak start to the fiscal as well. Revenue declining 24%, profit falling, profit after tax, in fact, falling about 41%. On a year-on-year basis, the pressure is coming in from 2 key areas as well. So you're looking at delays in payments for water projects and the continuing crisis when it comes to West Asia, which has disrupted project execution. And when you talk about KEC, the issue is less about demand and more about the timing of cash flows and execution that you're looking at. The key question is going to be how quickly water project payments normalize and West Asia operations stabilize. That's going to be critical for the company to rebuild momentum in the quarters ahead. Moving on then, let's talk about Zee Entertainment's first quarter numbers showing a clear split between revenue growth and profitability. Revenue rising about 4.5%, EBITDA plunging nearly 58%, dragging margins down to just 5.3% from 13.1% a year ago. Net profit, we're looking at that also falling 47%. So the big pressure point, of course, is advertising, because you do have ad revenue that's, taken a dip of about 12%. On the flip side, subscription revenue, that's grown at a healthy 16% as well. So while the subscription engine is firmer, you do have ad weakness that is clearly taking a toll in terms of overall profitability. And moving on then, let's talk about what the brokerages are also saying. So Citi is actually staying cautious on Zee Entertainment, and of course so is the last street with the 3% downtick coming in. But when you talk about Citi as well, they're maintaining their sell rating but raising the target price to 80 rupees from 75 rupees. The brokerage is seeing a potential strategic boost coming in from Zee's return to sports, including FIFA and other football properties, which could really help expand reach as well. So the big question, of course, remains advertising. And Citi is saying that the recovery in ad revenues is going to be very critical when it comes to margin expansion. At the same time, rising investments and some of that intense competition could really keep pressure when it comes to the returns as well. So for now, Citi is saying that execution in sports is going to be the key metric to watch. Let's also move on and talk about Mahindra & Mahindra starting the new fiscal on a strong note, with July numbers showing broad-based momentum across production, sales and exports, across a little bit of profit booking perhaps that you saw coming in when it comes to this quarter. But when you talk about numbers as well, total production's risen about 20% to over 1 lakh units, sales climbed about 25%, exports were the standout though, surging about 47% on a year-on-year basis. So within the portfolio as well, when you take a closer look, you've got a Thar and Thar Rocks production that's risen about 15%, Bolero production that's jumped about 37% as well. And when you talk about the EV story, that in fact is also gaining pace, so production up about 35%. Overall, the numbers do point to healthy demand across both core SUV segments and the electric vehicle portfolio. Moving on then, let's talk about something like a Yatharth Hospital that is delivering strong top-line growth in the first quarter, with revenue surging 51.5% to somewhere close to 390 crore rupees. EBITDA also rose 39% to 92 crore rupees, although margins are the ones that have moderated from a year ago as well. And when you talk about operationally, there are several positive signals that you're looking at. So the ARPOPs, that's risen to 7%, bed occupancy is improved to 68%, new hospitals also contributing more right now, revenue mix risen to about 27%. So you're looking at better bed utilization as well. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है, बैठ सकता आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
the news, Ayush.
Since when do we do scripts?
Fair point.
Picture this. The biggest stage. Floodlights. Wow. 4K. The works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
Elevated oil prices drag sentiment on Dalal Street. Nifty ends in the red, down 0.4%, but sees a jump of 22 points post-gas. Tata Consumer Products and Max Healthcare were the top losers. Broader markets outperformed benchmarks. Oil extend its 4-day rally as Trump's tougher demands on Iran complicate hopes of a deal to reopen the Strait of Hormuz. Brent holds near $90 a barrel, with WTI staying above $84, keeping geopolitical risk firmly in focus. As US sanctions bill moves forward, sources tell NDTV Profit that OMCs are unlikely to curb Russian oil buys despite fresh US sanctions threat. Refiners are exploring alternate crude sources. The mutual funds industry bounces back strongly in July as debt funds lead charge. Mutual fund industry sees rupees 2.36 lakh crore net inflow. Active equity inflow dips. Small caps continue to attract investors. And a big win for the Adani Group. A US court dismisses prejudice the criminal charges against Gautam Adani, Sagar Adani. A dismissal by the US court follows DOJ's independent review of the case. The government extends reduced PM e-drive subsidy for electric two-wheelers to 2028. Subsidies have been capped at Rs 5,000 per vehicle from Rs 10,000 earlier. Parliament panel pushes sweeping reforms to make private healthcare more affordable. The panel seeks immediate legal mechanism to cap charges for private hospital rooms, recommends shifting healthcare services from GST exempt to zero-rated GST. At least 132 people have been killed, 570 have been injured, and over 2,000 are missing after a magnitude 7.4 earthquake struck Colombia. The government declares a national disaster after Colombia was hit by one of its largest earthquakes in years. Hello and welcome. This is Profit 360 on NDTV Profit, and I'm your host Kargi Shetty. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's first begin with how the markets ended. So benchmarks ended near the day's low, with the Nifty slipping below 24,500 and the Sensex losing more than 350 points. Selling pressure, on the other hand, stayed broad-based on the close. Let's go over to Parth for a complete roundup of how the market ended.
Starting with the daily closing auction session update, Nifty saw a jump of 22 points while Nifty Bank saw a jump of almost 80 points after the closing auction session ended. This clearly shows an improve in liquidity during that session if we compare with the huge with the huge jumps that we used to see about a few days back only. Now coming to the market performance, Nifty has closed in red, down 0.4%. This was mainly led by Tata Consumer Products and Max Healthcare, both of which were the top losers in the index, seeing a downtick of almost 3% today. On the broader market side, they have outperformed the benchmark, with Nifty Midcap 150 closing flat today, mainly led by Godrej Properties and Crystal, which were the top losers of Nifty Midcap 150, each seeing a downtick of almost 3.5% today. However, on the Nifty Small Cap 250 side, it has closed in green, seeing an uptick of 0.2%, mainly led by Chennai Petroleum Corporation and Finolex Cables, both of which were the top gainers, seeing an uptick of over 14% each today. On the sectoral side, all of the sectors have closed in red, with Nifty Pharma and Nifty IT being the only ones that have managed to close in green. Nifty Pharma snapped its 2-day losing streak today, became the top gaining sector of the day, seeing an uptick of almost 1%, mainly led by Glandmark Pharma, which was the top gainer, seeing an uptick of almost 11% today. On the bottom side, Nifty FMCG was the top losing sector, down over 1%, mainly led by Tata Consumer Products and Nestle, both of which were the top losers. Tata Consumer Products down over 2.5%, while Nestle India also saw a downtick of around that 2.5% range. If we talk about the sectoral trends, then Nifty IT closed in green for the third day in a row, while Nifty Bank closed in red for the third day in a row. Nifty Auto and Nifty FMCG have ended in red for the second day in a row, while Nifty Metal has also snapped its 2-day gaining streak.
Right, thanks for that, Parth. But let's shift our attention to the crude market. Oil prices surged for a fourth straight session, with US crude nearing the $90 per barrel mark as hopes of a full reopening of the Strait of Hormuz continue to fade. Markets remain on edge amid the growing deadlock between Washington and Tehran. President Donald Trump has demanded compensation from Iran for casualties suffered during the conflict and said that the US Navy effectively controls and keeps the Hormuz open. The remarks came after Iran insisted that the US must pay for war-related damages as a precondition for reopening the strategic waterway. The escalating war of words is keeping energy markets jittery. Listen to Trump's comments on this.
You said you're low-keying it with them, that you're semi-negotiating. What exactly does that mean?
Well, they asked for reparations, you might say, or they asked for money for the damage that we've done. I said, that's a good idea. Well, we're going to ask for money for the damage they've done over a 50-year period. We think their family should get damages for killing their person or their child or mother, father that were protesting. It's at least, it was 52,000 a month and a half ago. So now what is it? So if there's damages to be paid, I think Iran should pay those damages. Well, it's open now. We're taking a lot of shit. It's open now. Look, the only one that has control of the Strait of Hormuz right now is the United States Navy. We have a blockade that's been infallible. It's a steel wall. And we let people in that we want to let in, and those people come in, and they've been coming in and they're going out. So it's actually open now. We do not let them go into Iran. They're not admitted into the strait to go to Iran.
Right, and as that uncertainty continues, a fresh US sanction threat also looms. Sources says refiners remain in wait and watch mode, citing supply security and limited alternatives. Any curbs on Russian crude could raise procurement costs. Sasa is now here with more details.
Right, state-run oil marketing companies are unlikely to immediately cut back on Russian crude despite the latest sanctions threat. Now, sources say that OMCs are currently in wait-and-watch mode. That's because the sanctions bill still has to clear the US House of Representatives and be signed by the president. So, much will depend on how aggressively Washington chooses to enforce them. India, meanwhile, imported a record 2.78 million barrels a day of Russian crude in July, which is more than half of the total crude imports. Therefore, analysts also don't expect a major disruption for now, but they warn that replacing Russian oil at these volumes would be very difficult. Refiners are also no longer getting discounts on Russian crude, but they are still likely to buy it as long as it remains commercially attractive. At the same time, they are also exploring alternatives, including more crude from the UAE, Oman and Venezuela. If required, they may also buy more from the US if the restrictions are imposed. For now, Indian refiners are well stocked through September, with tenders for supplies beyond that expected around mid-August. The bigger concern, however, here is cost. If Russian supplies are curtailed, OMCs could end up paying more. Even now, around 85% of India's crude imports are now, bought through spot purchases, which are generally more expensive than term contracts as refiners have been prioritizing supply security over price. So the strategy for now is simple: keep buying Russian crude, diversify where possible, and wait to see how far Washington actually takes the sanctions threat.
Right, thanks Asa. Clearly crude continues to remain in focus, but shifting our focus now, addressing EPack 2026, RBI Governor Sanjay Malhotra said that India is at a crucial stage to leverage artificial intelligence in finance. He highlighted the country's advanced digital infrastructure, including Aadhaar, UPI and DigiLocker, and said that these platforms can help the private sector use AI to make financial services more accessible. Listen in.
We in India stand at a unique vantage point to leverage AI. We have the most advanced public digital infrastructure, whether it is Aadhaar, the UPI, DigiLocker, ONDC. We are trying to build and improve and expand the unified lending interface, the account aggregator. These are all public goods on top of which the private sector can build AI because it has the potential to do for financial judgment what UPI did for financial transactions. That is, make it instant, granular, and available to the last mile.
My colleague Piyush asked IDFC First Bank CEO V. Vaidyanathan about ways to prevent cyber attacks. He said that there is a lot more to be done to strengthen cybersecurity, warning of several unknown risks from AI. At the same time, V. Vaidyanathan also pointed out that AI can be used as a counter mechanism to tackle cyber threats. Let's listen into his comments.
But when it comes to cyber security, there was a talk that Mythos could affect banks, infrastructure, digital infrastructure. What are some of the steps that banks should take to ensure that such cyber? We also saw BOB had one major cyber attack recently. In terms of data privacy, what needs to be done?
Well, lots has to be done. I think it's a cyber security, as you know, is a very serious issue. And it's unknown, and whatever is unknown is we have to be more careful about. And I think, like Governor very correctly pointed out, that which we fully agree with, that if AI is the risk, then AI is also the counterweight.
And in a major legal relief for the Adani Group, a US court has dismissed with prejudice the securities and wire fraud charges against Gautam Adani, Sagar Adani and Vineet Jain, bringing the criminal proceedings to a close. The court accepted the DOJ's motion to dismiss, finding a substantial legal basis to do so, while also saying that it was satisfied that Adani's $10 billion US investment pledge was not consideration for the dismissal. The charges cannot simply be refiled. Let's go across the minutes for a deeper dive on this.
The long-standing case with the Department of Justice in the United States involving Gautam Adani, Sagar Adani and Vineet Jain has come to an end now, with the court closing the case and dismissing charges against them. Now, there are a few things you need to know about this. Firstly, that the court's order came on the back of the DOJ's request to withdraw the case and to close the matter. This is because the DOJ, as the chief prosecutorial authority, decided that it had no evidence to move forward in this case and found that this case was one that would not stand within its prosecutorial jurisdiction. The second important thing to know about this is that the court was satisfied that Adani's $10 billion US investment plan was not a consideration for dismissal. This was an important issue that was taken up over the last month or so when the DOJ sought dismissal of this case, saying that was this investment plan involved. The court has found substantially in the order that no, there was no relationship between Adani's plan, 10 billion investment plan, as well as the DOJ's decision to withdraw the lawsuit. This is a very important finding. Apart from this, also important to note that the court simply didn't look at the DOJ's request to withdraw. It also substantially and substantively analyzed the issue, and it said that the legal charges were not valid and it could be dropped. This was because of the key disclosure made. One of the representations that was alleged to be misleading investors was about the anti-bribery compliance policy. The court found that this is just corporate puffery, standard language, and it's non-actionable, and that means it would not legally be binding on them as a statement saying yes or no about bribery specifically in relation to the allegations. So these were the key findings. Now, important moving on from here, that this case was dismissed with prejudice. That means it cannot be brought again. It is definitively closed and a clean sheet has been given. Important to note that This is following an independent analysis by the DOJ themselves, with the courts recognized, and now the matter moving forward has been completely closed.
Right, thanks for that, Nimit. And earlier today, NDTV Profit was speaking to Mahesh Jethmalani, senior advocate and former member of parliament, where he said that the dismissal of criminal charges against Gautam Adani, Sagar Adani and Vineet Jain amounts to a complete clean sheet for the three executives. Listen in to his comments.
The trial court says there was no prosecutable evidence, right? Now, when the trial court itself says there's no prosecutable evidence, it's accepted the DOJ's case that we should never have started this case because there was never any evidence. A, B. Now, the third part is the 10 billion. As far as the 10 billion is concerned, the judge said, I want to make sure that this 10 billion which has been invested is not a quid pro quo for withdrawing the case by the DOJ. And after a fairly long gap between what he said he wanted to do and his final decision, which undoubtedly involves some investigation and inquiry into the 10 billion incentive, he has given a complete clear chit on this 10 billion. That is a completely independent decision to invest and has nothing to do with either the DOJ's withdrawal or Adani's decision to invest.
Let's now shift our focus to the mutual fund industry. The mutual fund industry has bounced back strongly in July, with debt funds leading the charge after seeing outflows in the previous month. Now, while overall flows saw sharp recovery, active equity inflows moderated marginally, with small cap funds continuing to attract the bulk of investor interest. So what drove the July rebound, and what does the latest Amphi data tell us about investor appetite across debt and equity funds? Let's go across to Alex for more details on this.
Interesting data coming through in the month of July for the mutual fund industry as a whole. First of all, there's an inflow of over 2 lakh crore rupees, but that's primarily on account of fixed income mutual funds. This happens at the start of a quarter. And so in July, you had inflows of close to 1.9 lakh crore rupees that came through into fixed income mutual funds. The more interesting point is what happens with active equity as a category, and that has seen inflows of about 24,697 crore rupees. That compares with nearly 29,000 crore rupees in the month of June, so it's declined. It's more significant because you had new fund offers that accounted for about 770 crore rupees of the inflows into these mutual funds in the active equity category, and it was less than half that value in the previous month. What's more, the outperformance of the broader markets in the recent past has caused more retail investors to gravitate towards mid and small cap funds. They've accounted for a lion's share of the inflows. On a net basis, about 7,767 crore rupees has gone into small cap funds and about 6,200 crore into the mid cap funds as a category. Large cap funds have gotten an outflow of about 1,300 crore rupees, and multi-cap funds have actually gotten inflows of about 3,300 crore rupees. Flexi-cap as a category, which is the most diversified segment of this entire overarching block, has gotten inflows of over 4,700 crore rupees. Beyond this, of course, hybrid funds have gotten inflows of about 11,500 crore rupees, and some amount of slowdown in the flows into multi-asset funds has taken place, but that is still robust at over 3,750 crore rupees. What is more interesting to me, though, is the fact that other ETFs as a category have gotten inflows of over 9,500 crore rupees. And that tells you that people are trying to invest in lump sums, and they're gravitating towards ETFs as a mode of investment. And the final point, of course, is that your SIP gross inflows have stayed constant. They've actually edged higher than the previous month at well over 31,000 crore rupees, which is a positive number. So all told, the takeaways are that equity inflows have cooled off just a tad bit. This is par for the course because you've seen a fair bit of uncertainty in the equity markets here. But the SIP flows remain robust, and inflows into the small and mid-cap category have inched up to a multi-month high, which is also something to pay attention to.
Right, thanks for breaking that down, Alex. But let's shift our focus to some corporate developments now. A setback for Sun Pharma's plans to launch oral semaglutide. The Delhi High Court has directed the company to seek the court's approval before commercially launching its proposed tablets in the patent dispute with Novo Nordisk. Let's go over to Nimit for more details on this.
Sun Pharma's plans to launch its oral semaglutide drug have suffered a huge setback, with the Delhi High Court ordering that any such launch or commercial launch will require prior court approval. Now, this comes from a Novo Nordisk patent infringement lawsuit, which said that Sun Pharma has completed clinical testing and that its drug composition, its oral tablet composition, infringes the Novo Nordisk's patent. Now, what the court said, it asked Sun Pharma to produce its composition, which it did not have at the moment, but it said it will produce that before the court, and it alleged that its composition does not infringe Novo Nordisk. But in the meantime, the court has said that you cannot launch commercially a product which would infringe it. So before launch, it will have to submit an affidavit to the court with its composition saying that it's ready to launch, and then the court will decide whether it can be launched based on the patent claims made by Novo Nordisk. Now, this is a huge setback for Sun Pharma, who will now have to seek the court's approval before a commercial launch of their oral semaglutide product.
Thanks for that, Nimit. But shifting focus, a parliamentary panel has called for an early conclusion of the India-US trade deal, warning that higher US tariffs are weighing on India's economic interests. My colleague Rishabh is now joining us with more details on the panel's key recommendations. Over to you.
Absolutely, a major sort of recommendations coming in from a parliamentary panel on India-US trade relationships. Number one, of course, is the panel's recommendation is that the trade deal between India and the US gets finalized at the earliest. They also said that at elevated tariff levels at about 18%, earlier India's tariffs used to be just about 3% pre-Trump, what we saw, and they said that this is also impacting the Indian economy and exports, and that needs to be dealt with first. Apart from that, there were a lot more recommendations that came in. Number one was they urged that India somehow manages to bargain tariff parity on gems and jewelry with the likes of Mexico, Canada and Switzerland. Apart from that, they also pushed for India to use the trade surplus that it has in chemicals, roughly about $1 billion worth trade surplus, that needs to be used to bargain better when it comes to getting better in terms of agrochemicals and petrochemicals, in terms of getting the tariffs better there. Apart from that, the panel has urged swift rollout of turtle excluder devices. This is for trawlers, and because US has currently banned Indian wild-caught shrimp, this is something that will help India overturn that ban as well. What the government is, what this panel is also looking at is, of course, ending dependence on US for aquaculture inputs, and this is going to be via a self-reliance scheme that this panel has suggested. Apart from that, they're also suggesting that the textile ministry picks up certain warehousing hubs inside major US ports, and this is to cut the shipment delivery timelines as well. So a lot of more of these recommendations that have come in, you can read about it on our website as well.
The government is continuing its engagement with Meta, with safeguards around deepfakes, child sexual abuse material and content moderation now in focus. Meta has been asked to strengthen human review and prevent identified deepfake content from recurring. Let's go back to Rishabh for more details on what exactly this means.
Absolutely, the Meta versus Meti saga continues. It has spilled over into the current week as well. We'll see more of this engagement coming in between Meta and Meti. A few key demands from the government side and what Meta is doing about it. The government has said that Meta's content policies should comply with Indian law and Indian cultural context as well. That is something that the government has really put its firm foot down on. They've said they've not demanded for any sort of an algorithmic overhaul, but what they've seen is that content from prominent and verified handles, that should not be impacted. What they've also said is that there should be a human in the loop sort of a review for these mechanisms. It should not be just any sort of automated systems that are making this deal down. So that's what we're seeing when it comes to Meta versus Meti.
Thanks for that, Rishabh. And now, speaking at the HSBC NDTV event, Gujarat Chief Minister Bhupendra Patel highlighted GIFT City's transformation into India's global finance hub. He credited Prime Minister Narendra Modi's vision and said the IFSC and bullion exchange are giving fresh strength to the country's financial ecosystem. Let's listen into what he had to say.
NDTV and HSBC आयोजित ग्लोबल कैपिटल कनेक्ट गिफ्ट सिटी एडिशन कार्यक्रम में अपनी सौनी साथे मंच पर उपस्थित NDTV નેટવર્કના CEO અને એડિટર ઇન ચીફ શ્રી રાહુલ કંવલ, HSBC ઇન્ડિયાના ઇન્ટરનેશનલ વેલ્થ એન્ડ પ્રીમિયર બેન્કિંગના MD અને હેડ શ્રી સંદીપ બત્રા, આમંત્રિત સર્વે મહાનુભાવ, મીડિયાના મિત્રો, સૌને મારા નમસ્કાર. HSBC NDTV ને ભારતના ગ્લોબલ ફાઇનાન્શિયલ ગેટવે ગિફ્ટ સિટી વિશેની આ ખાસ એડિશનના આયોજન બદલ અભિનંદન પાઠવું છું. યશસ્વી વડાપ્રધાન શ્રી નરેન્દ્રભાઈ મોદીના દેશના ફાઇનાન્શિયલ સેક્ટરને ગ્લોબલ બનાવવાના વિઝનથી ગિફ્ટ સિટી નિર્માણ પામ્યું છે. આદરણીય શ્રી મોદી સાહેબ સમય કરતાં 2 કદમ આગળ વિચારે છે અને ઇમ્પ્લિમેન્ટ પણ કરી બતાવે છે. જો વિકાસ માટેનું વિઝન હોય તો કેવું ટ્રાન્સફોર્મેશન આવી શકે તેનું ઉત્તમ ઉદાહરણ આ ગિફ્ટ સિટી છે. એક સમયે જે સ્થળે ખેતરો અને સાબરમતી નદીના કોતરો હતા ત્યાં આજે વર્લ્ડ ક્લાસ ફાઇનાન્શિયલ ઇન્સ્ટિટ્યૂટ કાર્યરત થાય છે અને ગિફ્ટ સિટી દેશના પ્રથમ ફાઇનાન્શિયલ ટેક સિટી તરીકે પ્રસ્થાપિત થયું છે. વડાપ્રધાન શ્રી નરેન્દ્રભાઈ મોદીના નેતૃત્વમાં ભારત વિશ્વની 3જી મોટી આર્થિક સત્તા બનવા તરફ આગળ વધી રહ્યું છે. ગિફ્ટ સિટીમાં કાર્યરત દેશનું એકમાત્ર ઇન્ટરનેશનલ ફાઇનાન્શિયલ સર્વિસ સેન્ટર અને બુલિયન એક્સચેન્જ તેમાં નવું બળ આપે છે. અહીં બેન્કિંગ, ઇન્સ્યોરન્સ, એસેટ મેનેજમેન્ટ અને કેપિટલ માર્કેટ સર્વિસ જેવી સેવાઓનું પણ સંચાલન થઈ રહ્યું છે.
And with that, it's a wrap on this edition of Profit 360. But stay tuned to NDTV Profit for more news and updates.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
ये लीजिए भाई, मैंने बनाया है, रख सकता आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है श्रीनगर तक? अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor,
Hello and welcome to a very special show where we're discussing India's food safety crackdown, which has now moved beyond being a dessert or an appetizer to the main course of our news headlines every day. Now it's become a full-blown battle between businesses and regulators, pun intended, are sharpening their knives as they look at not just the little people but also the big brands that have now moved courts challenging these regulatory actions. The FSSAI has intensified scrutiny of liquor brands, health claims and food products, while Maharashtra's FDA under the new Commissioner Tukaram Munde has enforced a strong enforcement drive, has led to thousands of inspections, license suspensions, product seizures and unit shutdowns. With businesses questioning regulatory action and authorities defending consumer safety measures in the light of public health, the crackdown is increasingly being tested in the courtroom. The next phase of this story may be decided just as much by what judges think as much as those by regulators. We will bring in our esteemed guests on this shortly to get their perspective. But first, let me take you through all the action that has happened so far so you get an understanding of where we are and how we got there today. Let's talk about this food safety crackdown. Firstly, at a national level, the FSSAI has been taken multiple authorities, multiple brands and multiple sectors under focus. Firstly, let's talk about Old Monk. Now, Old Monk, Royal Challenge, Antiquity Blue, McDowell's have all been under the scanner in the liquor space about artificial coloring. And they have also moved court and we'll come to that in a bit. Another one has been Dabur. Dabur's 100% natural and 100% claim is also now moved to court, but the FSSAI is clamping down on the use of word 100%. It's a very big challenge that will go to advertising and branding across FMCG. VKC Nuts license has recently been suspended, and so has been Cheddar's specialty license also been suspended. Now that's at a national level. Now let's come closer to Maharashtra, where since the new Commissioner Tukaram Munde has taken over, we've seen 3,137 inspections, 165 suspensions, 55.72 crores seized. The bigger brands involved, Blinkit's license has been suspended for a warehouse, Reliance Retail is being investigated, and 5 oil units shut, Analog Paneer banned, and pharma licenses have also been cancelled. The important thing to understand is what is FSSAI targeting here? They say it's food safety. Now food safety, what does that mean? Insects, rodents, mold, fungus, contamination, labeling, front of the pack disclosures, product naming, ingredient declarations, and also marketing claims. This 100% claim that we spoke about with Dabur, age statements, quality claims. Now lastly, also alcohol regulation, flavoring practices, maturation claims, product identity standards, and of course, this all ties down to consumer deception. is the product exactly what the label says? Now, this big question here is to discuss whether regulations have been enforced correctly, whether they have been overreach of regulatory authority here, and whether businesses are doing everything they can, or is this a genuine crackdown on a genuine problem that exists? Where does that balance lie? To bring you all of that, we're bringing you three very special guests. First, the former director of the FSSAI, Anant Narayan, Bangalore chapter head NRAI, Mr. Anant Narayan, the former director of the FSSAI, Pradeep Chakrabarti, and Fatima Kachwala, who's a partner at JSA dealing a lot with these issues. Welcome to the three of you. Thank you for joining our show. Firstly, I'd like to come to you, Mr. Chakrabarti. I want to ask you, when this sudden crackdown that's happened can only be described by that one word, sudden. It seems like suddenly regulatory authorities have woken up and decided to clamp down on unhygienic practices, and also extended that to labeling issues and marketing issues and composition, so on and so forth. So where has this sudden wake up from the FSSAI and of course in Maharashtra the FDA come from?
See, this enforcement of the FSS Act, Food Safety and Standards Act 2006, lies with both the state and central food safety commissioner. In every state and union territory, we have one state food safety commissioner, and in central government of India also we have chief executive officer who is the central food safety commissioner. So enforcement lies with both the state and central. State has a unique structure actually. They have in every district they have one licensing officer and a food safety officer also, and top of them one food safety commissioner is there. So in our act actually it has been clearly stated how enforcement has to be done. And at central also we have central food safety officers who can also do enforcement. State also can do enforcement in a similar way, but they have better infrastructure. State food safety officers actually, it is the duty of the state food safety officer to collect samples regularly and send it to the laboratory for analysis. And if it is found that the product is not conforming to the specification, then they will report to the licensing officer, and licensing officer in turn will seek approval from the food safety commissioner, and then actually prosecution will be started. And prosecution is done by the adjudicating officer.
Mr. Chakrabarti, I understand that. What I want to get to it and the process, of course, I understand. Thank you for explaining that. I want to push you a little bit on this. Why has this happened now, all of a sudden? Was there a thinking that this is the time to go after businesses and look at whether there is compliance with all the regulations that you mentioned? Why has this happened now? That is the question.
Now, earlier also, FSSAI did this ban of Nestle Maggi noodles. That was a very big thing in India. And after that, actually, food safety, this food business operators, both the particularly big brands, actually, they were very much cautious. But after this COVID-19, this enforcement was a little bit slow. And in most of the states, it was negligible. And now, actually, enforcement lies with both the state and central government, and it varies from officer to officer. Now, this Tukaram Mundaji is taking the initiative, and he has started this initiative. Though some lacuna is there, but even then it has been started. And on his findings, actually, other state food safety departments also have taken the initiative. Now, analog paneer has been banned by Maharashtra, Gujarat, and Rajasthan, and now in Madhya Pradesh also. And I think it will be banned throughout the country. So a lot of violations have been observed.
And these food business operators, particularly the big brands actually, they have violated in two norms. One is the safety and another is claims and advertisements. And this Dabur actually 100% natural, pure, authentic. These are actually banned as per our regulation, claims and advertisement regulation. But they are doing this, so that's why actually summer it has to be started now. Tukaramji has started. That's it. That's why actually others are also following.
I'll take that point, and I also take your point as to the larger national issue that this is becoming, and or you also pointed to the fact that more bans in this space are coming nationwide across state enforcement agencies as well. Ms. Kachwala, I'll come to you next. As a lawyer who deals with this regularly, what sort of regulations exist? Of course, Mr. Chakrabarti hinted to how the regulatory process is driven through both centrally and at a state level, but what kind of powers do these regulations give? Because what we're seeing right now is immediate suspensions also. We're seeing for different sort of allegations that and different sort of notices that are being issued, the same penalty also coming through. So could you explain to us a little bit about what kind of powers are there behind these regulations, and whether this sort of action can be taken for all these allegations with the powers that the regulators have at a state and a central level?
Right. So, I mean, as Mr. Pradeep rightly said, I mean, the Umbrella Act is the Food Safety and Standards Act, under which there are rules and there are about 28 regulations. Now, in this widespread regulations which is there are a lot of compliances which has to be met by each food operator. Now, it's extensive, it's highly dispersed, so people usually do not know. It can be very small as maintaining your cleaning registers, or even maintaining a medical register for the people who are handling your food, or even the walls in the room that where you're cooking cannot have molds in it, has to be correctly painted, etc. So a lot of people are not aware of it, because of which now the non-compliances are coming to surface. Now, the powers are widespread. There's no question about it. They can come, they can inspect, they can take samples, they can issue notices, they can give you warning notices, they can give you suspension notices or cancellation notices. Now, there is a whole process which they have to follow. And I mean, if they come to your doorstep, you have to be cautious on at which step they have come to you. It always starts with a notice, which is an improvement notice, giving you an opportunity of 14 days to improve your non-compliances if they are of the reasonable view that there is non-compliance. After the period of 14 days, if you do not comply with what they have pointed out to you, then they will have the power to suspend you. Of course, there are certain wide powers where they can suspend you even without the improvement notice, but that is really in grave circumstances where there is a question of public health, and those kind of powers are to be sparsely used. So, therefore, you have to be sure at what stage they have come and where you can take it from. Before they even cancel your license, you have to be given an opportunity of being heard. Unless that is done, your license cannot be cancelled. So if they fall foul of any of these processes or safeguards that have been put under the Act for your benefit, you can move to court. And some of the people have moved to court and got a vacation of order or vacation of suspension order in the past.
Understood, and that's a very interesting point that we will be coming to shortly as well. We'll be discussing how the courts have dealt with it and how we can move forward. But before I go there, I'd like to speak to you, Mr. Narayan. Restaurants, of course, have been hit with these wave of regulatory searches and inspections, right? And of course, restaurants have not been okay with that. But the findings are key here, because when the regulators have found cockroaches, expired food, fungus in the food, missing hygiene records also, why should consumers believe that these are isolated incidents and not indicators of a deeper industry problem? How are you looking at this? Are you treating them as isolated incidents, or is there a larger push to sort of clean up the industry, so to speak?
Firstly, Nimit, you have put the points very absolutely well summarized, and my co-panelists have spoken very well on the issue. Coming to your question, Nimit, firstly, I don't believe in RDX form of democracy. Raid, demand, excess. I definitely don't believe in this. I will come to this. Prior to RDX, let me talk about. See, whatever is happening now, government rules are absolutely to be taken seriously by everybody. No second word about it. Be it a 5-star, be it a standalone, be it the smallest of restaurant, law is a law for everybody. But where I'm coming from, if you want to educate a girl child, you don't raid a girl's house. You build the education institutes, you educate them, you bring it to a certain level. Similarly, what I feel, the masses of restaurant, or it's a huge ocean. When there is a GST demand, when there is an income tax demand, when there is something else, OTPs come, messages come, emails come. When there is a license being taken, why cannot periodic inspection be done? Why cannot periodic training to be done? Why should this not be a case of where every week, every month, every year, this should be taken in a phase where we go hand in hand? I truly believe in Hum Saath Saath Hai and not the Ramsey movie Godzilla or Gorilla. This is my personal view, and I feel
that's a fair point to make. But the question, so I spoke to Mr. Mundi about, and I posed this exact question to him about a couple of weeks ago. He says that these laws have been in place for a long time now. These are very well published. People can easily make themselves aware of this. And is hygiene and training something that the government or the regulatory bodies must look at, or is it something that they can only see whether the businesses have complied with? What you seem to be saying is that onus should fall on the regulatory authorities rather than on the businesses themselves, which doesn't seem like a fair proposition. Would you agree?
I strongly feel it's 50-50. It's not the whole responsibility of the government. Government is like a huge joint family. One joint family, Dada Dadi cannot control. I agree. I come from the viewpoint of what government is trying to say. At the same time, we are also huge body. As an association, we train them, we teach them. But if more sources come into training, teaching, this will be hand-in-hand growth. We want to see India sparkling. We don't want garbages to be shown about India. Also, I want to put in a little extra point. Cockroaches and rats are not hosted and grown inside restaurants. These happen in the public gutters or the public roads where the sanitation system is not good. So where the government is wrong, it should come in. Where the restaurateurs are wrong, it should come in. The machinery should be in such a way that it takes both together and ensures that the industry, the restaurateurs grow, the country grows, and the public is taken care. Good food is the right of any civil society. I'm fully with you on this.
I'll take that point, Mr. Ryan. We'll come back to that in a bit. First, we'll move back to Ms. Kachwala. You were speaking about the kind of actions that courts are taking. I think that is one of the key points that is going to drive how this discussion goes forward, because regulatory overreach has been the demand that restaurants and businesses are taking in court. While the regulators are always saying that public health, there's an exception for public health risk. I'd like to understand from you this exception on public health risk, how it's being used by regulators and what courts are saying in the different cases that you're tracking.
Right. So it's very interesting that when the procedure has been set out that an inspection will be conducted and then an improvement notice will be given, and after an improvement notice, a period of 14 days will be given to somebody to rectify the mistakes. And thereafter, you will suspend the license and shut down the business temporarily till they rectify the mistakes. Now, if you want to surpass that entire thing, the threshold has to be really high because you're shutting down somebody's business. Now, courts in that sense is not going to override the view of the regulator whether you are in compliance or no. But the courts for example, in the present situation where writ petitions are moved to the High Court, the court in that capacity is definitely going to keep a check on excessive jurisdiction which is being exercised by the department, or there is breach of natural justice where no opportunity is given to the food operator to even put its point across or even cure or rectify its defects, or how grave is the circumstances for exercising these kind of rights on urgent basis. Is it really on public interest, or a balance of equity can be struck? So in two of these cases, the courts, one is the Radisson case and of course the other one is the Purnima case, although the matter is sub judice, but there the courts looked into a point where was it really a necessity to strike down or shut down the business by issuing a suspension notice without giving a notice of improvement. And the court intervened and converted the suspension notice into an improvement notice. So the business comes back, opportunity is given to the person to rectify its errors, and then you go ahead with your operations. Another point which came to the court's attention is that is everybody treated at par? Are private establishments getting shut down urgently or in this manner, and stricter norms are not being enforced on public establishments? So there was a kind of a inquiry which was done on that angle also, including what are the investigation hours which are given for a park hotel, which is about 9 hours, as opposed to a public establishment, which was about 45 minutes. So court also will make sure that there is fair treatment, there is reasonable view taken by the department, the procedures are followed, and there's no harsh steps taken against any particular entity or establishment. So that is the view.
That's such an interesting point you make about the number of hours of investigation that are going into public establishments versus private. You say for private it's about 9 hours and for public it's about 35 minutes. Such a stark difference. Let's come back to Mr. Chakravarti on that. Not only this, but also trying to understand. See, earlier the FSSAI was broadly known as a body that looked at contamination as an issue. Now, in these recent examples that we're discussing, it's also going after labeling, marketing claims, product identity. What has shifted in the thinking behind the FSSAI as a body from moving to a smaller scope of work to a much larger purview where it's covering a much larger now mandate that it's bringing charges for more than just contamination of food?
No, when we started implementing FSS Act in India, that time also we had this regulation, 6 regulations with which we actually have started. And they are also packaging and labeling regulations was there. So when you are ensuring when you are selling any product, you have to comply with all these things, food standards, food product standards, then this packaging and labeling regular, then microbiological standards. So these are, and contaminants, toxins and residue regulations. These 4 things are very important. But initially, actually, due to paucity of staff, actually we concentrated on standards. But now actually labeling and labeling thing also started actually, because this Dabur earlier, they used to sell real juice. Real is the registered trademark, but they were mentioning real juice, and this 2018 regulations, it has been mentioned that real is only registered trademark, so they cannot use this. So after that, actually they stopped this real juice. And this authentic and then pure, natural, 100%, these are all banned actually as per this regulations. Now actually we are depending on all these things, and the product is considered safe only when these are all.
Mr. Chakrabarti, I understand that point that you're making. We're running out of, if in one line you could just summarize the answer here, because what we're really looking to understand more than anything is how is the increase of, if the laws always existed, how is the scope of work increased now? Has there been a thinking behind the regulatory body where we need to expand our scope? The laws may have existed and the laws could have been implemented back then, but the laws are being implemented today. So my real question to you, if you could answer in one line, is why is that happening today?
It is happening today because a lot of contravention has been found. See, in Bangalore, a number of five-star hotels' kitchens were found selling using actually expired food products. These are actually unsafe food. As per Section 29 of our regulation of the FSS Act, actually, there is provision for imprisonment also for using unsafe food, because unsafe food may cause health hazards. So that has been found, and claims and advertisement regulations also are there, and so many misleading claims has been found actually
I'll take
that
point that you're making. Thank you. That a lot of claims have been found now, and maybe they'll look for now, and that's why the excessive enforcement of the mandate has been increased. Mr. Narayan, you spoke about the division of responsibility and how this needs to work together. Now, at a time when consumers rely heavily on ratings and food delivery platforms as well, just want to understand, do you think the industry has done enough to make food safety transparent and measurable at all from an industry perspective?
Very good question. It has happened, but a long way to go. To be very honest, a restaurateur or an aggregator or many people, it's a race for survival, race for growth in India. I think, like I spoke initially, this should be hum saath saath hai. The politicians, the government machinery, aggregators, the restaurateurs, the media, a lot of people should come together and ensure that what has to be done at what point of time, that should happen. A raid per se in 30 years once and closure for another 30 years is not the way ahead. It should be training, it should be educating, it should be constant. The whole of the ecosystem of the industry should stand hand in hand and work for this industry hand in hand and make this a shining Bharat's restaurants, and not the way it's happening. Dum raid.
There's a long way to go. I'll take that point from you. I'll take that point that there's a long way to go and we need to work hard, and which is the point you're reiterating. Last question to Ms. Kachwala before we close this out. I'd love to understand from you, if I am a company or I'm a restaurant or a business today that's been served a notice or I've been directly suspended, if you could give us a walkthrough quickly in 1 minute or so about what are the steps I can take now and how I can get relief from court.
Okay, so I am assuming that you are served with an improvement notice. That is the first step. The moment you get that, you will get at least 14 days to rectify the non-compliances which have been listed in the notice. So they have to identify which are the non-compliances, and they will also suggest what are the steps you need to take. So you have 14 days to comply with that. If you do that, please write to them and tell them that come and take inspection. See, I have complied, closure. That will be the end of your investigation. If you do not comply with that improvement notice, then they have the right to come back, inspect, see that there is non-compliance, and issue a suspension order. Now, it doesn't end there. That suspension order can be challenged by you if you feel that it is wrong, either by way of an appeal to the Commissioner of Food Safety within a period of 15 days, or you can move the High Court in a writ jurisdiction. If you still, after the suspension order, continue to be in violation of the provisions of the Act, you will be provided an opportunity of being heard, and after which your license will be cancelled. Now, at all these stages, you always have the right to appeal to the Commissioner of Food Safety or the High Court.
Perfect. On that note, I think that's a good note to close this out. Thank you so much for your time, Ms. Kachwalia, Mr. Chakravarti and Mr. Narayan. We really appreciate you being on this show and candidly sharing your views and the legal process with us so clearly. The question still remains very largely on what is going to be the future of food safety crackdown. Is this going to be a few large bugs caught in the net because of which everyone else is going to comply? Or is this going to be a larger, deeper and more stronger process? Like Mr. Narayan said, where both the industry and the regulator work hand in hand to improve food safety genuinely in the interest of the consumer. And finally, whether these legal issues, how the court is going to step in, and whether the court stepping in and putting businesses back on track because of regulatory failures on behalf of the FSSAI and so forth are going to be taken notice of, and if that's going to change their behavior on how they suspend licenses. All these questions are yet to be answered, but a lot of inputs from our guests. Thank you so much. And that's the end of our show.
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the...
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Let's get straight into the most interesting update today, and that has to do with the mutual fund data for the month of July. And there are several things that stand out. If you look at the number overall, you see that there's an inflow in the month gone by, a substantial inflow, and that is because this is the month of July. It's the start of a quarter, and understandably, therefore, you see a significant inflow into fixed income mutual fund schemes. That stands at about 1.87 lakh crore rupees. That is par for the course. What is more interesting, however, is the amount of money that has come through in equity mutual funds, and that has dipped. It has come in for active equity mutual funds at 24,697 crore rupees, and that compares with 28,973 crore rupees in the previous month. You also have to account for the fact that about 800 crore rupees in the month of July came through in the way of new fund offers. If I look at the flexi cap category, you've seen inflows of over 4,700 crore rupees. That compares with an inflow of over 5,200 crore rupees in the previous month. You have multi-cap that has gotten a sizable inflow. You have large and mid-cap that has gotten an inflow of about the same amount, 3,400 odd crore rupees. And interestingly, both mid-cap and small-cap actively managed funds have gotten substantial inflows on a net basis in the month of July. Mid-cap inflows stand at close to 6,200 crore rupees. Small-cap inflows stand at 7,800 crore rupees. And one more takeaway, beyond the fact that hybrid funds have gotten inflows of about 11,500 crore, that's par for the course. What I find interesting is that your other ETFs, which is primarily equity ETFs, have seen inflows on a net basis of over 9,500 crore rupees. What that tells me is that people are buying into the markets via ETFs. They're looking at the market scenario right now, and they're feeling a little more sanguine, but they're investing more when it comes to passive as compared to what they might have otherwise done in the active space. Is my thinking right? let me ask Gopakumar, who is the Chief Executive Officer and Managing Director of Axis Mutual Fund, who's speaking to me on the show. Gopa, thanks so much for taking the time and pleasure speaking with you. And we're going to speak about a lot of things with regard to B30 or below 30 cities and the flows in the mutual fund space. But your initial thoughts on the numbers as we see them. It's a little cautious, but it's still positive, isn't it?
Yeah, it's positive. Thanks, Alex. I think I've a long time I'm coming to your show.
Yes.
Thank you for hosting me on this. I think when I look at the numbers, I just now looked at the numbers. I think compared to last month, yes, there is a bit of a difference between 29,000 crores versus 24,000 crores. But one point I would like to stress on this is that a lot of large cap money is now started flowing to mid and small. And that is the large change we have seen. If you look at the large cap category, you have seen that it is a negative net flow. But also you need to think about and saying that even the flexi cap, the flows have reduced compared to the previous year. More important also you need to think about is that multi-cap as a category is a large comeback. Couple of points is that if you look at your typical flexi cap, the average holding has become large cap is almost 65 to 70%. So most of the investors today now started preferring multi-cap because it gives you a better diversification. And it started playing out. And we've been very clear for last 2 quarters that multi-cap as a category will start playing out much better than the flexi cap just because of the market cap allocations.
Yeah. Gopa, what are you hearing from what you've seen on the ground as well? Because if I look at the mid cap and the small cap flows for the month gone by, they're pretty robust. Cumulatively, on a net basis, stands at close to 14,000 crore rupees, right? 13,000 odd crore rupees. It's a fact that from the bottom in March, the broader markets have gained quite substantially. The mid-cap index is up 20%, small-cap index is up 30%. And money goes after good performance at the end of the day.
I think it's also a subject of the valuation, right, in terms of the earnings. We've seen the mid and small earnings are much, much better in terms of market cap. I think there is a flow of money now going to mid and small and the combination of that. And you can also see from a large and mid category also you have seen the flows, positive flows, which was not there earlier. If you look at 2 quarters back, large and mid was not a large category. Today is largely driven by people who are willing to take some more risk. That's another point. Third point is the valuation comfort, where people are seeing the earnings are looking much better in the mid and small. And you had a lot of overhang in the large cap as a category because the IT has been a very heavy weight. There are large heavyweights in the banking sector. In that sense, I think people are preferring to be at mid and small and reduce the exposure on the large cap. I think that's been playing out pretty well. I've been meeting a lot of distributors across the country. I think they've been advising large and mid and the multi-cap to the most of the investors from a 3-year to 5-year perspective. I think people have reduced their exposure in the large cap.
Very interesting.
That's not pretty well now.
Yeah. So, and by the way, the SIP data suggests that 31,961 crore rupees has come in on a gross basis in July. So it's more or less held steady. But I do want to ask about some of your conversations, Gopa, that you've had with distributors when you visited across the country. Because if you look at a large part of the flows traditionally have come from your top cities. If you look at your metro cities, you look at the Mumbai, New Delhi, Bangalore. But increasingly, the share that the mutual fund industry is getting from your below 30 cities, as they have been designated, has become pretty robust. What can you tell me about that?
I think that's largely driven by the fintech platforms. If you look at large fintech platforms, are able to get customers from a B30 cities. That actually is driving the large amount of SIPs. And if you really look at from the industry perspective also, 60-65% of the SIPs come from the fintechs. And today, most of even the MFDs as well as the fintechs and the digital platforms of the AMCs today are become truly Bharat in the sense that they're able to acquire customers from smaller towns. Our stronger belief is that the next growth of cycle from a growth perspective, from a mutual fund industry perspective, will come from B30 city. And the largely also because driven by even the saving and savers have actually changed. I always said that people are moving from the fixed income instruments like FDs, they're moving to equities. I think that's a large change. I think my belief is that next level of growth will come from B30 cities, and if you look at historical numbers also, you have seen that our penetration in the B36s are not as much as what it's supposed to be. But I think last 4 quarters, if you look at the B30 numbers, you have seen that drastic improvement in that numbers, because largely driven by these large platforms which are able to acquire. Third point is also that Amphi is also coming out with a circular where we can give a incentive to MFDs and the fintech partners who can acquire customers. I think that circular will come in. This also will help to deepen the penetration in the B30 cities. And I've seen a large change in that sense in the B30 cities. My view is that we are in the point of changeover from focusing only on top 10 cities to going towards B30 cities. I think that will happen quickly now.
Very interesting. And the other aspect also, Gopa, is that the experience that these investors will have, considering that the equity markets in India have not done too much over the last 2 years. And if we're able to, as a market, get out of this funk and start performing, then the accumulation that has happened over the last 2 years will bear fruit. And that itself will create a flywheel effect going forward, right? Because that's what you saw in COVID-19 for the larger cities. But having said that, what is the kind of data that you have come across with regard to these B30 cities to say, what is the average ticket size like? For example, what are people investing in? What are the categories that are generally preferred?
See, we have seen large change in the categories also. The people are preferring mid and small as well as large cap if you look at. I think there is a fair amount of investor education has happened in terms of B30 cities now. People now are able to differentiate between savers and investors. I've always said that I had to call out very clearly that as savers, you actually invest in FDs and the fixed income instruments. And as a investor, you actually invest in mutual fund. You are not a saver, you are an investor. There is a differentiation which has come in and people are clearly aware. When I said investors, because you have to go through the volatility. And I think today B30 investors are very, very clear that they will go through this volatility and it is playing out pretty well. As you said that, I think if you look at from a 2-year return perspective, I think it has not done much. I think people coming now in the B30 cities, as well as mutual fund first-time investors, not only specific to B30 cities, I think they will have a better experience from a 3-year perspective. I think I'm very clear that you will see the returns coming back quickly and you will have a better experience. I'm with you on this idea about they will have a better experience.
Yeah. The other aspect is what really is the best approach for these people, because Gopa, the mutual fund industry ultimately has morphed from a smaller number of products to offering a whole bouquet of products. And some might actually say that it invites the paradox of choice, because when an individual is faced with so many options, there tends to create a certain amount of paralysis and an inability to make a choice. So it's moved from having mutual funds to now having specialized investment funds as well.
That's right.
From the perspective of the investor in the B30 cities, though, simplicity is likely going to be the key.
I think that is also changed because investor education is becoming much more relevant today because these platforms are able to communicate customers much better than what individual advisors can do. In that sense, I think the advisors become much more democratized the way I look at it. So having said that, I've always said that, simple is quite a debatable word because it all depends on the asset allocation and the way the financial planning is done. More importantly, I've always said that simple definition is as long as the investor understands the plus and minuses of the product, and the product is simple. And I've been advocating that because it all depends on how the investor is looking at the different categories of funds together. But having said this, I think what is important from a viewer's perspective is that make sure that you invest the products very simple because investing can get much more complicated. But make sure that you invest, as Alex said, there are number of schemes today. I think if I had to add up all the schemes to put together, I think around 1,000 to 2,000, around 2,000 schemes are available, which are active, which are raising money. It's very important that you take a decision based on your own homework, or you can ask them, your advisor to decide and choose a fund for you. And more important, lastly, is to think about what is the risk you are taking when you are investing in a mutual fund as an instrument. So in that sense, there are multiple factors you need to think about when you're choosing it. I agree with you that today you'll have a number of more AMCs coming to the industry. I think you'll have spoiled for choices. It all depends on what you choose.
Yeah, and lastly, Gopa, it's been a while, as you pointed out, since I spoke to you last. And I think it's an opportune time for me to ask you this, which is that you've undertaken several changes with the way that the funds have been managed, and they've also changed their rankings in the way that they're performing as well, right? They're doing really well in several categories. So how important is it, in your opinion, for investors to stay the course? To say that if they dropped off midway, they missed out on the opportunity to ride the rally, and just as the markets go through cycle, you'll have certain approaches in the mutual fund space, particularly in the active space, go through cycle, where value, for example, will have its time under the sun, and so too will growth and quality.
Thank you for asking this question. I think we continue to be a growth and quality style focused funds. I think we've been there for the last 17 years. And after that, you have seen that 11 years growth style has done extremely well. I think we continue to be focused on growth style. And you have seen the changes, what we bought into our portfolio. And as you said, I think our performance is stacking up pretty well. Having said this, I've always said this, that, one of the questions you asked about selection of funds, what is important to think about is that it is just not to chase the 1 year, 2 year first quartile fund or a top performing fund. Usually you get to see that in your platforms or the MFDs. I think the very critical question you need to ask about is also volatility. As long as you choose low volatility fund, from a longer term perspective, actually you gain much better than looking at a top performing fund. I think that's a philosophy. If you look at most of the funds across what we built for the last 4 years, I think you see that we have a less volatile fund compared to most of the funds available in the market, and compared to our peer group also. So very important to think about it. The performance is important, but you need to also look at volatility. Very important to think about when you select a fund. Our objective is always clear that we need to continue to deliver returns to investors, and we are active fund managers, and we'll deliver return what is objective led by each and every fund what we have been constructing our portfolio.
Yeah, good to hear. Gopa, pleasure speaking with you as always. Thanks so much for taking the time.
Thank you, Alex. Thank you so much. Thank you. Really appreciate it. Thank you.
All right. Well, if we slip into a very quick break, more on the other side. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year,
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away.
Welcome back. In an emergency, you don't know how much you're going to spend. And that's particularly true when it comes to health-related emergencies. And usually, those are the worst kind because you have so little control. In fact, Policy Bazaar has a report out that talks about how much each of these emergencies cost. So it'll give you a sense of how much you should ideally set aside. And if you don't have the ability to set this aside, you should obviously think of getting and bolstering your health insurance. Siddharth Singhal Head of Health Insurance at Policy Bazaar, joining me right now. Siddharth, thanks so much for taking the time. Obviously, it's not a uniform scale across the country with regard to how much you would spend for a particular procedure. And when I'm talking about emergencies, all of these related to things like heart attacks or things like, treatment for cancer and stuff like that. So what does this report tell you? What are the findings of this report?
First of all, thank you so much, Alex, for having me on your show. Okay, so I think the practically reports kind of tells us a couple of things which we probably anecdotally know as well. As you age, your average claim sizes go up, which is kind of very, very obvious, because as a person ages, as a policy holder ages, the likelihood of hospitalization goes up. So it's almost like, when you are, let's say, in a age category of 25 to 30 years versus if you're a 60 plus year citizen, then the average claim size is almost 2.5 times. So which means also that the cost of hospitalization or the amount that you need to spend on a hospitalization is almost 2.5 times more when you are a 60 plus versus when you are a younger segment. And that's very, very, obvious as well, because as you are a senior citizen or in a higher age category, there are kind of a chronic ailments. There could be knee replacement, there could be cataract, there could be other diseases which are associated related to the age. So I think that is one of the major finding. The second major finding is there's as you just mentioned about that there is obviously no uniformity across the entire country. The tier 1 cities, which is largely, let's say, the large metros like Delhi, Mumbai, etc., the cost of hospitalization is much higher versus when you look at the tier 3. And, very, very, again, the report puts out certain numbers that if it costs, let's say, roughly about, on an average, about, 1 lakh or something in a tier 3 city, the same cost of hospitalization can go up to, 1.78 or 1.77 lakh. What it means is that, if you are a person living in a metro city and if you're in a higher age category, then the cost of hospitalizations are much, much higher for you, because largely, one, there is a higher propensity to get hospitalized. Secondly, in our metros and in fact, a lot of tier 1 cities, the healthcare is largely dominated by the private hospitals, where the cost of hospitalization can be quite high.
Yeah.
And over and above that, the third point which the report also points out, that in case of a chronic illnesses, for example, the heart conditions or the cancers, etc., the costs are even much higher. So for on an average, one cancer claim on an average, and this is includes lower cost claims as well and the higher cost claims as well. On an average, a cancer claim can be anywhere between 5.5 lakh, but a regular treatment can cost you anywhere between 30-35 lakh, which is a whole bunch of money. So I think the report points out in 2-3 different directions that health insurance is no more I would say a luxury, it's a necessity. Sure. Because the costs are increasing year on year, and specifically there are certain age groups, there are certain cohorts which are more prone to that higher cost.
Yeah. So I want to double click on a couple of these things, right? When you're saying that cancer and heart disease together accounted for over 860 crore rupees in claims, this is for one financial year, right? And that is emerging as the biggest driver for healthcare expenditure, despite lower claim volumes, compared with routine illnesses. Just the question arises when you're talking specifically about cancer, and you're talking about a chronic issue like a heart disease. This is something that you need to start covering well in advance. And if you already have signs or biomarkers that could point towards the possibility of something occurring down the line, then it becomes harder for you to get that coverage, right?
Yeah, so I think, rather than an absolute number, because that absolute number is a policy bazaar claims, obviously the larger market or the larger claims paid out would be much, much larger number that ways. But what I want you to kind of look at is the number that is 20% of all claims are related to the cancer and the heart diseases. And you are absolutely right. What we always recommend to the customers and everybody, across the board is when you are fit and fine, it's absolutely necessary that you buy a health insurance, because as you kind of, contract critical illnesses, there are options, but the options get limited. That could get limited in terms of a mandatory co-payment, or it could be in terms of certain sublimits. So I think it's always advisable that once a person kind of is young, fit, and fine. Across all age groups, of course, everybody should buy health insurance, but it's even more worth noting for young, healthy individuals to buy health insurance because they have all the options in the market available. They can choose any policy that they like. Then, but the fact of the matter is, health insurance is something. It's not like that. One can just pay the premium and get a health insurance of their choice. So I think it's always advisable that you get a health insurance when you're fit and fine.
But there are nuances to this as well, Siddharth, because if you're talking about specifically coverage that takes care of cancer treatment, just as you mentioned, the actual treatment in a hospital might account for a certain percentage. Your hospitalization will cost a certain amount, but then the regular treatment beyond that costs much, much more. So what do I need to do if I want to go out into the market, Siddharth, and buy a policy that covers me for the diseases that have been most prevalent? And you've listed out heart and you've listed out cancer, but I'm sure there are a few more that you can name that are the most commonly used claims for health insurance. So as a potential buyer of a health insurance product, I can protect myself for these.
I think it's a very, very simple point. I would say if somebody follows, you can cover yourself and your family across. So I think the first and the foremost is you just need to buy a comprehensive health insurance policy, which covers for your hospitalization costs across the type of diseases. So you don't need to buy a specific, illness cover. Like you don't need just only a cancer policy or only a heart policy or any specifically, let's say, a kidney policy. You just need to buy a comprehensive health insurance policy, and with a sum insured of, now there are options which are, let's say, unlimited coverage. That is, there is no upper capping. So a person can definitely buy an unlimited cover plan, which would kind of protect them from across such type of illnesses, whether it's cancer, whether it's heart disease, whether it's any kind of an ailment, it's a seasonal ailment or any other ailment, right? So I think one is to buy that. The second is important when you're buying a health insurance policy, that you have to buy certain riders which are very, very useful. One of the most useful rider which we recommend to every customer, every client, is to buy a consumables rider. Typically in a hospital, when there's a hospitalization, there are, gloves, syringes, masks, etc. These constitute to about 8 to 10% of the hospital bill. So, for example, if there is a hospital bill of 10 lakh rupees, out of that, on an average, 1 lakh rupees would be attributed to consumables. So, I think earlier the health insurance policies did not offer that, but now, for the past 3-4 years, almost all health insurance policies offer consumables as a part of the policy. You can opt as an additional rider, but it's an extremely useful rider, I would say. So, I think that's the second thing that one needs to do. The third is very important, is from where you buy. I think that is extremely important when it comes to claims. And I'm sure, just don't go on the price, go on the track record of the insurance company and also, the person that you buy from, because that technical knowledge at the time of claims is extremely important. So, for example, I'll just, probably take 30 seconds here, that let's say at claims is where some bit of a dissonance happens, and that is where your distributor or the place from where you bought the policy from plays a extremely important role. So, for example, at Policy Bazaar, we do claim samadhan wherever there's a bit of a dissonance between the claimant and the insurance company. So, I think that is these three extremely important points when you buy that.
All right, I think that's been a fulfilling, holistic conversation. Thanks so much, Siddharth, for taking the time. Pleasure speaking with you.
Thank you so much.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think and stay tuned. This is NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Okay, I believe the hum is gone, so this is good. We'll have a nice, clear conversation for the next 20 minutes, 30 minutes odd. And again, the idea is to try and talk about the gift opportunity. And my panelists today, although my colleague has already mentioned this, but I'll still repeat, Dr. Dipesh Shah, Executive Director of IFSCA, Shri Kailash Kulkarni, CEO of HSBC Mutual Fund, and in a bit, we'll also be joined by Ashish Somaya, Chief Executive Officer of White Oak Capital Asset Management. But gentlemen, both of you, thank you so much for joining and really appreciate your time. Dr. Shah, can I start with you? And I've noted down this question because I wanted to start off with that particular one. It's long been promised and spoken about as India's big bet to become the global asset management hub. Now, I would love to know that from a regulator's lens, what does success truly look like now? And what will eventually make you believe that in 5 years' time, that this, I won't even call it an experiment, this promise has been successful? Is it?
Thank you. I think at the outset, I must compliment both NDTV and HSBC for having this conference here in Gift City. I think it always adds a lot of value when you actually visit the center and talk about the financial center and activities in front of you. I think they always say that seeing is believing, and when probably many of you would have visited this place, might be for the first time, you would probably try and fill the place and understand that, look, it's not something on a concept, it is not something which has been planned, it is actually happening in front of you, and that's where probably the excitement comes more, to see it live. But I think since the morning there has been some numbers which has been spoken about. Let me first start with where we stand and probably then answer to what you just asked me in terms of 5 years from now, where do we see ourselves. I think where we stand today, and friends, I was just trying to convert some of these numbers into INR, because many times people are not able to appreciate what is happening on ground when they don't see, when they talk about USD, dollars and all, and suddenly you talk of INR. Let me talk of some numbers.
Sure. Doctor, just before you get to those numbers, can we just shut that door, please? There is a bit of an audio leak from there. Can we just please shut that door? Thank you. Please continue.
Also see.
Welcome, Ashish.
Hi. In terms of banking asset size, in the morning you heard about 40 banks. And what is the banking asset size of that banks is 11 lakh 51 lakh crore in Gift City as on 30th June 2026. So this is the number which is actually already happened. It's a banking asset size sitting in Gift City. The cumulative banking transaction in Q1, and probably HSBC would probably pump themselves more on this because the numbers of Q1 is equally exciting to see. The cumulative number for Q1 for 26-27 for banking asset size is 19 lakh crore for the banking cumulative transactions in GIFT City. Now, if you look at capital market and particularly the stock exchanges operating in GIFT City, in Q1 of 26-27, the monthly average turnover on the stock exchanges has been 10 lakh crore in terms of the volumes generating in the GIFT City right now.
Wow.
And the total debt listing as on 30th June 2026 is around 7 lakh crore of the debts which are listed on the GIFT City stock exchanges as we speak. But to our friends from the capital market and the fund industry, I think the numbers has been very encouraging. We also saw almost 400 funds and almost 250 plus fund managers. But what have they achieved in terms of cumulative commitments raised by these funds is almost 3,74,000 crore of the cumulative commitments been raised by them. And out of that, I think always been talk about how much of that has been invested. Is already 1,86,000 crore of money has already been invested from GIFT City into India and outside. Now, those are the real numbers which are happening as on date in front of all of us. Now, if we see in terms of next 3 to 5 years, what is that we are aiming? I think the first phase has always been, getting yourself started, and probably, in the morning it was spoken about that we are just small steps being taken. But actually what you see on ground is now a stage set for this to become actually a global financial hub. When you start, you almost start with a regional and the opportunities for the inbound, because those were the easy targets, that one, the money which was going out or managed outside for India, or the entities which were moving from India to Dubai, Singapore, Mauritius, now have a stop at GIFT City to manage the whole ecosystem here. And that's where we saw the first round of success coming in. That the whole 1,200 firms that you see now, from 129 firms in 2020 to 1,200 firms now. In last 5 years, we saw that 1,000 plus firms entered GIFT City, were majorly those which would have otherwise housed themselves into financial center outside to do India business. But as we see in the last 2 years or so, we have seen 150 plus foreign companies or banks entering GIFT City, which has probably some of them have no business in India. So they have entered GIFT City, we have no branches in India, and they have started doing international business from GIFT City. So this is probably a testimony to the ground being set for the regulation and tax as they operate. Many times it is said from an Indian perspective, one has to experience 4 or 5 income tax filing and then see how it goes. I think we have income tax filing history of 12 years now, and there has been no major disruption. I think 2 guys are sitting here, probably they can tell more about their experience, but there has been no major disruptions in terms of how the tax law is operating into the GIFT City. So from here on, if we have to see that for next 3 to 5 years, where we are going to, I think we can easily cross 5,000 firms in GIFT City ecosystem, because most of the firms have started now finding it's much more easier, and it is easier to get license, it is on time, and you are able to sort out the whole ecosystem balance, advantage within the GIFT. But more importantly, I think the contribution towards the inbound capital, which can be raised for India, can be significantly higher than where we are. And that probably would be a testimony that how do we handle the NRI money flowing into GIFT City and going into India. Can that journey be made much more simpler and easier through a digital? The more and more institutions make that journey easy into the GIFT City ecosystem, I think the volumes, we may not put target to ourselves being a regulator, but we can foresee in 5 years, if that journey is more made simple and digital, it can really balloon into a number which probably can, have a larger eyebrows than what you saw as an INR numbers.
Very interesting. Good opening thoughts, and I would love for both of my other fellow panelists to come in on this as well. So Kailash, I'll come to you. Access, ecosystem, and then stability of laws. I think these 3 things would per se determine, amongst everything else, how does a global hub perform or promise over a period of time. He's laid out a small vision out here. How realistic do you think is that vision? And he's been talking about, consistently asking both of you about your experiences out here. What are those experiences?
No, I can not I'm like 100 or 200% in fully what the regulator said, because I think I've never seen a regulator more proactive in terms of working towards the development of the industry. The amount of engagement that is there, the bottlenecks that we face, if we bring out to them, they surely come out very quickly with how to overcome those bottlenecks. I think the regulator has, and the numbers that were there are testimony to the fact that it's a very open regulation, willing to listen to clients and really grow the business. So while on one side you take care of compliance, risk and everything else, it's also how to grow the business. So we see this as an amalgamation of both the things in a very rightful manner. What we are seeing, and I'll just substantiate to that, as HSBC, we are globally connected. We deal with clients across the world. Many of our clients are investing in India through the Luxembourg route. And now they want us to really open up funds in India, because they're saying, why should I go through Lux and come here? I'd rather go through Gift City and invest. And I personally would have interacted with about 1,200 to 1,400 clients across single formats, small group formats, multiple formats like this. And the amount of genuineness in terms of investing into India has only grown in these last 1.5, 2 years, despite all the volatility, despite the currency, despite everything. We have actually seen that people believe in the long India story the next 10, 15 years, and there's a lot of money yet to come in. So we have started seeing trickles coming in from Asia. We still haven't seen Europe fire, and if Europe really fires, you can see the volume scale up dramatically. And there's a whole lot of inquiry and discussions going on at this point in time.
Okay, thank you for that. Kailash, rather Ashish, thank you. And a similar question to you, if you will, right? One is, of course, there are obviously great parts to what GIFT is able to do and the vision that he's laid out. I would love for you to kind of elaborate a bit on that. And part two, just from a perspective of where GIFT is versus some of the other jurisdictions are, how attractive is GIFT for an upwardly mobile Indian to invest into India using GIFT, invest out of India using GIFT versus some of the other jurisdictions as well?
Sure. So in fact, when Mr. Shah was talking and he was giving a lot of the numbers, I mean, I felt pressure to quickly check the MIS and, So, no, but I'm happy to say we are, kissing distance of about 100 million business out here. I mean, we have inbound funds and we have, funds where we are raising money all over the world, investing into India. And also, like you were pointing out, raising money from Indians and helping them to invest in emerging markets. So both of that, we are nearly 90 million now. And I think maybe by next week or so, we'll be about 100 million in terms of total assets, which is managed by our Gift City entity.
Kudos. And it's a recent start, right? It's not a very...
Yeah, it's probably January.
It's probably what?
January.
Wow, okay. Kudos.
So I think there is good, good traction for this. And in fact, as next steps, these are AIFs. As next steps, of course, we'll be approaching the regulator to make a retail FME license, which will be more scalable. So we are obviously excited and backing it with all the efforts and hard work that we can make. On your second point, I think, see, when it comes to raising money all over the world and investing into India, I think 2-3 things to look for. First is, I think, all of us as participants, we should not look at it as a destination. I think it's a journey. It's evolving, right? Because look at India itself. We are barely a couple of percentage points of global market cap. Correct? We are not really a single country asset class as of yet, because bulk of money till recently coming into India was always some part of global equity, global emerging market, Asian equity, whatever you have. But as India slowly becomes a more deliberate, direct, single country exposure, then obviously you will find more takers for investing via Gift City into India. Because if I'm directly, deliberately investing into India as a single country, there's no better way to do it really. So I'm quite bullish that it's actually going to become very, very big as a gateway into India. I think there is no doubt about it. And we should not back ourselves just with incentives. We should not back ourselves. We should not count that our growth will come only because of incentives. Of course. But one can't, we would be failing in our duty if we don't mention the fact that there is tax incentive. Like you said, from anywhere in the world, if you're investing into India, there's no better place than GIFT City.
Okay.
Yeah, I mean, so as far as say US and other parts of Europe, Middle East, everywhere there are inquiries, because there are vehicles, we ourselves have vehicles from Dublin or wherever, right? But despite that, people are interested to inquire with us that, okay, why is it that, you know, how can we invest through GIFT City rather than investing through any of those? Now, when it comes to outbound, right? So obviously till very recently, we had onshore funds which were acting as feeders for investing outside the country, right? But I think that now clearly GIFT City is the one which is through LRS we are pooling money here and then we are actually investing. I think that for that to grow, I mean, it's just one or two things that we should, and like I said, it's a journey. So I think it keeps evolving. I think we are only talking in terms of Indians investing in India or Indians investing, sorry, we are only talking in terms of outsiders investing in India,
right,
or Indians investing outside. But I'm sure that when I say as a journey moving ahead, the regulator would definitely think about making it as a offshore fund jurisdiction. Like, you know, somebody sitting in Dubai wanting to invest in Latin America, but the fund is, you know, a fund center, you know, a global fund center, a fund hub, you know, where global fund houses are domiciled, right? So I think that would obviously be probably they would think and maybe the next step, and then I think it will become even more powerful. I think the true power will be, you know, we'll all be very proud and it will be true power if it is not just a gateway in and out of India, but also on its own standalone. Because see, fund management industry globally, Indians are right up there, right? I mean, we are a global fund house founded by an Indian, and there are many, and there will be many more in times to come. So then why should we be housed in any other, you know, because Indians are in fund management industry all over the world. You'll end up in London, Hong Kong, New York, Singapore, anywhere, right? They've done like in IT services. So if we want Indian companies which are truly global asset managers, then I think in and out of India is one, and then we all need to work together that it's a standalone fund hub itself.
Yeah, big shout out to Indians across the world, frankly, because it's not just in the hotel industry or the service industry now. Indians are present across, right?
See, you have seen Indian companies which are truly global IT companies. Exactly. You have seen Indian companies which are truly global auto ancillary companies.
Or pharma companies.
Yeah. But you will eventually, with support from GIFT, you will eventually see Indian companies which are truly global asset managers also, I think, in times to come.
Dr. Shah, is that a vision? So two visions. One, how do you encourage Indian money managers to become truly global money managers? And two, can GIFT eventually, as a part of that vision, maybe not in 3 years, maybe not in 5 years, maybe in 10 years, but can GIFT independently be the hub for funds which have got no connection to India, but using GIFT as the place of domicile, if you will?
I think probably government was well aware that NDTV and HSBC was holding this conference. So I think recently in the parliament, you might have seen the amendment which has been already been moved, which talks of 9A.
Yeah, it will happen. I mean, I'm saying it is actually bound to happen.
Yeah. So what I'm trying to convey is that steps has already been taken to make this as a reality, that you are a global fund manager. The fund is been incorporated anywhere outside and you manage it from GIFT City. And also from India. I think from both perspectives, government has already moved an amendment which takes care of many those conditions which were seen as more restrictive for a global manager to be sitting here. And probably that will become a reality as we speak in probably few months from now. So it's not about 3, 5, 10 years. I think you will see that happening, you know, very soon from the GIFT City perspective. And then your second point of an inbound and outbound gateway as to how more and more people use this. I think it is for an inbound fund, as was mentioned. I think earlier it was very hard to, you know, convince people that, look, this GIFT is also one of the locations that you can use for this. And the perception issues were very, very tough to overcome. But with the experience of last probably 4 or 5 years and with the global fund managers coming in, I don't think there is now a question in the mind of the global fund managers or the global funds that India and the GIFT City strategy has come right in front, right at the top, versus using Mauritius, Singapore. I can very confidently say that nobody is probably using now Mauritius to invest into India as a fund vehicle. They would always prefer GIFT versus that. And I was happy to hear that, you know, what was said, that even for all the global funds, the question now is, it is better to do it from GIFT City for India. So inbound, I think it is becoming a no-brainer for people to use it, and also government has supported this with 25-year tax holiday. You know, fund manager sitting in GIFT, out of 20 years, there is zero tax. There is no GST. So I think it's a comparable tax incentives offered when you are operating from outside and in GIFT City also. And I think the Indian fund managers which were sitting outside were probably getting attracted because of the tax regime being sold to them, you know, and if you offer them the same, the question is, why not I do it from India rather than sitting outside and do it at 1/10 the cost rather than operating in an expensive location outside. So no doubt that inbound it will clearly become a winner as we proceed. For outbound also, we have seen a lot of funds being now launched. In fact, the mutual funds routes been used in GIFT City for investing outside. And I was happy to hear that the HSBC may also be, you know, looking at creating their asset management vehicle within GIFT City for outbound and inbound. So this type of structures in GIFT will offer a lot of Indians to use GIFT City for investing outside rather than sending money to Singapore and then being managed from outside India.
Got it. Well, and I believe Kailash will be leading that assignment. But I have a question for you, Kailash. Now, having set the stage out here, where is it that we, and by we I'm using the term gift per se, where is it that we are competitive with global jurisdiction? Where is it that we are lagging? I'm sure, I mean, nothing is perfect, right? There would be places where we are lagging.
I think so. First, we have to understand that today when we say the word gift, people know what it is. You don't have to go and talk to them saying, what is gift? They understand, especially if you are in the capital markets. I think across jurisdiction, across clients, they know what gift is all about. But yes, they do want to know more. They want to understand it better. I think there's a little bit of lack of understanding about gift, which will, like Ashish said, you know, it's a road journey, right? It will happen over a period of time. I think the challenge is, you know, take Lux, for example, because that's the most accepted, universally accepted kind of jurisdiction. Obviously, the first protocol for a European to go is to go to Lux. Now, to convince him why to come to GIFT, we need to have those kind of protocols. So I think the regulator is already talking to the Lux regulator for passporting. Once a passporting, life becomes very, very easy for everybody to come straight in. Otherwise, there are some compliance rules, etc. for different countries. EU has something different, UK has something different. So it is complicated. And once that passporting arrangement happens, then it just smoothens out the whole process when it comes to foreigners investing into India. And I know for a fact that they have already engaged with the regulator in Lux, so which is a good sign. It does take a little bit of time for getting all the paperwork, all the T's crossed and I's dotted. But I'm pretty confident it will happen. I think in the meantime, over the next 1 or 2 years, I think more engagement is required from people like Ashish and me when we talk to our clients to promote GIFT. See, the regulator can do only so much in terms of promoting GIFT, right? But individually, if you're talking of 1,200 asset managers already out here, each one, when we talk to our respective set of clients, we keep pitching GIFT as a solution for global investors to come to India. I think that's where the buzz becomes much bigger, and that's when people's acceptability will grow. So it's just the question of 5 years versus multiple decades. So you see, they have a head start, and we are just 5.
Any major challenge?
No, that's the biggest challenge today. I think
that is on your part. On anything else on the regulatory side?
No, like I told you, I think whenever we as HSBC Group have gone to the regulator, I think they have really heard us out, and they have come out with solutions rather than saying that, sorry, this is hard-coded, written and cast in stone. No, it's never cast in stone. And every 3 years, they change the whole, you know, framework in terms of listening to us, putting in ideas. So I don't see that to be an issue. But yes, can the government also do that little bit extra in terms of using those diplomacies to get these jurisdiction to accept us and do these faster than the normal process? The answer is yes.
Great.
But I don't see any bottleneck per se. And I completely agree that this is going to be the next big destination, not just for inward output, but also as a hub.
Ashish, as a money manager, when you think of GIFT and you've made some rapid strides on the money managed through this jurisdiction, Do you think of it as a destination for Indians investing abroad, or maybe your NRI clients investing into India? Or do you also think of it as a destination that you spoke about? Because you guys have global funds as well. You're truly a global house out of India, right? Conceived out of India, founded by Indian, as you say. One of the rare things out here at this point of time. Do you think of GIFT also as a hub for non-Indian activity?
Yeah, that's exactly what I said. I think, see...
You said that you want it, but are you already thinking of it?
Yes, of course, because look, ultimately this is all a question of ecosystem, right? Because there'll be multiple providers who will come in, like, whether it is custodians, whether it is fund accountants, whether it is the registrars, whether it is distributors, more and more managers, more funds, right? More platforms, correct? So I really think that apart from, why I specifically say it's a journey, because apart from what regulator can do, apart from what we all must do, ultimately we have to give it time for the ecosystem to really, because because this has a viral effect, right? Because if there is an ecosystem, there are more participants, then it spreads. Second, definitely I think I have experienced what Kailash also mentioned, which is that it's a bit of a sales job. It's not for the regulator, it is for us to do the sales job. Because look, when I ultimately land up with a client, let's say our sales team is there in Zurich, UK, multiple jurisdictions, we have salespeople, correct? Now, they are, let's say for 6 years, we are running a UCITS fund investing into India. Take an example. Now, when he sits there, he has to tell the client, sell India, then sell our firm, and then when the documentation comes, they are used to seeing a certain form and format of documenting and doing the transaction. Now, there, we need to make the leap and say, look, if you invest through the GIFT City fund, it is more beneficial in 1, 2, 3, 4, 5 ways. So which is what now, last thing, beyond the sales job, we also need to make sure that our GIFT City fund is registered in various jurisdictions with the local regulator, right? I mean, because we can't just show up. I mean, I can't just land up in Dubai and start marketing a fund. It has to be registered with the local. So right now, we are crossing all those hoops. So I don't think it is much the long-term ecosystem, what I said as a fund hub, there we all need to work together. But the current point which I'm saying, which is about raising more money, I think it's a sales job.
Okay. And so just before I come to Dr. Shah, just one quick follow-up. Anything that you would want to happen? I mean, I was asking Kailash the same thing, right? Because nothing is perfect. There are challenges, things need to improve, and it's a continuous process. I think 10 years from now, we can have the similar conversation, right? Because there will be challenges which the regulator will have to do. Is there anything specific that comes to your mind?
Yeah. So I think that when we were talking about the long-term vision of making it a global fund hub, and I gave the specific example that let's say somebody is sitting in Dubai, investing in Latin America or some emerging markets, right? And we are managing that money from GIFT. And let's say the fund is actually domiciled in GIFT. It is, licensed by them, domiciled in GIFT. So we are pooling money from all over the world, and from there funneling money all over the world. Then I think out here the tax is what one needs to make sure that there are no taxes, because it is just a fund hub. It's that income was not yours to be taxed. It's just a fund hub, right? Because you're managing money for global people investing all over the world. So I think some of those things, and I'm not fully knowledgeable about what all it entails. See, money going to India, money going out of India, we have complete tax jurisdiction. It is within it is ours to tax. But if you are a fund hub, right? I mean, it's just, it's your fund industry sitting here and managing. It is not actually income produced out here. So then how do you treat that? I think those things one needs to, by the by, I think that is what will evolve.
Got it. Like a transit flight, effectively, only using the airport as a hub for landing.
A transit flight, ideally, you should not ask for visa, something like that.
Something like that, okay. Gentlemen, all three of you, thank you so much for taking the time out and being on this panel. It was really, really nice to have this conversation with all of you. Thank you.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. fire.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves.
Hello and welcome to The Big Question. I'm Vikran. Now, going to that hospital is stressful enough, but for millions of Indians, the bigger shock often arrives after the treatment, which is in the form of that bill. So a parliamentary panel has now proposed one of the most sweeping overhauls of private healthcare, and this has not happened in years. It wants legal caps on private hospital room charges. They want it to be linked to the rates of nearby 3-star hotels. That's what is being suggested, and hospitals may have to publish their tariffs before any admission takes place. Surgery package rates could be standardized, and a fast-track ombudsman may be created to tackle the excessive billing and insurance disputes that arise. Meanwhile, healthcare services could move to a zero-rated GST regime, something that allows the hospitals to claim input tax credits on equipment and infrastructure, and perhaps that would help buffer some of those the kind of costs that the hospitals incur. The backdrop is stark. According to the National Sample Survey, the NSS, average hospitalization costs stand at about 6,631 rupees. Now compare that to what the private hospitals start, 50,500 rupees. That's the kind of disparity that exists. It's a gap that has put affordable healthcare at the center of this policy debate. The panel has also gone beyond the hospital pricing, and they're proposing reforms in insurance, in drug pricing, in medical tourism, in claim settlements as well, and healthcare expansion into rural India, which has been the big ask for many, many years. But tonight we have that big question. Will these kind of price parity that we are trying to create and the kind of gaps that we are trying to create in private hospitals, is it going to lessen the burden on the patients? Because the patient at the end of the day needs to concentrate on coming out of the illness, on coming out of surgeries, not worry about financial health. Let's ask that question to our panel. And joining us today, we've got a great panel. Dr. Girdhar Gyani is Director General at the Association of Healthcare Providers India. Mr. Jailal is the former National President of the Indian Medical Association. Dr. D.K. Gupta, the Chairman of Felix Hospitals, and Suresh Mathur, the former Executive Director of the Insurance Regulatory and Development Authority of India, the IRDAI. Gentlemen, thanks for taking the big question tonight. Dr. Gyani, this headline recommendation if private hospital room rents are capped and then they are linked to nearby 3-star hotel tariffs, you think that would genuinely lower patient costs, or you think the healthcare system is getting compared with an incorrect benchmark?
Yeah, good evening. Actually, in our opinion, I am speaking on behalf of the Association of the Private Hospitals, and they say that it will be totally counterproductive. They feel they regulate the methodology of fixing the room rent rather than the absolute price. Let me also add here that insurance company already have some kind of classification under which they accept the claims. Similarly, CGHS, PMJY, they also have the cap on the room rent under the different category. So I think let continue. And as far as the otherwise, the kind of hospital variation today we have got primary health, secondary health, tertiary health, quaternary care, and then geographical. A top hospital in Mumbai and top hospital, let us say in Bulandshahr, will have absolutely different room. And room today is not only room, it has got the nursing facility, infection control, infrastructure, other facilities. I think there is a lot of variation available. And let us not limit the choice of the patient, which are coming forward and are prepared to pay differently for the comfort which they are asking. So again, I am saying that already there is a capping under the insurance, under the government scheme. So let that continue. And finally, let there be transparency prescribed by the government under regulation, how the rates are to be fixed.
So how the rates are to be fixed, that kind of transparency, if we are to ask for it, Mr. Jailal, when patients often say that they know the diagnosis, but they do not know the likely bill that they're going to get at the end of the treatment, in that kind of scenario, should private hospitals be legally required to disclose their tariffs before admission? Is that the kind of transparency that we need to go for?
Absolutely. We are also for transparency, but also we must be able to realize that it is not something like what we are taking in a shop or a hotel where we can say your appendectomy cost is going to be like this or that much, because every patient, the needs are different. There are people come with a lot of comorbidities. People come with an associated illness. People come with the associated diseases, so which we cannot be able to put forward in a uniform tariff rate. But it is mandatory, which most of the hospitals, what we are following, we have a tariff which we will be explaining to the patient before they are getting admission. And most of the hospital, or most of the NABH accredited hospitals, we get an approval from the patient. This is what is going to happen. And if there is something happen, untoward events, and this is the way we are going to treat. So we are fully supporting the transparency in the tariffing, but we will not be able to, because of the lot of restrictions, put a single tariff like what the pricing we have in hotels, and this is Italy or something is coming to cost this much. That is not possible, but every patient must be, and that is what we instruct our hospitals and doctors, must be what in advance, what is the expectancy, what are the tariff they are going to spend must be explained to them.
So you're saying...
But I also fully agree on that, Dr. Giridhardigani, and the fixing the room tariff to the 3-star hotel. Again, it is a problem which the hospital, the owners are not understanding. See, in the rooms, many times the hotel, somebody go and join for a single occupancy. Many times when the patient come to the hospital, it's not a single occupancy. Somebody has to be there with him, and somebody has to be accompany them. The another extra care, extra facility we need to provide. So let us fix the tariff, but do not compare it with an hotel or compare with that something else. And that is only the problem we have.
So you are also saying that this might be counterproductive. And as far as the pricing goes, not to compare it with 3-star hotels, that may not work. But Dr. Gupta, where do you stand? Is the government right to focus on pricing, or is the real problem that quality healthcare itself has become so expensive to deliver?
I think healthcare is the essential rights of every human being in India or across the globe. And its primary responsibility and primary accountability to provide healthcare access and affordable healthcare to every citizen is government job, central government and state government job. We spend only 2.5% of our budget on the healthcare. However, the developed countries spend more than 10 to 15% of their GDP on healthcare only. Even WHO says it should be minimum 5%. Big countries, excluding India, spend 5%. So I think government should come forward to spend more on the healthcare needs. That's more important. Second thing, if you compare the expenses of any procedure, surgery on it, any medical treatment in government hospital with comparable to the private hospital, always government hospital is expensive in terms of absolute expenses. That is afford. Actually, that has subsidized by the government, and the patient actually give out of pocket expense very less. But otherwise, the operating cost and even the capex cost is very high in the government hospitals if you compare with the private hospitals. If we talk about the room rent of a hospital and comparing it with the 3-star or 5-star hotel, it is absolutely not fair at all, because in a hospital setup we provide not only hospital room, we provide clinical staff, nursing staff, resident doctors, even the paramedical services like radiology, lab, blood bank, even CT, MRI, cath lab. They are highly capex investment equipments, and infection control, GDA, housekeeping, attendance care. Lots of things has to be done.
But Dr. Gupta,
who is admitted in the hospital. Yeah.
But Dr. Gupta,
and
wouldn't you say
our primary aim is providing quality healthcare services and safety of patients.
so? Quality healthcare is a given. Dr. Gupta, quality healthcare is a given. Aren't you standing for standardization when it comes to what these quality healthcare services should be charged?
Definitely, I am saying it, but you should compare our investment as compared to the public sector investment in public hospitals. We are very affordable as compared to the public hospitals. If you see their budget and their expenses budget and their revenue budget, we are very affordable. If we talk about the investment in a hospital, per bed, 1.5 crore investment is required to start a hospital in plant machinery, excluding land. And if you run a hospital, this is a high OPEX business. You've got lots of money to run a hospital. And there is 3 to 5 years of incubation period, moratorium period when it comes in break-even hospital after that. And after that also, even government is not giving anything on subsidized to us. We are paying for land at an auction price. We are not having any subsidy on the electricity bills. We don't have any subsidy on the GST or income tax or importing the machines or having made in India machines. I think manpower cost, if you see, 25% of the manpower cost goes to the doctors. Of the total revenue of a hospital, 25% goes to the other manpower, excluding medical manpower, excluding doctors. 50% goes to directly manpower, including medical and non-medical manpower. Even 25% goes to the MCI, medical consumable implants. 25% जो बचता है, that goes to other services like maintenance, AMC, CMC, other like cafeteria, safety, security, accreditations, empanelments, lots of recovery.
Right.
And we received our bills after 1 year from government institutions, PSUs and government schemes, and after lots of deductions also. There is lots of disparity in the rates also. Like
Yes.
Ayushman rates are not at all, they are affordable to hospitals.
Yes.
If we talk about the affordable healthcare to the patient, we should talk about the affordability to our hospitals also.
All right, so fair enough. You're saying that affordability for hospitals is also a big ask, and today you cannot create that kind of parity with a 3-star hotel. You cannot put caps. But Mr. Mathur, from an insurance and regulatory perspective, do price caps improve affordability, or you think they create unintended distortions in the healthcare market? Where do you stand?
No, I'm all for the caps. But the cap should not be related to, say, a 3-star hotel, as the other panelists have said. We have to work out how we arrive at the room rent. And the hospital should be rated. I think the health regulator should be created to look into all this. So if the hospitals are rated and their room rents are also capped as per the rating, then I think it will be easier for the insurance company. Actually, they factor in their premium the cost of room rent. So, but if it is inordinately very high or very low, very high, then it is difficult for the insurance companies to pay the claim, and it unnecessarily increases their claim ratio.
But Mr. Mathur, why are they high? Some hospitals, why are the kind of pricing that you see in some hospitals much higher than others?
I think they have to work it out. I have seen during COVID times, some medicines, some like the COVID kit is sold for 500, some are selling it for 1 lakh. That I have seen these things. So I think we need to cap it, but as per the rating of each hospital, and then insurance company also can come out with the plans which will factor in the cost as per the rating of the hospitals.
Right.
NABH has been doing it, but I think it is not mandatory. So unless the health regulator comes and they impose these things on hospitals, then only things will work out. If we have to go for insurance for all by 2047, which is the government and the regulators' agenda, then affordable insurance only will come when we cap these things.
So not
and
only,
we,
yes.
regulate these things through a health regulator.
So not only hospitalization has to be affordable, insurance also needs to be as affordable. But you flagged off something very important, which is excessive billing. Mr. Jayalal, the panel has flagged this. Excessive billing, the unnecessary diagnostics, also the rising cost of routine procedures. How widespread are these concerns today that need to be addressed with the kind of price caps that we are talking about?
Sir, we are living in an era where now, because of transparency, whether we like it or not, now it has become a mandatory. Even now, anybody who has an internet, we have the Google, they are always able to flag and able to compare with what is happening in one hospital and other hospital. And if some hospitals, if you are indulging in undue billing, I'm not saying that they are not doing, but that is a very limited number, and they will not able to stand long. Because today that every individual, the Gen Z generation, they are much computer savvy and they are able to get the information on their pocket. So now this has been realized by majority of the hospital, and all those hospitals are only putting on their appropriate care. But unfortunately, we are talking in a generalized term. We are not doing a scientific costing. Let what we request the insurance sector or the government come out. There is a costing agencies there. There is a pricing agencies there. Let them do a study and how much amount of work which people are doing, how much amount of expenditure is there in the building, and then let them bring out a scientific costing and let it be put forward. And all of us are willing to formulate that. But somebody sitting in an AC room and putting there, this is a third class rating, you have to put for a room rent and you cannot go above 5,000, 6,000. That is absolutely nonsense. If you see a building norms itself, building a hotel room is entirely different from building a hospital room. The FSA, the amount of staircase we make, amount of fire safety method we need to make are extremely different. So on that, one component is extremely not comparable component. You cannot put a rate with comparing with a third class or a third star room. So let the government come out, let the insurance come out, do a scientific costing, say that this is what we are working out, manpower costing. Then if they are coming out with a rate, and definitely it will be there. But what is happening in some of the hospitals, some of the black sheeps, I think they are not going to stand long and in the era of transparency in which we are living.
But they are existing right now, which is why this need for this kind of price caps that is being discussed by, in this report at least, that has been suggested. But Dr. Gyani, you think this committee wanting a fast-track ombudsman for excessive billing for insurance disputes, is that something that policyholders and hospitals desperately need today? Where do you stand on that?
Actually, we have been suggesting not only for the private insurance, but also for the government-related schemes like CGHS and Ayushman Bharat. In all cases, the 30 days is the right way that where the reimbursement should be made. Beyond that, if you introduce a clause of even 1% interest, things will drastically improve. Let me remind the viewers here, when the Ayushman Bharat was launched in 2018, there was a clause that beyond 30 days, the government will pay 1% penal interest. Unfortunately, all the states conveniently removed that clause. If that clause was there, it would have put the accountability on the reimbursement officers. If that comes into force, many hospitals will be willing to be on the panel of the Ayushman Bharat, because today the payment is coming 3 months, 6 months, 1 year, and it is stopping the cash flow. And I can tell you here, government may not be aware about it, that on paper, maybe we can say 40% population is covered. But actually on ground, this scheme actually is not working because hospitals are not really taking the patient under the Ayushman Bharat. So this 30 days is very, very important. Let them put 1% clause for the interest.
So 1% kind of clause for interest, is that going to change things? Dr. Gupta, do you think an independent ombudsman could fix this kind of problem, especially when you're talking about Ayushman Bharat? Would hospitals welcome this kind of independent ombudsman to start with, if it means quicker resolutions to the problems in the medical field and greater public trust as well in the entire industry that we have, the medical industry?
I think first we should rationalize the rate of room rent for that should be linked to the location of the hospital, tier 1, tier 2 or tier 3 cities. Size of hospital less than 100 bed, 100 to 200 bed, more than 200 bed. Its hospital is providing secondary care, tertiary care or quaternary care. Accreditations of the hospital like NABH, NABL or like other accreditation, empanelments. Based on this, all hospitals should be star rated, and based on this star rating, I think that room rent can be kept. There is no problem at all.
No, but you're not talking about the ombudsman. How important is that, Dr. Gupta?
I think you are absolutely correct. But if we want to provide quality healthcare services, the Ayushman scheme is built only on the variable expenses of a hospital. Like if we have around 60-70%, there is a fixed cost, 30% goes to the variable account. So they thought, who made this Ayushman scheme, that there are around 30-40% beds are empty in each and every hospital that can be utilized based on their only variable cost. That's why they started this scheme and rolled it out. But the rates in the Ayushman scheme are so low that any hospital who is providing tertiary care, quaternary care services, having accreditations and empanelment, they cannot provide a quality care and safe quality care in these rates also. And the debtors period, I mean, the receivables are very high. As Dr. Gyani has told, that we receive our payment after 6 months, 7 months, after lots of deductions also. We require a lot high working capital, high OPEX costs. We pay around 12% to the banks to run our hospital. We provide our payment to our vendors, like the medicine consumable vendors, within 90 days because of MSME Act also. We provide our salaries to staff before every 7th of every month, also doctors. And we receive our money after 8 months, 9 months, 10 months, or even after 1 year also.
But tell me,
there is a lot of uncertainty also.
But tell me, Dr. Gupta. Yes. But Dr. Gupta, tell me, you think faster claim settlements could eventually translate into lower cost for patients, because that's the ultimate aim?
Definitely. It will reduce the working capital cost to the hospital, and that benefit can be directly to pass on to the patients. Even if you reduce GST or you